my belief is that the brain is like an antenna, okay? And so your mind is beyond the physical, kind of like a sailboat. So if you're in a sailboat, in fact, you might, it's not a very good day today, but you might see some sailboats behind me. I'm not sure if you can. There's one. I don't know if you can see it. But anyway, these sailboats go by, and what they have is they have this big sail that catches the wind. Okay, and the wind helps them go. Obviously, they need to get that sail just right to catch the wind. Well, it's the same thing with our brain, right? Our brain is like a sail, right? In essence, what we're doing, our mind is beyond our brain, as I see it. It's beyond us. It's beyond the physical. So the essence of who you are comes from all those experiences that have come in through your brain and all those physical, all that physical stuff, all those interactions, your memories, the things you've forgotten, all that stuff kind of helps form that, but it's a bit beyond. So you can that's why, for example, and I don't know, this is probably going to freak some people out, but there's a book written in 2004, and I will put it in the show notes. Her name is Sylvia Browne. I don't know if you heard of Sylvia Browne. You heard of her?
Yeah, I've heard of her.
She's a psychic, right? Yeah, she's a psychic. I always thought she was a total and complete fraud. Okay?
Yeah.
Maybe she still is. But what if I told you that she wrote back in 2004 about this virus that would come in the year 2020? Mm-hmm. And she basically made all these predictions in this book. And she was talking about this virus, and she pretty much nailed it. Okay. Mm-hmm. So, and it's just like people who use like remote viewing and things like that, where they pick up on other areas of the planet where they're not physically located. How is that possible, right? Mm-hmm. So I believe that our brains can serve as a bit of an antenna. And I think of the mind as that aspect of, or that ability of you as a human to tap into other things other than what's in the physical stored in your neurons, right? So what are your thoughts? Because I know you probably have some really good ideas along these lines.
Yeah, no, I totally agree. I've been researching it quite a bit, and I've been looking for this book. The name is escaping me, but the guy basically, he's done a lot of studies, and he's proven that there is like a certain knowledge that sits outside of the body, and if you get into this alpha state, you can actually access that knowledge. I don't remember what it was, but I'll put it in the notes when I remember. And yeah,
is it a new book? Is that a new one or an older one?
No, it's older. It's older. I forget the name. Jeez. Anyway, but yeah, I've read several books like that, and then there's that other one, The Secret Life of Plants, right? And it shows that plants actually have they can tell when they're going to be harmed. So when you think about only eating plants versus animals, there's kind of no real difference, right? And once you have that sort of knowledge of what's out there, then you can I think it makes it easier to understand, okay, there are some other things out there that we don't typically learn about or know about, and can be accessed, from outside of us. And it's not just the brain that creates these ideas or these thoughts. And if you go through a lot of famous people, like composers and artists and all these kind of stuff, a lot of them say that I was just the conduit. I did not think of this. Somehow it just came through me, and I just moved my hand, and I wrote this book, or I painted this painting, or I created this opera, or whatever it was. So yeah, I believe that there is a certain amount of information out there. And like you said, I think, our brain is just kind of this antenna. It stores a little bit of information about our life right now, and it helps us like brush our teeth and stuff. But other than that, I think, there is the potential to get access to this other knowledge.
Yeah, so Carl Jung talked about that. I don't know a lot about Carl Jung. I wasn't really big into him, but some people were. He was a student of Freud. So he talked about like the collective consciousness.
Yeah.
So everyone sort of has this collective, like, deep in your unconscious, like the shared experience. And actually, my understanding is that there's data that comes from the mother. Like, so let's say your mother really loved Doritos, okay? Or had some trauma at a young age, like a really terrible experience when she was 5, that actually gets passed on to her children, like encoded somehow. Like that like all that stuff is really weird. That's only kind of recent stuff that we found. And so, yeah, there's a lot more to it. And whenever someone says, like, when you start saying stuff like this, Hugh, and people say like, oh, well, that's ridiculous, or that's not real, or whatever, I always just come back with, well, bloodletting. We used to think that bloodletting was the thing to do. You know what I mean? Like
leeches.
Exactly. Like, it's so easy to think that where we are, we're at the tip of the spear. We're at the we're at the point of science where we have everything, or we almost have all the knowledge and everything. But you always look back in historic time, look back years and years and go, oh, they had bloodletting, they're a bit off there, and
Yeah.
I'm sure, people look back 1,000 years from now on us and they'll say, yeah, they didn't have that quite right.
They were using all these drugs and
yeah, exactly. There'll be something.
Yeah.
There'll be some clear direction that we sort of went down, and it was the wrong path. It was a dead end.
Yeah. Well, there's a lot of evidence that they're coming up with, like in Turkey and stuff, where they're unearthing these ancient civilizations, right? And they had plumbing and they had supposedly electricity and all this stuff. So that just shows you that we might not be the tip of the top of the mountain, or whatever you want to call it, right?
Yeah.
We're not the highest point of civilization. So
yeah, Göbekli Tepe. Yeah, exactly. Göbekli Tepe is a great example of that, because that shouldn't exist back in the Iron Age. Like, they have all that stuff. We weren't supposed to have that in the Iron Age. Nope. I don't know if did you hear about that thing they found in Utah? Like, what the? I mean, that's just weird.
Which one was that?
Just the other day, they found a monolith in Utah. So in the middle of nowhere, okay, these guys were like, I don't know if they were like rangers or foresters or whatever, like they're geologists or something, but they were kind of with the state, trooper dudes or whatever, some official capacity. They're in this helicopter, and one of the dudes is like, "What's that?" Because they're in this super remote area. Actually, a friend of mine used to work out with the Parks Service in Utah, and he was like, he loved it out by Moab and stuff. I don't know exactly where it was. You can look it up. I'll put it in the show notes for people. But they found this massive metal monolith, like a 12-foot tall monolith, stuck into the rock, just sitting there in the middle of nowhere. And they're like, dude, like what? like what? And so the only theory right now that they're putting forward is that it's some sort of elaborate art installation. Okay, maybe. But that, like, who would helicopter that in? And there's like no seams or anything. Like, like where I live, if they put a bike rack into like the concrete, into like the footpath, the sidewalk, if they put a bike rack in there, there's always like where they had to like drill the hole, and they had to kind of like spackle the concrete around there and kind of like seal it up. But this is like, it looks like it just got pushed up out of the ground. It's this pristine metal, shiny. That's how I think how the guy saw it. He was up in the helicopter, and he's like, whoa, what's that down there? It's just an example of what you're saying. Like, we don't know everything. Like, I don't know where that came from, and maybe it was some elaborate art installation that they somehow hiked into the middle of nowhere and somehow installed like perfectly. It looks like it's cut with lasers or whatever. Like, maybe. Yeah, maybe. But it could also be something like historical, or something just like there is no real logical explanation for it, and things like that come up all the time. So yeah, I'm totally with you on that one.
Yeah, I mean, they haven't really totally explained the pyramids yet.
Exactly.
It's been like hundreds of years, so like
yeah. No one can do that. No one can do what they did back then. Like, we can't do it today with cranes and all that stuff.
Yeah, sure. All right, cool. Thanks, Walter. Yeah. All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. Make a decision. I think the worst thing you can do is kind of just like say, I'm going to take this trade. Am I going to get out? Am I not?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, this is something that you probably know about from your studies in psychology. This idea of paradox of indecision. I think they call it like Birdian's ass or something like that, right? Where the donkey is between the food and the water, and he can't make a decision, and then he dies because he doesn't get either one. How do you see that playing out in trading? Like, how do you see that manifest?
Well, I think in trading, our gut instinct is to take the profit and to not wait for. So, like, let's say you're in a trade, and your trade's in profit, but it hasn't gone as far as you had hoped it would go. Let's say, for example, you risk $1,000 and you want it to go to your $2,000 target. You want to make $2,000 on your $1,000 risk. It's really tempting when it's at $800 for you to go, maybe I should just. It's almost Friday. Maybe I should just take that profit, And the problem with that is that it messes up all of your stats. So I think when people are stuck and they're indecisive, the instinct for traders, for us, is to do the wrong thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
It's usually to take the profit. It's usually to, put off the pain. So take the profit quickly, or take the nice feeling thing quickly, and to put off the thing like the losing trade, move the stop away, move it further so I don't get stopped out yet, give it more room. Like those sorts of things, I think in traders, when really it's interesting that some of the most successful traders, what they've done instead is they learn to adapt and interpret the market information and feedback that they get differently to most traders. So, for example, trading with really low win rates strategies, or not taking a lot of trades and having a lot of restraint. You know what I mean? So it is really easy to get stuck in that situation where you're like, I don't know what to do. But I think the tendency for most of us, at least for me and a lot of traders I've talked to, especially when you first start trading, is to do the wrong thing. So to take that quick profit, to put off that painful loss, all those sorts of things are kind of like what we're built to do. And it's why the markets, it's classic. Like I was just reading the other day about this hedge fund, and this hedge fund had been bearish for years. Okay. They had been banking on a market collapse. And interesting thing about it was this year, they had finally decided, you know what? No, we're going to go long. We're going to go long the markets. We're not short anymore. And then March 2020 happened, and with the coronavirus freak out, and of course the markets all went down. And so they literally decided to flip right at the point. You know what I mean? Everything turned around. It's so amazing how we are so good at that as people, at picking the exact turning point and deciding, you know what? Maybe I'm doing the wrong thing here. Maybe I should do this instead. And it's always, right around the point where you should actually not do that. And I think that kind of that's the story of the markets. That's why it's so difficult for a lot of people to make this work, is because you're just built to go against it, including, that being indecisive or deciding to do sort of the, the wrong thing mathematically. Financial, what are they called? Behavioral economics. Like they say that we should be very rational and make the rational decision and the one that makes the most money and all that, but we don't do that. The data is pretty clear on that. I believe that we don't do that we don't make those decisions that are most rational. And so instead we have these driving things, like the drive to be right, the drive to be right is to take profit quickly, the drive to avoid losses and say that you're incorrect. Both of those are kind of the same thing. It's like you don't want to take the loss, and you also don't want to say that, I made the wrong decision here, all that stuff. So it's a tricky thing. What are your thoughts?
Yeah, for sure. People, I think also it's worth mentioning that you should make a decision. I think the worst thing you can do is kind of just say, I'm going to take this trade. Am I going to get out? Am I going to not? And make a decision. Whatever you think is the right thing, just make the decision. And then number 2, record it. If you can do those 2 things, I think you'll learn much faster, because you'll understand, okay, I have a tendency to do this, take profits early, whatever it is. And then I record that in my journal, and I can see that doesn't result in much. But I think a lot of times people get stuck with a decision, and they're like, oh, maybe I should do that, maybe I shouldn't. And then they kind of flip a coin, and you're not really sticking to one path. If you can stick to one path, I think you can understand your logic and how you really feel about the trade. And then that will allow you to either continue on that path if it's working, or take another path if, it's not, or whatever.
Yeah, that's a really good point. I learned that lesson. I was reading about a famous surfer, and he was saying how, as the waves get bigger, I don't really surf huge waves or anything, but when I was younger, I did more, I guess. And he was saying that the worst thing you can do in big surf is to be indecisive. You really and it's so true.
Yeah.
Because it's exactly what you're saying. Yeah. Yeah, it's so bad because when you're paddling out, you've got to decide, are you going to try and duck dive under the wave, or are you going to ditch your board? And when you're paddling forward wave, you got to decide, am I on this? Am I definitely going to try and catch this wave? Because what happens sometimes is people get a little bit fearful or whatever, and they pull back, and then they're stuck in the wave, and then they really take a pounding.
Yeah,
all that stuff. Yeah, exactly. So it's the same with trading, and your point about having a record is really good because you can learn. You know what I mean? Like you can learn obviously from experience, but it's so much better because we kind of trick ourselves and we cloud our memories by thinking that we're better than we are, or sometimes worse than we are. But I think for most of us, we think we're better than we are, and so having a record is really clear because that clarity and keeps you sort of grounded at where you're really at. So that's key. Yeah, for sure.
Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Break the goals down into more achievable, aspects. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So I was talking to a trader the other day or messaging a trader the other day. Well, what he wanted to do was get really aggressive with his trading strategy and use some aggressive risk algorithms. And so we were working through the numbers, and he was trying to figure out, he kept coming back to this point like, oh, my system's not good enough. Oh, my system's not good enough. And what I was trying to share with him is that actually your system's pretty good. But what's happening is when we tweak the risk so much and get really hyper aggressive, it's leading to likely drawdowns that are going to freak you out. You know what I mean? I think we confuse as traders this idea of the system's no good when really we put that label on it, when really it's more that the way we're trading this system is making it no good for our appetite for drawdowns. You know what I mean?
Yeah.
Do you know what I'm saying?
Yeah.
Does that make sense? Like, have you ever had that? I've had that happen lots of times.
Oh, yeah, for sure. I mean, I think there's also this idea that if you get a result at a certain risk amount, like maybe 0.5% risk, same results are going to scale up if you risk 5%. And it just doesn't work like that. I mean, your drawdowns are going to be more. And like you said, obviously the psychology is going to be different. And sometimes systems just blow up when you increase the risk that much. And I think that's what people need to understand, in addition to, tailoring the drawdown to their personality, right?
Yeah, it's exactly, you know what you reminded me of when you said that? It's exactly like saying, well, if I got from here to Las Vegas in 10 hours at 100 miles an hour, I'll just go 200 miles an hour and I'll get there in 5 hours. You're going to die, right? You're going to die on that 45 mile an hour turn. It's over. So yeah, it's exact same thing. It's exactly what you said. That's totally it. That's trading, like thinking that everything is completely scalable. And now actually, I learned that lesson really early in terms of strategies, because one of the guys that was sort of getting me into trading and stuff, and like he wanted to work with me and my friend in trading and sort of like bring in investors and stuff. And he was like, is it scalable? That was his main thing. He worked for a broker, so he understood this idea of, is it scalable? Is it scalable? And he kept pounding on this, and I was like, man, what is this guy talking about? But I realized what it was, because some strategies, they really only work at a certain size. You know what I mean? For example, like if you're scalping the euro or whatever for 5 pips, you're actually going to move the market. I mean, you're going to move the Forex market if you have too much size there. You know what I mean?
Yeah.
Like you actually won't be able to get into all your position. I know people think about this more in terms of stocks and trading shares and that sort of thing. But it's actually, and I saw a really good presentation on this from the guy who founded Owanda. His name was Richard, and he was Richard Olson, and he was I don't think he has anything to do with Owanda anymore, but he sold out his part of it. But he was showing all this data. He had tick data going back to the 80s or something. The biggest takeaway I got from it was, wow, it doesn't take actually that much to move the Forex market. We think of it as this big, massive. And he's like, no. He's like, so if you're trading like 10 lots or something, like 10 standard lots or whatever, that's like enough to actually really push it, And I found that fascinating, that whole idea. Yeah, so this idea of scalable and it just, maps on perfectly. Obviously, that's not the case. And we often confuse whether or not it's the system that we don't like or the risk parameters that we've placed on the strategy, on the system, and that leads to drawdowns that we can no longer withstand. I mean, that's the one thing I try and get across to people, is that psychologically your biggest issue is going to be dealing with the drawdowns. So you may as well upfront go, all right, what is the drawdown I'm willing to withstand, and what is the drawdown I'm willing to draw the line and say, I'm done. And so now you need to do everything possible to avoid that drawdown where you say, oh, I'm done. I can't do this. I can't sit through a 35% drawdown. That's impossible for me to do. I know that, so I'm not going to do it. So you need to know where that is before you ever start trading the strategy. That's the key thing. Yeah.
Yeah, sure. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. And I think one thing that people think of also is that I need to increase my risk, or I need to increase the return because I can't make a living on whatever it is, 1% on $10,000, which is all they have in the account to trade, right? You know, the reality is that maybe you just get an investor and you get more money or whatever it is, but you can always somewhat scale that up. But I think thinking that you only are limited to what's in your account and the return on your system is kind of like, you know, you're kind of throwing away a good system when it could be useful.
Yeah, absolutely. Yeah. And you know, that idea, that 1% that you said, that the first traders that I came across, there was this group in London, and my friend introduced me to them, and they were, you know what their goal was every week? They had a very, very simple goal. Every week they just wanted to make 0.75%. That's it. That's all. And some weeks they'd lose 0.5% or whatever, or 1%. But they wanted to average every week 0.75%. That was it. That was their goal. It was just boom, boom, boom. And you know, you would be amazed at how quickly your account grows if you can do that. Even if you can only do 0.5% a week, if you just keep that money in there, and if you're able to compound it and you don't have to pull it out, you'd be amazed at how that can grow. It's it doesn't take that long, actually. So it's going to grow faster there than in the bank. That's for sure. So yeah. Yeah. So, you know, that's the thing, is that sometimes you do have to take a step back and go, okay, well, I'm not going to be super aggressive. So what can I do? And maybe that's what you can do, is just take it, you know, break the goals down into more achievable, you know, aspects and more achievable steps. Yeah.
Yeah. Cool. Good advice. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
But I'm not sure that going to school and getting a PhD or whatever, like I did, is really the best thing. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, we've both met quite a few people over the years and quite a few successful people. What are like the core traits that you see in successful people and successful traders?
Yeah, that's a good question. It's interesting because I think, you know, the test where it's like I'm an INTJ or EFP, whatever. Yeah,
Myers-Briggs.
Myers-Briggs, yeah, Myers-Briggs. I always get that one confused with the there's another one, but anyway, yeah, with the Myers-Briggs, like I've seen on forums and stuff, people discuss like, oh, you know, if you're an INTJ, you know, that's the best trader profile or whatever, and I can see why people go down that way. But actually, I think there's only a few things that would make it easier. So there's a really good study of like really good gamblers, as funny as this sounds. And you know, they actually look, the way that the author described it is, you know, they almost look at as if they're in, like, they live forever. So when they're looking at the odds, you know, they might have a slight odd in a certain situation. For example, like I can't even, like, I don't even know enough about poker or blackjack or whatever, but like in a certain situation with a certain hand in poker or blackjack, your odds shift, all right? Or if certain number of face cards have been pulled out of a blackjack deck, even if it's 6 blackjack decks that are all mixed up together that they're playing, the dealer's playing. Like there's times when it shifts and you get a slight advantage, right? And it's almost like in the study, they almost seem like they just live forever. And so they look at things on a really long time frame. And I think that's one thing I would say that's interesting about the successful traders. They have that ability to kind of see the value of a really slight edge. Whereas I think when we first start trading, we assume that we can't even start trading until we have like this enormous edge, right?
Yeah.
And once we find that, then it's like, it's over. We're just going to mine that sucker. And so I find that fascinating about the gamblers. I think that a lot of that translates to trading. The other big one would be resilience. I think that most traders quit and move on to something else, or just find trading too painful when they're unable to overcome losing streaks. I think that's a big one. I think that's probably the number one reason why most traders don't make it. Not because they don't have a good system, not because they don't have good risk rules in place, but because they were unable to trade through that drawdown. And so they've come up with excuses, whatever they are. The system's broken, the markets have changed, I'm not cut out for this, this is the wrong strategy for negative interest rate environments, whatever. They can come up with lots of reasons why, and they quit. So resilience, I think, is good, and also the ability to see the like to play out the odds in your head. And you can do that obviously with a spreadsheet. You can do that with Forex Tester. All of that's really important. But I think for me, if you're able to see the value, and it's really, I guess it's kind of in a way probabilistic thinking would be kind of the overarching general thing. Like, I really think it's important, I was thinking about this the other day, not to go too far on a tangent. I know I want to get your ideas too on this, but I was thinking about kids and what's important for kids to learn. And, and I went to school for a long time, right? But I'm not sure that going to school and getting a PhD or whatever like I did is really the best thing for you. In a lot of ways, it kind of pins you in intellectually into a certain corner, and you almost can't get out of that.
Yeah.
And so I was thinking, like, what were the really good skills that people need to have? And I thought one would be the ability to understand probabilities and statistical thinking. The whole game of science is a game, and it's run on probabilities, basically. Everything. It doesn't matter if it's geology, astronomy, medicine, psychology, it's all a game of science. And so if you can understand probabilities and statistics, you can read all those papers, you can see what everyone's arguing, you can do all that, right? The other thing would be storytelling, because there's a lot of value in that. I'll tell you a quick story. One of my friends, his whole business is getting investors to invest in a fund of Australian properties, right? And he was saying that he had this guy come over from Switzerland, this billionaire guy, and they were trying to get him to invest in his company or whatever. And he's like, all the guy said to me was, tell me the story. My friend was like, I couldn't do it. I didn't know what to say. We had all the numbers and everything, but we didn't have the story. And I think there's a lot to that. Like, I remember in high school sitting on a bus going out to the ski fields. It was like, 3-4 hour trip. One of the guys, he was a year older than me in high school, he was sitting in the bus and he was sitting there telling me stories, and everyone was just riveted. And I remember thinking, that's awesome. Like, that this guy can do that. It's such a cool skill, to be able to tell stories in a way that's engaging and can teach lessons and stuff. So I really think, there's a few other things, like maybe learning how to speak in front of others, but there's certain skills that you can get, and you don't necessarily have to get a master's or a PhD to have those skills. You can learn probabilistic thinking, you can learn storytelling, all those things. You can learn how to speak in public, like, in an engaging, interesting way. And it's fascinating to me how many really good scientists are terrible speakers, and you see that.
Yeah.
Like, it's weird to me. Like, you would think if you spend your whole life on this one issue, like this one thing about, whatever it is, anti-aging, or, something about the number of Earth-like planets, in the universe or whatever. Like, if you had some really important thing, you thought this is the most important thing we need to understand, the ozone layer or whatever, you would think that you would spend a little bit of time learning how to explain that to other people. You know what I mean?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So I know it's a long-winded tangent, but for trading specifically, I think it's probabilistic thinking and being resilient, which is the ability to bounce back in the face of really tough times, because that's what traders have to deal with in terms of losing streaks. What are your thoughts?
Yeah, I would totally agree with you on the resilience part. I think it's a lot of these successful business people just stuck with it. And if you just stick with it at some point, if you try to improve, you'll get better, right? And I think that's a huge one, obviously. Also, I think a lot of good business people and traders, I think, are kind of weird, like in terms of what the average person thinks about them, right? It's the idea of having independent thought, thinking for themselves and trying to figure out what really works for me, what really does work in the markets, and not, like you said, falling into the trap of education, like the guy who can quote all the books, but he can't trade to save his life, right? And I think that's a really key one, to be able to think for yourself and to be able to really think way, way, way out of the norm. I think really puts you ahead of most people.
Yeah, and that's such a good point. I've noticed that, like, the difference between people generally speaking in the US versus in Australia is, in Australia we have kind of this really traditional English way of teaching children, not universally, but in a lot of places. And so what that means is, they get grounded in the classics and sort of thing. So they can quote the classics and they can understand certain things that are held high in our Western culture and ideas and authors and stuff like that. In the States, it's exactly what you say. Like, I think there's a lot of value placed on the cowboy, or the Lone Ranger, that sort of idea, the guy who's just out on his own, kind of doing his own thing and, figuring it out on his own, and being an individual is so important. Whereas in Australia, there are a lot of great things, but one of the things I've noticed is that it values being in a group, like the community. It's a very Asian idea of like the good of the community, Yeah. And that's really important. And one time I remember my friend who was Australian, he was trying to console me because what had happened in California is I had a failed business. And for lots of reasons. But he was saying, oh man, I'd always bet on, which basically what you were just saying. He said, I would always bet on the businessman with the failed business because he'll come good. He understands it. He's been through the wars. And I was thinking to myself, like, dude, I don't even need you to tell me this. Like, you know what I mean? Like, that wasn't even a concern for me. You know what I mean? Like, it really wasn't. Like, I was like, bummer. You know what I mean? It was a couple of years of my life, or whatever, year and a half or whatever, and a lot of money and work and this and that. But it didn't work out, and I wasn't like worried that I could never do anything because I had a failed business. You know what I mean? So, but his point was exactly what yours was, which is you have two people. You have one that's never seen failure and one that's seen failure. Which one do you bet on? He's like, I would always go with the guy that's been hardened through the trials of burning through a doomed business or whatever, as a business person, he was saying like that. And I was like, I could appreciate what he was saying, but I didn't need the pep talk. Yeah.
Cool. Yeah, totally. But that brings up the point also, like, if somebody thinks that they don't have these characteristics, how can they develop them? And do you think that some people are just destined not to have them?
I think that's in my opinion, and from what I've seen, even in psychology research, they used to kind of think that way, that like, and I've heard older people say this, when your kid's personality is formed before they turn 5 and all that, we found that personality is actually quite malleable. And I've noticed that I've changed in different environments. Like when I was in a certain circle of friends in undergraduate school, I was a certain way. And then when I went to graduate school, I kind of became a different person, had a different group of friends, and the same thing when I left US and came to Australia, I've kind of a different person that, and everyone will say, well, yeah, I'm always different with my grandma than I am with my friends from high school. Okay. Yeah, sure. Right. That's fine. But I'm talking about actually sort of changing your introversion, extroversion, like where you're on the scale. Type thing, right? Yeah. And so let's take an example of resilience. We've both identified resilience as being an important thing. So an easy way for that, and there's actually a school in Australia that teaches this way. And a lot of psychologists will as well. So like if you go to like a cognitive behavioral therapist because you're depressed or something, they will teach you this skill. But in terms of trading, let's say that I'm in a losing streak and I'm thinking, oh no, here we go. Again, another failed strategy. I'm trading this strategy. It's failing me. It's not going to do very well. I need to give up. I need to find something better. I need to, reassess. And I'm going to lose all my money. I'm never going to be able to make trading work. I'm never going to be able to quit my job. Like all these things sort of cascade. So what you do is you can build up resilience by rephrasing that self-talk, right? The way that you see things. And so you identify that that's called catastrophizing. Just because I have a losing streak of 6 trades means I'm never going to make it as a trader, right? That's catastrophizing. And it sounds ridiculous when you and I talk about it right now. But actually, for a lot of people, that's their reality. Yeah. And so, and I've been there. You've probably been there where you've had situations. It doesn't have to be trading; it could be anything. Where you start thinking, "Oh my God, like it's never going to work." So that can be retrained, and you can train yourself to say, "Okay, hang on. All right, so I've been trading this system for how long? 2 months. Okay, 2 months. And I back tested it for how long? 10 years. 10 years. Okay, 10 years. In the 10-year back test, did I ever see a drawdown of 6 trades in a row that were losers? Oh yeah. Okay. So is it really the case that this strategy is busted? No, probably not. Mm-hmm. Is it likely this is a normal drawdown? Yeah, probably. So what you're just trying to do is just trying to inch yourself up a little bit higher to a slightly more positive emotion through logic. And that's all that is. And they do that with depressed people too, with cognitive behavioral therapy. You can look up CBT on the internet and see that. But that's what you can do to build resilience, is you can just learn new tools where you kind of step back and say, is this real what I'm seeing here? Or am I just catastrophizing? Am I just letting my thoughts get really negative and keep going to the point where, I'm just like off the map. Like I'm not even on reality anymore. I'm just in this other world of manufactured pain and suffering, right? So, and it's so easy for us to do that because our ancestors did that. They're the ones that survived. They're the ones that were worried. Wait, what's that noise in the bushes? Oh no, it must be a lemur, or whatever, right? They're the ones that survived. The guys that were just whistling through the woods, they're the ones that were eaten by the lemur, right? So I don't even know if lemurs eat people, but you know what I mean. Yeah. So, yeah.
Oh, great points. Yeah, for sure. I think another thing too that I found is that motivation really plays a big part in it. Like if you have the proper motivation, you can do almost anything. But if not motivated, you have a nice cushy job, you kind of like it, then you probably won't quit because, trading is tough in the beginning. So I think that's also another thing to consider is how can you maybe not artificially create motivation, but dig up your real motivation behind what you want to do. Do you want to travel around, be a trader? Do you want to buy these things that you can't afford right now? Do you want to take care of your kids and see them grow up, stuff like that? And I think that's also a big motivator to, improve whatever you need to improve, no matter how hard it is.
Yeah, that's so true, because you will see that in traders, the ones who, like, no matter what, they still push through, and it helps build resilience when you have that end goal, and there's nothing else you're going to do except achieve that goal.
Yeah.
So yeah, it's a really good point. Yeah.
Cool. All right. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I think it's just a matter of repetition.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here. Trader has written and said, I really would like to get to the point where I'm making consistent profits, and yet I'm very fearful of taking a trade. So that's the question. So my thoughts on this, and I'd like to get your thoughts as well, is that when you're at a point of fear, what is fear? It's just anticipating the unknown. Because you don't know what may happen, you are concerned and you might think the worst. Well, what could be the worst possible outcome of a trade? It could be that you lose, or that you lose more than you had anticipated, right? So, I said I'm gonna put my stop loss at $250, but I actually lose, $375 or something like that. So that could be kind of the worst case scenario. The antidote for fear is preparation. And so that means running through your simulator like Forex Tester, doing your back tests, making sure that you know what is likely, what is not likely, looking at all that stuff and mapping it out. Because once you map it out, guess what? It's totally easy. Now you know, right? There's no really unknown. Once you get enough trades on your belt with a strategy, it's really shouldn't be unknown. It should be, well, I have a 61% chance of making profit here, 39% chance of getting stopped out, and around 0.5% of the time, the market may gap over my stop loss, and I'll lose a little bit more than I had anticipated in terms of my risk, right? So that, those are the sorts of situations that, preparation can help you with that. So if I hear from a trader that they're fearful, it probably means that they're not prepared and they don't really know what to expect. So you can help that with back testing. It also probably means that in the past you've had a lot of losing. And why is that? Is that because you're risking too much on your trades? So even a normal loss is really painful. Then you need to look at how what your position sizing is. And if you're just fearful in general of taking a trade, no matter the size, it just means you're not prepared yet. You need to go back. You need to, work through Forex Tester, find out what your numbers are in terms of average win, average loss, win rate, loss rate. You need to figure all that stuff out, what your likelihood of certain drawdowns are. All that stuff can be found just by preparing. So that would be my suggestion to the trader who has the fear of pulling the trigger. It could be that you have done all that and you have a low win rate. Sometimes that'll happen. You've worked it all out, but you have a 29% win rate system. In those cases, I've seen some traders successfully automate that so that the entry is automated so that they don't have to keep hitting the button knowing that, they got a 7 out of 10 chance of losing again, because that can be really that can be a difficult thing to do. So those are the things that I would say about that. What are your thoughts?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, cool. I think what you just said would cover about 95% of the fear of losing. But I think there's a small population of traders who also have this fear of just, the system isn't going to translate into live market somehow. And I think those are the very, very risk averse people in life and in trading. So I think to overcome that, another thing to do is just to take some trades, like bring the risk way down and just take trades. And I think that's kind of like ripping off the Band-Aid, right? You just got to go out and do it. Otherwise, you're just in your head saying, is this really going to work? Is this really going to work? And the only way to do it is to actually go and take a trade.
Yeah, and you can do that like over and over again with a small account, right? Yeah, so you have your $150 account or whatever. Yeah, just boom, 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 boom. Yeah, that's a great, because then you kind of get, it's like a muscle, you're exercising that muscle. You're taking the trades every day or whatever. And, sure, you're only risking 25 cents or whatever, but you're doing it. Like you're saying, like you're doing it. And it's totally different when it's real money. All of that is absolutely true. So, yeah.
Yeah, I think it's kind of like maybe hunting or skeet shooting, right? Like it might be a little intimidating to shoot a shotgun. But then once you do it a few times and you're like, okay, I can shoot these clay pigeons or whatever. And I think it's just a matter of repetition.
Yeah. Have you ever done that, by the way?
Yeah.
It hurts. Like
it does hurt.
Yeah. It hurts. It hurts when you have the shotgun here. It's like I was just a kid. I don't even know. Maybe I was like 10 years old or something. And I went out. Yeah. And it like the kick is crazy.
Yeah. Yeah. But once you can get over it, right? I think you get used to it or whatever. So.
Yeah. Yeah. No, man. I only did it once, and I was like I said, I was a kid, and I was like, whoa. Like I wasn't expecting that. I mean, I knew it would be loud, but it was the kick and the thing that where it gets you right here in the chest, the shoulder. It's like, ugh. Yeah, it's crazy. Yeah. It's kind of fun though. Like it is kind of fun actually to shoot clay pigeons.
Yeah, yeah.
But
like, I'm not into violence, obviously, but it is fun.
Yeah, it is pretty fun. Yeah.
All right, cool. Thanks, Walter.
See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Charts are good, and we like charts. We both like charts, and most people trade with that. But what are some other catalysts that you could look at, maybe?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here from one of our traders, and he is wondering about how should he go about trading and getting to the point where he knows which catalyst he should be using to trade. So he wants to find the right catalyst. And so my thoughts are that inside of this question, if we sort of unpack it, he's basically saying that he needs to know what the right pattern or the right catalyst. So the way I talk about it in Naked Forks is a catalyst is a pattern at a certain support and resistance level. Obviously, you could use trend lines, you could use other things. You don't have to use support and resistance levels, but a lot of traders do, and that's why they kind of become obvious on the charts. So what's interesting is he's kind of suggesting that he needs to find the right catalyst for him, but he doesn't actually come out and say that. He actually says, I need to find the right catalyst. So, because he doesn't say that all catalysts are making money, which one should I use, or which one makes the most money. He just says, I need to find the right one. So really what this comes down to, I think, is discovering what you as a person, like what you think as a trader about the markets. What do you think they're going to do? What do you think they will do? What do you think they're likely to do? That's all up to you, right? That's your, double bottoms and double tops make a lot of sense to some people because they like to find that sort of reversal point. And then trend continuation patterns make sense to other people. So, or breakouts make sense to other people. So it really depends on what you look for as a trader. Does that make sense? So what are your thoughts?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, no, totally. I think there's actually kind of two questions in there, right? There's the beginner's question of he's actually saying, what system should I use, right? And that implies some sort of technical system or whatever. But then if you take it a little bit deeper, it could also mean what works for me, what kind of catalyst should I be using? And that might not be a chart pattern. Maybe you're trading the cocoa market and you know something about the companies in the cocoa market, and you'll use that as a trading catalyst and not necessarily what's on the chart. So I think a couple of things to consider there. Obviously, charts are good, and we like charts. We both like charts, and most people trade with that. But what are some other catalysts that you could look at? Maybe that's that's more in the futures and stock market, maybe. But FX has some of those types of catalysts. Also, like I know you look at the retail traders, right? Their ratios and stuff like that. So that might be another catalyst that he can look at. So just something to think about there.
Yeah. There's lots of triggers, aren't there? Yeah, for sure. Yeah. So it really, like, I guess I just want people to get away from this idea of like there's a best pattern or whatever. It's really about what matches up with you. Yeah.
Mm-hmm. Yeah. Totally. Yeah.
Yeah. Cool.
Okay. Cool. Thanks. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, this is a big time of change, obviously. This last year and this coming year is going to be probably even more change. So what can people do to kind of weather the change and kind of roll with the punches and even benefit from the situation?
I'll tell you one thing I've learned. I think people sometimes confuse fear as, they give it like a negative. So like, for example, if I grow up in a country like Australia, where predominantly, I noticed this when I came to Australia, that like all the people, when you get off the plane at the airport, like everyone looks like they're all from England. They're all these white faces. And that was so different to me growing up in the United States, in particular in California, where, I had black friends, Mexican friends, you know what I mean? Like I had friends from Taiwan, was a good friend growing up. Lots of friends from Mexico, of course. I had friends from Japan. I had friends, like from, everywhere, Guatemala. I had a really good friend from Guatemala in college. And so, it was like if I took someone out of Australia and dropped them off in the middle of like Angola, where they're going to stick out, right?
Yeah.
That can be scary. But why? Why are you scared? Do you like if I just pluck someone out of Sydney airport and I said, okay, we're going to Angola, and I dropped them off in Angola, and they're like, whoa, they would probably be fearful. But why? They don't probably know anything about Angola. Maybe they didn't even know it was a country. They never heard the name. But yet here they are, and they look different, and they're fearful. And I think that's really what gets at the core of fear, is the unknown, right? So we don't know about something, and we have to confront it. So what do we do? And so I think fear, in a way, is like a sign that you're in a spot, you're in a place where it's very exciting. Like it's exciting. Think about it. Most of our lives, what we do is so normalized. And so, you get on the bus at the same time, or you get in your car at the same time, you go to work at the same time, you go to the same cafe, you have lunch with the same people, or what, you know what I mean? Like so much of it. And I know like it's not always the case for everyone. Like you might have a meeting over here or a meeting over there. You might have a business trip or whatever. But the point is, most of what we do is just so normal. So when you're fearful, to me, that's like a sign that you're alive and that the unknown is there. And that should be exciting. So really, I think we misinterpret excitement over the unknown as fear.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Because we don't know what's going to happen. We like it when we know what's going to happen. We know what is likely to happen. So I've learned, and I think this really applies to trading. In fact, one of the things FX Street was asking me about this like a couple years ago. What do you like? I think it was New Year's resolutions, and they asked a bunch of people on there, and I said, because I do webinars there, like I just do once a month now. But and they said, what are you working on in the new year? And I said, I really wanted to work on this idea of fear and of embracing the unknown, because that's what we do as traders, right? You and I, we risk our money, we put it down, and we say, I don't know what's going to happen here, but I believe enough in my data, in my testing, have enough confidence behind it that I'm going to risk my money because I think there's a good chance that X is going to happen and X is good for me, right?
Yeah.
And so I think fear, you can kind of twist it in your head and look at it, flip it around, and look at it as an excitement for what's to come, the unknown that's to come. And that can be another opportunity to learn something. That could be another opportunity to see something about yourself that you hadn't seen, like a facet of yourself, whatever. So that's why I think we should sort of reorganize how we view fear as something exciting, not as something so problematic or, dark or, negative.
Yeah.
But rather interpret it as something, it's really kind of excitement. It's excitement that we're interpreting in a negative way. Mm-hmm. What are your thoughts on that?
Yeah, no, I totally agree. I think that in reality, there aren't too many things that can really harm you. I think, yeah, it's just an opportunity to grow. And I think especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do. And I think if you, just calm down and just objectively see the situation and say, okay, this is going to go away, but then maybe this is going to come up and that's an opportunity. And this is an opportunity to do this. Then I think it becomes much more interesting and a lot less scary.
Yeah, and that's why, I think the downside is you can get addicted to that, like base jumpers.
Yeah.
Or, NFL football players love, running into people or what, you know what I mean? Like there are a lot of big wave surfers. Like there are ways, I think, where you can kind of take it to the extreme. Mm-hmm. Gamblers also. Yeah. Right. So that's important for traders to recognize that a certain proportion of traders are actually gamblers. And I would say Jesse Livermore's would fit into that category. You guys can look him up. We can put it in the show notes. Mm-hmm. If you look up the Reminiscences of a Stock Operator, which is a biography of Jesse Livermore. But yeah, so it is tricky. There's that balance of embracing fear versus getting addicted to that feeling of overcoming the long odds of jumping off a building with just a squirrel suit and a parachute or whatever. You know what I mean? Like, yeah. So it's a bit tricky, certainly. Yeah.
Yeah. You definitely have to know the odds or whatever, right? And your own skill level. But
that's right. And that's where the simulator comes in for traders, right? Exactly. Mm-hmm. Yeah.
Totally. All right, cool. Thanks, Walter. Thanks. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Try and think long term. Try and think really far away. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, so if some people don't know this, most people are basically not born to trade, right? Probably 99.9%. How can we first understand that and then use that to become a good trader?
Okay, this is a great question, and I appreciate it. You know what I would say is there's an app, and I will try and put it in the show notes for those of you watching this. And this is your lucky day because you're going to get a cool app. It's free, I believe. I believe it's free. I don't know. I have it on my phone, but it's basically is a risk assessment. Okay. And what's cool about and I've only shared this with like traders that I've coached before. So I'm going to put this in the link and I want you guys to check it out. So what it does is it enables you to see how well are you at defining risk. Because I think that's a big part of trading. It's not the only thing, right? It's something that we get wrong. And I think what you said is absolutely correct about the fact that we're not born to trade. We're not built to trade. Mm-hmm. We're built to make the cognitive mistakes that don't allow for consistent, profitable trading. In that app, it'll you can take the test and see your score and all that. What's interesting, I think, is that there was a study of professional gamblers, right? And what they found was fascinating, which is these gamblers, they thought of themselves almost as like they just would never die, that they were they were infinite, they had infinite life. Mm-hmm. And so it's almost like you need to adopt that point of view when you're looking at your edge. Let's say, for example, you have a trading system and it has a 55% win rate. And if it gets down to 51%, you're going to be break even. Mm-hmm. But if you're making anything over 51%, you're going to be making money. What's interesting about that, and you're convinced that it's a 55%. So for a lot of people, that's not enough. They're going to say, no, I want it to be 60. I want it to be 70. I want it to be at least 65, right? It's like, I need to improve my win rate, right? They focus in on that. But for these professional gamblers that they studied, they saw so far into the future and thought about so many thousands of trades that they were going to take that they knew that 4% edge was money. You know what I mean? That was all they needed. And it's actually the exact same thing that the casinos do. Mm-hmm. The casinos, those slot machines, they pay out like 98.5% of the money or 97.8%. It depends on where they at. And they actually publish the numbers. Mm-hmm. So what that means is, on average, they're only taking 1.5, 2, 3, maybe 3% of the money that goes through there. But that's enough to make all those lights and pay for all the entertainers and all the staff. And you know what I mean? Like, it's fascinating to me. And it's the same thing with the table games. Table games have very slight edges too, but they all have an edge for the house. So, of course, blackjack it varies with the composition of the deck, right? Yeah, exactly. But so I find that whole thing fascinating that they basically discovered that the guys who are really good at managing risk, the gamblers, right? Because think about it, gamblers are trading. They are basically traders trading systems that have negative expectancy, right? Yeah. So where do they find their edge? They must find their edge somewhere, right? And I know it's different when you're like betting on sports and things like that because the line changes and all that. But I find that fascinating. So I think if you're interested in this idea, I think you should definitely check out the app. I'll link it up in the show notes. You guys can have a look at that. And also try and think long term. Try and think really far away. And imagine not why you want your 55% win rate system to be 65%, but imagine how much money you could make if you pushed a certain number of trades, a certain amount of money through that. Right? I mean, that's what people at Walmart do. All the companies that sell stuff at Walmart, or any place like that, right? Any discount department store or whatever, they have such Walmart ensures that they have such small margins. You're selling this widget, you're selling all these millions of widgets to Walmart. You have such a really fine amount of profit there. But the reason why they happily sign the contract with Walmart, because they're notorious negotiators. They will push that price down, right? Or they won't take your product. They will say, no, you got to get it here. You got to give us this price per unit, or we're not going to say yes. And so people will happily sign that because why? Because they know the volume. They might only be making 6% on every unit, right? But where normally they might make 20% or 15% or whatever, but they'll take that 5-6% because of the volume of the millions of widgets that they know that they're going to push through Walmart. And it's the same thing with trading. It's the same thing with gambling. Like if you have that edge, however so slight, don't discount that, right? Think about how valuable that is to have over the lifetime of your trade. So yeah, that's how I see it anyway.
Okay, cool. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, I mean, that's a great way to look at it. I think we get lost in the income, right? How much am I going to make every month? How much am I going to make this month? Am I going to be able to pay my rent or my mortgage, right? And we don't think of the long game, like how can we get investors or something later on to ramp up our trading? And
and do you here's a question for you. Do you have 10-year goals and things like that? Because that's another way to make it more... sometimes people just say, well, I want to do this year. Like we're recording this podcast in January and a lot of people have New Year's resolutions, all that, right? I think it's easier if you push your goal further out and say, well, I want to have 10-year goals, 5-year goals, 15-year goals instead of your annual things. Do you do stuff like that? Have you looked at stuff like that? Because I think that kind of takes the pressure off.
Yeah, I mean, I've tried that stuff, but I think for me, it's more about what am I really excited about? And that's going to be something that's really far out, right? Anyway, and that's kind of my goal. I don't have to put a time limit on it, but I just work towards that. And for me, I found that works the best instead of setting a hard 5 or 10-year goal or whatever.
Right. Yeah.
Do you use those far out goals?
Yeah, I mean, I think I think it's really important to have quarterly and annual goals and all that, and you can have monthly or weekly depending on how what your time frames are on your trades, but I do think the longer term goals, at least, it's kind of like trading the higher time frame charts. You kind of get an update every so often. So if you have a 10-year goal, you might look at that 10-year goal every year and go, okay, well, we're 8 years out now from my 10-year goal. The last 2 years, how have I, How have I progressed and that sort of thing. I just think I feel like it takes the pressure off. I feel like we're such a, now sort of, everyone's on their phones and you know what I mean? I feel like it just takes the pressure off for me, and it helps me see it more clearly. Just like looking at the weekly charts or daily charts makes, you know what I mean? For me, that also can help you see what's going on a little bit easier too. Yeah.
Yeah, no, totally. And I think for me, at least, I make too many of those little goals. So if I have too many of those little goals, they start piling up, and I'm like, oh crap, I can't do any of these. But
that's what I mean.
One big one, right? Then it's easier to kind of see what needs to be done. So.
Yeah, absolutely. I had the same problem, and that's actually that's exactly what got me into doing the longer term goals. Was exactly what you're saying, because you get these lists and you're like, oh, I got to do this week and this and that, and it becomes like it's overwhelmed, right? Yeah. So if you can kind of consolidate everything into a big picture, it's just like, for me, it's like, okay, yeah. So,
yeah, totally. I agree.
Yeah.
All right. Thanks, Walter.
See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
And it was like their parents would just drop them off there when they didn't have a babysitter. That's basically what it was. I should have charged like a door fee, Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I think it might be useful from a psychology standpoint and from an experience standpoint to maybe talk about what we've been into before, like business-wise, and if we had any success or if we failed, and how we learned from that and how we came to trading after that.
Sure, yeah. So just real quick. So when I was a kid, I learned how to do magic tricks. And so I was basically a magician from about age 6, where I did, little till I was in my 20s in college. I did magic. So that was kind of my business. And then I had side jobs, mowing lawns and stuff like that, whatever, right? And then when I got to college, so I was surrounded by like psychologists and people that were in, because my mom was a psychiatric nurse. And so I would go to her work, and there'd be like whisper, like you would see the rubber room where they would put the crazy people, like the really violent, crazy people in the rubber room. And I always remember being fascinated by that. And walking through there and seeing the patients, there was kind of like this feeling as a kid, like almost like you're going through a jail or something. I don't know. Like I felt like, they were dangerous or they were weird, the people, but they just seemed normal. The people that were there just seemed normal to me. And we were always around psychologists and psychiatrists and people like that. So when I went to college, I just decided to study psychology. And then as I got through it, I knew I wanted to go to graduate school. So I made friends with there was a master's program at the university I went to. And I was talking to some of them, and I actually ended up taking some master's level courses right before I graduated with my bachelor's. And one of the guys there, he was working for a jury consultant. And I thought, that's interesting. And I thought, that's a really cool job, because it's so I was thinking, what can I do? What kind of job can I have where I still have time for surfing? And that was my whole thing, right?
Yeah.
And so I thought, if I was my own boss and I did this jury consulting thing, I could kind of work my own hours and stuff. And, I would have the mornings for surfing or whatever. And so he was telling me about it. And so I was really fascinated by the fact that this graduate student was doing like grunt work basically for a couple of jury consultants. And so I applied for psychology and law programs in the US and Canada. I applied it saved up my money and applied for 26 graduate schools. I think I got into 3, Yeah. And so I did that. And then after I graduated, I went and did the jury consulting thing, and I hated it, because you're always working for the bad guys. You're always working for the defendants that should be sued. That was tough. And also you're traveling a lot and you're living in hotels. It wasn't very fun. So I got out of that, and my friend that I had grown up with, that I went to junior high school, and college with, who also went off to graduate school, although he only went for 1 year of psychology school, and then he opted out and worked for an investment bank. He and I were trading all throughout the 90s when we were in university. Okay, in the early 90s, we were in university, and we were trading the .com stocks, right? This is the real big ramp up, that first big ramp up in like NASDAQ stocks, okay? He convinced me to quit my jury consulting job and move down with him in Beverly Hills and learn how to trade currencies. So that's what we did. We went down there. We even had investors lined up and stuff because he had a pretty good trading background. He had worked at lots of different brokerages and stuff. So he told me to go and take this class. I took the class. I think you've taken the same class, right? We talked about the guy.
I took that class too, yeah.
Yeah, the same, which is funny. It was like a little ad in the LA Times. Yeah,
it was like a weekend or something, right?
Yeah. Well, I think mine was 5 days. It was a week.
Oh yeah, 5
days.
I'm sorry, it was a week. Yeah, that's right.
Yeah, but whatever. Yeah, it's the same dude. I know. We talked about. Yeah. So I took that class, and then we were trading our own money and stuff. And he tripled. I didn't really have much to do with it. He tripled it in 2 nights. And then by the end of the week, the money was gone, blah, blah, blah. But we had these investors lined up, like the Swedish Bill Gates was a friend of my friend, right? Because he was dating a Swedish girl, and he somehow made this introduction to the Swedish Bill Gates. And so that was the deal, was we were going to trade the Swedish Bill Gates money. We were going to have this big office in Malibu and all this stuff. And then September 11th happened, and the guy lost a bunch of businesses. There was no way he was going to have any play money for currency trading or anything like that, which was good because we would have lost his money. We dodged a bullet there. That was a really good thing that happened. We weren't ready for that. And so then I started a coffee shop, which was coffee smoothie shop, which was pretty much a disaster. Didn't go very well. And then I just sold everything and moved to Australia, sold all my possessions and packed it up and went down to Australia. Like, I thought of it as like a sabbatical, like in academia, which all my friends in graduate school, they all ended up going to academia, right? They're all teaching professors and stuff. I'm like the black sheep of the group. I'm like the one that nobody talks about. I moved to Australia and I had this sabbatical of like learning as much as I could, getting as many books as I could about trading, all about technical analysis, and they're all stock related and futures related because there was one book on currencies at the time, and then there was another one, so there's 2 books on currencies at the time. So I spent a good year and a half just learning it there, and then I had to get a job because in Australia, visas and stuff, so I had to get a job for that. It wasn't anything more than just a job, When I finally could get out of that and still maintain my residency in Australia, that's when I got out of that job as soon as I could, because my trading was going really well at that stage. And so, and I think it does take the pressure off when you have another source of income for your trading. I've talked to a lot of traders about that. So to put it, long story short, I was an absolute failure at business. My business I guess my first business where I didn't have any employees as a magician, I did all right. As a smoothie coffee shop owner, that was a disaster. And I made a lot of mistakes there. The path it's an interesting way because I never really wanted to become a trader. It was only just my friend that got me into it. And I thought it was actually cooler to be a jury consultant than to be a trader. I thought, like, when you think about when you're at the party and people talk about what you do, like jury consultant's like a cool thing to say because, oh, what's that about? Where if you say trader, people kind of already have an idea in their head of what that is, or you know what I mean? And it could be negative or positive depending on the person.
Yeah. So type stuff, right?
Yeah, exactly. Yeah. So where did you come from? Like, how did you build up to trader status, or how did you end up there?
I mean, in school, I studied biology. And
biology, really?
Yeah.
Wow.
Did absolutely nothing with that. So right out of college, I got a job at a hedge fund. So I was working at the trading desk as a trading assistant.
That's right. I remember that. Yeah. You said that on your website, right?
Yeah.
You talk about that on your website. That's how I read that. I remember. Yeah.
Yeah, so it was a good introduction. I mean, it was a fixed income arbitrage hedge fund, so it wasn't too interesting to me because it was like all math and they were just like playing like regression to the mean basically. But I got a couple of years there. It was a cool experience. And then I went into IT consulting. So that was a little bit more stable. I understood it a little better and it wasn't like this, like an assistant job, right? So did that for a few years and then I tried to do real estate and that failed miserably. I found out that I don't like doing real estate because you have to talk to too many people and everybody's out to get their own little piece of the pie. We did a few deals, but after that, I was like, okay, got to go back to the job and figure this out. So then I've been
on the side. Can you talk more about the real estate? I'm just curious.
Yeah.
So were you selling or were you putting deals together or what was your role?
Oh, buying and selling. So like, late nights, no money down type stuff.
Gotcha. Yeah.
So so we did a few deals, like bought a house for $10 and then sold it and made like $30,000 profit or whatever, right? So I mean that was kind of cool in itself, but the whole process of it I just did not like. People are lawyering up and they want to sue you for stuff. And it was just that kind of fun, right? So I got out of that. And the whole time I kind of had trading on the back burner. Then I started the website, and the website started generating some money. So that took a little bit of the pressure off. And then once I was able to take the pressure off, then the trading came around. And yeah, that's what I'm doing right now, just trading and doing the website. I'm going to start another website soon. So it's a good passive income generator, not passive, but more passive income generator than trading.
What's the new website? What's that going to be?
It's more about this like self-sufficiency, trying to learn these skills that maybe your great grandfathers had, preserving food, like building houses, stuff like that.
Hey man, I want to learn how to pickle garlic. You going to talk about pickling stuff? I'm serious.
Yeah.
Like that's the kind of stuff, right? You're talking about stuff like that, like self-sufficient, like storing your own food and
that's what my wife wants to do. She wants to pick up some food, so I'm going to do some tutorials on that.
Oh, dude, I'm in. I'm totally in. Yeah. So I had a friend, actually the friend that got me into trading. His dad, they were from out of the country, and his dad would have these amazing jars of pickled garlic, and he'd be like, "Hey," and they made it, and they had it like in the garage or whatever. Yeah. And I was like, "Oh, that's amazing." And like I remember when I was a kid, my grandmother came out from the East Coast to California. Where we lived in California, there's lots of strawberries where we grew up. And so my mom and my grandma, they just went to town. They went and bought like punnets and punnets of strawberries, right? My grandma showed my mom how to make strawberry preserves, like jam,
Yeah.
And I'm not kidding you. We had it for breakfast on our pancakes. We had it for lunch on our peanut butter sandwiches, which I don't know if you know now, you can't take peanuts to school now. So my kids don't have peanut butter sandwiches. Yeah, no, you can't take nuts to school. Like it's illegal. That's all this crazy stuff. Yeah. So like I had a peanut butter and strawberry jam sandwich for literally like 8 years going to school. And then we would put it on our ice cream for dessert. We would give it to people for Christmas. Like, hey, Merry Christmas. Here's a jar of preserves. Like we literally had that stuff for 10 years. It was just one spring that my grandma came out and just boom made all that stuff. But that's cool. I like stuff like that. That sounds like a good idea.
Yeah. We'll see how it goes, but it should be fun. But awesome. Yeah, I mean, like, so what did you learn when you failed at I mean, a lot of people will try a lot of different stuff, right? Like stock trading, future trading, real estate, and all that stuff.
Yeah.
So like after you failed at your smoothie shop and after I failed at the real estate thing, how did you feel and how did you know where to go next? Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
I always had, like you said, trading in the background. When I was at the smoothie shop, there was a lot of downtime. Okay, in other words, we didn't have a lot of customers. Yeah. So I would literally, and I'm not kidding you, I would literally get up, and this is 7 days a week. Okay, and I had people that could work there, but I just couldn't really afford. I'd give them a shift here or there or whatever, but I would get up when it was dark and I would listen to the Coast to Coast AM radio show. It would be on replay.
Yeah.
I'd get up, it'd be night. It'd be like night. Okay. I get up, I drive. It was about a half hour, 35 minutes to the smoothie shop. It was really more of a smoothie shop than a coffee shop because nobody drank our coffee. Right. And very few people drank our smoothies as well, but at least more people did. So I would get up, I'd be listening to Coast to Coast AM rerun, like they reran the one that was on earlier. Like, they have 6 hours of Coast to Coast or whatever. I'd get to the smoothie shop, I'd fire up the coffee machines and all that, blah, 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 right? Get everything ready. People would come a little bit, a little bit before school. Maybe a few people would come for a cup of coffee or whatever. And then after school, it was more of a hangout for kids that were like 11, 12 years old because we had ice hockey and foosball and billiard tables and, you know what I mean? Couches that they could relax on. And it was like their parents would just drop them off there when they didn't have a babysitter. That's basically what it was. I should have charged like a door fee, And we actually had music too at night sometimes, like nice. Crazy music. Like bands that couldn't play anywhere else because they were like death metal or whatever. And they were so thankful. It's probably the only smoothie shop that had death metal bands at night. I can't see what could possibly go wrong. So why did this business take off? Yeah. So what I learned though is I was always looking at the charts
Yeah.
During the day, because basically from about 9 a.m. to 1, 2 p.m., there was nobody coming in. We'd have a few people coming in at lunchtime. There was a company there that makes guitar preamps in that area. They make guitar preamps. I don't know much about guitars or anything, but apparently that's like a really well-known company. And the founder of the company, like the CEO or the president dude, that the company's named after, he came in once, and then the whole, like, all the secretaries started coming in and stuff and having smoothies. So they would come in at lunch, and then that was it. So I had all this time to look at the charts. I was following a signal service in South Africa. So whenever they gave their signals, I would take the trades and stuff. So, that's basically, and I was looking at charts and still trying to learn as much as I could about trading. There was a trader guy that actually came in there, like a broker dude, and we would talk and stuff, and I would, kind of learn things from him and bounce ideas off of him and stuff like that. But other than that, that was, all I really learned from it was, persistence and perseverance. Like what I've seen when I came to Australia and I convinced my one and only friend in Australia to come and live with me, he was like, dude, don't get down on yourself that you had a failed business. And I wasn't. I didn't really care about it. I was like, yeah, I tried it and whatever. But he was like trying to pump me up, even though I didn't need it to be pumped up. And he was like, I'll always bet on the guy with the failed business, man. He learned lessons and stuff like that. I'm like, okay, cool. Well, I'm not looking for any backing or anything, but thank you. Thanks for the vote of confidence and stuff. Like, it's so interesting that you asked this question, because today I was listening to a talk by Malcolm Gladwell. You know who that guy is, who wrote Blink and Tipping Point and Outliers. Yeah. He was talking more about outliers and how, like, they did this study where they got the 0.1% top IQ people, right? I think it was in California. And this guy in Stanford followed him around for like 50 years. And what he thought he was doing was identifying the movers and shakers of the generation by getting the genius level 0.1% over 140 IQ people. He thought that that's who he was identifying, and he was going to follow this cohort every 10 years, right? And you know what he found?
Go ahead.
The IQ didn't predict anything. And I think this really is relatable to trading. I don't think that you can say that if you're smart, you're going to do well trading. If you understand math, you're going to do well trading, or anything like that. I think it really comes down to you wanting to make it work, right? Yeah. What he found was that those kids that had the higher IQs, there was a small percentage of them, about 15% of them, that actually did go on to do great things, but 85% of them had very average to below average lives in terms of like achievement or whatever. And he said that was because of where they grew up. So if they grew up in a household that was loving and encouraged learning and had books and stuff like that around, they did quite well. Basically like a higher class of opportunities. And the kids that didn't have that, they didn't. They just had like normal lives and stuff. And I thought that was kind of fascinating, because a lot of people will assume it's ability, right? And and so I think for trading, it's not really ability. Like, there are very incredibly simple trading systems that make money.
Yeah.
But there are very few traders that will trade those systems through drawdowns, through the hard times, and learn enough about themselves so that they can kind of put things in place around them so that they continue to trade even when things get rough. And I think that's the same with business. Like, I think today, if I wanted to go out and make a chain of smoothie shops, I could probably do a pretty good job of it, because I learned a lot of things from, having, don't have death metal bands at your smoothie shop. Don't have a space of like, I don't know what it was. It would have been like, 500 square feet when, you could do with 40 square feet. You know what I mean? Like, you don't need a lot of space for those kinds of places where they're kind of like takeaway places. I didn't need to have all that space. So that's why I put the air hockey and the billiards tables in there and stuff, because like I had all this room, and it was just weird to have this big room with nothing in it. You know what I mean? Like, yeah. So yeah, I mean, I wish I could say I had some really big insights, but I think what I've really learned from talking to traders, from surveying traders, and from thinking about the traders I know who do well, they just know it's going to work. They know it's going to work. They know, like, you can probably relate to this idea of like, you're just not going to stop. Like, you're not going to let anything hold you back and stop you from getting to the point where you're going to start making money. One of the things that Gladwell was talking about was the difference between Asian cultures and like normal Western cultures. In a lot of Asian cultures, they do much better on the math tests. So they have these tests that they go around the world every 4 years. They give them to all countries, right? Basically, all countries, they test their kids every 4 years on the TIMSS test. They also have the questionnaire in there that's not math related, and it talks about like how many hours do you spend studying a day and all this stuff about your life. And what they found was in fact, it was 120 questions. Not all the kids would go through all those other questions that were not math related. They didn't get to the end of it. And one researcher decided to look at the countries that tended to complete those 120 questions about their life versus the math scores. And that actually the kids who did the questionnaire about their life, who went through the end of it, they also did higher on the math. So in other words, and this is like in Asian cultures, they teach you that every math problem has a solution. I don't know about you, but in America, what I learned growing up was that some kids would just say, oh, I'm just not good at maths. I'm not going to do this. I can't do this. I'm not good enough at math. But the Asian way of looking at it is very different. The Asian way of looking at it is that every math problem has a solution. It's up to you to find a solution. And, there's no out. There's no like genetic out, like, oh, I'm no good at math. I can't do it. Like, that doesn't exist. If you take that idea to trading, like people can tell you, well, I've never found a trading system that makes money. But there are traders that make money, right?
Obviously.
Okay. Yeah. So if traders make money, is it possible to make money trading? Yes. Okay. So can you find out what you can do to do more of what the traders who make money do versus following the traders who don't make money? What can you do to duplicate? If one person can do it, many can do it, right? And you can do it as well. What I've learned from trading is that. And I wish I could say that. I mean, it really comes down to persistence, I think. Persistence and the belief that you can do it.
I think also it sounds like, I mean, in my case, and it sounds like in your case also, that there's also a matter of interest, right? Like if you're really interested in it and you really want to figure out this puzzle, then I think you'll figure out how to do it. But if you're not interested, then you're just kind of, half-assed and just try to get by and then make the quick buck or whatever, right?
Yeah, absolutely. Yeah, absolutely. And you know what? What's interesting about what you just said is that the turtles, when they did their screening, they were looking for people who were interested in games. Like that was the thing. And actually in the show notes, I will give you guys a link. There's this really cool guy. I don't know if you heard this guy named Naval. Do you know Naval?
I've heard of him, yeah.
He's an angel investor, right? And he had this thread that went viral on Twitter, right? About wealth. And, he was talking about I love listening to his interviews too. When he grew up, he was always doing like role-playing games. He was doing games and he kind of looks at life and business as games and kind of figuring out what are the rules and how do you win this game? And I'm really big with that with my kids. I think like three things I think that are really important to teach kids from me as a father are the art of storytelling. So we make up a story every night, 2 stories every night before we go to bed. We make up stories. The other one is probabilities. So my kids know probabilities and they're like 5 and 7. You know what I mean? Like they know probabilities. Yeah. And yeah. So probabilities, the art of storytelling, and then and then strategy games. So we play a lot of strategy games like Naval was talking about, because I think that kind of, you can apply that to life. You know what I mean? Like I think back to the time when I was in academia as a graduate student, and there were certain academics that got a lot of attention, okay? And they kind of dominated their field, like even in a little tiny field of like child abuse and neglect, which I did some sort of ancillary research in at the time, right? And my mentor had a foothold in this area called child abuse and neglect. Okay, very small sliver of psychology. But there were these people that had these like larger than life presences at these conferences. You know what I mean? And they dominated it. And really, when you look at it, they only did they just did a couple of things. And I think you can do the same thing in any field. Like real estate or Instagram influencers or whatever. Like there was this guy. He would just wear these outlandish, garish these flowing sleeves, like he was from the 17th century. He looked like a 17th century magician. Yeah. And his name was Dante, and he would wear these like big kind of like the stuff I used to wear as a magician, to be honest, like really weird costumes. And he would give these talks, ruffles and all that. Yeah. And he would give these talks at the conferences, and no one is ever going to forget Dante. You know what I mean? Because he's like created this persona. It's like he's gamified the whole academic thing, and all of his things get published, and he goes against the norm. You know what I mean? He just rails against the major theory of the time. And it's like just a game. Like everything in life to me is like a game. And so I think and trading is a game, absolutely is a game, right? And that's why the turtles were screened. That's why they knew to screen. They were looking for people who were interested in games of strategy when they got those turtles in there. They weren't just, they say that they could take anyone and learn teach them how to trade, but really they wanted people that understood games of strategy, because they knew that that's what trading was. It's about learning the rules and learning how to make it work and how to win. So
yeah. No, I think that's a good point. I think also that brings up the idea that if you're doing something you really enjoy, then you're going to do it in your own way, right? You're going to make it yours. You're going to figure out how to have fun with it, like this guy dressing up or whatever. So I think it's the same thing in trading. You're going to, some guys like the big R trades, some people like the consistent returns, and you'll just figure out a way to do it for yourself.
And what you just said, there's a neurochemical basis for that too. Like if you're happy, you are going to create neurochemically, you're going to create an atmosphere in your brain that's going to lead to more testosterone, which is going to lead to more effort. So if you're happy at what you're doing, you will do a better job at it. Because why? Because you'll want to do a better job at it. You'll want to put more effort into it. It's going to come naturally. Whereas if you're slogging around at some job that you really hate, like you're not going to be you're not going to be a winner. Like you're just not. You gotta do what makes you happy. I mean, I know it sounds all new agey and all that. Like, yeah, do what makes you happy and do what, but it's true. Like neurochemically, it's absolutely true that will make you try harder. Like in your brain, if you're happy at what you're doing, you will try harder and you'll get better at it. And then now it's going to snowball, right?
Yeah. Secret to life.
Yeah.
On that note. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You don't want to encourage that behavior.
No.
Okay? You know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh. Sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, here's an interesting idea, especially during this time. Do you think it's possible to change everyone's mind, like to see your perspective at least?
Well, I guess my question would be, why would you want to, right? Like,
that's the thing, though, right? And a lot of people go around trying to change other people's mind, whether it's trading related or whatever opinion they have. They try and go and change another person's opinion, and then they get all frustrated and mad, right? But I believe, like you said, why would you want to change anyone's mind?
Yeah, it's tough. Like I've heard this before. People get really upset and say, "Why is there pain and suffering and sadness in the world?" The only way that that there's bad times is if you can contrast it with something better, right? And so if I disagree on the value of something like the euro against the US dollar, I think it's a great thing that somebody else has the exact opposite opinion as me, because that's what makes the market, right? So I'm probably pretty close to like a free speech absolutist, and I know that's a big deal for a lot of people. Like they think that's really bad. Like you shouldn't. And if you've ever gone to like corners of the internet where it is as close to, it's about free. It's pretty much as close to free speech. You'll see, like, that's the thing about the internet that our society has changed. And so if you think back to like Washington and Abraham Lincoln, like back in the day, it was all about your honor. It was all about your honor, like your word and your honor. Yeah. That was a real big deal. What's happened now, like on the internet, is we've taken your identity away, so it's not you anymore. It's like you're like this ghost. You know what I mean? You're like this online identity. And so as an online identity, you can go out there on the internet and these free speech forums and just say whatever you want with no real consequence, because at the end of the day, you can see all these crazy things, and then you walk into the store and nobody knows that was you saying that, and probably nobody in the store even goes on that online forum anyway, right? Yeah, but like that, do you know what I mean? Like it's sort of, we've taken that away. In a way, it's great that we have the internet and we have all this exchange of ideas, even though it's being suppressed now, obviously, in a big way. But in a way, I love the free flow of information and the exchange of ideas. But taking a stand isn't like it used to be. It's because it's cheaper, right? It doesn't cost you so much to go out on a limb and make this claim. right? So if I go out there and I claim that, redheads need to be all rounded up, because if it weren't for redheads, we wouldn't have poverty. If I said something like that, okay. In the olden days, everyone would say, "Hey, Walter said that about redheads," and I'd have a bunch of redheads upset with me and maybe tailing me everywhere I went, right? Yeah. But because online I can be anonymous and say that, no one really knows who I am or where I live, or you know what I mean? They just yell back at me on the internet. So it's kind of like it cheapens. It's hard to take a stand, really, because unless you do it in the light and you say, "Here, this is me. This is where I live. This is what I'm about, and this is what I believe." Like like Jordan Peterson, for example. I don't know much about Jordan Peterson, but I know he's controversial, right? And probably Noam Chomsky would be similar. They're both kind of outspoken, controversial figures, right? So that but what happens on the internet for the average person is we're just anonymous. Nobody knows who we are, and so we can say all these wild things. I think we need divergent opinions for everything, but especially for the markets, and as traders it's really important to have that. And I use those opinions. Like I like looking at where traders are at in terms of their trades. I use that information for my own trading. So yeah, I really like the idea of and I've learned things from people who have taken the opposite point of view. Like I've always been like, one of the things that you learn in psychology, there are real subtle forms of prejudice in the way that we look at groups. And even though you would say, well, I'm not prejudiced, I give everyone an equal chance or whatever, that still comes out, and that can come out just by calling the group the minority, not by giving them like a color of skin or a sex or whatever, anything like that. You're not even doing that, just by calling the group the minority. But like, there are studies in psychology where they say, well, the majority group says this and the minority group says this. What do you think? And so our prejudices actually get applied, even if it's just minority versus majority group. It's crazy, that we're built that way, like we're tribal people. And so, yeah, it's fascinating in some ways. But to me, free speech is really important. I just wish that we all had to do it in a way where we were saying, well, this is me and this is what I'm saying, because then we would think probably more about the consequences of what we're saying, because like I said, the redhead example, that would have severe consequences for me if I said, "Hey, I'm Walter, I'm in Australia, redheads are the problem." If I did that, I would have there are a lot of redheads down here in Australia, and I'd have some people upset with me. So that, I think, is the issue with, or one of the issues with free speech, is that it can be done anonymously now.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah.
And I think, well, especially as like in those trading forums, things can devolve pretty quickly when there's a lot of like anonymous tips, right, or whatever. But I mean, do you think it's sometimes worthwhile to engage in those things, as long as the other person's going to have like a reasonable conversation?
Like to try and change their mind, you mean?
Yeah.
I think I'm a big fan of, do you know how they teach in law school? So they ask questions, right? So I don't know if all law professors do this, but I've been told by people who've gone through law school. And actually, when I did my degree in psychology, my PhD in psychology, I had a lawyer on my committee. So it was all psychology professors and then one lawyer. They ask questions. So like the Socratic method or whatever, like they'll be asking questions of the class. So they assume that you've done the reading that you're supposed to do when you walk in the door.
Yeah.
And so then they'll ask you like, so, okay, Hugh, so what do you think about, the Johnson versus Tennessee case from 1859? Do you think that would apply to today's, big tech questions or whatever? You know what I mean? Like so they're asking you to apply that. And so I think that can be really useful also in anything like with trading or whatever. You say, okay, like for example, one of the traders in my forum now, he's got the system and it looks pretty good to me. And he's well, I want to improve the win rate or whatever, you know what I mean? And and I want to apply this sort of money management system to it and this and that. And I'm like, well, why do you want to improve the win rate? Like, it's already 75%. It's already seems to be pretty good to me. Like, and if you run the numbers of the risk management system that you're looking to apply to this, it's going to look really good. So why not just, you know what I mean? Why not just do that? We get stuck into these little things. And I think there's a problem too with trading. We can get emotionally attached to our strategies. If we spend so much time working on them, it's really hard to throw them away. Whereas if we have like 100 strategies and we see one that's just not working anymore, we can just see you later, goodbye. But if we've only got 2 and we're emotionally invested, that's tough. That's really tough to be able to put it aside, because what else are you going to do? You got to start from scratch again. So I think it's really important to always be testing and looking at new ideas. For me, anyway, that's important. So yeah, I think the best way to get someone to that point is to ask them questions. Like kind of lead them. And women are really good at this. Like, some women will say, "Yeah, you're wrong," but that's more of a guy thing to do, right? Like, "Oh, you're an idiot," you haven't even looked at it, have you? Whereas women will say, they'll kind of this subtle way, like, "I see, that's interesting. So what do you think about this?" And they're trying to get you to get there on your own, sort of thing, And I think that's a more useful way than to say you're wrong. Just kind of gently get them to come to their own conclusions that perhaps, for example, focusing on win rate is not the be all and end all for your trading, right? Maybe you're already there. Maybe you're okay with a 75% win rate. Maybe that will work for you. And maybe instead you can just now start to look more at your risk rules. Yeah.
Yeah, no, totally. Along the lines of like this whole censorship thing and, some posts getting taken down or whatever from the various platforms. Do you think that's going to lead to like more second guessing in the trading world? I think it will. Like if people aren't free to like fully express what they're thinking about in trading or in any other part of their life, like I think that might start to make them second guess their own opinions, their own beliefs, and maybe not, go forward with a trading system when it obviously works, but they're just second guessing themselves. Do you kind of foresee that happening with all this?
Well, it could be, or they could just go off and break off in like their own little enclaves or whatever, right? Like away from the mainstream. It could just fracture the groups. So, for example, there are videos on YouTube, and you can show this clearly, where the numbers have been they've been fudged.
Yeah.
Okay. So there's been videos on YouTube where they've reduced the down votes or the thumbs downs or whatever, you know what I mean, and stuff like that. In some ways, like doing stuff like that is just going to point out to the quote minority that they're, that it's obvious that they're in the majority. You know what I mean? Like just like at a certain point, like for example, I'll give you an example. Okay, let's say, where I live, a lot of people have young families. Okay, in Australia, there's a bit of a population boom at the moment, right? Lots of kids everywhere. If you have a daycare, you have a license to print money. Believe me, you will never have, like, at least in the next 10 years, you're going to be full, and you're always going to be full, right? You just need more rooms, right? You need more teachers. Okay, so if you have a daycare center, you are loving it. If you were trying to, like, let's say you had a bookstore, okay, and in your bookstore, you decided that you weren't going to have any books, any children's books, or any books about parenting, okay? Because, you just think the world's overpopulated. Like, you don't want to encourage that behavior, okay? You know what I mean?
Yeah.
What's going to happen to you if you do that? What's going to happen to you? Well, if you live where I live, where there's a lot of kids and a lot of families, like, they're not going to go to your bookstore. Like, if word gets out that you're anti-kids and anti-family and anti-population or whatever, they are going to boycott you, right? And I think the same thing could possibly happen with what you're talking about. If we're talking about the same thing, where you have these big spaces on the internet where they're obviously fudging the numbers, pushing people out that that have the wrong ideas or the wrong point of view, and they don't want them in there, and they want to keep people that are, so it's a little tight echo chamber where everyone kind of has the same thoughts and stuff. What's going to happen is that group, whether it's the majority or the minority, they're just going to break off, and they're going to start their own bookstore that's just for families. It's all kids books and all, you know what I mean? I think it's like drugs. What happens when you make drugs illegal? What happens?
Yeah.
Well, the price just goes up, right? I mean, I think so. Making certain thoughts and statements illegal in a sense and suppressing them is just going to push them somewhere else. I think it's the prohibition of ideas. There's a big group of Christians in China, right? It's illegal. There are religions in China that are illegal, like Falun Gong. There are these groups that have been made illegal in certain places, and they still exist. There was the Underground Railroad in the United States, right? When slavery, they had the Underground Railroad. So I think that's how I see it. I don't know. Maybe I'm wrong. Maybe people will just second guess themselves and go, "Oh shucks, I was wrong," or whatever. Why was I thinking that? But I think especially in the United States, like the people in the United States are historically have been very independent thinking. It's so funny. I love living overseas because you get this other perspective of the States, and they say, it makes me laugh every time when people say things like people in the States are so simple-minded, or they never travel, they never go anywhere. Like in Australia, people used to travel everywhere, right? I'd see so many Australians in Europe and stuff.
Yeah.
Every Australian winter, they're up there in Europe. But yeah, so, they would say things like that. And yet then they would like put on their blue jeans, invented in the United States, to be on their iPhone, invented in the United States, watching The Simpsons on TV, laughing that night, haha, Simpsons, from the United States. You know what I mean? Like reading the New Yorker on the weekend because they're so educated. You know what I mean? Like it was just bizarre to me that there's that disconnect. But I think in the United States, they're very independent. People have this culture of independence, the cowboy, the Lone Ranger sort of thing. And I think that even though there is currently this free speech clamp down and there's a censorship culture going on right now and people are getting canceled all over the place, I think it's going to eventually, it'll kind of restabilize and get to homeostasis where it's, the First Amendment isn't under threat. As funny as that sounds. I think it's going to eventually get there, I think it will. I think it'll eventually get to the point where, kind of balances back, but we'll see.
I hope so. I definitely hope so. I mean,
me too.
Unless you're in California, then you're in law school.
Yes, in California, that's right. California, totally, the People's Republic of California, totally different place.
Exactly. Yeah. All right, cool. Thanks, Walter.
See ya.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I like to tell dad jokes at the webinar. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, you do a NFP report podcast. I mean, not podcast, but a webinar every week, right?
Yeah.
And so
every
I just want
month,
to go over the psychology behind that, how you've seen that maybe change over time, and how psychology plays into trading that report.
I'm not the only one that looks at the markets this way, and I'm sure you've done the same. Where we look for surprises. So, for example, as we're recording this, about a week or 2 weeks ago, somewhere between a week and 2 weeks ago, the Reserve Bank of New Zealand said, they're going to try and clamp down on the housing bubble over there in New Zealand. And so the New Zealand dollar just totally tanked, right? That's the kind of the same thing with these news trades. What you can do is you can get ready for a trade. I mean, pray and hope that there's a surprise. That's basically it, right?
Yeah.
And so you're right. Like back in the day, 10 years ago, non-farm payroll was kind of like the most important thing. Now it's more about is there inflation, or who's the first reserve bank to start raising rates? That's kind of the big thing now. Jobs are still obviously very important for the US dollar and on jobs reports for all currencies. And actually, I remember when I first started trading, the jobs report wasn't as important as what Colin Powell would say. Because he was talking about whether or not they're going to go and invade Iraq for the second time back around 2001, 2002, in that area. So, it changes. The importance changes. It used to be that the non-farm payroll would pretty much set up the US dollar for the whole month. It's not really the case anymore, but you can still find surprises. The reason why we do it, I think, is because it's fun to get traders together. I like to tell dad jokes at the webinar, and that's kind of what we do in our downtime. And then because I find trading rooms to be absolutely boring. I've had friends that have done them and try to get me to do them. I just refuse because I don't want to sit there for hours, right? But we usually do sit there for about 45 minutes or an hour to see if it sets up. So yeah, you can do this with any sort of surprise. The Swiss National Bank had the surprise on January 15th, 2015 with Frankengeddon, right? When the Swiss franc totally appreciated so quickly. So they happen all the time. The flash crash, all these, if you had a tsunami or something, like these things will happen. They don't have to be economic news reports, but obviously with an economic news report, you have the advantage of actually knowing when it's going to happen. So you can kind of set it up. That's basically it.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, for sure. And these things change over time, like you said. Like one report might not be as effective or at finding trades as another one. And then they could also do things like change how they calculate GDP, right? And that can...
Oh, yeah. Really you're absolutely right. Yeah. So the consumer price index has been changed in the U.S. and they don't. I think they don't look at fuel and food now as part of your everyday costs, which I find interesting.
Because nobody's like paying for that, right? So
yeah, no one has to go anywhere or eat anything, right?
Yeah.
And right now, like if you talk to the people who are deep in the economics world, like the hedge funds and stuff, in the fundamentals, they're going to talk about bonds. Which is fascinating, I think, because what we're seeing in a lot of emerging markets like Brazil, you can even look at China and here in Australia, what's happening is there's signs of inflation. And so if it keeps going this way, the reserve banks are going to have to do something, and they're probably going to have to raise rates. In Australia, they decided to spend $4 billion in the bond market to try and push it down, and it's not working. A day. 4 billion a day. So it's really a kind of a tricky thing. I believe that we've seen the bottom of the interest rates, like as in December 2020, and I think that like they might be going up for the rest of our lives. So it's interesting times actually. It'll be really interesting to see who blinks first, which central bank starts to ratchet up rates first, and I think that'll be make for some really good trends in currencies over the next 2 or 3 years. So if things go as I think they will, which I think is, we're going to start to see central banks have to reckon with inflation, which is showing up right now in the bond market. But I mean, that's all fundamental stuff. Doesn't really matter. I can still just look at the charts and trade it. I don't like going into fundamentals, but you kind of have to if you're trading the news, like you said, if you're doing these news reports.
Yeah, sometimes you can get way too deep into it and like get into things that don't matter, right? But yeah, I mean,
exactly.
Same thing in the US, like the rates can't go any lower. And if they raise rates, then they're going to be paying all this interest, right? So yeah, it's going to be tough. Let's see.
It's a tricky thing. And, like the turtles, they never looked at that. They just, when they taught those guys how to trade, they didn't that wasn't part of the deal. They were just supposed to wait for the 55-day breakout. You know what I mean? Like, It's so funny. It's so funny that and you can watch TV all day, and literally every single person that comes on that business channel, that the CNBC or the Bloombergs of the world, or the what's it called over here, Sky News, they have Sky News in Europe, in England too, but it's just like every single person that comes on can have a different opinion about what's going to happen. That's the whole fundamental world. Whereas it's great as technical traders, we don't really have to. We can just say no. it's actually made a new high. Like that's the highest price we've seen in the last 20 days.
Mm-hmm.
Like there's no argument there. You know what I mean? So, so that's what I like about technicals. Yeah.
Yeah, the price can't lie. Like if it's going to go up, it's going to go up, right? So
yeah.
Cool. Thanks, Walter.
See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah, money's never been cheaper. Let's get the bids rolling, you know? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I know we talk about psychology here a lot, but what do you think is going to be the big investments for the next 5, maybe 10 years? What do you see as things that are going to trend up or trend down or whatever?
That's interesting. I'm going to be contrarian and say that I think the US dollar is going to appreciate from 2021 to 2023.
Okay.
So over the next 3 years, I think the US dollar is going to go up in value, believe it or not. I also think that gold is probably going to go down or stay about where it is, which is also probably contrarian. A lot of people are bullish on gold.
Yeah.
I think that XRP or Ripple will go up because I think that there will be a world financial system based on blockchain, and I think Ripple is the most likely candidate for that. Mm-hmm. So I think that'll go up in value because there'll be a lot of demand for it. Because right now, like if you send money, a lot of people may not know this from trading world today because it's so easy to fund your account. It used to be back in the day when you funded a trading account, you'd have to go into the bank, you'd fill out this long form, and you would have to wire the money from your account to the broker's bank account, right? Mm-hmm. And make sure that you had all your numbers correct so they, accredited your account and all that, right? Because your money's like in a pooled account, right, at the brokerage. What I didn't know then, though, is that was basically like an SMS for banks. So they were sending text messages.
That's why it never works the first time, right?
Yeah, exactly. Exactly. It never worked. Yeah. So anyway, with blockchain, it'll be a lot safer. It'll be instant and all that stuff. You don't have to wait for the text message and all that. So I think it's already headed that way. You can see it. The only real question is where. So I would say if there's 3 things I would say. Oh, and I should mention the difference between gold in your hand, silver in your hand, and buying paper gold, paper silver. So I think that physical gold and physical silver may actually go up in value, but there's kind of divergent markets now. And I think the physical gold market is different from the, buying it on a chart sort of thing. So that's important too, to note. So I think that gold's going to be choppy. I think that Ripple will probably go up quite a bit in value in the next 5 years. And I think the US dollar is probably going to go up as well. And I know everyone's, called the death of the dollar now, but I think it's probably going to go up between now and 2023. But we'll see. We'll see what happens. Yeah. What
that
about
makes sense,
you? What
I think they're really printing right now, right? So in the next 1 or 2, 3 years, it's still going to go up along with the stock market, probably.
Yeah, I don't know.
Yeah. Well, for me, I think crypto is a good one, especially Bitcoin. I think it's a network that's really it's almost impossible to hack at this point. So I think a lot of people are going to use that as a store of value. And then I think a really underrated crypto, not underrated, but an underrated asset or a category of crypto is going to be like the privacy coins. So people I think are going to get more into like how to transact privately. Yeah, I agree with you. I think gold and silver are still going to be controlled. So they're just going to go sideways, even though they should be worth more. Mm-hmm. And then I think commodities are going to be a big one, especially like food stuff. I think those are going to start increasing in price because there's going to be some sort of shortages around the world. So could be something to watch out for. Obviously not advice. We're not giving advice here, but just some opinions.
Yeah. That's interesting. I think you're right about, I think specifically water is a big one. So in those countries like the US and Australia, where you can actually buy rights to water,
I think that's big. In fact, I have a friend who trades that. Like that's his job. He trades in the water rights stuff and the water market. And it's very illiquid, you know. In Australia, it's not a very big market, but yeah, I think water is the key. I think water is one of those commodities that's going to be a big deal. I think you're absolutely right about that.
Hey there, I hope you're finding this episode useful. I just want to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
I know we mentioned the stock market earlier. I do think that the stock market, probably stock markets, you know, many like UK, Germany, Australia, US, I think they're probably, you know, by the end of this year, by the end of 2021, I think they're probably going to start to roll over. That's my belief. And that by 2023, the highs will have been obvious. Like, I think it's going to roll over. So I think there's a little bit of a, you know, like I was saying that the US dollar is going to go up in value. I think with that, the stocks will go down. So right now what we see is US dollar values, the purchasing power of US dollars is down. So the stocks have to go up to stay the same, right? Right. I mean, it's kind of like, so I think the opposite might happen where if the US dollar becomes more valuable, the stock prices might actually go down, even though like relative to the US dollar, you might argue that they're the same or maybe a little bit less in value, but you know, that, so I don't know. I just think my sense is that it's starting to roll over. And so, yeah, we'll see what happens. But I think the inflation, like the interest rates, are going to be key. I think that's the important thing. And as currency traders, we should always be looking at those anyways. Yeah. Like interest rates are really one of the most important things for the currencies that you're trading. But certainly, I think that may be kind of the first domino to fall. And then we start to see these sorts of things unravel. We'll see though. It's going to be kind of fun to see where are the cryptos, where are the stocks, you know, where does the money flow when money starts to get more expensive? Because when you think about it, anyone who's alive today has never seen money this cheap. It is so cheap to get money. In fact, that's what they say here in Australia at the auctions for property. Yeah. You know, the auctioneer will get up there. It's really big. It's really like common for Australian properties to sell by auction. They don't all, but a lot of them do, much more so than in the US or in England, right? And so they'll say things like, money's never been cheaper. Let's get the bids rolling, you know? And so I think so though this money has been so cheap, and so where's it been flowing? It's been flowing into stocks and artwork and cryptos and, you know, classic cars and all these places. And so then when it starts to get more expensive, what happens in property, of course, where does it move from there? Where's it going to start flowing? You know, you remember years ago when we had the obvious carry trade where money was flowing from Japan, where it was cheap, to London, where it was relatively expensive. Yeah. And you know, you always had this idea of money moving to different geographic locations. Well, now it's cheap everywhere. Yeah. So people are just sinking it into what they think is going to be good, which is cryptos, property, shares. I would argue even the artwork and even like trading cards have been inflated in value because of this. You know what I mean?
And like, those things like NFTs, right?
Yeah, exactly.
Yeah. Well, like when my parents bought their house, I think the interest rates were like 17% or something like that.
Yeah, so exactly. Yeah.
It is super cheap compared to that, right?
Yeah, like people don't know. Like people, if you're like 30 years old, you have no idea about what happened in the 70s. You know, you have no idea. Yeah. Like I had mentors who lost everything in the 70s. These are like older, you know, getting up there in years, and they tell me stories about the 70s. Like it was crazy, man. Like you know, I lost all my properties, I lost 3 businesses, like you know what I mean? It's just. I guess with the virus and everything, I guess we kind of had a taste of that in a way. It's different to like seeing like all these cars lining up to get fuel, and you know, and all the loans you get are like 20%, 19%, you know, and all that stuff. So it's a different sort of a story, and everyone's out of work too. You know, that was the 70s, and people forget about that. So
read up on your history, people.
Yeah.
All right. Thanks.
That's Walter. The lesson. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. there's also a lot of value in reviewing what you're doing and finding joy in the process itself.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, everybody has some sort of addiction in some small or big way, I think. And how do we harness that and like turn it in a different direction or a more positive direction instead of like a negative direction? What do you think about that?
Yeah, that's really good. That's a really good point. So you kind of see that with people who are like addicted to eating when they get depressed or sad, and then they end up getting addicted to exercise or something like that. Like, I think what you want to do is think about break down the chemical thing that's happening at a basic level. And this is going to be super basic, right? And I'm not a neuroscientist, but I know just enough to be dangerous. And I'm married to someone who knows a lot about the brain. So let me tell you that. So let's talk about this. You do something that you're addicted to. Okay, what happens in the brain? It doesn't matter if it's like sex or food or danger. Like you like to do dangerous things like skydive or surf big waves or hunt crocodiles or whatever, something that's like really crazy, right? Rock climbing without a rope, whatever that's called, free climbing or something. Yeah, so stuff like that, right? So what happens in the brain is basically you get a flood, or drugs, you get a flood of the happy chemicals, right? That make you really happy. All right. So what happens over time is you kind of get used to that. So you build up a tolerance. So you have to do more drugs. You have to do scarier rock climbs. You have to surf bigger waves to kind of get to that same level. If you know that you want out of that, you could do a 12-step program, right? Those are pretty popular. And they have a pretty good track record, right? But if you don't want to do that, you could shift your focus into something that you want to be really vigilant. So with trading, you could just shift over, let's say you really want to start following your rules of trading. You're like a random gambler, right? You see some tips, you read an article on FX Street or whatever, you see one of your videos and you say, oh, Hugh likes Bitcoin, so I'm going to go in on Bitcoin or whatever, right? Like you're all over the map. So what you can do now is just focus on this specific idea of rewarding yourself, of getting that flood of happy chemicals in your brain when you do the right thing. So what you do is you reward yourself for following your trading rules, right? That's a really good way to shift on, and it works with anything. So like you would reward yourself for sticking to your diet, right? So what do you like to do? Well, you like to eat. Okay. Well, what do you want to do? Like, how do you want to reward yourself for sticking to your diet? Well, maybe you go out and buy yourself a new dress or a new set of golf clubs or whatever, right? So you're just you're trying to move the focus away from what you've sort of used as your crutch to what you want, right? To what you want to change to. So like procrastination is a big one. A lot of people procrastinate. What you can do then is you just set up this reward system and go, look, if I don't procrastinate, on this thing that I'm supposed to do every day, 5 days out of the next 7, then I'll buy myself a movie or whatever. Like, I don't even know if you can go to the movies anymore. We can't over here. I don't know if they're open over there or what. Like, I don't know what's going on. But yeah, something like that, or buy myself a book or a trading course, or take myself to frozen yogurt. If I follow my diet Monday through Saturday, then on Sunday I can go and get a frozen yogurt, right? Or something like that, right? Just treat myself. So you kind of want to make it into a game where you win the game by doing the right thing. And so, because we fall into those habits. The other thing is to have someone to be accountable to. And that's why the 12-step stuff works, because you get people who are like your sponsor or whatever, and they're like, okay, like, you have to fess up to your sponsor and say, no, man, I actually had a drink yesterday or whatever, right? So yeah, having someone that you're accountable to every week that you talk to and you say, okay, this is what I did, this is what I'm working on. So it went well 3 out of 4 days or whatever. So yeah, that's how I look at it. Do you have any ideas on that?
Yeah, I think, that's obviously really important to have a little bit of that dopamine hit, I guess, right? When you do something right. But I think there's also a lot of value in reviewing what you're doing and finding joy in the process itself. So are you maybe trading in a way that's too stressful for you. I find this a lot. Like people want to day trade. They want to they have this idea of like sexy day trading, right? Like making $2,000 a day or whatever. But in reality, most people would probably do better just swing trading. So I think just reviewing the process. Do you find the process fun? Is your filling out your trading journal, could it be easier or could it be more fun? I think that's a really good way to entice yourself to keep on going because you find the process enjoyable, or you maybe have a trading strategy that, has a small stop loss and a big winner. Some people like that. Some people find that fun, or some people like having consistent winners that are just maybe 1R, and some people enjoy that. So I think there's something to look at there also.
Yeah, and I think you bring up a really good point about the process. And one of the things I learned at the last FX Street conference that they had in Barcelona, I don't remember, 2013 maybe or something. No, it was maybe 2011. It was a while ago. Anyway, one thing I was thinking about there, which really, there's a lot of great traders. There's a really cool conference. I wish they still had it because it's, a lot of the presenters there, they would come back like in future years because it's kind of small and it was really good. Anyway, one of the things I was thinking about there was this idea of embracing the unknown. And I was thinking about like how as traders, that's our whole job, and so different to everyone else who they go to work the same road, they walk in the same door, they say hi to the same people, they sit down at the same desk, like they do all this stuff every single day. It's so boring. The same meeting on Monday, whereas traders, it's so cool that we actually have this different thing. Like I might not take a trade today. Maybe I will take a trade today. Maybe my other trades I took last week are going to be losers today, or maybe they're going to cash out, or, and so we get paid for uncertainty. So whereas some people know they're going to get that paycheck every month or every 2 weeks or whatever it is, we don't know that. Like you're saying, like part of the process, I believe as traders, is that we get to embrace the uncertainty. We get to say, you know what? I don't know what's going to happen in this trade. I really don't. I know I have about a 46.5% chance that it'll work out, which means, of course, I have a 53% chance it's not going to work out. But it's kind of cool knowing that, I've put it in. It's in the platform. We're going to see what happens now, and I'm either going to get paid for this or I'm not. And a lot of people, they don't want to do that. And that's why, your job is to be a trader. That's why you get this job, because a lot of people don't want to do it. So, so I think that idea of looking at uncertainty as a good thing, and we try so hard to make the uncertain certain, like we'll add a new indicator, or we'll do another back test, or we'll try something to make it so that we feel like we have more control. We won't take this trade, or we will take that signal, and yet it still is just a roll of the dice. You just don't know what's going to happen on any given trade. You really don't. And if anyone doubts that, you can do that in your journal. Write down how likely it is to work out and see if you're right. See if you actually have the ability to tell those trades that are more likely to work out than others. Give it a scale, give it a 1 to 10 rating, and see. That's a really good way, because people trick themselves into thinking that they can tell the best trades, right? You just don't know usually.
And I think that's really the crux of trading, right? Like if you can find joy in that uncertainty, then I think that's the best place to start, right?
Yeah, absolutely. It's just let it go. It's like when you teach a kid how to ride a bike and you push them for the first time and they're just like, they don't have their training wheels and they're like kind of wobbly, That's how I feel like every time with the trade. I'm just kind of like pushing it off and just, okay, let's see where this goes, We could skin our knee, or we could have like, I did it, you just don't know. It doesn't, and it still is fun to win. I mean, I always say things like trading is boring.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And that's just because like the process of it is boring. The process of fishing out where should I take a trade next and that sort of thing, that's pretty boring and pretty, like, to me, kind of obvious. Like I don't try and convince myself anymore when I look at the charts, like, oh, well, I probably should take this trade because of this or that. I usually know, like, straight away. I look at the chart and I go, yep, within seconds, like 2 seconds, I can tell looking at a chart if it's usually really obvious. So in a way, it is boring, right? But it still is exciting because you don't know the outcome, the uncertainty. That's what you get paid for. And people don't want that. People want certainty. People want a paycheck. And so that's what's cool about trading, is that we get to get paid for taking on risk where other people won't. And so, hey, enjoy it. It's fun.
Yeah, I think it's also a skill that not too many people can master. So when you do have that successful trade, I think it's a confirmation that you're doing the right thing also, right?
Yeah. Yeah. It's very rewarding, isn't it? I mean, like putting all the time in that you've put in, Hugh, putting all those years, all those back tests, and getting to the point where you know you can make money is it's like someone can't take that away from you. You know, it's like having a degree or something, you know, it's like, you did the work, you got it. And so now you're there, you know, and it's really kind of fun having that and knowing that, you know, you're there. It doesn't mean that you're not going to have a losing streak. It just means that you did it. It's a really nice sense of accomplishment. And most traders don't. They never get there, which is sad. Yeah. They never get there. They're always looking for something better. They're never really locking into anything. And it's a bit sad, really.
I guess it's kind of like farming, right? You could think of it that way. Like if you're a farmer, you know how to grow some food. You always have food. You won't go hungry. And it's a similar thing in trading, I think.
Or hunting.
Yeah, hunting.
Yeah, exactly. Yeah.
All right, cool. Thanks, Walter.
See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. And I think it's just a matter of what works best for you, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I'd be interested to get your opinions on this. Default mode network. It has some implications in terms of our ego, our ingrained personality. And some people say that if you interrupt that default mode network, you can change your personality, or you can, do certain things with your psychology. What do you think about that?
Well, I've never heard that term before. So you're saying like we operate from like the basis where we operate that's kind of our homeostasis or something, like we're
that's, I mean, there? In my personal opinion, the science behind it is a little circumstantial, but the idea I think is sound. But yeah, it's like certain parts of the brain or certain networks are activated when we're not doing something like really cognitively strenuous, and we're just kind of relaxing. And apparently those parts of the brain light up. So they say that that's the parts of the brain that are our true selves or whatever. Right. So have you seen anything like that?
No, but what I'm aware of in terms of like personality, because it sounded like you were touching on that. Like they do say, like we used to think in psychology that they say your personality is formed by the age of 5, and then you're stuck. That's not true. And like you've probably noticed, like I lean towards the there's a guy in Cornell University. He might be dead now, but there was a psychologist, a really famous one, in Cornell University in New York, and he talked about how like you are different in different environments. So like you have like you have your wife, right, and you're in a certain way with her. Then you've got your like bigger family, like your mom, your dad, her mom, her dad, maybe your kids or your cousins, and then it kind of widens out to your workspace, to your social friends, to people that you kind of know, acquaintances, maybe when you go and watch a UFC fight or something, or whatever, or like go to a casino, you're different in different environments. And so he talks about like these circles that get bigger and bigger, So I think that makes a lot of sense, because I've noticed personally, anecdotally, so I would say in my life, I've noticed like I've made conscious efforts to be a little bit different. You know what I mean? And the easiest way I know to do that is to move someplace because nobody knows you. You know what I mean?
Yeah.
So so I believe that personality is very malleable. I think the research supports that. That sounds like a little bit more, what you're talking about is a little bit more in neuroscience, and they probably do, if they researching that, like they would be using functional MRIs, so they can see where your brain's lighting up and stuff. So I don't know much about that. Like if, let's say you go to work and you go a certain way every day, you walk down the street a certain way, you catch the bus, a certain bus at a certain time, you get off the bus, you walk a certain way to work or whatever, or maybe you drive your car, you drive your car to work, you drive the same route every day, unless there's a detour or something, you park it in the same general area, you know what I mean? Like, so I always try to mix it up. Like I try not to, where I live, it's really easy to not go anywhere because everything is right here. And it's a really small community, right? It's like living on an island. It's a little tiny peninsula and there's like, you're surrounded by water and like, you're kind of like stuck, right? Unless you really make an effort to get off the, off the island, which luckily there's several ways to go. You can go by, by car over a bridge, or you can go by boat or whatever. Like, it's so easy for me to like walk to the store the same way, walk to my kids' school the same way. Like, you know what I mean? But I think it's good to break it up and do different things so that your brain is somewhat uncomfortable. And that might be kind of what they're talking about. I don't know.
Yeah, I think so. Have you seen like Dr. Michael Parsinger's work on the God helmet? Well,
but I've heard about it. I've seen like a video or something. Tell me more.
Yeah. So he had a similar concept he called the binding factor, and he measured a 8 hertz signal, I think, that went from back to front of your brain. It kind of just cycled, and he found that if you use magnets to interrupt that movement, you can kind of get certain effects. Like some people became a little bit more aware of things. Some people improved their psychic abilities. Some people saw God, right? And like 1% of them. So I think there is something to interrupting that signal or some signal that's in there, right? And that can be through doing your activities differently or putting magnets in your brain or whatever it is. But I think there is something to it for sure. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, like to me, the general takeaway would be, that's fascinating, by the way. Thanks for sharing that. Because I heard about the God helmet, and I just saw like a quick video or something about it, or somebody talking about it.
You can actually get it.
You can buy it.
Yeah.
Oh, right. Cool. Yeah, I'm a sucker for those sorts of things. But I think the general takeaway would be like, break it out, like change your habits. Like, it's so easy as people to just fall in the same habits. You know what I mean? And it's thinking habits too. It's not just like physical things like walking to work or whatever, or, walking to the store or riding your bike to the store or whatever. Like, it's also thinking habits too. When you become a parent, it's like you see these patterns in your kids' thinking and you try and show them like there's another way. You don't have to always look at it this way. And I think we forget that we can do that for ourselves too. It's so useful to have like a trading accountability partner, because they can often point out things from a different point of view,
Yeah, totally.
And so, or a mentor or whatever, like somebody that says, well, you don't always have to look at it this way. And just like you don't always have to act a certain way. You don't always have to have this sort of personality. You can have a different personality. Like when I was a kid, I was extremely shy. And the only reason why I was able to somewhat break out of that was because I started doing magic shows at a young age. So I had to learn to suck it up and get in front of a crowd, even though like when I'm 6 years old, it's only a crowd of like 5-year-olds, like 5 kids or whatever, but it's still like, I had to learn that, and we can do that with anything. We can do that with thinking habits. We can do that with physical habits. So yeah, I mean, that makes a lot of sense. It is tricky though. Like what the God helmet gets into, it sounds like, is that, these things are almost like hardwired. So it takes something drastic to kind of like break the connection and force it to go another way. Right.
Yeah.
So that's very interesting to me. I suppose that I would say that there might be other ways, like the nuns that had the brains of, what do you call it when they Alzheimer's. Yeah. So they had Alzheimer's brains when they scanned them, but because they did so much reading, meditating and like just gardening, simple stuff, almost like they're in a Zen monastery, like these nuns, even though their brains look like normal Alzheimer patients, they were normal functioning. So, I think there's ways that your brain can, the whole plasticity of the brain thing where, the connections can go around, because Alzheimer's is basically like plaque in your brain, like black spots where it's like your brain, the connections have to go around, the neurons have to go around for you to function normally. And apparently, if you're very mentally active, that can happen. I think that's the case also with meditation. Like people that are lifelong meditators, I think it's the same sort of deal where, you start making these connections. Perhaps, I'm not read up on the research, but perhaps that's the sort of thing that would maybe give you a similar effect, to what you're talking about. So
yeah, no, I totally agree. I think there's a lot of different ways to get there. Like you could do meditation, you could do whatever, the God helmet, you could do psychedelics, you could do all that kind of stuff. And I think it's just a matter of what works best for you, right?
Yeah, exactly. Yeah. Like so many things. Yeah.
Yeah. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I think from my perspective, one of the really underrated things is lowering your expenses every month.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what's like the most underrated thing that will get you to become a full-time trader that people really don't talk about? I know everybody talks about the trading system, they talk about the psychology, right? But is there something more basic or maybe more advanced that you would say is super important also?
For me, I would say it's probably the way that you approach risk, because risk has been the thing that is probably like getting risk wrong has been the thing that probably has led to more traders quitting than anything else. It also has led to more traders getting frustrated more than anything else, I would say, because it takes so long to get a certain, to build your account to a certain size where your goals are, basically. So, for example, everyone always says risk 2% or risk 1%. Some strategies, if you risk 1%, you will go broke. Like that's too much. Some strategies, if you can handle it, you can go more than that. Some traders might be comfortable doing something completely different. Like you take, let's say you have a $100 account, okay? And so in your $100 account, you risk $10 a trade or $15 a trade, something like that. So let's say on a $100 account, you risk $15 a trade. You might be able to build that up to $1,000 rather quickly. It also might blow up the account, right? And if it blows up the account, you say, well, it was just $100, I'll try again, sort of thing, right? And then when it gets to 1,000, maybe you decide that instead of risking 2%, which would be $20, right? You decide, well, I'm going to risk 5%. So you're risking $50 a trade. Again, this is a little bit more than what most people are used to, but it could build your account to 10,000 rather quickly. And then when you get to 10,000, maybe that's when you're looking at 2 or 3% or something like that, right? Where it's closer to sort of the normal accepted level that everyone talks about. So that's a way that you can kind of get some fast traction. And I know a trader that did that. Like he always started with a really small account. And as soon as he got to about 100 grand, he would cash out and start all over again. So even if he only started with 5 grand, he would just work it up to 100. And then once he broke 100, he knew that something in his head would mess him up. So he would have to like cancel it out and do it again. And sometimes you start with that little $2,000 account, or whatever, and it blows up. And you're like, well, that's all right. I made 112 last time around. I'll try another $2,000 account or whatever. So that's another thing. Like you can do things like that. You don't have to risk 2% of a $1,000 account, like things like that. There's a lot of things like in society that you just don't question, we don't question it. It's a fact. And that's one of the things in trading. It's the same thing. It's like everyone sort of just says 2%, 2% or 1%, 1%. But I don't know that for some traders, that's too much, depending on their system parameters. And so for other traders, that's never going to get them where they want to go. So,
True. Hey there, I hope you're finding this episode useful. I just want to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. I think from my perspective, one of the really underrated things is lowering your expenses every month. So like, I think, the faster or the lower your expenses, the faster you can cover it with your trading. And, maybe you buy a used car and you pay it with cash instead of having a loan or whatever. And same thing with your housing situation. So I think that's a really underrated thing that most people don't look at. And even if you don't want to become a trader later on, or you just want to have a business or something like that, I think that really is beneficial for that also. So something to consider.
Yeah, that's so true. Like that's why there are a lot of traders in places like Thailand and Indonesia and stuff, because, well, one, you can live wherever you want. And two, it just naturally, cuts that. And actually, I think those are really good time zones to live in too. Like Bali, Thailand, like over in that part of the world, it's really cool because London session starts like in your afternoon, And so in the evening you get New York. So it's kind of like the really heavy volume in Forex is for Forex traders, or even if you're trading like New York Stock Exchange, still that's like, you know what I mean? That's kind of like the early evening when that fires up for you. So well, it depends on the time of year, but yeah. So like you could easily catch the open of the New York Stock Exchange if you lived in Thailand. So yeah, absolutely. And for people in your part of the world, it would be Mexico or Costa Rica or places like that where there's a lot of expats living there, and it's easy to reduce your expenses. Colombia or whatever, depending on how.
I think Thailand was I heard $500-$600 you could get away with a month or something and still live pretty well.
Yeah, I think it depends on
where you live.
Yes, my wife lived there, and I think we went back maybe would have been 7 years ago. We went there, and she was amazed at how much more expensive it was. But we went to like the tourist island Koh Samui, which is really touristy. So I think at the time they were getting a lot of Russian and Chinese. They'd had kind of discovered the island, and so prices had gone way up since when she was there. But look, if you're in Bangkok or something, you could definitely find a cheap or just slightly off the beaten path.
Yeah.
Like I met some Australians over there that were kind of doing that. They're like, we don't live in Koh Samui anymore. It's too expensive or whatever. But yeah, so what you're saying is definitely doable. Like there's beautiful places around. It's the same with Bali, or Indonesia. Like there's areas of Indonesia. You can spend a lot of money if you want to, or you can just go slightly off and find.
Yeah.
Like I think Bali still has there's tons of places there that are cheap. And if you go off Bali somewhere else, it's definitely cheap,
Yeah. I've seen some guys with those villas, and I don't know what they're paying, but it was kind of ridiculous, like $2,000 a month or something. And it's like
totally
cheap. Yeah.
Yeah, totally. Like we rented a place there, and it was like you had a driver, a chef, a pool. Like it was my family with another family, and it was like, dude, we were in heaven, man. Like the girls, like the driver takes the girls to go shopping, the driver takes me to go surfing. Like it was amazing. Like it was so cool so I can see where, it could be tempting. It depends on where you're at in your life. If you're in a situation where it's easy for you to pull up stakes and go. But yeah, you're definitely right. That is an overlooked thing for a lot of traders, is thinking that you have to make a certain amount of money to go full-time trader. So obviously you want to have some money saved and set aside and all that. But the other part of that is you also want to look at, can I reduce my expenses so that it's easier for me to get to that full-time level. Yeah. I would always say have 6 months at least, though. Like if I was working a job and trying to work trading and trying to trade on the side, and I wanted the trading to take over my job income, I would definitely want to have 6 months just in case I have expenses that come up or a nasty drawdown for a couple months or whatever, just so I don't, you need that little cushion, I think.
Yeah. It never goes as well as you think, right?
Yeah. It's never as good as Forex Tester.
Yeah, exactly. Yeah. All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
So the bank sent him Forex signals. He would take the bank signals, but he would disregard their profits. And he would just hold for 3-1.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I had a trader write in, and he was talking about, he had this issue where he was comfortable with his trading system. He's comfortable with his risk. All that was good. But he had the problem of not holding his trades to the point of taking to the take profit point. So what would you say to that? Like if someone came to you and said, look, everything's good. It's just I keep pulling the trigger and dumping my trades too quickly, and I'm not going to the full where I wanted to take profit at the beginning of the trade.
Yeah, that's a tough one, right? I mean, you have to put something in place that's going to almost force you to stay in the trade, right? Either have an accountability partner, or you have a protocol where you just shut off the computer or something, or just consciously force yourself to, stay in the trade and not create a policy, write something down that says, I'm going to stay in the trade. I'm going to stay in the trade until the stop loss get hit or the take profit gets hit, right? Or something like that. But yeah, I mean, it's really a matter of discipline, I think. But it's tough to institute for sure. What do you think?
Yeah, no, I agree. Like, I would recommend reading, if you can, get your hands on the Nick Raj book, Everyday Traders, Scott Barlow chapter. He's the only Forex trader in there, but the other guys are all basically systematic stock traders, which is what Nick teaches. Nick's a great guy, by the way. I've met him. He's a really cool guy. That interview with Scott really changed my whole thinking on that, because the guy was talking about this exact thing. He's like, look, it's up to me to make sure that my system has the right risk to reward, right? And his was 3-1. So he always, no matter what, did 3-1, held to 3-1. I tried to interview him, but he doesn't want to be interviewed. But yeah, so yeah, and he was interesting because he actually offloaded the signals to a bank. So the bank sent him Forex signals. He would take the bank signals, but he would disregard their profits and he would just hold for 3-1. So it's really, really interesting guy. So yeah, I think that you need a trading accountability partner helps. You could also just say, hey, look, if on Monday I take a trade and I say that I'm going to wait for it to go 2-1 and I don't, then I can't trade for the rest of the week. Right. So you have to set up this, like you're saying, like sort of reward system where it's like, if I do what I'm supposed to do, then I can take another trade this week. Right.
Yeah.
Or this day or whatever it is. I mean, it depends on the time frame. But yeah, so you're basically forcing yourself to get to a point where you are doing what you said you would do in your trading plan. And if you're not, you start to lose your trading privileges, right? Like you're saying, trading accountability partner can really help with that. So yeah.
I think there's a tendency to like want to rely on like an app or like a special system or something like that to solve these issues. But I think at the end of the day, you really have to face yourself and say, hey, buddy, you're not doing what you said you would do. So I think that's what it comes down to, right? Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. And I have a chart, like a spreadsheet, and it shows like when your risk reward shifts and you just shift a little bit over, how much more likely you are to have a terrible drawdown, or blow up your account. And it's fascinating to see how close most of us, we trade right on the edge, right? So if we start moving our 2-1 system, it starts becoming a 1.75-1 or 1.65-1 instead of a 2-1 because we're so antsy to take profits. It's bad news. Like it's amazing how quickly you can fall off the cliff if you're not on the right side. So that's another thing that can impact your logical thinking. Like, okay, if I don't stick to my 2-1 exits here, I'm probably I've literally tripled the likelihood that I'm going to blow up my account. This is bad news, right? So
maybe post that on your wall or something in front of you.
Yeah, exactly. Yeah, that sounds like a great idea. Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
So Richard Dennis, the most famous trader in the world, who took whatever it was, $400 from his dad, and he went to the Chicago Mercantile Exchange, I believe, and took it up to whatever it was, 10 million or whatever.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about edges? How long do they last? Do you think they last forever? And maybe let's talk about the different types of edges also.
Yeah, my thinking has actually changed on this. It'd be interesting to hear what you think. So I still do think that the simpler the edge, the more likely it is to maintain over into the future, to be robust. But I think there's kind of two things going on here. And as traders, we confuse the two. Thing number one is, did your system stop working because, it ran its course? The markets are now changing. There's high frequency computerized trading or whatever, and whatever people blame it on. Mm-hmm. It's usually the computers, though. they usually blame it. I mean, if you look back, they were blaming it on the computers in like the 80s, and they're still blaming it on the computers. Yeah. I think it's funny. But so there's that. And I think that's real, especially if you have a lot of variables in your strategy, like, 5 indicators, and then you have all these multiple settings that you can choose for all the indicators and all that. Like that's probably true. That's why I try and go as simple as possible. However, the other side of it that I don't hear a lot of people talk about is whether or not you, as a trader, have you decided that the experience of this drawdown you're in is to such an extent that you've decided, no, it doesn't work anymore. That's a different question, right? Like, let's say someone hurts their leg. So my daughter, she sprained her ankle the other day, and she couldn't walk. She was on a trampoline. She sprained her ankle, and she couldn't walk, couldn't do this and that. And it's kind of like a pain threshold. If you think of it in trading, there's like we all have this internal pain threshold for drawdowns, and once it gets to a certain point, it's like, nah, I can't do this anymore. It's broken. I got to scrap it. I got to change it. I got to do something. I can't keep going down this path. And it's the same, I think. It's sort of like a pain threshold. At a certain point, someone will just say, I can't walk anymore, or I can't move, I can't raise my arm, or whatever the pain issue is, wherever that pain is. And so that's a separate question. So but that's under your control, right? Like you can map out your risk using Monte Carlo spreadsheets and all kinds of even formula to determine the likelihood of certain drawdowns given your risk parameters. So that's totally under your control. It's the other side that you're talking about that we usually blame it on, which I think that's real. I think it does happen. I think the best thing you can do is make your strategy as simple as possible. And so in statistics, they talk about degrees of freedom. How many degrees of freedom do you have? That's basically how many different parts of your strategy do you have. Yeah. So the simpler, the better. And one thing I think that humans have an advantage over systems and computers is generalized pattern recognition. I'm sure that it's possible to program it, and that with AI and all that stuff, neural nets and everything, you can do it. But I think that's not within the realm of most retail traders to have that ability to get some sort of program that even approximates what you can do as a human, just looking at the charts and going, okay, I see this is, basically a bullish trend, but it's a severe pullback or whatever, I think those things are kind of hard to program in. So I think you do have an advantage, I do believe, as a retail trader if you use that, which is sort of the big picture, That's what I think. I think that there's two things to think about. And I've seen strategies that I thought were good on across the board. I've seen them not work on certain pairs and things like that. Yeah. So I've come around to that. So like the classic is, if you're trading a reversion to a mean strategy, the CAD Swiss is a really good pair to use. Yeah. If you're trading a trend trading strategy, the Euro Yen is a very good pair to trade. And so there's certain, certain pairs have different sort of profiles. And so that's something that, and Aussie CAD is another one. Aussie CAD is really good with reversion to the mean strategies. Not so good. I mean, it obviously trends, but it's not as good as, say, the pound yen, the Euro yen, the pound New Zealand, the Euro New Zealand, things like that. So I do believe there is something to it in terms of like systems that break or systems that like certain markets. That's, any programmer can tell you that. I've moved a little bit more toward that side, whereas before I used to say, no, they work on everything. But I've seen, like, my daily kangaroo tails don't seem to work very good on the US dollar yet Japanese yen. I mean, it's just not. The data since I wrote my book I think bears that out. You know, maybe it'll flip and start going good again, but from what I've seen, it's not there. So that's what I think. What are your thoughts on?
Yeah, quick question before I talk about it though. Like, have you seen strategies that work for a very long time?
Well, yes. The classic it would be the turtle trading system, right? Yeah. And what happened though is that in the 90s, I think in the mid to late 90s, it just had a really bad stretch of like 6 years or whatever. And so, you know, people stopped trading it, right? But it actually, number one, it worked on the lower time frames, but everyone was doing daily back then. And so, you know, that's the classic. I've seen articles on that where people actually look at it and go, okay, wait a minute. So this was working 70s, 80s, early 90s, and it kind of really went bad. I don't know exactly when it was, around 93, 92, something like that, 94. And then it kind of kicked in again, like in the early 2000s. So it might've been like a 5 to 10 year, 8-year range where most traders would give up. And in fact, if you look back at Richard Dennis, so people forget Richard Dennis was he was like the Warren Buffett of the 80s. Okay. He was the most famous dude. Not that I was a kid, right? But he was a famous guy. He was being interviewed like Buffett is today and Charlie Munger, right? Now they're investors, whereas Richard Dennis was more of a trend trader. And so everyone kind of piled in on his style of trading and his students, of course, and then his students taught other people, you know, it kind of spread. And so the argument was that just too many people were trend following, it wasn't going to work anymore, right? That was the argument. In reality, trend trading still works. And I think those rules still work as well. Maybe they have 5-6 years of downtime, and he quit his fund. So Richard Dennis, the most famous trader in the world, who took whatever it was, $400 from his dad, and he went to the Chicago Mercantile Exchange, I believe, and took it up to whatever it was, 10 million or whatever, from $400. He quit his fund. A lot of his clients withdrew their money, and he lost a big chunk, like 50-60% of his money that was in his fund. And then he was like left with like, what do I do now? And he started looking at different time frames and stuff like that. So even he had that point that he wasn't really aware of until he got to it, and then it kind of collapsed. And that's I guess my main point here is to think of that. What is your point? Is it 20%? Is it 25? Is it 30? Is it 10? Where is that level where you're going to go, oh, this isn't working anymore? Because then you can work around that and backwards engineer around that so that you don't hit it, or you're unlikely to hit it. Not that you don't hit it, but that you're very unlikely to hit it.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, that's a good example because I think from my impression of the trend trading method that he used, it's a very long-term. You have to look long-term, and you have to be able to stomach those big losses, right? Like there's going to be those big losses. So I could see where that still works. And I know somebody who still trend trades, and he has a fund and everything. So I think that's a really good example. But
and you can. I'll put the rules. The rules used to be freely available online. If people are interested in the turtle trading rules, we'll link them up in the show notes for you guys. You can download the PDF. One of the turtles put it out there because another one of the turtles was like selling not the exact rules but similar rules, and so he thought that was ridiculous because apparently that was the one turtle that did make money. That's right. So he was like, I think that confidentiality agreement like expired or whatever. Yeah. So he put them out for free, and then somehow they disappeared again off the internet. So I'm sure you can find them, but I'll link them up in the show notes so you guys can download them if you're curious.
Yeah, cool. Well, I agree with you totally. And I think maybe I'll refine your idea a little bit more. I think when I was thinking about it, there's probably 3 different types of edges, right? There's the system, which you talk a lot about. There's the conceptual edge. So maybe like you're the type of person who likes to trend trade, like we're talking about. And maybe this one trading thing isn't working, but you can tweak it a little bit because you know how the system works and how the market's changing. And then you can conceptually stay with trend trading, but you have a different system, maybe. And then the third thing is, like you talked about, the personality edge. Some people, they no matter how hard you beat them down, they always come back. And I think that is a huge edge in itself. We talked about persistence in the past, and if you can come back from losses, and I think, or knowing when to quit also like you said, is a good one. So I think those three types of edges, like I think the personality edge will last forever as long as you stay with that personality. But if you, I don't know how long a system edge will last. I think that is the most likely to break. But the conceptual edge is, I think, kind of in the middle where, it could break, it might not break, but it's more likely to stay than just the system itself, I think.
And really, your view of the markets really must match your system. So that's why it's so hard to take a system out of the box that someone else teaches you. And it's better for you to kind of modify it and sort of mold it into, something that is like, almost feels like you built it, even though, we all pull from other ideas and stuff like that. I think I mentioned before, I used to look at the new moons, like, and all this stuff. And then, so I was looking at new moon. This was like 2003, 2002.
So like
and I was, sorry?
Sort of like astrology, kind of.
Yeah, kind of like that. So it was like, it would mark these points where it was a new moon and the euro was meant to have a reversal there. And I was like, wow, this is amazing, because I was kind of into GAN back then and stuff. And then after I wrote my book, I did a talk down in Melbourne, down in Victoria, in Australia. And afterwards, they did these talks, they have a dinner or whatever. And so I was at dinner with like 10 traders. And one of the guys there is like, hey, I'd really like for you to look at my book. And I'm like, oh, your trading book? He goes, yeah. I go, well, what's it about? He's like, it's like financial astrology. And I'm like, dude, I'm like, I'm sorry, man. I'm the last guy you want, to look at that. I'm really sorry, but, so, I mean, I can see why people get into that. Cause like I said, I was totally into it, but that's not something I could trade today. It's just not, right? I think it's really critical and it's understated in a lot of cases because people tell you, hey, buy this strategy, take it and make money. It doesn't work that way. You really need to know, like the turtle strategy. You could take the turtle strategy and ruin it by risking too much. And the turtles didn't risk a whole lot. Some of the best rules in that turtle strategy that you guys can download in the show notes are the rules around risk and how to avoid terrible drawdowns. And they talk about being fully loaded and have a maximum number of trades, which actually maps on pretty well to Forex traders now because of our reduced leverage. So before it wasn't really much of an issue because you were getting, 1,000 to 1, 500 to 1. And now that's changed. Even down here in Australia, we've now swapped over to what the States had for years and what Europe has had over the last couple of years. And then now we've got it as of 2 months ago here. So our leverage has really been reduced. So it means rules like that make a lot of sense. Like getting to the point where you're like fully loaded, you have the maximum number of trades on, you can't go any further. So I think I would encourage people to check those out. But yeah, it's absolutely true that you are the edge in a way. I think that's kind of your point, right? Like, and so how do you maintain that? Well, that's a lot of what we're talking about here in this podcast, right? It's the psychology stuff. How do you maintain the edge? Like, how do you keep convincing yourself? Because that's the thing about trading. Like, I'm almost convinced that it's not really the traders that have the gangbuster strategies so much as it's the traders who are super resilient and able to keep with it even in the darkest hours. Like that almost to me is like the thing that, pulls people along and keeps them in. Cause like I know plenty of traders that they're away from trading and now they're doing multi-level marketing or real estate or whatever, maybe like 5 years ago, they were fully into trading and reading every trading book they could get, but they hit a certain point and they had to give up. And so I think that resilience is so critical. So I think it's exactly what you're talking about. It's like you are the edge in a way. And the way that you interact with your drawdowns, the way you interact with your strategy. I like to for example, I like trading trend trading strategies, but I also like trading strategies where the market's consolidating and bouncing off like a consolidation box. Like those are my two favorite ways to trade right now. And so my biggest question, and they both make sense to me, right? Like it's not like I go, trend trading is the only way to go. No, sometimes the markets don't trend. So you got to get to that point as a trader. You have enough strategies in your tool belt, so to speak, that you can whip them out when the time is right, and that you're not going to push it so hard that you have that terrible drawdown that makes you rethink whether or not it's still working. So it's really an important point that you made.
Yeah, that's true. And I think sometimes we're afraid to step out of the box, right? We have to conform to these like trading systems that you see on the internet or you see on these courses or whatever. And going back to your point on astrology, like I totally blew that off also until maybe like a year ago. And then I had one of those like birth chart readings And not that I would trade astrology necessarily, but it opened my mind more to it, because when I saw that birth chart and the woman told me the reading and everything, I was like, wow, this is actually kind of a science, right? It's not as out there as I thought it was. So, that's something that you look at. And some people actually trade stocks like that because they look at the chart of the stock, the birth of the company and stuff like that. So I don't know, something I might look into, but don't be afraid to, try something different and something that resonates with you.
Yeah. And that openness that you have, that some psychologists call openness, the openness to new ideas and new inputs, that I think is something that plays into your ability to trade uncorrelated strategies. Like if you're not very open and you're just locked in the idea that you must trade the trend, right? Or that you must risk 2% or whatever it is, I think it's going to be a little bit more difficult for you as a trader to have a diversified suite of trading strategies, right? Because it's not enough to trade different markets. That's not going to work. It will not work. They're too correlated. They move in concert. It's not a good way to go. Feel free to try that, and go down 10 years down that path and get back to me and see what you think. But it really doesn't work. I can tell you that. And the correlations are there. So I would say, having that ability to be open to new ideas is great. And it is interesting to me, like astrology is one of those things that is so old. Like a lot of you think of Western medicine. Western medicine has changed so much. Like we don't do bloodletting anymore. You don't go into the hospital and they go, oh, what you need to do is let that blood out. Let's crack your skull. Yeah. Yeah. Whereas astrology, it's kind of been the same thing for a long time, and it's kind of like covered up and poo-pooed in science and whatever. And so I think it's something that you should definitely look into. If it's something that strikes you should definitely take a look at it, because there's a lot in the trading world related to it as well. And we've had presidents. Apparently, Ronald Reagan, his wife was so into it and convinced him that he would only have certain meetings with the Russians when the stars were aligned and all this stuff. Like he had certain dates for his speeches and all that. Like it was all basically on Nancy Reagan's astrologer. So I don't know if people know that. So it's Reagan's not that long ago.
Yeah. And
so yes,
it's been around for centuries or thousands of years, maybe, right? So somebody has to use it and it has to work for somebody. Otherwise, it wouldn't stay around. So
you would think so, yeah. Yeah, exactly. Yeah.
All right, cool. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I think it could be really easy to get infatuated with like a 1 hour pattern or something that you're looking at.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some trading psychology rules that you never break?
The biggest one that I have is to allow, when I take a trade, I need to allow myself to have a loss. So when I take a trade and I'm calculating out what the risk is on the different accounts, I always know, okay, this is money that could be gone. You know what I mean? Now, I didn't always do this, because I used to keep moving. One of my biggest things when I was early in my trading was I would move the stop over and over. So if my stop was at 121.00 and I saw it coming down, I would move it to 120.80. 120.65. I'd keep moving it and I'd stay up all night watching it, hoping that it would reverse, during the New York session or whatever. So when I go into a trade, my mindset, in fact, I'll calculate the risk as such. For example, if I have an open trade and then I have a new signal, I will calculate the risk of the open trade as a loss, so that the new trade is calculated on that balance, not on, what the equity, where it is now or whatever, right?
Yeah.
So I mark it as a loss. Open trades are marked as a loss before I do my new trade. So that's the biggest one, is that I count risk capital as goodbye.
Now I hope for the best. I don't think the worst. I try to be as positive as possible. I try and envision scenarios where if I'm a drawdown, it'll go in my way and stuff like that. So that's definitely true. But I consider that like goodbye money. Okay. And then it's a pleasant surprise if it goes the other way. The other one is that revenge trading was the other big one for me. So like I would like go, oh man, that bloody Euro yen took me out again. So I'm going to get back at the Euro yen and I'll double down or whatever, like martingale style trading or whatever. I used to do that sort of stuff. Not as bad as the moving the stop loss. It was there. It was definitely there. It was almost like I thought of each currency as like a person and I want to get back at it. I don't know if you've had that. So yeah, so those are the biggest ones. The other thing is really important for me is I don't want to trade drunk. And I don't want to, because I've made that mistake too. Like, coming home late on Thursday night. I used to actually drink quite a bit, like in my 10 years ago or whatever, or 15 years ago. I hardly ever drink now. But so there was a problem where I would come home and I'd be like bored. I didn't have a TV or anything. So I just fire up the trading station and have a look and go, hey, yeah, that looks good. So that was terrible too. So don't trade under the influence. I don't move my stop losses. So related to the trading under the influence is to be in the right mindset. So you can use like meditation, hypnosis. You can use different devices. Like we talked about the neurophone. You can use binaural beats, to get yourself into alpha or theta so that when you're watching your charts, you're in a good mindset. I really don't like to be upset. If I just got in an argument with somebody or, the kids are just driving me nuts or whatever, I don't want to sit down and start, locking in trades into my platform at that stage. I really like to have more of a pattern of relaxing, going through my meditation, and then sitting down. And it's good because where I live, I don't really have to look at the charts until about 10:30 in the morning, really. I mean, it's just the Asian session. Not much is going on, interbank market's over. So I kind of set my trades up in the morning by around noon, maybe, depending on the time of year, the clocks change in Europe and the US, but basically, early to late morning, like mid to late morning, so I have time, I know it's not the case. Like some traders, if you live, for example, in California or Washington State or whatever, you might wake up and go, like I got to go see where my trade is because New York is raging, right? Even if you get up at like 5:30 in the morning, New York is on, and you got to go and see. And so I understand like might not necessarily have that luxury. It's really hard. Some traders, what they'll do is they'll just have a quick look and then they'll go through like their meditation or whatever. So that could possibly work as well. But so those are the big 3 rules. I'm curious to hear what yours are though.
Yeah, it's funny you bring up the trading drunk thing too. I had that a couple of times, and yeah, that's one of mine. And it's more about the mindset that you're in, right? Not necessarily drunk, but at least good mindsets, a little bit of meditation, using the Inner Balance app or whatever. Second one is like a 2 strikes rule. So I allow myself 2 strikes on one trading idea. If that blows up, then I stop doing that. And then the third one is can we dig into that real quick? Can I just ask, so when you say 2 strikes for trading idea, is that like as simple as I'm going long the Swiss yen and so I went long yesterday and I got stopped out, so I can go long today again on another? Is it like the same signal, or is it, I guess what I'm asking, is it different signals or the same, you know what I mean? Like how does that work? Yeah, I guess it depends on the strategy, but it's more of like, the same direction on the same pair.
Oh, okay. Yeah. Okay.
Yeah.
Got it. Yep.
Yeah. And then the third one would be just taking a break when I feel burnt out.
That's a big one. That's a big one, man. Like people who are listening, that's a really big one. I don't have that problem like I used to, but I did have that problem. And the biggest thing that got me was when like the smartphones came out. And yeah, man, I had this little, like, it was almost like a square phone. And it had like early MetaTrader on it. And like I would be out to dinner with my wife and I would be looking at the phone, like checking my trades going. And then I would micromanage them. And it was a big one. And now it's even worse now. You have even more abilities to take trades and manage trades than back then. Back then it was actually kind of a pain to do it. I'm talking about
all that stuff.
Right? Yeah, exactly. Yeah, like back in 2007. Yeah, like back in that area, 2006, 7, I think is when. Yeah, so now it's even worse, obviously. But yeah, and you like, what happens when you lose your stylus and all that stuff? Yeah, like that's crazy. Yeah, totally.
Yeah,
that's a big one.
Yeah, and sometimes I might take a break for like 2 weeks, a month, sometimes. But yeah, whatever it takes, right?
I have a question. Do you find that, like, if you're away, let's say you take a long weekend, well, actually, where you live, the market's closed Friday morning, right? Or
Yeah.
Friday
Or
afternoon, yeah. Friday afternoon, they're closed, right?
Yeah.
So 5 p.m. New York time, basically. So do you find, let's say that you had a long weekend and you're traveling and you don't see the charts. Let's say you leave Thursday, right? So you don't really see Friday, what London or New York did. And then you get back, say, Tuesday. So you don't see Sunday or Monday. So you're kind of missing like 2.5 days. What do you find when you get back and look at the charts on that Tuesday? Like if you have like a break, if you've had a break that long, or you just didn't get a chance to see the charts, what do you find?
Either I'm in tune with it from last week, or I'm like totally out of tune. And then in that case, I might not trade for the whole week.
Right.
But
yeah,
it just depends.
Yeah, I find that the fresh eyes is a good thing. I just feel like you kind of get it's like you get these theories in your head about certain pairs where they're going and stuff, and then when you watch it, you can almost make it fit. Like you go like, oh, I think the euro's on a tear. It's going to keep going higher. And then like I wake up in the morning, oh, it's gone down. Well, that's just a pullback, right? Whereas like if I come back like 2 days, like a long weekend is the classic. Long weekend, come back, don't even check or anything. And then I look and I go, oh, that wasn't a pullback. That was a double top or whatever. You know what I mean? Like, I just find that the fresh eyes, it's almost like the less time I have in front of the screen, the more obvious it becomes what the market's doing. And I don't know if other people have that or what. It's just really easy, I find, to get into that thing where you're using the evidence of the chart to fit your theory of what you think is happening.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So I think it's good to have multiple theories. Like, well, it could be a pullback, but it could be a double top if it does this. Well, it could be going up, but it could have just actually reversed if it did that. Or, it could be consolidating and it could be bouncing off the top of the box. But actually, it could also be breaking out right now. So I don't know. I was just curious how you had, like, what that had done for you. Because it really is obvious to me. If I spend time away from the charts, boy, it is such an advantage because I'm not stuck. I'm no longer stuck in the... in those ideas that I was a slave to before. So
yeah, no, I think it can be really easy to get infatuated with like a 1 hour pattern or something that you're looking at, and when you're really trading the daily chart, but you get stuck on that and you're like, oh, it has to go because this and this and this on the 1 hour, and then you step away and you come back and you're like, oh no, that's just noise. And
so it's true, man. It's so true. Yeah.
Cool. All right, thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Are you taking responsibility for yourself and your trading, or are you trying to shove it off on somebody else, or are you trying to get the quick answer, like that kid who copies off of you in class or whatever in elementary school?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I had this question from a trader. He's saying, hey, Walter, where do you think the euro is headed? And so, sometimes people will ask this, and it's kind of funny to me because, and I understand, I used to be there. I used to actually, after work, call my buddy up on Skype, and we would look at the same charts on Ninja Trader. We look at the pound yen, and we would look at the 3-minute charts, and we would sit down and we would literally say, okay, are we buying or selling? Like it was just, we knew that we were going to take a trade. Like we just didn't know which direction, right? And like, I get it. And it's funny to you and it's funny to me because you can speak for yourself, but I'm pretty sure you don't look at trading like that anymore. It's more about sitting around waiting for the opportunity to present itself than it is to sit down and have to know, well, I'm a trader. Where's the market going? Like, that's not, you know what I mean? That's not your job. That's not necessarily your job. So it's one of the things I try to impress on traders is that you don't have to know where the market is going at any given time. In fact, I usually have no clue. It's only once in a while that I look at it and I say, I see what's going on here. This possibly could set up a really nice trade if it does A, or if it does B, but if it does C, then no, right? So it's almost like you're thinking of probabilities. Like, let's say, it's not like when you're driving. If you're driving and you see a car and he looked like he stopped and it looks like he's going to turn across your lane, but he doesn't have his blinker on, so he doesn't have a signal on, so you don't really know if he's going to turn or not. You gotta like kind of anticipate. Go, well, he looks like he's slowing down, like he's going to turn, right? And it seems like he thinks he has enough space because I'm farther back. So he's just going to turn in front of me. So I got to kind of like pull back a bit and make sure that I don't slam into this guy, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And that's kind of the way I look at trading. It's like, I look at the charts, I go, no idea. Oh, okay, this one. Maybe if it does this or this, possibly a trade. But if it does that, then definitely no trade. Like, do you know what I mean? So it's kind of, you got to think of probabilistic thinking. And the false duality error strikes traders just as much as it strikes everyone else, which is this idea that if it didn't do this, then it must be this, right? So if I'm an NFL general manager and we draft a quarterback in the first round and that quarterback doesn't win a bunch of games in his first year, then we got to kick him to the curb or trade him or whatever. He's no good to us. You know what I mean? But it might not be that. It might be that your team sucks, right? It might be that your coach sucks. It could be that the quarterback sucks and maybe he's athletically gifted, but mentally, he doesn't have that resilience that you need as a quarterback because the world comes crashing down when you keep losing, right? So there's a lot of things there. It's not just, that's why you have, like, here's a famous example. And I know I'm getting into the NFL world here, so a lot of people are going to tune out. But Steve Young was a quarterback. He played for the USFL, which was a rival league to the NFL for a few years, and then it folded. And then he went and played for the Tampa Bay Buccaneers, which at the time was one of the worst teams in the history of the league. Okay. And the San Francisco 49ers had Joe Montana, mostly considered probably the best quarterback or one of the top 3 quarterbacks of all time at the time. And they traded for Steve Young on this terrible team. And literally everyone except the coach, whose name's Bill Walsh, everyone thought he was loony. Everyone thought it was a waste to trade for this terrible quarterback. But Joe Walsh saw a really good quarterback just in a bad team, right? And I feel like, as traders, that's something we got to do too. You know what I mean? Like, we got to look at it, and it's not just an either or. It's not just, this guy, Steve Young, sucks or he's great. It's not that. There's other influences. So when we look at the charts, it's not just like we're going to buy or we're going to sell. It's more about, does it look like there's going to be a signal here or possibly a signal very soon? If there is, okay, I'm going to get on the edge of my seat and keep an eye on it. And that's all I am. So I'm just an opportunity seeker in the markets. I am not a person who will know whether the NASDAQ is going up or the S&P 500 or the euro. I don't know. I only know if it fits a certain pattern. Yeah. So what are your thoughts?
Yeah, no, totally. I mean, to unpack that a little bit more also, I think it shows that this person doesn't want to take responsibility sometimes. I mean, it's good to ask questions, obviously. You should do that if you're a beginner. And yeah, that's a beginner question. And this might not be the case for this guy or this person. But I think it also shows they don't want to take responsibility for their results, right? They kind of want to ask somebody, oh, what's the stock tip? What's the Forex tip? Which direction is the NASDAQ going, right? And then they want to take a trade based on that. At least that's the way I read it when I get these emails.
Yeah.
So if that's the case, then I'll just hit delete because they're just looking for a simple answer. But if they ask, hey, how can I, learn a certain pattern? How can I backtest something? Then I'll answer them and say, oh, this is how you do it. This is how you get started or whatever. But I think that's a big part of it. It's like, are you taking responsibility for yourself and your trading, or are you trying to shove it off on somebody else, or are you trying to get the quick answer, like that kid who copies off of you in class or whatever in elementary school. So I think that's a big part of it also to consider. Yeah,
and to your point, the way trading is set up now, you can just copy other. Like if that's what you're doing, there's plenty of platforms out there like eToro or whatever where you can just link up your account to the other traders, and when they take the trades, you will. So you don't have to worry about it. It's like Signals on steroids where you don't. So if that's your thing, you can go ahead and do that. That's fine. But if you want to learn how to trade, I think one of the big aha moments is when you get to that point where you're like, I don't have to take a trade, right? Yeah. Even traders who specialize in one market. I'll tell you a quick story. So there was this guy in Africa, best trader I've ever seen in my life. Amazing, right? And every year he would sit down and go, which pair am I going to trade? And he traded the pound yen for the whole year. And that's all he would do is either buy or sell the pound yen all year long. So he was a market specialist. He made so much money that his country didn't want to let him out. They wanted to take his money and tax him and all this stuff because, he could have been a significant contributor to the economy, and he wanted to get out of Africa and go up to Europe and take his family. So they were playing games with him, not allowing visas for his family and stuff. It was a big mess. But yeah, so that's, and so even him, my point is, circle back around. My point is, even this dude who just traded the pound yen still had days where he sat down, fired up his computer, he looked at it and he said, I don't know. I don't know. It's okay to say that. It's totally cool. You don't have to know. You don't have to know as a trader where it's going to go. It's totally cool to in fact, that is my most common response when I look at the charts is don't know. I just don't know. So that's cool. That's totally cool, man. So yeah.
Quick question on that. How did he determine which pair he wanted to trade?
I don't know. He would just I don't know if he was reading the news or he just had a feeling I think the pound yen's going to kind of, skyrocket this year. Yeah. He was a guy I met through Colin. Do you remember Colin Jessup?
Yeah.
Who sadly passed.
Yeah.
Awesome Canadian trader. Really cool guy. Traded for 3 hedge funds. Amazing dude. He was I met this dude in Africa through Colin. So it wasn't really, you know what I mean? And he was totally legit, totally kind human, all that stuff. And they had worked out that they were trying to get, I think, from Africa, instead of going straight to Europe, they're going to go to Dubai or something to try and get out of town. But it was like I said, the government was holding back family members and stuff and making it really tough on him because they wanted a piece of the pie. They saw what was coming through his account, which is crazy when you think about it. But I mean, it just points out you don't have to be a trader that trades 35 markets like I do. You can just trade one. You can be a market specialist. It's totally cool, man. Mm-hmm. Totally cool to do that if that's your thing. Yeah.
Yeah. I mean, it's a wide range of ways to be successful. So find yours. All right. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I need to grow my account faster. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, how's it going?
Hey, good.
Pretty good? Yeah. So I had a question from a trader, and he was working on his back testing, and he was like, how many trades should I get in a certain amount of time, right? Because he was doing daily trades. And so one of the things I think, I know I get a lot of people, when I post videos on YouTube and stuff, people will say things like, oh, yeah, but you only had one trade in the last 6 months. I'm like, yeah, well, it was one pair, you know what I mean? And that's something that I feel like is misunderstood. The relationship between how frequently you trade and the trading system, it really depends on how many markets you're following. But more than that,
you have to actually have the data for those. So I'll give you an example. Like I used to trade a lot of reversals back, before I wrote the Naked Forex book. I was mostly doing reversals, right? And I was trading a lot of dailies, a lot of daily charts before I moved to 8-hour and 12-hour and stuff. One of the things I realized was that I thought in my mind that these are simple strategies. They work across the board. And to some degree, that's true. But actually, things like daily kangaroo tails, reversal kangaroo tails on the yen didn't work. And the big shadow, my friend Colin, he texted me or emailed me or whatever years ago, and he was like, dude, I've been trading the Canadian dollar and the big shadows have been wiping me out this year. You know what I mean? I think that was just kind of like a yearly, like an aberration, like, over the year. I just want to talk a little bit about the relationship between the number of trades, how the frequency of trading a system, and your back testing. Because sometimes people will go, well, I back tested these kangaroo tails on the euro daily, so I'm going to trade it on the euro pound, the pound yen, the New Zealand CAD, and so forth. And you really need to get the data from the other markets, don't you? Like you really do need that data. And you also need to realize that you can easily bump up the number of trades you take simply by adding more markets, provided that it works on those markets, right? Yeah. So is there anything that you can, add to that or your experience in terms of back testing versus number of trades per week, per month, or whatever?
Yeah, I mean, a lot more than I do, but just from personal experience, it's like I just backtest until I feel that I'm confident that the strategy works, and it doesn't necessarily have to hit a certain number. Because if you do like a daily chart or a weekly chart, it's going to be way less trades than like a 1-hour chart, right? So for me, that's just what it is. But maybe, I mean, you obviously know more about this. So what do you say about like minimum number of trades?
Well, see, the underlying question really is it's a veiled question, isn't it? What they're saying is I'm not getting enough trades. What they're really saying is I need to grow my account faster. You know what I mean? Like that's okay. Do you know what I'm saying? Like that's how I read that. Like when people say like that's not enough trades. So like when these people come in and they say things like, "Hey, that's really great that you have these kangaroo tails, but dude, you only have a certain number per week or per month or whatever. That's not going to work for me. You need to trade the 1-hour charts or whatever." What they're really saying is I need to increase my returns. That's what they're saying. They're not really like, they want action. And I understand that. I was the same way when I first started trading. Like I used to sit down and think, where's the market going? Instead of sitting down to look at and asking the question, is the market offering a trade? Like now when I look at the charts, I just think, is there a trade or not? And usually the answer is no. But what I used to think was, well, I'm a trader. I have to sit down and I have to know where the market is going, right? So I think there's a mind shift there as you get more experience. But I also think that you might want to look at other ways of increasing your returns if that's what you're really asking, which I think is mostly the case. Not always, but a lot of times that's what traders are saying. They're saying, I need to grow my account faster. This is going to take too long. What's going on here? I don't like this sort of thing. So money management is a way to do that. Changing your exits is a way to do that. So looking at risk and exits and how those interact with your equity curve is probably a much more fruitful area than trying to, multiply the number of trades you take by, trading the 5-minute charts or whatever. Like to me, that's, you know what I mean? Like
it rarely works.
Yeah, exactly. I mean, there's a lot of things working against you. We've talked about that in other podcasts, but so those are kind of my thoughts,
Yeah, no, totally. I mean, some people could think also about like pyramiding, right? I used to trade this one thing where if it got close to the target, then I would have like 3 orders, and then I'd have the alert on my phone, and I'd wake up in the middle of the night, which was not good. But it did multiply the account. It's just that I couldn't handle the swings. But if you did that in a more measured way, then that's another way that you could make more money out of each trade, right?
I used to do that too, and I wrote articles about that because it's the opposite of what most people do. Yeah. Most people take more trades when the market goes against them because they think, oh, it's an even better deal now, right? Like stock traders are famous for that, averaging down or dollar cost averaging, I think is what they call it. But where you just keep buying no matter what, assuming it's going to go up. It's kind of similar to the idea of you're buying the euro, you think it's going to go up 300 pips and it falls 100 pips, so you buy some more, right? But most traders don't do the opposite.
where you keep stacking orders as it gets closer to your target. That's a great way to do that. You can automate that too. I used to do the same thing, get up in the middle of the night and have to manage it because it's scary when you have, let's say you have 3 lots on, and then, once it gets halfway to your target, and then you've added 2 more, and then it gets a little bit more, you get 2 more, and then 2 more, and then before you know it, you got 9 lots on a trade where it was 3 lots, and then it's like, so, it can get a bit scary like that, but it can work too, and you can automate it, and there's lots of tools out there for that sort of thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
But I think overall, this idea of I don't have enough trades could be related to where you're at as a trader, in your development. It could be really a veiled question of how do I increase my account size faster? And again, there are other ways to do that other than taking more trades. But I would definitely, if I were a new trader, I would definitely want to stay away from trading the lower time frames. To me, that is the tricky thing to do. To try and add, more trades by trading the lower, like the 15-minute charts or whatever, to me there's a lot working against you there. So I would definitely steer clear from that.
Yeah, I mean, there's so many things like the rollover and, just the spread can vary so much, all that kind of stuff, right?
Yep. Yeah, exactly. Yeah.
Okay,
News, cool. All the commissions, all that stuff. Yeah.
Yeah, exactly.
Yeah. All right.
Thanks, Walter.
See you.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If we look at the success rate of traders, there's a lot of places say like 90% of them fail, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this might be kind of a weird one for most people, but I got to thinking about a person's sense of identity and how that relates to trading. So do you think that a strong sense of identity, personal identity, makes a better trader?
It depends. Like most thing in life, I would say like a lot of times you'll see these gurus and they're like really strong personality, especially if they come from the institutional background. Like a lot of the guys that were on the floor, they're physically imposing people. Yeah. Like they're used to being kind of dominating, and like in the floor, that was important, right? Because you had to, like, you wouldn't be heard. You wouldn't get your orders filled if you didn't catch someone's attention, right? So some of those guys can be, and then also just when you trade a lot of money, there's a lot of ego involved. There's a guy actually right around the corner from me, and he had a big, huge fund. And I don't know if you heard about it, but there was somebody in January of 2020 that was putting in a lot of orders, a lot of short orders. He went short the CAD yen, like short the indices and stuff like that, like put in huge orders, a lot of options and stuff, assuming that the market was going to tank. This was in January 2020, where most of these orders, and people were like, who is it? Who is, like, there's a lot of noise, like, who's putting in this mystery trader or whatever. Well, it turns out it's like my neighbor, not my neighbor, but he's around the block. He's literally like a block away, right? Yeah. And a much nicer house. And anyway, he and his wife both run hedge funds, and apparently he had he bought a bunch of mask companies too. Did all this in January 2020, assuming that that we were going to have the big crash, right, from the virus. And so I found that fascinating, right? That he was like, he basically went all in, with his fund, and he was like, and it cashed out, and he made like 2,400% or something like that. It was extraordinary, right? Because obviously the market did fall in February and March in 2020. So after all the news came out and the markets finally kind of panicked. So that kind of thing, and George Soros is famous for that, taking these really strong positions against. So when you do that, when you do that, that's an ego feed. You know what I mean? Like that can really mess with you. And what that means is later on, you might get to a position where you're just completely convinced that that's the right side. And maybe you're not on the right side. And maybe you go full bore, like Soros and Andrew Barry. I think that's his name, the guy from The Big Short, and My Neighbor guy. Like these people can get really, that I think that can be a problem when the ego gets involved. I'm not saying that those people have that. I'm just saying that's definitely potential, right? That's definitely a potential for that when you have these big, huge wins. It's like the old adage, they say the worst thing that ever happened to me when I was a trader is the first trade I took, or the first week, or the first month, or whatever, the first time period, I made a bunch of money. That was the worst thing that could have happened to me, right? Because then I think it's easy. I think I know what I'm doing, and blah, blah, blah. And it was all downhill from there. Like you hear stories about traders where that sort of thing happened. It kind of happened to me where it wasn't really me. It was my friend who tripled our account the first night or the second night that we were trading. But then we lost it on by Fridays, by the end of the week. But that kind of thing is true. But what I think, the other thing that I think you might be getting at, I'm not sure. So there's that ego part of it, but there's also a sense of confidence that's needed, right? You can be overconfident and you can really go for it because you think you know what's going on and other people don't, right? Like you're the mind that understands the markets and all that stuff, especially if you're into fundamentals. Like fundamentals get really into that. People that are into fundamentals, I think, can get really into that. But the other side of it is having the confidence that you need as a trader to pull out of those terrible drawdowns. And that to me is discretionary, systematic traders. That's a real big deal because that's when you're at your weakest. So you and I both know that when we're in drawdowns, that's when you're at your weakest. That's when you are most susceptible to making the big mistake. The big mistake could be doubling down, taking a big, huge position to make back those last 7 losers. It could be trading, changing your strategy and modifying it and saying, oh, well, if I had done this instead, I would have would have avoided all those losers. Or it could be that, thinking that the markets have changed, all these algorithms and robotic traders and institutions have changed the market, so my system doesn't work anymore. Like all of those things that creep up in the moment of doubt, you need to be able to have the ability to squash those. It's true that those things could be true, but in most cases, it's not. In most cases, it's just the demons that are creeping up and scaring you. That's how I see it. So I think you do need that confidence. You do need that ability to rebound from poor periods of trading, but you don't want to swing so far that you think you are like Mr. Market and you know exactly where things are going to go. So that's my take on it, is that resilience and confidence is really important. So that aspect of your personality is key. But also, being open to new ideas is good too. Like being open to, like, for example, if you just trade trend following strategies and you never take reversion to the mean strategies, that's a missed opportunity to diversify. So being open to new ideas and stuff like that and build strategies that are complementary, that can also be like a personality fault too. But yeah, so those are sorts of things that I think about when I'm thinking of that. What about you? What are your thoughts?
Oh, yeah, no, I was talking more about like having the confidence to come back. And I think if we look at the success rate of traders, there's a lot of places say like 90% of them fail, right? I think that's really indicative of how people think in the general public. Like you see a lot of people following whatever's on the news, or they're following this guru, or they like to follow this guy or whatever, right? And they don't really develop that sense of their own personality. And I think that's really important to having that confidence to go forward in trading, especially when most people don't know anything about trading, right? So that's kind of more what I was getting at. But you have a good point there. You can really get overboard, and you can start to think you're the man, and you're gonna just make all this money.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, you'll see it with these guys that are veterans, especially in the institutional world, like in the you know, the reason why I say this, because I hear people talk about it. They go to like trader groups because they have these trader groups in Australia. It's called the Australian Technical Analysis Association, ATAA.
Okay.
And so they'll have these talks, and I've done a few of them or whatever, but like people will come to me that had gone to the talks, and they're like, dude, that guy's crazy, man. He's got so much ego and stuff. And they tell me, you know what I mean?
Yeah.
And then, but now I think what's happened is some of these chapters, not all of them, the Melbourne one's really good and stuff, but some of these chapters, what happens is they have like, I don't even know if they meet anymore, but when they did, they had free drinks, so people would go there, and that like a lot of alcoholic traders would show up because of the free drinks. That totally went downhill from there. But yeah, so you'll hear things about, oh yeah, so and so came, like a famous trader, and they'll be like, dude, that guy's so much ego, you know, and stuff like that. So it's interesting. Yeah, it really is interesting, and I think. What you were saying about the 85% or 90% of traders that fail, what's interesting about that is, like, I think of other markets. Like, people say that about like what you and I do, trading markets, but there are other markets that people just assume that like everyone makes money. For example, like real estate.
Yeah.
Everyone just assumes that if you get into real estate, like it's always going to go up. Like, to me, that's so funny because I look back at my life and like what happened with my parents. Every time they sold the house, it was at the bottom. And every time they bought, it was when they were getting really expensive. Like it was like, it's like magic. Like it really is amazing to me. And I don't think that's a unique thing. I think there are a lot of people that pile in when there's a frenzy right before the top, and a lot of people that go, oh my gosh, this neighborhood or this city or whatever, it's done now, and they sell literally at the bottom. And I saw that close up. I mean, looking back now, I see what happened. I didn't kind of realize it at the time as a kid, you know, when we were moving around, because I moved around quite a bit as a kid. But yeah, it is interesting to me that like everyone says that the market's just so hard to trade, but then some markets like real estate apparently is just like, you know, everyone has the golden touch, whatever. I don't know. It's crazy to me.
Yeah, no, I saw this news story about houses in East Bay, San Francisco, Berkeley, Oakland, and all that. And some people are offering like $1 million over the asking price. And that just like blew my mind. Yeah. But that's a perfect example of like, you know, people think it's going to go up forever, and it probably won't.
Yeah. It's so true, man. It's so true. Well, we have over here in Australia, we have interesting. They have off market, so you can buy a house that's off market. And so I always ask the agents, I'm like, how is it that they're selling it and it gets sold, but it's not on the market? Does that mean it was on the market? And so I guess what it is, it's like people that are like, they're going to sell their house at a certain time, because over here in Australia, everyone wants to sell their house in the spring, because in the spring is when everything's nice, and apparently the prices go up every spring. I don't know. That's the theory, right? You don't want to sell in the winter, which as we're recording this, we're going right into winter right now. So everyone wants to wait until springtime to sell their house. So you have these off-market places that are not for sale. No one knows that they're for sale. But if you go to an agent and the agent knows, you know, someone, and they knows the owner or whatever, then you could actually buy it. But the thing is, you have to pay the price,
spring price,
for the spring price, the October price, the September October price, which is spring over here in Australia. You can't pay the winter price. It's so funny. The whole thing is funny to me. I just think it's hilarious. But yeah, whatever. Yeah, it's the way things are, right?
Yeah. All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
This is Dave Thomas from Utah, reading Chapter 1 of The Count of Monte Cristo. And then it's like, then you get Anastasia from, Russia.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, how did you optimize your sleep, or do you even optimize your sleep? And has that helped you in trading?
I did, and then I had kids. No, so yeah, actually, I'm thinking a lot about it. So these are the things I'll do. I'll give you guys quick. So yeah, so what I used to do before kids is I had a really good schedule where I would just wake up naturally, check the charts, because the New York candles close between 7 a.m. and 9 a.m. over here in Sydney, depending on the time of year. So here in winter, the New York candles close at 7 a.m. and then in summer it's like 9 a.m. right? And then there's like a month where it's actually 8 a.m. when there's between time changes in the States and in Australia. But anyway, so what I used to do is just wake up, I would check the charts, make sure everything's good, like there isn't anything that needs to be managed, like move to break even or whatever, and then I would go for a run and then come home, eat, and then maybe go for a surf in the afternoon or something like that, right? And then at night is when I would put my orders in, because around 6 o'clock or so is when 5 to 6, 7. That's when the markets open over in London, and that's where I wanted my orders to get triggered, like London or New York. Well, and so and then I would just go to sleep, and the next morning again check, make sure did I get stopped out? Did I not get stopped out? Should I move to break even? Whatever. So it's pretty simple. It was pretty good. Not having an alarm clock is awesome, right? Not having to get up at a certain time. Well, so then you have kids and they're up in the middle of the night, blah, 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 and all that stuff happens. So now what I've learned to do is supplements and watch the diet. So the couple of things. What I like to do is I don't eat late at night. So after about 7, 8 o'clock is when I stop eating for sure. Like I don't want to be eating at 10 o'clock or whatever, right? The other thing I do is I take magnesium. It's actually magnesium and calcium and vitamin D mix, but I mix it up and it's like in a liquid thing and you drink. It's a powder. It makes it like liquid and drink it. What I found is that having the magnesium before you go to sleep, about 30 minutes or so before you go to sleep, is amazing. It makes it so much easier to sleep. The other thing that's really good, especially for traders, is you can get these blue light filters like on your phone, like these apps and stuff. I don't know if it works for Apple. I heard that it might not work for iPhone. I'm not sure, but what these things do, and they have the downloads too. And actually, we'll put some links in the show notes for people who are interested. So what that does is it cuts down the blue light. So the reality is, I went and saw a talk the other day, psychologist, and she was talking about how if you have blue light within an hour of the time that you go to sleep, which for most traders is going to be the case, actually. I mean, let's face it, you're probably going to check the charts right before you go to bed, right? Yeah. Especially at where I am, because it's New York or in London, like the markets are raging, right? So she said the blue light from the screen, if you do that within an hour of going to bed, it actually impacts your REM sleep. The REM sleep is the deep sleep. It's the most important sleep of the night, right? It's what you get less and less of as you get older. When you're a baby, you almost go straight into REM sleep, which is the deep regenerative sleep. Your brain, it's good for everything, right? It's good for your body, your brain's connections, everything. So what she said was, if you have blue light and out within an hour of going to bed, that will drastically reduce your REM sleep. So I was like, well, how do I get around this? Well, blue light filter. So you can use these blue light filters that change your laptop or your monitor screen, definitely for your phone and that sort of thing, so that you're not getting that blue light right before you go to sleep. The other thing you can do is, if you get good at guided imagery, you can listen to some guided imagery stuff about relaxing your whole body, or it's kind of like self-hypnosis. It's very similar. If you listen to those for a while, then you get really good at kind of relaxing your body. So when you're lying in bed and you can't go to sleep, just getting good at relaxing, from the toes up to the head, slowly, kind of each part of your body, you're putting it, to sleep, right? So that's another thing. So those are things I would say. You can look at supplements. Obviously, you don't want to have caffeine, right? Like, I'm off the caffeine, and definitely not before. Like, if you're going to go to bed, let's say you go to bed at 11 p.m., you don't want to have caffeine, at 6. Like, if you can not have it between 6 and 11, that's ideal, right? Within 5 hours. So if you go to bed at 9, you don't want to have it, at 4 or whatever. Like, it's really that's a killer too, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And vigorous exercise is good, but you don't necessarily want to do it right before bed either, right?
Yeah.
So like vigorous exercise is really good in the morning or in the afternoons, but not so much, around the evening time. So those are the biggies that I've learned over time. What about you? What have you got going on?
Probably 3 or 4 things. Like I found, I used to have an Oura ring, so it measures your heart rate and all that stuff while you're sleeping. So I tried that out for a while, and it basically said I need about 10 hours of sleep to really get a good night's sleep. So
can you tell me a bit about is that like connected to an app or something? Is that how that works?
Yeah. It's Bluetooth. It connects to your phone, and then it gives you like a sleep score at the end of the night. So.
I thought it was like a mood ring. Like you said, Oura ring. I was thinking it was something you picked up from a hippie, but this is like technology, right? This is like a technology. Yeah, gotcha. Okay. Yeah.
It's actually pretty well built.
I believe it. Yeah.
But yeah, I mean, it's 10 hours. So I kind of use that as my gauge. Like if I get 10 hours, I know I had a good night's sleep and I feel good. If I can't get 10 hours, then I know I kind of have to push through it. Another thing is, like you mentioned, the blue light stuff. I wear these blue light blocking glasses.
Yeah.
So these help
gaming goggles. Yeah. You can get gaming glasses. Yeah. Those are good too.
Yeah, definitely. And then we tried recently this thing called NED. It's like marijuana droplets. It's got marijuana and CBD in it. And then that helps me sleep if I can't sleep.
Right.
And then basically just earplugs and an eye mask has been huge for me. That's probably the biggest thing. And I just sleep all night when I do that.
Yeah, really interesting.
So that's about it.
Yeah. You could also, I just thought something, you could also use like a routine where you listen to subliminals. And so the sound of the ocean on the subliminals, like the inner talk subliminals, I'll link those up too in the show notes. That works. Like routines are really good with kids. Like they do a certain routine so they know, okay, now it's time for me to go to sleep, right?
Yeah.
But yeah, you can do that too. What was the other thing I was thinking? Oh, the other day, your Oura ring reminded me of this. The other day, I probably because they know I'm a sucker for this, I saw some ads because I love these sorts of things, kind of like the Oura ring stuff,
Yeah.
I saw some ads where they said it's like a breathing analysis. You blow into a thing, okay?
Yeah.
And then it tells you like what your last, have you heard of it? Like you've seen it, right? It tells you like so you blow, like it's like a breathalyzer, I think, similar to like what the cops have, but you blow into it and it'll tell you your last meal had too many carbs and this and that, and here's where your body metabolism that it basically gives you all this printout of information about your body based on just breathing into the thing. And I thought, whoa, that is insane. So, because that's the kind of, it kind of reminded me of the Oura ring, like kind of give you some feedback on where you're at and what you should be doing. I don't know if it tells you if you're sleep deprived or anything like that, or if, like you need more sleep or this or that, but it was really fascinating. It sounded like it was more kind of like along the lines of diet. So, like it kind of is kind of gauging, where you're at now versus what you ate recently. It's telling you, you probably shouldn't have ate, that many calories, or you probably had too many carbs, or you probably, needed more fat, or, something like that. Like it sounded like that's kind of was the thing, but there might've been other stuff involved as well. I hope I see another ad for it because I want to check it out. I didn't really have time to check it out at the time, but I wanted to learn more about it. Yeah.
That sounds cool. That's super cool. I see.
Yeah. I was
going to try it out, right? Yeah.
Yeah, I know. Yeah, I know. I was like, wow, I've never like all these things like that you and I are both kind of into, like Muse and the Oura ring and the what's the thing with the two neurophone and, all those things, subliminals and stuff. Yeah, so I just thought it was pretty cool, and I wanted to mention that to you because I know you're like me, you kind of like things like that.
Cool. Yeah,
it sounds really cool.
I'll check it out.
I'll look into it. Yeah. I'll see if
and one last thing on the when you're talking about music before going to sleep, I found that listening to audiobooks is probably one of the best ways to fall asleep. But then I always lose my place in the book, so it doesn't really work too well. Puts you to sleep.
Yeah, it's so true. It is true too, especially if they're monotonous. Like, have you ever heard of? Just as an aside, have you ever heard of LibriVox? So there's this is free. I'll put a link down there. But LibriVox basically is free Audible, like Audible, the Amazon one. It's like Audible, but you go there and you download these MP3s of books, and they're like a lot of classics and stuff. So like one time we were on this massive road trip. We listened to The Count of Monte Cristo, right? This long book. But here's the problem with LibriVox. Problem is you can volunteer. Anyone can volunteer to read a chapter of a book.
So what ends up happening, you're listening to the Count of Monte Cristo, right? And what ends up happening is you'll get like chapter 1 will have Dave from Utah reading the book, right? And sometimes they'll even say like, this is Dave Thomas from Utah reading chapter 1 of the Count of Monte Cristo. And then it's like, then you get Anastasia from, Russia reading the next one. And like, it's kind of like a disconnect, you know what I mean? Like each chapter is and sometimes we were listening to it like on our road trip, my wife and I were like, and then it would be like, oh no, not Tim again. He's awful. You know what I mean? Like, cause sometimes people are really good. Like they give characters and stuff. There'll be like a little bit of like, they'll kind of use a different voice or something for different characters. And then sometimes people are just like so monotonous. They just read the book like he busted down the door. And then you're just like, but it's really good for putting yourself to sleep. So tip, if you like listening to books that you don't care about losing your place, you could download some really boring LibriVox chapters.
That sounds great.
That could work. Yeah, that could work. Just need to find a nice boring one.
I'm just picturing the Russian accent versus the the Southern drawl, and then like all in the same book.
yeah, it's terrible, man. It's so bad. It's like literally it's like Russian roulette when you're listening to it, because it's like every chapter you don't know what you're gonna get. You're like, oh, chapter 13 is Dave again. No, it's just crazy, and you just keep wishing that. If you have a good reader on a chapter, you keep wishing, please do the next one. Please do the next chapter. It is kind of funny. Yeah. But that's LibriVox. Yeah,
awesome.
LibriVox. Yeah.
All right. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Number 1, knowing your personality. And then number 2, what's the goal for your trading? Is it to build this huge account, or is it to have steady gains, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I got a question from a trader this morning, actually. And he was talking about backtesting. And he said, what can I do? Like, I know that backtesting is really important. I spend a lot of time in Forex Test and all that sort of thing. But where should I be focusing on? That was his main question. And so we were just chatting a minute ago, right before this call. And I recommended that he spend a lot of time, and I'm curious to see how you do this. So I asked him to, really dig deep into exits. The reason why this is important is because that's where I've found a lot of sort of the easiest ways to improve trading systems. So for example, let's just assume that you have a signal that's pretty good, like your entry rules are pretty good at identifying whatever type of move that you're trying to capture, whether it's an end of a trend or a reversal or a trend continuation or a breakout or whatever sort of thing you're trying to catch. And then but you're not happy with it for whatever reason, like the bottom line is it's not making enough or whatever. Typically what I've found is that by tweaking the exit, it makes a drastic difference. So for example, there are some exits that kind of follow price along and are really tight. Those exits are really good at allowing you to well, first of all, this is a psychology podcast, right? Yeah. So you got to think about what kind of trader you are, right? Like, are you okay having a trade go 200 pips in your favor, and then you have to give back 75 pips so that you only end up with 125, right? Are you okay with that? Is that okay? Or are you the kind of trader that is happy if you have a trade where you make 125 pips and you get out, you're done, and then you watch and it goes another 75 pips. It goes a total of 200 pips in your favor if you had just held on.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
right? Those are two different kinds of scenarios. It's the same result, but of course, there's two different kinds of scenarios for different types of people. One of those is going to be more stressful, more difficult to deal with. And so, you gotta kind of have to know that. So what I was talking about with exits, you have different types where you have some that are really tight. Those are really good at increasing your win rate. Those are really good at getting you out of bad trades. Those are really good at making you feel like a winner because it's so easy for you to capture a little bit of profit if it would have been otherwise like a loss, for example, right? Like those really tight exits that hug price as it moves are good at that. However, they're typically terrible at capturing the large move. And the reason why is every little sort of retracement move against your expected direction, whether it be up or down, those little jigs are more likely to pop you out of the trade with those really tight trailing exits. Now the looser, the wider exits, those are bad in terms of keeping your win rate up because they will reduce your win rate. Historically, we've seen this. And then they'll also, trades that go a little bit in your favor, they often don't make any money at all, and they end up as a full loss or a partial loss. They're really good at capturing the lion moves, the big moves, the moves that make your year sort of thing. So those are two different types of traders that would be better with those types of exits. So the trader that's okay with the move that goes 200 pips, right, and then it retraces and goes 75 pips against you and you get out 125 pips. The trader that's okay with that is going to be the kind of trader that's okay with the looser exit, the one that's kind of trying to make that, bag that 600, 700, 800 pip move. And then the trader who's more comfortable taking the 125 pip profit and then later on seeing the market go another 75 pips in your favor, that trader is probably more suited to the tighter exit. So that's kind of the thing I was explaining to this guy. And he's a really good trader. He just kind of, he's at that stage now where he's getting comfortable with his strategies. He just wants to improve his, his bottom line. And so exits is a really good spot for that. But again, you kind of map what you believe, what you're comfortable with, what you like to deal with in trading versus those things that are going to be really stressful for you.
Yeah, no, totally. I agree. And I think you really have to go in with a goal in mind, right? Like, number one, knowing your personality. And then number two, what's the goal for your trading? Is it to build this huge account or is it to have steady gains, right? And I think also there's a tendency to try to optimize the entry also at the same time, which usually leads to disaster. So a lot of people try to tighten up the entry, try to tighten up the stop loss. But I think in general, it's just a better idea, like you said, to try and tweak the exit. And then maybe you could get some gains in the entry, but generally the exit is going to be the thing that really makes or breaks the trade, at least from what I've seen.
Yeah, absolutely. So exits, stop placement, and your risk rules, those are the big ones, I would say. Entry, as long as you know it works, like as long as you know it identifies the type of market you're trying to get in. And it's funny because that's where I spend all my time. And most traders, actually, we spend all of our time on entries, especially when you first get into trading. Like you try, like, I don't know what was like for you, but like I would find a system or create a system, kind of read a book. Like, there was a book by, I don't know if his name was Carter or something. Anyway, it had all these entries and stuff in it. And there was another book by The Complete Trader by Jake Bernstein. There's all these books that I was reading, right? Yeah. And I started getting these ideas. And so I would try the system. And then I did point and figure charts where I wrote them out on graph paper.
Yeah.
All that stuff. And then I would just go, oh, this sucks. This doesn't work. And I'd throw it away. And in hindsight, what I really should have been doing is keeping that front end part of it and just tweak the back end. And that probably would have given me more systems that I would have, enjoyed trading and probably could have stuck with. But, it's like anything, wisdom is great. It's like right when you figure out life, then you die. You know what I mean? It's that sort of thing, isn't it? Same with trading. Like right as soon as you figure out trading, it's like, oh man, I don't have many more years to trade. So yeah.
I can't even imagine how many great systems have been thrown away just because, you didn't tweak the exit for your personality, right?
Yeah, it's so true. Yeah, it's so true. Yeah.
Cool.
So we agree on that. So it's exits is definitely a spot to check out. Yeah.
Yeah. All right. Thanks, Walter.
See ya.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Whereas now yoga is no different than like, you know, a triathlon or whatever. And it's like half men, half women, like everyone's doing it. You know what I mean?
Yeah, yeah.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, how do you use meditation in your trading, and how have you seen other traders use it?
So I like to use meditation, or what I call self-hypnosis. I like to use that in a couple of different ways. One is before I look at the charts, I like to get into a nice mindset. So where I live, that's a morning time thing. So what usually happens around our house is it's a frantic morning, getting the kids ready for school. And then as soon as the kids and everyone leaves the house and I have the place to myself, then it's like, then I can kind of relax. I can plug into hypnosis. Actually, I'll give you guys a link. If you're interested in a Forex hypnosis, I worked with a company called Hypnosis Downloads, and we created one for Forex traders, because the one that they had for traders was pretty crap. But you guys can, you know, it's really cheap, and you can check that out. The link in down there if you guys want it. So that's one way to do it. You can listen to binaural, what is it called? Hemisync or whatever. What are the ones that you use? Hemisync or binaural beats or whatever. They're quite similar. Also, that's another way to get you in the right mindset. What I'm trying to do with that is to use the meditative state so that when I look at the charts, I don't have baggage, right? Like I want to see it as clearly as possible.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
The other way to do that, of course, is just to go away from the charts and don't look at them for several days. That's another way to see them really clearly, right? Go on holiday. But so that's how I use it. The other way I use it is for solutions. So let's say that, for example, you're trying to come up with, and it doesn't have to be even trading related. It can be anything in your life where you're like, you have this issue and you know that you can figure it out, but you don't know what to do. You can do this, get into like a meditative state as you're falling asleep. It's called the hypnagogic state. And like one way to do this is make a tight fist. And as you're falling asleep, what you want to do is you're telling yourself that you're going to find the solution. So what you're trying to do, it's almost like a mantra as you're falling asleep. So you make this tight fist. You're in bed, you're falling asleep. It could even be just falling asleep for a nap. It doesn't have to be like, you know, nighttime or whatever when you can go to sleep normally. And you're telling yourself that when you wake, you're going to have the solution to whatever the issue is. I'm going to come up with a solution tonight, and I'll have it in the morning. I'll come up with a solution tonight, I'll have it in the morning, right? And as you're falling asleep, what will happen is your fist will relax a bit, right? And that's when you know that you're in that hypnagogic state, right? And this is the spot where historically a lot of inventors like Benjamin Franklin, a lot of people that have been really good with the creative side of life, they've used this hypnagogic state to come up with solutions. Sometimes what will happen is as your fist is relaxing, you will get the solution right then and there, right? You've probably had the experience, Hugh, where in the morning, you know, you're kind of waking up, but kind of falling asleep sort of thing, you know? I mean, it's kind of the same, but it's when you're falling asleep. And sometimes, I don't know, like I keep a notepad next to my bed because when I'm falling asleep and I'm going in hypnagogic, sometimes I get my best ideas for training during that time. So I want to be able to record them. But if you're trying to come up with a solution, you can definitely bag it then, or possibly in the morning when you wake up and you're in that hypnopompic state as you're waking up, and you can write it down. So it's kind of like seeding your subconscious while you're in a meditative state to work on something, and it kind of does it in the background for you. So that's something that I would definitely recommend if you haven't used that before. And like I said, I think Benjamin Franklin did a similar thing where he would kind of fall asleep with a bowling ball or a cannonball in his hand. So he would tilt his chair back, so he's kind of like bouncing on his chair on two legs, and he'd hold this cannonball, and when he dropped it, then he knew he was falling asleep, and then he dropped the cannonball, and that would wake him up, and then he would like write down whatever he was, whatever the solution was he was working on, right? That sort of thing. So so that's one. Those are the two main areas. It's sort of problem solving / goal setting and getting into the right mindset for my charts. I know other people have used it for other things, like if you have anxiety about pulling the trigger or those sorts of things, like if you have like trading related mechanical issues, that's another thing where it can help, especially something like the hypnosis download that I'll put in the show notes for you guys. But those sorts of things would be what I use it for. What about you? How do you approach it? How do you you obviously use meditation, right?
Yeah. I mean, it's kind of similar. Like you said, number one, to calm myself down before trading or making any decisions. And then number two, to help solve problems or to, just come up with creative ideas. And the thing that works best for me is just to get into that meditative state and then set an intention and say you want to, like you said, figure out this problem or whatever. So you set the intention and then you just let your mind go blank. And then you don't think about the idea or the solution you want to see, and you just like listen to what comes in. And many times you can start to get ideas. You'll get like situations in the past that will help you figure out what's going on now. If you have a problem that you're trying to fix, a lot of times you'll find this little like cord that goes back to the source, and you can kind of trace it there, and then you can figure out what the solution is based on where it came from. So I think that's another way to figure these things out and to get some creative ideas. So
how do you do that? How do you do that? Like, how do you pull the cord or whatever, as you say? Like, how does that work? Like for you or?
Yeah, that's kind of, it's hard to explain if you don't do it. But like one thing I've done is like this thing called CAP. It's like a Kundalini awakening process or something, right? So you basically lie on the ground and they play this really loud music. And it's all different types of music, and that's just to distract your conscious mind. So that allows you to let go and let everything else come in that wants to come in, right? So it's kind of the same thing. You just want to like put your conscious mind aside, and then all these ideas and things will start coming in based on the intention that you set in the beginning. So it's not really like pulling at it, but it'll just kind of start to float into your consciousness, and then you can kind of process it there.
Interesting. Wow, that's fascinating. And where did you learn? Where did you hear about this or whatever? I've never heard of it.
It's kind of just like trial and error.
Like,
yeah. I realized that all these things like meditation and breath work and these plant medicines like mushrooms and ayahuasca, they're all kind of the same thing. They just get you to that state, and then from there you can start to do some work, and you get these ideas and things coming in.
Right.
As long as you set that intention in the beginning.
Yeah. It's interesting because I can imagine some people listening to this or watching on YouTube, whatever, they might be thinking that like some of the things you like when you start talking about like mushrooms or yoga or whatever, some of these things are like emotionally, they can be charged. You know what I mean? Like we're bringing like our experience into the equation, right?
Yeah.
There are certain words or things like I remember. When I was a kid, I was a magician. I did magic tricks and magic shows and stuff. That's what I did every weekend. I was always working at some kid's birthday, even when I was a kid. I was like 7-year-old magician going around doing, 6-year-old birthdays or whatever. Like it was crazy, man. It was wild. But all the way until I was like 19, I did that. So anyway, there was a kid that came over, right? When I was a kid, when I was, probably 12. Mm-hmm. And he was like, I wanted to show him some magic tricks. He was asking about it. And then he said his parent, I think he was a Seventh-day Adventist, right? And his parents said that he came over one day and he's like, I can't play with you anymore. I'm like, what do you mean? He goes, my parents said I can't play with you anymore. I go, why? He said, because you do magic. I said, dude, these are like tricks. They're illusions, bro. I'm not doing like black magic or anything. You know what I mean? But it was like in their sort of culture that they grew up, magic meant something. You know what I mean? Mm-hmm. And really, it was better to be called sleight of hand or you know what illusions. I mean, or whatever. Yeah, illusions. Like it wasn't really magic. That was all just like the stuff that you talk about to make it look cool. So it blew me away really. But it's the same thing with like yoga. Mm-hmm. Like I remember when I first took yoga class in like the 90s, early 90s or whatever, it was like all women, right? And it was almost like for some people, it was like there's like this spiritual attachment to it. Whereas now yoga is no different than like, you know, a triathlon or whatever. And it's like half men, half women, like everyone's doing it. You know what I mean?
Yeah.
It's just, so I think when you say meditation or you say hypnosis or you say mushrooms or you say, you know, Kundalini or source or thing, sometimes those things get a little bit charged.
Yeah.
And so what I want to just make sure that people understand from my point of view, meditation and self-hypnosis is the same thing, right? I just think that sometimes we can close doors to things that might help us out just because of the emotional charged words that we use to describe them. So sometimes you can just, you know, describe them in a different way. You know what I mean?
Yeah.
Especially if you're sharing it with somebody else.
Yeah. So it's more palatable, right? We really do bring in our past, like programming, our past culture, our past whatever, from our parents, from our friends. So it's really important to be aware of that. And same thing goes in trading, right? Like I hear a lot of people writing off a trading system before they even like test it or try it. And like, dude, really? I mean, like at least give it a try and see if it's going to work or not. And it might work. So it's the same thing. I think.
Yeah, it's exactly the same thing. Like the people say, well, you can only make money if you trade the trend, or did you notice that the only traders that make money are the ones that have gone through this course, or, you know, like all these things.
Trade for a bank or trade like a bank, right?
Yeah. Oh, that is so funny. Yeah, it's true. It's true. Yeah, there's a lot to that. Yeah.
Cool. All right. Thanks, Walter.
Thanks.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Even if you have a 60% win rate, that's really good still. You just have to either get more trades or just, you know, wait for the right setups or whatever it is. But
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question from a trader, and this trader is wondering, I'm working on becoming more consistently profitable, and I'm putting all of my time into this. How do I become more consistent? And so my thoughts are, if this is what you're looking at, I'm going to read between the lines here and say that this could be, well, it's hard to say. This could be a break-even trader, or it could be a trader that's actually making money. So one thing that I would say is you probably need to widen your scope. So when people say, I want to be more consistent, that usually, it could mean that like Monday I make money, Tuesday I lose money, Wednesday and Thursday I make money, and then Friday I lose a lot. Like that sort of thing where it's kind of in and out. And so my thoughts on that are that you probably want to set up your goals so that you're looking at more of a wider scope. So instead of looking at making money every day, if you're trading the 4-hour charts, you're probably not going to make money every day. If you're trading the 5-minute charts, you're still probably not going to make money every day, but maybe it's possible to have more, you know, many more profitable days than not. So the idea here is that you want to put a measuring stick at the spot where it's easily achieved, but also you can probably improve on it a little bit. So for example, the goal of making money every single day with a 60% win rate strategy isn't going to work, right? It's just not going to work.
Yeah.
If that's what I'm reading here in terms of like, this is my goal to be more consistent, it's like, I want to cut out all my losers, because if I cut out all my losers, then I'll be profitable, or I'll be more profitable. That's not really what you want to do here, is get to a point where the risk that you're taking, you're okay losing that, and that the rewards that you're pulling from the markets are in terms of like a weekly or a monthly goal rather than a daily or an hourly goal, right? So just stretch it out a bit further. That's what I would recommend this trader do. Again, I'm not sure if you're actually making money or not. If you're not making money, like you're kind of in that break-even stage, then I would look to, you know, we've done other podcasts about, you know, how do you use risk? How do you tweak your exits? Those sorts of things. But that's more down that path, most likely for you if you're break even. But if you're at the point where you're making money, but it's just kind of not enough, then it's probably going to be more along the lines of changing what your goals are. And once you change those goals and you go, okay, I want to make a certain percentage every week or every month,
that makes it easier for you to then adjust your risk to a point where those losing periods don't hurt as much, right? Mm-hmm. So you kind of need to know where you want to go. And then from there you can, and I'll put the risk calculator in the show notes for you guys can check that out and use that to kind of fine tune that. But really, I think it sounds like what is happening with this trader, it's really common too, by the way, that your losing streaks are so painful that you feel like you need to change something to get to a point where you're more comfortable with your trading. And it's probably just adjusting that risk based on the parameters of your strategy, and your goals are going to be a little bit further off than they are right now. That's the best guess. What are your thoughts on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, no, I totally agree. I think it's just a matter of either zooming out, like you said, zooming out to a weekly or a monthly, usually a monthly for most traders, I think. Or just, having this expectation. I think there's a lot of marketing in the Forex education world about scalping or whatever, and you're going to make money every day just by doing this one thing at 5 o'clock or whatever. And I think that leads to people thinking that they need to be perfect, like they need to have like a 99% win rate or something like that, or a 90% win rate, when in reality you don't, obviously, right? So I think there's that like perfection bias with a lot of people. And I think if you can overcome that and just understand, okay, even if you have a 60% win rate, that's really good still. You just have to either get more trades or wait for the right setups or whatever it is. But it's not necessarily about improving consistency. It's being comfortable with what you're trading, I guess.
Yeah, totally. Yeah. And you're right about the marketing thing. Like, that's so true. Like, people trying to, there was a trader yesterday and he was contacting me about, I need to qualify for some, LTS or whatever. And I'm like, I don't even know what that is, dude. I said, the forum is not for you. I told him, I said, I'm sorry, but it's not, cause he was like, I really need someone to help me qualify. And it sounded like it was one of those things where they have to, make so much money and they can't hold positions over the weekend, all that kind of stuff. I don't know, but it's what it sounded like. I never heard of whatever he was talking about, but I just said, look, that style of trading it's possible, but it's for the vast majority of traders, especially new traders, trading those lower time frames and trying to make the, like you say, like the 80% win rate or whatever, that is going to be so frustrating for so many traders to try and go down that path. It is so much easier to go the other way and start at the dailies and work your way down. And it's like in sports where they say focus on the fundamentals. Mm-hmm. Like on volleyball or whatever, I guess they would focus on serving and digging or whatever. And, and then gridiron, they focus on tackling, and soccer, they focus on, kicking, passing.
Have you read the John Wooden book?
No, but I've heard about it. It's so funny that you say that. I heard about it this week. The coach? You mean the coach from UCLA, right?
Yeah. I mean, he was like national champion for 10 years in a row.
10 years in a row, yeah.
Amazing. Yeah. And I read the book, and he said, like what you're saying, the first thing he taught all his players was how to tie their shoelaces. And then really? The kids walked in there like, what the heck is this guy talking about? Tie your shoelaces, right? But he's like, no, if your socks are not on correctly, you'll be uncomfortable and you can't play. If your shoelaces keep coming off, your mind's going to be off the ball and on your shoelaces. So you got to learn how to do these two things first. And I think that's exactly what you're talking about, right?
That's awesome. Yeah. Someone just was talking about that book. Actually, my friend in high school who was really good at a good friend. He's excellent at basketball. Mm-hmm. He actually played basketball in college. He went to the John Wooden camp when he was a kid, and he had a picture with him. I'm like, dude, that's John Wooden. Like, no way, man. He's a legend. Because he coached Kareem Abdul-Jabbar, right? I think he was, all those guys, they won 10 years in a row or 11 years in a row. They won the championship. Yeah.
Yeah, it's amazing.
But it's so true, isn't it? It's like when you talk to these really good coaches, like in the athletics world, it's just focus on the fundamentals. And it's the same in trading. It's exactly the same in trading. Focus on the fundamentals. Yeah. Focus on, the biggest thing you can do as a trader to get better is to have eyes on how well you're doing right now in terms of execution.
which means a journal of your execution. Like that's the best thing, and have somebody else's eyes on your execution. Because if you have a strategy that works and you're not making money, then either the strategy stopped working, the market stopped, changed somehow, or most likely, it's your execution of that really good strategy. So yeah, it's so true. It just comes down to fundamentals: entries, risk management, exits. It's all, rinse, wash, repeat, or whatever they say. It's just keep doing it over again. Yeah,
yeah. It's actually usually quite mundane, right? The things that make you successful. And I have this one thing that always blows my mind. But like, I was at the golf driving range, and I was terrible, still terrible nowadays. But this one guy was in the stall next to me, this older guy, and I guess he was a coach. So like, he said, "I am in pain watching you hit that ball, so I'm going to help you out." So he coached me for about half an hour, and he went through these very simple steps, right? And at the end of that, I was hitting the ball like straight and up in the air instead of hitting it on the ground and killing all the worms. And
worm burner.
And to this day, I can still hit the ball decently, like better than most people. But like, I was just amazed that those fundamentals in that half an hour got me to where I couldn't get to in like 2 years before that, right? So it really is about the mundane fundamentals.
Yeah, it's so true. Yeah, so true.
All right, cool. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Most of what we do is on autopilot.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some trading psychology affirmations or things you can tell yourself, or ways that you can implant those affirmations in your mind that can help you improve your trading?
Right. So there's sort of, the way I look at it is there's sort of two levels. There's subconscious and there's conscious. So subconscious would be putting those in without your awareness. So subconscious is by definition something that is outside of your awareness. So that could be as simple as having subliminal recordings going on in the background, like in your office or whatever, or while you're sleeping. We've talked about those before. You can also get into a state of meditation or hypnosis and then have those sort of programs, seeded into your mind, those suggestions. They call them suggestions in hypnotherapy. You can also do it. We've talked about this before. Like, you can do it where you have like some things that you want to accomplish, and you kind of seed those as you're falling asleep in the hypnagogic state, right? Then there's the other side of it, which is interesting. Like, one of my friends in high school, his dad wrote a book about this, which is weird. I never knew that his dad was even into that. But I did find one time I went to his house and they had these little sticky notes everywhere, and it had all these positive messages like everywhere in the kitchen and everything. And I was like, dude, what's going on with this? He goes, oh, my dad wrote a book about, positive affirmations. So that's a different thing. Like, there's a book, actually, we'll put the link in the show notes. I think it's by T. Harv Eker, and I think it's called Secrets of the Millionaire Mind or something like that. Anyway, and he has like these 1 or 2 day events that you can go to, and I went to those and stuff like that. And what that is that's more a conscious seeding, right? So there's a whole, like, if you go into like the coaches in the coaching realm, like coaching is this huge thing now, right? Mm-hmm. And a lot of coaches, one of the main messages that a lot of coaches have is this idea of congruency. So like, in psychology, they talk about cognitive dissonance, where you believe something, but then, you do something else. And it's kind of weird. Like, why, if I'm not racist, why do I keep using these rude terms every time I see someone who doesn't look different to me, or what, what I mean? Or what, those sorts of things. In the coaching world, they talk about, you say things like, I am a profitable trader. Mm-hmm. I make money trading every month. You say things like that. And so the idea is that if it doesn't fit, then there's friction there, and you do whatever it takes to kind of get to that point. Right. So that's a different sort of a thing to what I think those things, while they may work, I think the evidence is pretty clear. Most of what we do is on autopilot. Mm-hmm. And so where does that come from? Well, the best research we have today is that autopilot is your subconscious. And so I think that's where the main program is, and that's where we should really be focusing our energies on. So that's basically my take. What are your thoughts on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, no, totally agree. And one thing I would add to that is the actual like saying of some sort of affirmation maybe before you start trading or something. Like you said, I am a profitable trader, or I make money every month. And I think sometimes the act of saying that is more powerful than some woman's voice in your earbuds, like saying, oh, I'm a profitable trader. I think it depends on the person, obviously, but I think that your subconscious is more likely to believe that as opposed to maybe another voice. But it varies by person, obviously. But
yeah, that's right. Yeah. And it's interesting you say that, because like sometimes, like in the Harv Eker book, he talks about like saying things like that in the mirror and looking at yourself, and then like touching and doing all these things, like, and it's kind of like emotional freedom therapy, or
the freedom technique. Yeah,
that one, right? The engineer came up with. So like it kind of reminds me of that, like some of the stuff in the T. Harv Eker book. But yeah, so what you're saying is, that's exactly right. That's one of the arguments for for that approach, is that it's like you, and like especially if you like look at yourself in the mirror and say it.
Yeah.
Did you know
put
that
some emotion behind it, right? Like
yes,
just say, oh, I'm a profitable trader.
Yeah. You have to be like like T. Harv Eker talks a lot about like just going overboard, so that if someone walked in the door, they go, this guy's nuts. Getting to that point. Yeah. But did you hear? And it's interesting. I always think about this when like I read something about what T. Harv Eker wrote. I always think of the research that you probably heard this too. A lot of when it's funny, I always get pegged as a shoplifter. Like just yesterday, I went to the mall. Okay. Right? It's so weird. Like people look at me, think I'm dodgy or something. And like I went to the mall, and I swear, like I can tell, because I actually had a friend in high school, and when I was in high school, my mom's friend was a undercover shopper. Okay, at a place. I don't even know if it exists anymore in the States, but it was called J.C. Penney. Like this is stores that they had. Around. Yeah, I don't think they're around anymore. But anyway, so she was a J.C. Penney fake shopper, and she went to work and she acted like she shopped all day long. That was her job. And what she was doing is she was looking for dodgy characters that were stealing stuff out of the store, right? Mm-hmm. And so, because back then they only put those big white tags on like only the real expensive stuff, right? So anyway, so that was her job. Anyway, I know a couple of things about shoplifting because I worked at a place called Marshall's when I was in high school. It's like where they have seconds clothes, like all these really cheap clothes. Anyway, it's kind of like Ross. Ross is kind of the same thing nowadays, I guess. But they taught us all this stuff about how to identify shoplifters. And they say, like, you always greet them and look them in the eye. Yeah. See, how are you doing today? Is there anything I can help you with? Like, that's the first thing. Because shoplifters, a lot of times, if they have intent to steal, they won't look you directly in the eye. So every time I go into these stores, because I know what they're doing, I walk in and I look them in the eye and go, oh, I'm fine. Everything's cool. How about you? How was your weekend? Because then I try and throw them off their thing because they think that I'm dodgy. But the other thing they do is they put mirrors up. Apparently, if you have a mirror in an area like where you're going to steal or do something bad, you're less likely to do it because you have to like consider yourself.
Look yourself in the face.
Look yourself in the face as you start stealing money out of the cash register or whatever, or stealing clothes out of the shop or whatever. So those are the two things, like the mirror and looking someone in the eye. And that's kind of what we're saying with these positive affirmations. You kind of look yourself in the eye in the mirror, and it's like you're saying this is true. You don't want to be lying to yourself. Like that's so incongruous with what most of us think. We think of ourselves as being consistent. That's one of our biases. We think we're always the same, even though we totally change over our ideas and everything over life. But that's the thing, is to look yourself in the mirror and say that. So I just find that fascinating that that's kind of an element of this, and that it also kind of relates to being honest in a retail setting. I just find that.
No, it makes a lot of sense. All right, thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
That's what I saw on YouTube today.
Yeah.
The people were saying, I'm going to buy a bunch at 25. Maybe that's where they got it from. Maybe they got it from Kiyosaki.
Maybe.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter. So every market has its own separate psychology, I guess you could say, in order to trade it. So what do you think the psychology behind the crypto market is in order to trade that market successfully?
Trade it successfully?
Yeah.
Well, one thing I would definitely want to look at is leverage. Like if I was trading cryptos, I don't know what it is now, but when 5 years ago or whatever, when I was, back in 2016 or whatever, when I was looking at it, because there were enough brokers that had it, but the leverage was all messed up, or like it wasn't really like it was hard. Low. Yeah, it was super low, and it was kind of like, why would I trade this? I mean, on one end, I think it's just like the stock traders. I really do. Like to me, the guys who trade shares like Apple and Tesla and whatever the darling stock of the time, Amazon or whatever, like those traders who trade those and they just buy and then when it goes down, they buy some more. To me, that's kind of the mindset, is it's always going to go up, that like I've actually seen these guys on Twitter, and they say things like, rule number 1, buy. Rule number 2, if it goes down, buy more. Rule number 3, see rules 1 and 2. So they're just in then perpetual uptrend, right? Which has served people well. There was a big crash, I think, when cryptos hit Bitcoin hit 19,000. And then I believe this was the second leg. So if you look at things through the Elliott wave theory, right, which I don't necessarily look at, right, but I am aware of it, and I find it interesting. I would argue that just look at Bitcoin against the US dollar. That first wave that we had up to 19,000, just under 20,000, I believe, that was the first leg. So that was wave 1. Then you have the retrace, right? A, B, C. And then you had the third leg, which I think we've probably just completed, which is usually like one of the longest ones and takes a long time. And then I think we're in the ABC retracement there. And then you have the fifth one, which is the really, it goes super sharp, right? And then it collapses from there, and then has to, eventually restart another trend, right? Like another move. That's what I think we're at. I think we just went off of wave 3. That's like long term. That's what I think. And I think that the people that trade cryptos are kind of like stock traders in that you just assume it's always going to go up. And that usually works, in a bull market. But in a market like this, like I just saw today, some people posting on YouTube, like, I'm going to buy some more Bitcoin when it hits 25 grand and stuff like that. And that's cool. But like, you just have to remember that, like, I think it would be really hard to be a trader. Like if, let's say you're 22 years old and everything you've seen in your whole life basically has been the markets go up. Because when 2008 happened, you were 8 years old, right? So you didn't really see that. So your whole life, all you've seen is basically free money, and every market has gone to the moon. So I think that's a difficult, and I was kind of like that too. Like as a child of the 80s, I had that same perspective. The only thing is different that I was aware of the 1987 crash. That was a big deal back then. So I was aware of that. But again, all my friends said when we were kids, like, I would just be buying right now, man, blah, blah, blah. It's just, and so, and it would have worked out, right? So same thing in buying at 2008. Warren Buffett basically bought Goldman Sachs in 2008. He said, it's on sale. I'm going to buy it. These are good people. This is a good business with excellent people. So I think the mindset of most crypto traders, now, again, there are going to be some technical traders out there that buy and sell, right, and do it on lower time frame. But most of them have almost like an investor mindset where they're just kind of buying on the breakouts, buying on the pullbacks. That's what I've seen most of. So that's my thought on that. But I could be wrong, but that seems to be like, you don't find a whole lot of people saying, cryptos are going to go into the bin. The people that say that are usually the older ones who don't think crypto is like a real asset,
like Peter Schiff,
Peter Schiff, like Peter Schiff, people like that. Yeah, exactly. Yeah.
Okay, cool. Yeah, no, I totally agree. I think it has a lot of potential, and it's a very young market. So I think it's going to go up in the long term. You just kind of gotta like buy and hold. A lot of them are like penny stocks also, right? Like these people are kind of gambling on the pop, right? But the bigger ones like Bitcoin and Ethereum or whatever are like you say, the stocks. You just hold them. You look for the fundamentals. Is it a good project? Is it a good technology? And then you just kind of buy in and then average up, right? Yeah, no, I totally agree. And I think that to be successful, you really have to have a strong stomach. I think be willing to weather the drawdowns and just understand the long-term potential of the cryptos, right?
Yeah, I mean, exactly. And, like with any new technology, I remember when they had these little robot vacuums that came out, and we got like the first one, right? Because we were like, oh, we don't want a vacuum or anything. And, we had a little kid and stuff. But the thing is, like, the next generation that came out was just like, same with iPhones or whatever. Like the next generation that comes out is so much better. It's the same with internet browsers. The best internet browser was Netscape, and that was the darling stock in the 90s. And actually, Gateway 2000. People don't remember Gateway 2000 was basically Dell. That was Dell computers before Dell, before Michael Dell. So, the first thing. So Bitcoin was like the first thing. That doesn't necessarily mean it's going to be the best one long term. It could be something like Ether that ends up being the backbone of everything, because like we had I wasn't on them, but they had AOL message boards or whatever, right?
Yeah.
And so now you have things like Instagram and Facebook and YouTube, and it's all kind of like fractured. It's like, and there's really like, you used to go on like AOL message boards and you could find any sort of topic that you're into, if you're into dogs or stocks or whatever. And then now the internet's so fractured, it's like you have to kind of really dig down and go into the forum that's about Doberman pinchers or whatever. You know what I mean? Do you know what I mean? It's so like specialized now and so deep. So to me, I find it really fascinating that, when people say things like Bitcoin is going to, because when we talked about it before, I said, I think, Bitcoin probably will go to 40,000. But I think in 2017, we talked about it. I said, I think Bitcoin will go to 40,000, but it has to go back down first, right? And that was when we had that first wave up to 19,000. And people just forget that there are ebbs and flows to it. And as a trader, like if you trade the 4-hour charts, you understand that. If you trade currencies, you understand that. It's one of the advantages we have over stock traders, where the majority of them are only just buying. They're not thinking of the downside. I mean, they do think of the downside, but they don't ride the downside. Whereas we can ride both sides of it. So that is, in some ways, an advantage for us. In other ways, it's a disadvantage, because all they have to ever consider is, when should I buy and when should I sell, right? Whereas we have to think, should I buy or should I sell? Or, it's
the number of opportunities to shoot yourself in the foot, right?
Exactly. Yeah. We have way more opportunities. So it's
I'd be interested to hear your thoughts on Bitcoin. Do you think it's like a outdated, I think it's going to go up still, but do you think it's an outdated technology or?
It's a great question. I don't know enough about it. I know just enough to be dangerous. And what I would say is, it seems like the people who are smart are pointing out that it's a bit clunky. It seems like it takes a lot to manage it and all that. Like in terms of like accepting it. Like if I was an online store and I accepted Bitcoin, it seems like it's not the best version of blockchain technology.
Yes, it's not for
and
that.
And maybe something like Ether is. But the other side of that is people say, well, you can store it. It's value because there are not unlimited. There's only 20 million of them, and a lot of them have been lost or whatever. So there isn't really ever going to be 20 million once they mine it all out. And so, the other side of it is it could be a store of value. So I don't know. I think it will go up. I think it needs to go down again, like the first leg. I think this third leg needs to go down probably a bit further than it is now. I don't even know what it is now. Do you know what it's at? Is it like 30 grand or
30,000 or something like that?
30,000. Yeah, I think it's around 30,000 as we record this.
Yeah.
So my guess is it'll probably fall to 20 or something like that, 22 or whatever. But before we see that fifth leg kick in.
Interesting. Yeah, I never thought about that. I think Kiyosaki's mentioning like 25 is his buying point. So
yes, that's what I saw on YouTube today.
Yeah.
So people were saying, I'm going to buy a bunch at 25. Maybe that's where they got it from. Maybe they got it from Kiyosaki.
Maybe.
Yeah. But like, if you follow the if it's true, like what I say about the Elliott wave, it shouldn't go lower than the first leg's high. Do you know what I mean? And actually, if you look back at the first leg where it went up to 19 grand, and then it came back down, I was thinking it would go down to like 1100 or something like that, or 1000, which was kind of like the first breakout on the micro scale, but it never did. I think it only went down to like 3000 or something.
Yeah.
So it didn't take out that previous high at 1000 or 1100 or whatever you want to call it. If you look at the first birth of it, in theory, if I'm right about this being the third leg, I think the rules of Elliott Wave would say, at least as written by Robert Prechter in the famous book, is that it shouldn't take out that 19,000 high that it made before. I think it made a high at 19,700, 800, somewhere around there, right? Like right below 20 grand, I think, if I remember correctly. So it shouldn't really take that out. It should bottom out above that. So 25 would fit if that were true, you know?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. If that were the case. And then, of course, it would take out the high that it made, what I don't know, was it at 60 or 65? Yeah. It would take that out on the fifth leg and really it would just be acceleration, like unbelievable. Like everyone would go, oh, it's over. We're going to 200 grand, you know? And then of course it would collapse again.
No, I think this dip during this summer is maybe like a good time for the institutions to get in. They're kind of bringing the price down, get the institutions in, and boom, right? So
yeah, we'll see.
We'll see. Yeah. All right. Thanks, Walter.
Cool. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I used to get nervous like when I was younger talking to people. And at a certain point, I just discovered, just ask about them.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you know about game theory and how it applies to trading?
Okay. So this is really interesting. Actually, I'll put a link in the show notes to some people who want to see this, because there's a good example of this. I think you can play along with it. So I won't go down that rabbit hole. Let you guys click on the show notes and go down that one. But the way I think of it is, because I've read some books on it that are really complex, and I kind of think of game theory maybe differently to most in two ways. I think of it as in probabilities. So in terms of probabilistic thinking, which is really good for traders, obviously. And then the other side of it is like perception, right? And awareness of what other people are thinking. So kind of like if you're in a situation, Hugh, where you're at a party and you're talking to some people, and you'll notice some people aren't very perceptive of what other people are thinking, and that maybe they just go on and keep talking about themselves, and everyone else is just sitting there going, oh my God, like, you know what I mean? But the person doesn't realize that they're like turning everyone off by sitting there and just rabbiting on about themselves. That's a person that has like low interpersonal intelligence, we would say, right? And so with game theory, I think part of it is being aware of what the other participants in the game are doing. So poker is a great example of this, where like if you bluff, or you think someone else might be bluffing, you're trying to figure out what's going on, right? That's one element of game theory, which is sort of almost like psychology and interpersonal relations and understanding that. In trading, it could be looking at where all the orders are. So you can look on websites, and brokers will show you where all the buy orders, where all the sell orders are, right? Same thing with open position ratio. You can see, what is the crowd doing? Are most traders buying or selling, or what's going on? So that's one element, as I see it, of game theory. And I really love the open position ratios. If you guys are interested in that, I've got plenty of videos on YouTube all about that stuff, and I can put those in the link down there if you guys want to go down that rabbit hole. I don't want to get into that right now, but that's part of it. Understanding what are the other participants doing. So orders, where the order placements are, and where the open positions ratios are at is really important in that sense. But on the other side of it is probabilities. And it's really fascinating to me that a lot of traders don't understand it, right? So probabilities come into a lot of places. Like probabilities come in when you're trying to decide, is my trading system in a drawdown that is normal or not normal? And another one is is my reward to risk ratio sufficient to make profit given my win rate? That's another thing, right? So all of these elements of probabilities are very important. And so, like, for example, let's say you like to trade trendy kangaroo tails, which is just a pullback after the market's been going up, right? And it pulls, let's say it's good or down, either way, it goes up after the market's been going up. And it's a signal that says, okay, the pullback's over, right? Now, let's say you like trading those, you've back tested them, you get a certain win percentage, it's 58% or whatever. But you find that if you add another element to that, which is understanding where the orders are placed on the charts to your kangaroo tails, trendy kangaroo tails, you actually really improve that strategy. And that probably would be the case. Like if you saw a whole lot of people who had their orders on the were basically on the other side of your kangaroo tail, right? Then that means that you would know that there's a lot of people thinking that it's going to break out and it's going to go the other way, right? Or if there's a lot of orders down where your order is going to be, right? Or if there's a lot of orders where you take profit is going to be, that'll be like a magnet, and the market will, if it gets close, it'll really want to get there, right? So all of those things I think are, to me, are really important in terms of game theory. So to me, game theory is thinking about what are the probabilities, right? That this is going to go this way or that way. And so what should I do for, my overall, I'm trying to make profit here. And the other thing is, what are the other people doing? And trading is so different because it's not like a closed system like a poker game where you only have 5 people, and there are a limited number of possibilities, although there are many, with all the different hands and everything. It still is limited. Whereas with a trading, it's kind of like an open system, and these things can come in and impact the markets in really drastic ways that sometimes we're not even aware of. But I think just understanding what your other market participants are doing and what they're thinking, and understanding where the probabilities lie, is probably the most important thing in terms of thinking of trading like a game. What are your thoughts about this?
I actually don't have too much input on this one. I haven't really looked into game theory that much, so I just wanted to get your ideas on this one.
Well, yeah, the thing is, like, if you get in some of these books, they're like super mathematical, right? And, they don't, and really a lot of game theory is just thinking, what is my opponent or what are the other participants doing? And if I do this, what are they going to do? It's really just that. Like, and so I think you can really simplify. I'm a big fan of the 80-20 thing, right? Where, you just cut it down and go, just do this much to get maximum, you know what I mean? And that's sort of, I like that approach, and some people won't. They'll want to get deep into it and whatever, and that's fine. But I think just thinking in terms of what are the other people doing, that's a big part of game theory.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
You can map it out and make charts and everything and choice charts and all that stuff, but it really comes down to thinking about, where do the best probabilities lie, what is likely to happen versus unlikely, which is not always the way we think. Like, a lot of times we think that what's likely to happen is what happened last time, And that's not true. That's not necessarily true at all. So we're not really set up to think mathematically. We're more emotional creatures in general, and reactionary. So I think if people just start, just a real simple task would be, if you have a trade and you go, okay, I'm going to buy here. What are the people thinking that are going to sell in the exact same situation? What do they see? Just trying to break out of your filter and the way you see the market. That's a really big part of it, I think. Just
a lot of crowd psychology, you think?
Yeah. And just going, okay, like, I look at, sometimes what will happen is a kangaroo tail will print and I don't take it. And I explain in my videos, the reason I'm not taking it, because let's say there's a resistance level right here, right? And the kangaroo tail goes through it like this. Okay, so you have a big kangaroo tail. Well, there's a big difference between having a kangaroo tail that starts here and goes across that level, that resistance level, versus one that's kind of on top of it and sitting on top of it. Because the one that's on top of it is a breakthrough and a bounce, and it's going to go higher. But the one that's sitting below it just penetrates it and it's going to go lower. You know what I mean? And it's sometimes hard to see the difference. But understanding that the people that see that kangaroo tail on top of the support resistance, they think it's a reversal. And then I'm the guy that thinks it's a trend continuation pattern. You know what I mean? Like thinking in terms of that and knowing the difference between the two is, I think, really important, because it just helps you out in life. Just thinking about other perspectives. You'll be a better conversationalist. You know what I mean? Yeah. If you can get in the head of somebody else. The people like it when you ask questions about themselves, you know, like as you've noticed, you know, yeah, like they do, they really do. It's a great way for people to go, oh, I really like that Hugh, you know, he's a good guy. Oh, really? What'd you like about him? Well, he just seems like a real friendly guy, you know. Well, what does Hugh do? Oh, we didn't really talk about that. Yeah, because the whole time Hugh was letting you talk about yourself, you know, and that sort of thing. You know what I mean? That's
I used to get nervous, like when I was younger, talking to people. And at a certain point, I just discovered, just ask about them, and then they'll do all the talking, and it's all good.
Yeah. So I was the same. Yeah, I was the same. I would always like deflect off into, you know, like they would say something. Oh, yeah, blah blah. What about you? You know, like I would always do that. And now I'm so old. I'm just like, whatever. Like, I don't even like. I can see, you know, when people start doing that to me, I can see it a mile away, and I'm like, yeah, okay, man, yeah, all right. You know, like I'm just whatever. Yeah, I don't even care. But like when I was younger, I was really aware of it, like you say, and I would always just kind of like shift it back because I didn't want the spotlight on me, you know?
Yeah. All right, cool. Thanks, Walter.
Thanks. See
ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Experiment with different things and figure out what works for you.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, people talk a lot about like the flow state and how that contributes to success in a lot of different areas, especially trading. How do you get into the flow state? What do you think about how people should get into the flow state? And I just wanted to hear your experience with that.
For traders, I think it's probably that analogous situation, like with like an athlete getting ready to run the 100 meters. So I used to do that in high school, and I always did a lot of work on getting in the right state of mind, you know, to get the right start, you know, and stuff like that. So like basketball players, you know, anyone who's done athletics like that, even at like the high school or college level, you would have some thoughts definitely around there, probably at least a routine to do. And so you can certainly do that when you're looking at the charts. If you're like a longer term chart trader like me, you would just want to be in that state of mind when you look at the charts. However, I think it more applies to like the lower time frame sort of in and out scalping type traders, where they really need to be on point in terms of what they would say is a flow state, I think. However, having said that, I think that when it comes to trading, there are some things that come up that you probably don't think about when you first get into trading. I'll give you an example. The fear of pulling the trigger. So if you're trading a system that has a lower win rate, let's say it's a 39% win rate, and you're going to have a lot of losing streaks. And so you might get into a state of thinking, gosh, I've had 9 losers in a row. I don't want to have a 10th loser sort of thing. I don't really want to take my next trade. Of course, you don't take it, and then that's the big winner, right, for the month or whatever. So yeah, that's the typical. So I think one way to kind of get into the right mindset for trading, it doesn't really matter what style of trading you have. Essentially, like, there's a really good story about this guy who wrote a book about risk. He hung around traders and professional poker players and stuff like that. And there's some really good insights from that. And what he was saying was that the traders, or actually the gamblers, it's funny that I would mix that up, but the gamblers were saying they kind of look at themselves as having like an infinite lifespan. If you think about it, what happens when you do that is you would see the world differently. If you knew that you were going to live, 1,000, 2,000 years, you would make different decisions in your life. And that's what he said about these people. The way they saw risk is they'd have these little tiny edges, but of course they saw that and that they were so valuable over the long term. And so any one individual trade, you can just kind of throw it out. Who cares, right? In fact, 10, 20, 30 trades, who cares? Because it's the long-term gains
And as Einstein said, right, I don't know if he actually said it, but people say that he said it. It's attributed to him. It says that compounding is the eighth wonder of the world. Well, that's really true when you look at risk from like a long-term point of view. So I think probably one of the easiest ways to get into a pro trading mindset is for any trader to think of yourself as living a long, long time. And what would that mean for you and your trading system if that were the case? What would you do? Because you would not take giant risks, would you? Right? You would not put 10% of your account on any given trade if you knew that you had an edge and then the edge was going to play out over thousands and thousands and thousands of trades. So I think that's a really valuable way to look at trading. Is almost like you just live forever, and that you want to be around, you want to have your trading account around to live through those good times. Mm-hmm. Right. So that's kind of, and I know it's not exactly what you're talking about, because flow state is more kind of like in the now sort of thing, like, feeling the market and understanding where it's going to go and stuff. That's kind of sort of like the shorter term traders world or whatever. How do you see that when you're looking at flow state?
Yeah, no, first of all, I think it's really important that you have some sort of a routine, I guess, like you said. Like in high school, I didn't understand why we did the same exercises over and over before a game. And that's all it is, getting you in the right mindset, right? And so I think if you could do some sort of meditation, or you have an app that can calm you down, I think that's a good start. But yeah, what you're saying makes a lot of sense. And I guess I never really thought of it that way.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
In that, if you know that you have this edge, even if you aren't in the flow state in that one session, like, it really won't matter, right? Because you're like, okay, I'm factoring in a bad day into my system, into my numbers, and I'll just learn from this and go on to the next one. So yeah, that makes a lot of sense to me. And yeah, I think you're right in that the flow state really is more important in like day trading or whatever, instead of like if you're swing trading, then it's not so much, in my opinion. But yeah, I think you have to just kind of experiment with different things and figure out what works for you. And it might be meditation for some people. Some people might need to take a nap before or something like that. So just try a bunch of different things and see what works.
Yeah, and you really want to be in a situation where it's like it's hard to shake your confidence, right? Yeah. And so that's preparation. Preparation is the key there. Yeah. We talked about that before, but yeah, that's critical. So what is the app that you use? Because you were saying, I know you use Muse, right? That device that links up to like the app. Is there anything else that you use in terms of that meditation stuff? Because I know you're big into the meditation.
Yeah, it was the let's see, Inner Balance by HeartMath.
Inner Balance, right?
So they have a little thing where you stick it in your ear, and then you do the breathing, and then if you're in a certain zone in terms of heart rate variability, once you're in that zone for a little bit, then I consider that calm and collected, and then I'll take it off and then go into trading or whatever.
Right, that makes sense. Yeah, I keep getting these ads for because I think they know that I'm into this stuff. Yeah. I keep getting these ads for an app called Headspace. I don't know if you've seen that one, but that's
that's pretty popular. Yeah, Headspace.
Yeah, I keep getting that ad, like this week especially. So they must know. You know how they follow you around? They know what's going on. Like yeah.
All right, cool. Yeah. Thanks, Walter.
Okay, see you.
Yeah.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
My neighbors keep putting their rubbish in my rubbish bin. I keep looking out the window and go, why are you putting your rubbish in my rubbish bin?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I'd be interested to hear your experience with hypnosis and hypnotic therapy.
Mm-hmm. Yeah, sure. So, when I was a freshman in college, first year of college, I decided that I was going to learn about stuff that I was interested in. So my textbooks, spent a little bit of time on those. But what I really did is I went to the library and I read about a lot of interesting things that I was interested in. And then I ordered some books, and one of the books was on hypnosis. And so then I became known, and I lived in the dorms, right, at school, at college, and I was kind of known as the hypnosis guy. So people would come and ask me to hypnotize them. Like, it's totally not, like, this is not cool, right? Like, but I didn't know what I was doing, but I just knew enough to be dangerous, and I knew how to. I would get a candle and I'd light the candle, and then I'd have the person stare at the candle, and their eye would get tired, their optic nerve would get tired. I knew that was one way to get someone to relax and stuff. And so I did that. And a lot of times, like, girls would be like, oh, I want to eat vegetables, or whatever. So I would like hypnotize them and to put these suggestions in, for them to eat more vegetables or whatever. So that was kind of my introduction to it. And then, I did it for myself too, for different things. Like I wanted to improve my surfing, or I wanted whatever, whatever I wanted, whatever sort of thing I was working on. And then when I came to Australia, I found a hypnotherapist too. And I wanted her to help me with my surfing too. And it was interesting because she asked me, have I had experience with hypnosis? And I said, yes, I've hypnotized people. She said, oh, really? What did you do? And I told her the story I just told you, right? Well, then she goes, oh, there's much more efficient ways than looking at a candle. Or whatever. I'm like, oh, this is going to be good,
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So then she recorded this session, and she gave me like a CD of her voice. And so that you could use it, you know what I mean, for any goals. You would just think of the goal and then listen to the hypnosis thing. And I thought that was really fascinating. And I used it quite a bit. And then I got into the more tailored ones for like trading. And I got one of those, and it was pretty bad because it didn't really apply to Forex traders. So then I wrote the guy, actually we had a mutual friend, and I said, can you please like make one for Forex traders, because your one for traders sucks for Forex traders. It's like, it's no good, It's just the way that the suggestions aren't quite right for Forex. And he goes, okay, well, do you want to write it? And I go, yeah. So I helped them write it out, and that one's at Hypnosis Download. So it's Hypnosis for Currency Traders, I think is the name of it. I'll put a link. You guys can get it through, it's cheaper if you get it through us or whatever. But anyway, the point is, that's another good one too. Right? That's a way for you to encourage the habits and the approach that you want in your trading. So I think hypnosis is pretty cool. And what's interesting about it to me is that they talk about like hypnosis and meditation as if it's different, but really I think it's pretty similar. Like in meditation, you have a mantra. One of my mentors was really into it, and he got into it in the 70s, and he was saying that he would have this mantra that he would use. And that's kind of like, you can kind of do a similar thing with hypnosis, where you're in a meditative state and your mantra is kind of like the goal that you're working on, right? So to me, they're really similar. And if you look at the brain during them, they should be similar too, especially if someone's a little bit practiced in it and they're not a newbie and they don't know what they're doing. They would get into a similar brain state. So I think it's really good for using it to get into a nice state of mind for doing some work that you want to do, whether it's writing or looking at charts or whatever. And it's also really good if you want to work on an outcome, right? So for example, my thing when I first started trading was moving stop losses when I shouldn't. I should just leave them, let the market hit it or not. And so that would have been a good candidate for hypnosis, just for me to consider that and think about that. If you have problems pulling the trigger, that's a really good candidate for hypnosis. If you're trading like a lower win rate strategy, or you trade too often, like you're really compulsive, that's another good one. That's a good candidate for hypnosis. All those sorts of things would work really well. I mean, hypnosis works really well with things like overeating and smoking and breaking habits and things like that. So it certainly does work well with trading habits as well. So that's kind of how I see it. I put it kind of in the category of like fixing your issues. Sorry, the reason why I keep getting distracted looking outside is because my neighbors keep putting their rubbish in my rubbish bin. I keep looking out the window and go, why are you putting your rubbish in my rubbish bin? Like, you know what I mean? It's like today was rubbish day, you know what I mean? In the morning the trucks come and everything. And so we've got a nice empty rubbish bin out there, and I just watched 3 people walk by, and I think sometimes they're just like walking random by people. Yeah, but one of them's the neighbor for sure. I was like, what's going on? Yeah, sorry. So if I keep looking over, it's because I'm thinking, what are you doing? Yeah. Anyway,
no for people who are new to hypnosis, like some people think it's like an office space thing, right? Like you do one session and then now you're totally different. So maybe you can walk people through like how gradual that is, and you know how it's not like a one-shot deal, right?
Yeah, in fact, you know, when I was in the dorms as a kid, as a 18-year-old kid or whatever in college, they had one of those hypnosis shows come, you know, where they do
the shows,
you're a chicken, and I was one of the guys. Like, he got me up there, and I remember him saying, he said it will last 30 days or whatever, like, or you know what I mean? Like, you kind of have to, it kind of wears off or whatever. But and one of the first hypnosis CDs that I bought, they would say you got to listen to it every day for like 30 to 60 days. It's kind of like it's sort of like you know, when you're a kid and you keep hearing money doesn't grow on trees, money doesn't grow on trees, money doesn't grow. Your parents say that, that's repeated over and over again, then you get that in your head. It's kind of the same thing with hypnosis, where you get these suggestions. It doesn't just, you can't just say to someone, oh, it's rare that you would meet someone one time, they would say something to you, Hugh, and you would remember it for your life. It does happen, but it's pretty rare, right? The things that you usually remember are the things that are kind of repeated over and over, and those become like, you know, committed to memory, and you rely on it. It's your programming. It's your programming, basically. So
it'd actually be a little scary, right? If somebody told you to do something once and then you start doing it.
Imagine that. Imagine if that were the case. We would be a mess, right? We would be a mess. Literally every time we went to like the DMV or to like a restaurant or whatever, you know, someone says, go sit in the corner, you know, and you're like, oh, then every time you go into you go sit in the corner or whatever, you know what I mean? Like, imagine if that kind of thing happened. It would be a mess. So so it's good that we don't take direction well.
Okay, cool. Thanks, Walter.
Thank you.
All right. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. You're not going to get shot. You're not going to be attacked by a lion or whatever it is, right? You're just going to lose some money. So,
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I was talking to a trader today, just before we got on. He was asking about fear and how do you deal with fear? If you've got a lot of fear in your trading, what do you do about it? And I guess kind of the question was, where does it come from? So I kind of equated it to one thing, but I'd like to hear about what you think about fear. Like, what does fear mean in trading? How do you deal with it? What are some techniques to wrap yourself around the fear of taking trades and trading in general? So I'm interested.
Yeah. Well, in reality, there's nothing to be afraid of in trading, right? You're just going to lose some money. You're not going to get shot. You're not going to be attacked by a lion or whatever it is, right? You're just going to lose some money. So any type of fear is irrational. So you have to ask yourself, okay, where does that come from? Is it fear of losing all your money? Or is it fear of being wrong? Or is it fear of your ego being bruised? Those are kind of the biggest ones that I think a lot of traders run into. Once you can identify that, then you can start working on it. But then if you're still afraid, then you have to figure out what the source is. Otherwise, you're kind of just like going to be afraid all the time. And once you identify it, then you can start to work on it. That's what I think, at least. What do you think?
Yeah, I agree. Yeah, so I think about like these coaches in the NFL, right? These gridiron coaches, right? So that what they do is they have these stories, and they wear the stories like a patch on their sleeve. Oh, I slept in the office. I get up every day at 3:30 in the morning and go and watch film. You know, and they have these big, this is their thing, right? Well, thinking about it, why do they do that? Why do they spend so much time watching film of their opponent? The reason why is preparation. Because when come game day, if they feel like they've prepared their team to the point of where they can kind of expect anything, and they know what to do in any situation. They've prepared the other coaches, so they know what to deal with it, and they have a plan for what's likely to unfold. All that preparation reduces the anxiety. The more prepared you are, and it's the same with trading, right? The more prepared you are, the more you've seen your system through different types of markets, through your back testing or demo trading or whatever, or live trading, if you've been trading for decades, then the more likely you are to be able to sit through it and be able to feel like, yeah, I can do this. Like, I've got it. Now, here's the thing. So fear comes from uncertainty. So I had this experience where I was surfing back home in California in December. I think it was the day before Christmas. Might have been Christmas Eve, right? And it was, rainy. The water was brown from all the dirt rush, in the rivers rushing into and I was surfing this reef, and it was pretty big. The waves were pretty big. Got held down, held down onto the reef, kelp everywhere, right? This thick Northern California nasty kelp. Held down onto the reef. It's black down there. And I couldn't get up, and the next wave came and held me down. Okay, so it's the dreaded 2-wave hold down, right? Mm-hmm. You don't want to have like multiple wave hold down because you start running out of air, you start panicking. And so finally I came up, and then I let the waves wash me in, and I was kind of shaken. And I was sitting on the beach, and I was thinking, I really should go back out there, because if I let this fear kind of fester for a while, then I'm going to have that in the back of my head when I go surfing, especially if I go surfing at this place again, right? Mm-hmm. So I forced myself to go back out there and paddle back out there and at least get one wave and then come in, you know what I mean? So I could say that that I did it. And really, I think that's where it comes from. I think the fear of the uncertainty, not knowing what's going to happen. But as you said, you're absolutely right. What's going to happen in trading? You're going to lose some money, you're going to make some money, or it ain't nothing going to happen, and you ain't going to lose money or make money. That's it. That's it. Now, might you get gapped? Might the market move fast and get you out beyond where your stop loss was and you lose a little bit more than you were expecting? Absolutely. But the same thing, if you use like a trailing exit or something, the same thing can happen. You get more than you expected if you allow that for yourself at the other end. So to me, I think this idea of being fearful, it can come from a lack of preparation or a misunderstanding of the unknown. I mean, in a lot of ways, the unknown is what makes life so exciting. Imagine, Hugh, if you got up and every single day you knew what was going to happen. It was Groundhog Day, right? Like that Groundhog Day movie with Bill Murray. So every day you have the same thing for breakfast. People say the same things. You go to work, the same things happen. That would be so boring. So being alive means embracing uncertainty. And being a trader means getting paid for embracing uncertainty. You don't go and exchange your 10 hours in the day for a pile of money at the end of the month, like most people do. What you do is you exchange the risk that you're taking in face of uncertainty for a potential payoff, right? Mm-hmm. So it's a totally different world for traders. And that's why you were made to be a trader, because you see the world a little bit differently. And so that's what I would say to everyone listening. That's really part of what makes trading so great, is that we get paid for uncertainty. We get paid for doing that. And I think it's great. If, however, that really scares you and you don't like the uncertainty, then maybe trading's not for you. Maybe you need to exchange time for money, or find out, or sell widgets, or whatever you can do to make money, because that's really the heart of what trading is. Yeah,
it's totally not for everybody. And I think you bring up a good point about facing your fear again, because I actually have the opposite experience that you had. So I went to the North Shore after being on the mainland for a while, and you have to get used to those waves, right? And I got drilled like right in the middle of my back, came out like throwing up, all this kind of stuff. So I never went back there. But like you said, in reality, I probably should have gone maybe like the next week and then just faced that again, so that I, didn't have that issue. But I think it's the same thing in trading, right? You maybe have a bad week or whatever, then you just get back up on the horse. Maybe you do a demo account or something, but just get back in there and not be afraid just because of that one experience.
Yeah. I mean, I agree. I mean, you just don't want it to control you, right? You don't want it to dictate your life. And in trading, that's really important. Like, I don't really think of it this way anymore, but sometimes traders will get like, they want to get back at a currency pair. Like, the USD CAD really got me last week, so I'm going to get my, fill or whatever. I guess I used to actually think that way. I don't even remember where the last loss was from anymore. I don't even care. I just think of it as a roll of the dice, right? Mm-hmm. But I used to think that way, and I used to be all right, Looney, I'm going to get you. You know, let's see what we can do to the Looney today. You know, because the Looney stole a bunch of money from me last week. So it's revenge trading, isn't it? I mean, that's not very productive.
Yeah. Or the bigger issue is like I won't not trade the U.S. yen just because I lost a bunch of money, and I think that's going to hurt you like in the long run.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, it's like saying I'm never going to talk to a girl with blonde hair because the last girl with blonde hair slapped me or whatever. You know what I mean? Like what? Like that's not, doesn't make sense. Yeah, exactly.
Yeah.
Cool.
Cool. Thanks, Walter.
See ya.
Technically, brilliant people are notoriously bad at explaining how something works.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, from a psychological standpoint, do you think that traders should start with a demo account?
Yeah, I think so. I mean, I actually think you should start with a simulator first because you can get more trades and you can get more data. So my preference would be to start with a simulator like Forex Tester or something similar. There's lots of them out there now. And that way what you can do is you get your data first. The demo helps. Demo, I think, is a good next stage, like because then you see the trades kind of unfold in like real time as they would in a real account. I don't think you can get the experience as fast in a demo account, right? So the advantage of a demo account is that it teaches you the patience that you need in real life, right? Waiting for the setup to unfold and all that, and then waiting for it to come to a resolution, good or bad. And then also it feels more real, I guess, when you have, even when you have a demo account, it feels like it's, so I always say like you do a simulator, then you do the demo, then you do a small money account, and then you can graduate to a larger account and stuff like that. But yeah, I mean, there are the disadvantages of a simulator is that sometimes you're just not trading as you would with a demo or a real account. The advantages are you get a lot of trades under your belt. So what you have to do is kind of time parse, like make sure that you're not dumping like all of this data into your simulator account, over 2 hours. You gotta break it up and be more vigilant with the way that you approach it. That's my opinion. What about you? What do you think about that?
Yeah, I think a demo account is definitely useful, but I think a lot of people have the tendency to not take a demo account too seriously. So I think it's probably actually more beneficial to throw like $100 into a nano lot account and then just trade that for like a penny a pip or whatever. But I think the demo account is necessary because you should understand the mechanics of it, how to enter exit trades, how to place pending orders and stuff like that. But I think at that point it's really up to you. Yeah. Is your personality such where you can take the demo account seriously, or do you need at least a little bit of money on the line?
Yeah, no, it's true. It makes a big difference, doesn't it? When you even if it's like $5, on the trade or whatever. I feel like a lot of traders just don't see the value in the bulk trade data that you get from a simulator. You know what I mean? Like it's kind of like they think demo or they think demo or live. They think that's the question. And I don't think that's the starting place. You know what I mean? The other thing that happens, I think, is that you get really excited about a system when you first demo it or first run it through Forex Tester, and you kind of need a cooling off period, I think. To sort of put it aside and then come back to it. There's lots of issues when you get into that. So for example, like if I said to Hugh, here's a system, what do you think? And you go, wow, I really like that one. And you started demoing it. If you're trading on the 4 hours, I don't know how long it would take you to get 300 trades or 400 trades. I don't know. I mean, it depends on how many markets you're trading and all that. But, if you're trading a system like that on the 4 hour charts, it might take you 9 months to get the same amount of data that you could get in 2 or 3 weeks if you were using a simulator. So, but again, like we said, it's a very different experience, live versus demo versus simulator. So, yeah.
Oh, another thing to consider is also if you're doing like automated EAs or whatever, then I think a demo count is absolutely necessary. Like, because there's a little bit of psychology, like we talked about before, where you have to turn the thing on and off. But I think that the demo account really gives you like a live, real-time assessment of how well that EA works. Whereas if you just jump straight into live trading, there could be issues with like the spread and certain things with the broker. And I have a buddy who blew out like a big portion of his retirement account because he just jumped in with the EAs, and he didn't realize that there are all these things that you had to check out. So I think that's one case where a demo account is absolutely necessary for sure. And back testing also, right? You want to run that through the simulator and see what kind of numbers you get.
Yeah, definitely. Yeah. And there's a reason why when you connect to a server, like in MetaTrader, for example, it will say like you're connecting to the live server versus the demo server. That's a very different experience. If anyone's ever seen that, like my friends and I, we were running a strategy where it was like a grid system where you were taking profit every 3 pips. Like on demo, that was great. That was awesome. And then it was only about 3.5, 4 weeks into it on live account when everything fell apart and we started getting slipped like crazy. And if you're taking 3 pips profit and you get slipped a pip, then you're losing a third of your profit, right? So it's unsustainable. Yeah. But anyway, it was just really interesting, seeing that. And a lot of traders have seen that, right? You see the different experience on live versus demo. So it's tricky. But yeah, for EAs, you need to know exactly how it works. And a lot of times I think people, like, they'll get an EA and they think they know how it works, and then they don't actually test it on, like, they think they know the settings or whatever. Like if you have someone code it for you and they explain it to you, you go, yeah. Or if someone gives it to you or whatever, and then you just don't know. Like I always say, why not just put it on a 1-minute chart and test it out and see if you know what it does? You know what I mean? Like it's ridiculous. On a demo, 1 minute, that's all you have to do. Like it doesn't matter if you're going to trade it on the daily. Put it on a 1-minute demo account and see what it does, and if it does what you think it's going to do. So
no,
that's
totally.
a big
Like
one,
I think
for sure.
Technically brilliant people are notoriously bad at explaining how something works. So I think you really have to not take their instructions for granted and just like you said, test it out and see if it really works the way you think it does.
Yeah, that's right. It's very rare to find someone who knows a lot and can explain it very well. And that there's actually a thing and it's not their fault really. It's more, it's not like their verbal skills are lacking. It's that their unconscious competence is so high. And that's something that for you as a trader, you can talk it out. You can literally talk it out. Like when you can record, now it's so easy. I used to print it out and scroll and write on my charts that I printed out when I took trades, but you can actually talk it out now. You can just record it on your computer or whatever and talk about why you're taking a trade, and then why later on why you get out, or why you manage move to break even, or whatever you do. That can really help, because that brings out what's happening in the background in your head. That brings it out. And that's why I find it really useful for me to talk about charts, to an audience, because things that I'm thinking about, I don't realize that I'm thinking about them unless I actually say it out loud. You know what I mean? They go, oh, that's what I'm. Do you know what I mean? It's really weird. It's so bizarre. But they have, like, that's a known thing in cognitive psychology. It's a known thing where they say, like, the best teachers are those people that are not quite at expert level. So they're not novice. They're kind of in that intermediate area where they kind of they learned it, but they've only learned it recently, and they're pretty, they're good at what they do, but they're not at unconscious expertise level, because then it's just almost like automatic. And same thing with driving. Think about it. Think about how hard it was for you to drive when you were younger, because everything was conscious. So, okay, I got to look at my mirror, I got to do this and that, turn on the signal and do this and that, all that. And then, but now, if you try to teach someone how to drive, you'd really have a trouble, because you'd have to think about what you're doing all the time, Yeah. It's tough. It's really tough to think about all the calculations, like, okay, that's an idiot over there, I got to slow down because he might, you know what I mean? Like, you're like all these hazards and stuff going on in your head, and it's just like totally, like, you're almost unaware of it, really. It's just happening. So anyway, yeah, I find it in trading, I think, is similar, like all skills really. Yeah.
Yeah, totally. I mean, when I learned to drive, I think it was my mom who said, line that side of the car up with the line. So the whole time I was like concentrating on that side of the car, lining it up with the center line. And then I wasn't like paying attention to other stuff. So, but now you can do it just, without looking, right? So
yeah, exactly. Exactly. Yeah.
All right, cool. Thanks, Walter.
See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. The obvious answer is you jump in late and you try and catch the end of it, right? No, I'm just joking.
That's funny. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so here's a question. How do you deal with missing out on a really excellent opportunity? So you knew it was coming, it shows up, and then you miss it, right? So I've had a few of these the last couple of weeks, actually, more than a few, where, like I was going to sell the UST Swissy. I was sitting in front of the chart waiting for it to happen, and it didn't retrace quite enough to where I wanted it to go. And then it just went, you know what I mean? Just like, and that happened like 3 days in a row, right? Where that happened. And it's kind of really frustrating. So what do you do when, because it's like, there's no moral victories in trading, right? Like, it's like you missed the trade. Okay. Doesn't matter if you knew what was going to happen. Doesn't matter if you were ready, you missed it. Okay. So how do you deal with that? What do you do?
Well, the obvious answer is you jump in late and you try and catch the end of it, right? No, I'm just joking.
That's funny.
Well, I mean, like, that's what we tend to do, and that's what I've done in the past. We've all done that in the past, right? So,
yeah.
But yeah, I think it's just not getting too down on yourself. I think number one, I think once you start beating yourself up, that's really the slippery slope that leads to other like over trading and stuff like that. Number two, just realizing that there are other opportunities coming up, so just be aware of those. And then number three, I would say, review why you missed it. Were you distracted? Were you doing other things? Maybe you should keep your chart up on a separate screen or something so that you can watch it. And those are the three things that I would say. How about you?
Yeah, I mean, journaling, like writing out your emotions and stuff can really help. Obviously, we all have things that we need to work on, like you said, like chasing a trade or revenge trading or failing to pull the trigger. Like there's certain things that we all need to work on as traders. And one of the things that happens with the fear of missing out is a big one, right? Yeah, that's a huge one. And that actually is, I think, if you look at it, that's a big driver in the markets themselves. Like if you look at the big macro picture, a big reason why you have things like blow off tops, right? That's what we would call it in a charting sense, a blow off top, where the market just kind of makes this parabolic move. I'll draw it the other way. So parabolic move like this, and then it keeps getting steeper, and then it just collapses. The reason why you get those sorts of things is because the last group of people who are getting in on that trade, who are buying that asset or whatever it is, that stock, or getting in on that trade in currencies or what have you, those people are the ones that have the fear of missing out. And this is universal. This is like a psychological cycle that you can see in any market, where it gets really, I mean, Bitcoin is probably one of the easiest ones to see this at, just because it's so pervasive in our culture. Like it's always kind of in the news sort of thing. Well, I guess you do overseas. If you're in the States, it may not be as obvious, but when you're in other countries, like they're always talking about the exchange rate, the pound versus the dollar, the Aussie dollar versus the US dollar. So that this is kind of part of the nightly news or whatever. You know what I mean? It's always out there. Whereas I don't remember. I mean, it's been a long time since I lived in the US, but I don't remember that being a major thing, even in the financial papers. Like it was maybe buried somewhere, but it wasn't like a prominent thing. So, so the reason I want to bring this up, to make the point, the reason I want to bring this up is that you don't see like in the news, like in the States, usually when they have that financial segment of the news, what they'll say is they go, oh, the biggest movers and the biggest losers or something in the stock market. Yeah. Or they might not even have that and just say the Dow was up today, or the S&P was up, or the Nasdaq was up, or whatever, 2% or whatever, and that's it. That's all you get, right? They don't say like, oh, Facebook went up. They rarely would, like if it's an IPO or something, they say, oh, Facebook had their IPO today and it went up, 300% or whatever. But they don't usually talk about individual stocks. Whereas Bitcoin is kind of one of those things that's always kind of, seems to me anyway, it's always kind of in the news. And I think I think that's reflective of everyone's kind of interested in it. Even if they don't buy it or sell it or trade it, they're aware of it. You know what I mean? It's like this kind of like this new thing or whatever.
Yeah, it's a new thing.
And that's exactly right. And that's like, those are the type of markets that are most susceptible to the crowd and the fear of missing out, right? You don't have a whole lot of traders, a whole lot of people have this fear of missing out of some, stock in Hungary, right? Or whatever, or like, like some like IPO in New Zealand or whatever. Like that's not a thing, right? This is like a global thing. And, I hear people tell me things like, oh, well, Elon Musk said that, 6 months ago, or whatever, that Tesla Motors is going to start taking Bitcoin payments. So Bitcoin's, spiked up or whatever. It's just like always in the. So I think the fear of missing out, which we're talking about in an individual trade level, that's also in the big macro level. And you'll see that repeatedly in the markets play out. And it's most pervasive in those markets that everyone knows about, right? So the more people that know about a market, the more likely you are to get those blow off tops. So things like real estate, cryptos, anything that's really in the news and everyone knows about. I'm trying to think of another example. What would be another thing like, gold, like metals don't even really qualify. Like, well, actually, do you remember? I don't know if you remember this, but like there used to be these things called Beanie Babies.
Oh yeah.
Did you ever hear about them? Yeah. So there's things called Beanie Babies that were like became super collectible. When I was really young, there was a thing called Cabbage Patch Kids, and we actually stood in line outside of a department store overnight, camped there to save our place in line, so that we could go into the store in the morning and go and buy, one Cabbage Patch Kid per kid or whatever. That was the deal, right?
Yeah.
Do you know what I mean? And it was like this crazy thing. And then later on, there was Beanie Babies, where there's like these really expensive things. And I'll never forget, there was this fundraiser where this girl, like, she was like 10 or whatever, and she had all these Beanie Babies, and she was donating them to the fundraiser, okay? And then this football player guy, right, this big husky, he went and bought, like, he bid on the Beanie Babies basket of this 10-year-old girl's. He bought them all for the fundraiser, and then he gave it back to her. You know what I mean? And that and it was like thousands of dollars, right, for these Beanie Babies, because they were so collectible.
Yeah.
But that's another example, right? Beanie Babies is one thing that kind of, Cabbage Patch Kids was another one that kind of like the whole culture just, and there's this crazy fear of missing out. I think Tickle Me Elmo was also one of those things like a while ago. It's with these weird things that like everyone just has to have, and they have the fear of missing out, so they just do whatever they can to get it. So
the big one right now, I think, is NFTs, right? Or
yes,
recently, it's the NFTs.
Yeah, and I think you're right. I think you're an early adopter. I think it hasn't quite. Yeah, I think you're right. Like, dude, I was just. Well, when we used to be able to go to dinner, we're no longer able to go out for dinner. But when I went to dinner with my kids a couple months ago, there was a friend of ours and his daughter, and his daughter's friends with my daughter. And I didn't realize they were at the restaurant next to the restaurant we were at, right? It was right next door. And we both saw each other at the ice cream shop. And I'm like, what are you doing, man? Like, what's going on? Because he's like a programmer and stuff. And he's kind of like in between, like figuring out what he's going to do. And he's like, oh, I'm doing NFTs now. I'm like, really? Yeah. And he's like got this artist on there and everything. And he's selling these, he's got NFT brokerage and all that. And I think you're right. I think it's one of those things where like people are just going to go all in on this. And it's because everyone's learning about it. Right. So they're like, okay, I don't want to miss out on this. Like I missed out on Bitcoin or whatever. So yeah, I think you're right. I think this is the next thing for sure.
Yeah, no, that's a good point on the Bitcoin and all that stuff. Also, because like in cryptocurrencies, even if you miss that big run, like you can always get in a better price, right? And I try to scale in, scale out, and I always don't get the best price because it just keeps going down and down and down, and then you're like, okay, that's a base, and it's going to go back up. But I mean, that's one thing to think about when you're suffering from FOMO. Also, is like there's probably going to be a better price at some point, so just hang on and you don't have to worry about like getting in right now, right?
Yeah, and that's one of my big things. One of my big rules is exactly what you said. If you feel like you're going to miss out, remember, you can always wait one more candle, one more day, one more hour, one more. Do you know what I mean? Like you get a little bit of extra information with that extra candle, and it's often the case. And because of the cycles, like in the markets, we kind of have these cycles where certain times of the day, there's a lot of volume and then it kind of tails off and that. So you can kind of like, if you like, let's say, for example, you were trading the pound and you saw the pound ramp up during the London Open and you felt like, darn, I really wanted to get in on this reversal, but now it's blasted up again and I missed it. You can always wait for the next cycle. You know what I mean? Like if it's a bullish trend, if it's really strong, you're going to see it eventually do those pullbacks, like you say. And so that's, and you're always better off, I think, waiting for those pullbacks. I mean, you can trade the breakouts, like if it's basing up or whatever, you can trade the breakouts and stuff like that. A lot of trend followers will do that, and there's nothing wrong with that. But if you're trying to, have a tight stop and all that sort of thing, you got to wait for the pullback. And if it's already gone, like that happened to me last night. Last night for 24 hours, I had been waiting for these trades to happen. Right?
Yeah.
On the pound Swissy, the Aussie Swissy, all these trades totally wait. I'm like, okay, tomorrow, London session. Early, I'm going to go in. I'm going to find these are going to peak up after they're going to retrace during Asia, and then they're going to go. And all of them did that. However, all of them did that an hour before Frankfurt. So Frankfurt opens an hour before London, and they actually did it like at the open of Frankfurt. They made their highs, and so I was a little bit late. Basically, I was 2 hours too late. So I came in, and all the charts had gone. I'm like, well, there's nothing I can do. Yeah. Like I'm not going to get in now, because it's going to retrace now. And it did retrace. It retraced all during the New York session, all of those. So yeah, you just have to wait. So it's like, okay, well, I'll just wait for the next. There's always another opportunity. That's the great thing about the markets. There's always going to be another opportunity. And that's something I think we should tell ourselves when we're worried about missing out, for sure.
Yeah, no, totally. Well, on that note, that's a great place to end. So thanks, Walter. See you next time.
All right. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
That's not necessarily the best way to make money. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this is the classic question, but how do you know when to take profits?
Well, it's probably not when you think you want to take them, right?
Exactly. Yeah.
Definitely not. There's a guy in the Market Wizards book. I don't know if his name is Larry Height, but one of the guys in the Market Wizards books, he says, theoretically, I would have made much more money throughout my trading career, but I just couldn't help but, and I'm paraphrasing, but I just couldn't help but to hear the cash register ring. So he would just keep cashing out of these trades, even though he knew if he had waited a bit longer, right? And in the Reminiscences of a Stock Operator, which is the biography of Jesse Livermore says there's plenty of, and again I'm paraphrasing, there's plenty of traders out there who have been, bullish at the exact perfect time and been bearish at the exact perfect time. They've timed the market perfectly, but it's very rare to find the trader who has the patience to hold on to those positions. And that is so true. Mm-hmm. It is so true. The thing that we beat ourselves up with as traders is either like we have the fear of missing out on a big profit by taking profit too early, right? So we made $1,000 on a trade, but we could have made $6,000 if we had waited. Or it's that thing where you had $6,000 on your trade, right? But you waited so long to get out that it kept going against you, and you kept waiting for it to go back, and it never went, and then you ended up with $1,000. And so as traders, I think you need to decide which of those is more painful. Having $6,000 literally in your equity as just as an example, right? Just pulling a number out of there, and then watching that go all the way down to say, let's say 3,000. Okay, so you had 6,000 in the bag, you never got out, it went down to 3, or you have 3,000, you cash out because that's where your profit target was, and then you watch it go another 3,000 in your favor without you, and you're like, in both cases it's the same thing, right? In both cases you've lost 3,000, you've quote lost $3,000. But which one is more painful for you? Because that will determine how you should exit. If you are okay taking 3,000 and saying that, I mean, more okay with losing out on that extra 3,000 after you've cashed out 3, then that's fine. Then you use targets. The targets, you're a target trader. If, however, you think that it's more painful for you to, or it's better for you to, you're okay with having 6,000 and then watching the market retrace against you and finally getting out at 3,000, then you can use trailing exits, right? And loose trailing exits at that. But yeah, so it's really, you can do both too. You can do both. I like to do both. You can have a target and you can have a trailing exit. That way you kind of feel like you're always right. But that's not necessarily the best way to make money. It's not necessarily going to make, and that's where we get tripped up. We think, oh, we need to figure out the best way, the most profitable way. No, you need to figure out the way that you're going to stick with. You need to figure out the thing that you can do, right? Not the thing that's going to make you the most money, because the thing that's going to make you the most money may not jive with your psychology. So yeah, so that's my take on that, is that you can do both. I mean, this is really simplified, right? There are lots of ways to go. You can use timed exits, right? You can use exits based on the time, like lunchtime. They're all going to lunch in New York, so we're going to get out now because the volume's going to, or get out at the end of the day, or get out after X number of days, or get out if the market hasn't gone after X number of days. So there's lots of timed exit you can use too, which I think is a really cool thing. But at a basic sense, it usually comes down to letting the market go as far as it wants to, some sort of trailing exit, or letting the market cash you out at a predetermined level, which is your targets. So how do you see that?
Yeah, no, I totally agree. I think it's you have to specialize, right? You have to understand what your edge is. And it's kind of like trying to be a doctor and a lawyer at the same time. That's not going to work. So you got to pick one. So you're going to be the short target guy, you're going to be the long target guy, or you're going to have something in between. But I think one of the biggest issues with traders is that they try to do all of the things at the same time, and they lose out on one trade because they missed a bunch of profit, and they say, oh, I'm going to switch back to the other thing, and then the other thing doesn't work, and then they take a small profit again, and then they say, oh, I missed out on this profit again, so I'm going to switch back to that. And that's where you get into that, that cycle of losing and switching and losing and switching.
And also, I think they fix the last trade. So you have a trade that you take, and then something happens. You watch the market go, and you're like, oh, wow, I only took 2R on that trade, and it went 6R. So next time I'm going to use a trailing exit. Of course, what happens next time? Well, the trailing exit loses you 0.2R, 0.2R, whatever. You know what I mean?
Yeah.
So that's the problem I think we have as traders, is we're always trying to fix the last thing, and that's not the way to do it. We need to take groups of data, and if you're going to make changes based on chunks of data, not just 1 or 2 or 3 trades. You need a big chunk of trades that show you something, and then you go, okay, well, maybe I should do this based on the last 50 trades or last 100 trades or what have you.
Yeah, and I think that's just hardwired into us, right? Like, it's like you put your hand on a fire and you get burned, and you're like, oh crap, I'm not going to do that again. So it's the recency bias, I guess, right? The last thing that happened is kind of what we emphasize the most.
Absolutely. Yeah, totally. Exactly. And that serves us well. Like, that serves you well in the jungle, but not so well in the markets. Yeah.
True. All right.
Yep.
Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
No, totally. I think people beat themselves up too much, or they think it's an insult on their intelligence if they lose a trade or they have a losing streak, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So in this episode, we want to talk about greed. And as traders, sometimes we have this problem of trying to overcome the need to win and this feeling of greed, and trying to really take as much as we can out of the market. So how do we overcome that?
I think it comes down to practice. Like, what did your backtesting tell you? What has your demo trading told you? You trading your small account. There's a certain line, obviously, right, that you have to tightrope walk across. Like, There's being aggressive and making profits when they're available, and then there's being safe and not taking undue risk. So I think it just comes down to, what does your testing tell you? What does a certain extent, what does your gut tell you? And being able to discern which is which. And I think a lot of people get too greedy in the beginning because they think they know how trading works, and they don't really. But once you've been through a few boom and bust cycles or whatever, and you can kind of tell when it's a good time to be greedy and when it's a good time to lay back and just kind of play it safe. What do you think?
Yeah, I think, I think that I feel like we don't have, this might be kind of weird, but I feel like we kind of don't have a say in it as traders. I feel like we kind of have to just let the market decide when, the big winners are going to come. And it's almost like a letting go thing, sort of like you're sailing. Today's not going to be a windy day, so you're not going to go very far, right? Like there's nothing you can do about it. You can put your biggest sail up, I guess, but that's all you can do really, and just kind of drift along. And I feel like part of my growth as a person, as a trader, has been learning that I need to just focus on what I can, which is the rules of the strategy. So whatever strategy I'm using, I execute those entries and those exits exactly as I should, exactly as I've back tested, and I don't deviate from that. And that's why I record all of that data in my journal. However, there are times when you're going to do everything perfect. And the last couple of weeks have been really rough for me, like in terms of win rate. And I have to examine that and go, well, what, it's not that I want to change what I'm doing. No. I just want to make sure that my exits and my entries have been where they should be, right? Is that what's going on? I mean, you've probably seen this, like when you're at your best, when everything's rolling and everything's clicking and you're making lots of great trades and all that, the markets are really, you're really locked in with the markets and you're doing well. Those periods are often when you're really ripe for making mistakes, right? It kind of sows the seeds for greed or mistakes or whatever in the near future. So to me, that has to be part of the awareness too, is like, how am I feeling today in terms of my trading prowess? Where am I at on a scale of 1 to 10? You can go back and look at that too in your journal. You can see, do you tend to make mistakes when you've had a winning streak and you're feeling really confident and your number's really high? Or do you tend to not take trades when your confidence is really low? Do you tend to just let trades go that you should have taken, but you didn't because you were a 3 instead of an 8 or whatever, because you've had 6 losers in a row? So that's the kind of thing that I think we can see, like the data is there. And I do believe part of it is just letting go and just going, look, because you just never know. If you're a trend follower, you just don't know. You do not know when that trade is going to come, that 20R or 15R trade is going to come and make all the difference for your year. You just don't know when it's going to be. Like for me, those trades happened back in February, March, like the best months of the year so far. They were February, March. That's when the markets were trending and I was all in, right? And so that was great. But now it's kind of, there's a lot of drifting around and reversals and stuff, and Asia goes one way, then London goes one way, then New York goes the other. It's just kind of whipping around, and it's kind of difficult unless you're trading the perfect time frames for those setups. So yeah. So I guess in essence, I would just say record your emotions because they can impact your execution, right? And also maybe think about trying to figure out ways that you can relax and just let go and know that it's not really entirely under your control. It's part of trading is just learning to be that person that says, okay, well, this is what the market's going to give me now, right?
Yeah.
And my system, I'm doing it. I'm executing. So, I know the system works. It's just the system needs certain market conditions to work well, right? So yeah. So there you go. Yeah.
No, totally. I think people beat themselves up too much, or they think it's an insult on their intelligence if they lose a trade or they have a losing streak, right? And like you said, it's just
they take it personally.
Whatever's going to happen is going to happen. Yeah.
Yeah, that's right. Yeah, that's right. Yeah, that's totally. And it's funny. Like I used to do that. I used to get mad at currency pairs. That Swissy, that loony. I want to get revenge or whatever. Like what? Like that. I don't even think about. I honestly don't even think about that. I really don't. I really do not think of of them as adversaries or whatever. I think of it more as myself as the one that I need to deal with. It's not the loony or whatever, or the Swissy or the pound or whatever. Yeah, it's crazy.
Mm-hmm. Yeah, that's a good point.
Yeah.
All right. Thanks, Walter.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
All you really need to do is have one role model of someone who is wealthy and who breaks that stereotype. And I think that can really help. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, why do we think rich people are bad, and how does that affect our trading?
Well, for me, I don't know about you, but for me, a lot of times, and a lot of traders I know, their ideas, their stereotypes, it comes at a young age, So like I remember when I was a kid, I went to a birthday party of a friend of mine, and she was in my class, and her dad owned all the McDonald's, like all the McDonald's restaurants in the area, which is kind of is a rural. I grew up in a rural area, so it's spread out, over maybe like say 50 miles. This guy had all the McDonald's restaurants. And so it was really funny. Like when I came back from the party, my mom and dad would be like, "Oh, what was it like there?" And you know what I mean? Like it was kind of like I went to like the North Pole or something. Everyone's asking about with Santa Claus, Like, so you pick up these things, I think, over time from growing up about like these stereotypes about, I wonder how many people he had to screw over to get that money. You know what I mean? And like these sorts of things. And so there's two things to untangle here. One is that your relationship with money and your attachment to money. And two would be what you think about people who have a lot of money. And that usually comes pretty early. And you can even see it in movies. Like there are these movies about the rich old miser, or like, like a Christmas Carol. They have and there's another one where like, there was a movie had Richard Pryor in it, and this kid, and the kid was really wealthy, and then Richard Pryor somehow like got connected into the family, and he was like hired to be the kid's friend or something. And there's all these movies where they have this stereotype of the rich person and how they're kind of not doing exactly everything right, whereas the people that don't have the money are doing everything the right way and sort of thing. So I think you have to untangle that and see. One thing that can help is just having someone that you look up to when you're growing up that has a lot of wealth. So for example, my grandfather was a good example of this for me, because he adopted my mother and her siblings. And so, he came from he had built up a lot. He was a farmer growing up, and he married my grandma on the farm next door. But what was interesting was, he kind of built up his wealth over time and started making more money than the president of the company that he worked for and all this stuff. And so there's a lot of issues with that. And then he had these vacation homes and different islands and stuff that I got to visit as a young grandchild. And so I saw a really good example of someone who had done pretty well, in his life. Like there was nothing bad about him. You know what I mean? Everything we knew about him was great. And so it was kind of nice to have that role model, someone. But I think allowing your kids to have a role model, someone that they can look up to that knows the game of money, because it is a game, and you can see that for who they are and not, pigeonhole them as someone that's negative. So I think a lot of it has to do with the stereotypes that you grow up with. So, and being able to find a mold or find a role model, someone that you can relate to and learn from that has already kind of done that in a good way can be really helpful. And that's always something that I want, my kids, and I feel like, even young adults growing up, there's a lot of indoctrination in stories and in the school system about what it means to be wealthy. And I think, all you really need to do is have one role model of someone who is wealthy and who breaks that stereotype. And I think that can really help. Otherwise, it's a lot of deprogramming. What are your thoughts?
Yeah, no, I totally agree. I think a role model is definitely the best thing, right? Because when you see it in action, then you can say, hey, this guy's not that way. So not everybody's like that. But I think I was doing some thinking on this recently, and I kind of realized that, okay, that's something that we have to distance ourselves from as traders, because if you want to be wealthy, you have to think of wealthy people as being good. Some are good, some are bad. And but I think throughout history, I think really wealthy people, there have been more than a few really wealthy people who have abused their power, right? Like you're talking about kings in the medieval times, or certain politicians, in other times. And I think that has carried forward into our like collective psyche. And I think that's kind of where that comes from. So you got to kind of realize, okay, that's not always the case, but there were a few bad examples, and that probably has led to where we are now, thinking that most rich people are bad, right? So I think once you can kind of see where that came from and distance yourself from it, I think it's really beneficial.
Yeah, exactly. Yeah. And I think like the younger generations coming up behind us aren't going to have as much of an issue with that, because it's almost like we're the fish in the fishbowl. We can't see the reality of what money is. Mm-hmm. You know what I mean? Like money is a centralized thing. However, that's changing, and money is becoming a decentralized thing. Mm-hmm. And it's going to completely, like, that is not in the future. It's already here, right, with cryptos. So in the future, what's going to happen? Well, actually, if you go back in the past, think about this. We didn't always used to have these centralized money stations, right, around
very
the world.
Decentralized, yeah.
Yeah, right. Like we think about back in the old days, there was like a bank out in California that would print notes, and you could use those notes out in California and Nevada. Mm-hmm. And there was another bank out in Illinois, Ohio. You know what I mean? Like it was like this regional thing.
Yeah.
And I'm talking about the United States here, but I'm sure it was similar in other places. With possible exceptions of the new countries that never had this. So what's cool about that? That's changing now, and what will happen is you're gonna see exactly the same thing that we saw with all these banks that printed their own notes. It's exactly what's happening right now with the cryptocurrencies. These are decentralized, and basically it's like a market of money. And so the market gets to decide which ones are useful, right? So if you took that note that was printed by the bank out in California and you took that to New York, it was up to the people in New York to decide whether or not that was worth anything, right?
Mm-hmm. Yeah.
And that's exactly what's happening now with cryptos, right? These cryptos, there's more than enough out there. And so people get to decide now which ones are actually worth anything. Which ones are you willing to, is the demand going to go up for, right? And so this has always been the case. It's only been recently with the centralized bank model that we've seen all the money go through one thing, right? Mm-hmm. So I think what the upshot of that, I think, is that the kids growing up now, or the kids that are yet to be born, like those generations, they're going to have a completely different concept of money than you and I do, because we've always been in this centralized economy where all the money goes through one spot, right? These guys print the money and they loan it to the countries, because that's how centralized banks work, right? They print the money and they loan it to the countries, and the countries take the money and they have to pay back the bank, right? That's how it works. So yeah, so I just think the whole thing is fascinating.
No, totally.
To see how this unfolds. Yeah,
I've seen several examples of like kids who are like 16 or whatever, and they saved all their birthday and allowance money and they put it into something like Doge. Now they have like $1 million. So like now they are the rich person, right?
Yeah, exactly. Yeah. So
right, cool.
That's awesome. Yeah.
Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
You kind of just quiet your mind, you sit there, and then you imagine yourself moving out of your body and looking at yourself.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, somebody wrote in and they're asking, why do I keep making mistakes after a string of losers, and what can they do?
Right. So there's a couple of things that I would look to. I would look to your emotional context when you're making these decisions, and also the mechanical aspect of your system and how you're executing. So you need to score yourself on how well you are entering your trades and exiting your trades, also managing your trades if there's management decisions like moving to break even. and then having a journal where you're writing about your feelings and your thoughts during the time, you can probably pinpoint other things going on in your life that may be impacting your actual trading execution. So that those are two pretty common things. You might find, for example, like some traders like me, we get really overconfident when things are going well. Mm-hmm. So right now I'm currently in 4 trades and they're all going quite well. So it would be easy for me to see another potential 5th trade and get excited. In fact, I did this morning and get excited about, you know what I mean? And maybe even take it if it wasn't up to par, right? Yeah. According to your rules. Whereas other traders, so that's an issue for me. Now, the other side of that is that, you know, you have a lot of losing trades, and then you might want to just make all that money back, right, as quickly as possible. So you might add too much risk onto a subsequent trade or something like that, right? So there are lots of ways to look at this. Typically, it's the emotion that's impacting the execution, right? And so what happens is you get attached to the outcome of those trades. You've had a lot of bad outcomes, and so that impacts your decision making. Or the other side of that, which is you get attached to the outcome of those winning trades, and that again impacts your emotions and your decision making when you're deciding on how to execute the next trade or the next following, you know, chunk of trades. So that's how I look at it. Mm-hmm. What are your thoughts?
No, totally. It all comes down to is if you're executing correctly, like you said, and if you're not, then figure out why. And if you are, then keep going. But beyond that, I mean, yeah, it's easy to get into that spiral of, oh, poor me, I'm just gonna try and make it up quickly, right?
Yeah, the catastrophic thinking, right? Yeah. Where you just say, "Oh, I'm never going to make it. It's never going to work for me." Blah 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 blah, and exactly right. So that, and you can stop that with logical thinking. You can have a trading accountability partner to talk to about that, and they can help pull you out of that. But there are lots of techniques. Actually, I've been thinking about making a course on this, just on this issue of, you know, building up your resilience and stuff, because I think it's a really important thing. I think it actually, in some ways, like fortitude and the desire to make it work, I mean trading work for you, is important. And also with that would be like resilience, and they're kind of related in a way. I think if you have those things, then you will figure out the system, you will figure out the risk management, you will figure out the psychology, as long as you have the fortitude, the desire to make it work, and then also the resilience, the ability to withstand those really difficult times. Although, you know, winning streaks can be painful too for people who, for example, you took a trade and it only made 50 pips, and then you watched it go another 690, you know what I mean, without you. Yeah. You know, those can be difficult too. Yeah. Right. So there's a lot there. But yeah, so yeah, I think you're absolutely right with that idea of, you know, feeling like it's a downward spiral, catastrophic thinking. That's a big one for sure. Yeah.
Yeah. And one exercise that I found useful, I think I read it in a book a long time ago, but you kind of just quiet your mind, you sit there, and then you imagine yourself moving out of your body and looking at yourself at, you know, sitting at your desk or whatever you're doing, and kind of evaluate yourself from like that third party perspective and say, hey, it's easier to evaluate somebody else than yourself, right? So when you kind of change your perspective, I think that helps also.
Yeah. You know, that reminds me, what you just said, it reminds me of like an NLP thing I read about like in 2003 or whatever. And I started using the exact thing, which is, so it's kind of what you said, right? So you imagine, like let's say you're sitting there trading at your trading station, right? So you imagine that you're like a fly on the wall looking at you. Mm-hmm. So from that perspective, like what would the angle be from the height? And then what you do, so the way that you do it is you view yourself from another's perspective. It could be like from the top, like as if you're looking down, like from a drone or whatever, you know, looking down on your head, doing the right thing, like doing everything right, executing as you should, right? And that's in full color, the sound, everything is as realistic as possible. And then if you want to kill a habit, what they said was you would look at it, you would see yourself making a mistake. Okay, so making doing the thing that you want to get rid of from another perspective, right? But it's in black and white, okay? And it's really kind of grainy and almost not like an old movie or something, right? So it's in black and white. It's not as vivid as the one that when you envision what you want to happen. And then you watch that film, and then you actually take that film, right? That black and white film of the recording of you doing the wrong mistake, and you like throw it into the fire, or, you know, blow it up with dynamite, or, you know what I mean? Like put it in front of the train tracks and let the train run over, or whatever, you know, flush it down the toilet. And so that's a way of kind of like purging yourself of that. So anyway, that's a technique if people want to try it out. Let me know how it goes. Yeah.
Yeah, no, that works really well.
Yeah.
I think I heard that from Anthony Robbins somewhere, and he probably got it from NLP. But
NLP probably.
yeah. Awesome. Okay, thanks, Walter.
Okay, cool. All right.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You just need to set up the routine of when you check your charts. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, somebody wrote in and they asked, can you guys speak about how being in front of the computer intraday as a swing trader can be sabotaging?
How being in front of the computer intraday?
Yeah, like I guess they're in front of the computer for quite a while during the day, but they're a swing trader.
Oh, so like I guess it sounds like they're kind of getting into the trade. So basically they shouldn't be fiddling with the trade, but they are, sort of thing.
Yeah.
Is that
so.
Is that how you interpret that? Yeah. Yeah, I had that too when I first had the when smartphones came out before iPhones. I had like a smartphone, and it was the same thing. I put MT4 on it, and I was always looking at it. Stuff was stupid. So yeah, I mean that's definitely a case. I mean, it really comes down to discipline with that sort of thing. So if I don't know if it could also be a similar question would be like I'm spending too much time in front of the screen. Well, I guess it's sort of the same thing. Like if you're a swing trader and you're trading, let's say 4-hour charts, there's really no reason to be watching the charts, 8 hours a day, right? You could check in every 4 hours, essentially, right? In theory. The problem is the candles change, right? So, for example, I've been trading the 12-hour charts lately. And so I look at the 12-hour chart during Asian, and I go, holy crap, the market's going against me, right? And then, of course, and then London comes around and the 12-hour candle closes and it completely goes the other way and goes in my direction,
Yeah.
And this has been happening for the last couple of days with my trades. Yeah, and so the problem is you think that the candle that you see right now is going to be the candle that prints on the chart, and that's never the case. They always change towards the end, right? It doesn't matter if you're looking at a 5-minute candle or 1 hour or a daily. They always, at the end of the candle, it always changes quite a bit, and something for you to check out yourself. So discipline is really the solution here. So what you need to do is set up a routine. And so you walk the dog at a certain time, you go to work and have lunch, check your charts after lunchtime if you're at work or whatever, or, you need to have like a process, right? A routine to go through. This is why those military people do so well with scalping and stuff like that, because they're, athletes that have trained for years and years and years, because what happens is they can easily slot in the routine of, okay, I wake up at this time, I check my charts at this time, I'm going to trade during this time, right? And that's what you really need. Even if you're a swing trader, even if you're not scalping for 3.5 hours a day, if you're a swing trader, you just need to set up the routine of when you check your charts. You can set alarms on your phone or send email reminders to yourself. Anyone can send email reminders by sending an email to @followupthen. So if you want to remind yourself to do something on a certain day or time, whatever, you can just send it to, tomorrow @followupthen and put the headline in the email, and it'll come right back at you, right? So these sorts of things are all there for you. You can set alarms on your charts even. You can do whatever you want, but the idea here is that you need to set up your day in a regimented way so that you have a process that you go through every single day, and that allows you to, okay, now it's time to check my charts, right? I can't check my charts until it prints. If I'm a 4-hour chart trader, I can't make a decision on this until that 4-hour candle prints at 2:00. When does the next one? Okay, at 6:00, and the next one at 10:00. That's it. I can't, that's the way to do it, I think. And if you can't be there right when the candle prints, then you have a schedule based on, an hour after it closes or whatever. So for example, you might not get off of work in time to check the 4-hour chart, and you're busy with work stuff, so you have to do it an hour after it closes or whatever. But you can find that. You can make that work. It doesn't matter what kind of life you have. If it's too hard, then you're trading the wrong time frame. Move to a 8-hour chart, whatever, right? So
yeah, no, totally. And I think
that's what I would do.
At least my psychology behind that was I was trying to become successful faster, and I thought that looking at the chart would speed that up. So I think if you realize that that's what you're thinking also, then you have to understand that that's not how it works. You just have to, like you said, look at the chart when you should and not look at the chart when you're not.
Yeah. And if you want to get better faster, like you said, like I know people like they tend to say things like, "Oh, back testing is a waste of time." Well, you get a lot more under your belt if you spend time back testing the last 3 years, right? Than if you watch the last 3 hours. So in that amount of time of sitting there watching this candle just do this, you could have taken 30 trades, right? You could have taken 30 trades in Forex Tester or some simulators so that you have that experience under your belt. So to me, that's a better use of time. So
no, totally. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. If you just look at how the world works, right? Things go in cycles.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, there's a thing called Bitcoin maximalists, as you probably know. And, they're all about Bitcoin. They think that only Bitcoin's the only thing out there. It's the best thing. And they're going to stick with it no matter what. So what do you think about that? What do you think about the psychology behind that? And do you think that's dangerous to be stuck in just one thing, like, just trading the euro, US dollar or something like that?
I don't know about Bitcoin maximists, but I believe you. Look, I only know enough to be dangerous on that side of things. But like, here's my understanding of the crypto world is there's different things, there's different coins and tokens and for different reasons. And you know what I mean? Like they all have kind of different uses and stuff. But remember, I just keep thinking back to when like 1994, the Netscape stock was amazing, right? If you look back and look at Netscape, like that was amazing. Netscape actually blew up and it's kind of come back as Mozilla. So Mozilla today is kind of the people that had it's kind of the Netscape came from the ashes of Netscape. You know what I mean? Mm-hmm. So if you were like, oh, this internet's going to be huge back in 1994 or 1985 or whatever, like you're just thinking, dude, this is amazing. I'm all in on Netscape, or I'm all in on home computers with, in 1993 with Gateway, or 1992 with Gateway 2000 stock. You know what I mean?
Yeah.
Both of those got superseded. You know what I mean? Like that something better came along. I don't know. Maybe Ether is better than Bitcoin. Maybe Ether is actually going to be the thing, but they have different uses. You know what I mean? Like Bitcoin, as I understand it, is more like a storage, like gold, like holding value. Whereas Ether is a little bit more, well, my programmer tells me that in the future, the internet's going to run on Ether. That's what he tells me, I don't know, but that's what he told me. So, it's a different thing, altogether. But your point is a good one, which is, sometimes I will say though, I know a trader in Africa, and every year he locks in on one currency pair and he just trades it the entire year. Like one year it might be the pound yen, for example, right? And that's all he does. And he's made enough money to get to the point where the authorities don't want him to leave the country because his contribution to the federal budget is so great. You know what I mean? So and that was a big deal for him. Like, how am I going to get my family out of the country? So there's something to be said for that. But what you're saying is it's kind of like someone locks in on something and they're just like, I'm only going to do that for life. I think it could possibly work. I don't know why you would want it to work, because I remember in 2003, I used to trade the Euro Swissy. I don't trade it anymore. The Euro Swissy used to move around quite a bit, and now it's just, I don't like the look of it. And actually, I trade the Aussie Kiwi a lot, but I don't like the look of the chart as we record this on the Aussie Kiwi. It's too wicky, it's too choppy. There's certain nice. So I can understand why you would want to become a specialist, but I think as a buy and hold sort of thing, that can be a bit dangerous, which is kind of what you're getting at. I think like a buy, if I were to just buy Netscape and hold forever, I got no money now, same thing with Gateway. I don't know. Well, I don't know. Maybe Gateway, I think Gateway 2000 became Gateway, and then Dell Computers took over and kind of squashed, like they're the leader in that sort of niche now. So yeah, I don't know, man. I mean, I think you could do it, but as a buy and hold strategy, and that in gold though, is you and I both that are like, I'm just going to buy gold and I'm never going to, like you can go to these guys that have the coin shops and stuff, or the gold, you know, like kind of like slash pawn shop slash gold coins, like, you know, these guys, and they'll tell you like, no, we don't sell gold, we just buy it. You know what I mean? Yeah. So I mean, look, I mean, I understand, but I think you need to be mentally flexible overall if you're going to be a trader. If you're going to be an investor, even, you need to be, because you got to have, even as an investor, you got to have a point where you go, okay, yeah, this isn't working. You know, I need to get out of this. So you always have to have your limits. It's just like, as traders, we know when we get in, where do I get out? If it goes good or if it goes bad, like what's my rules in terms of that? Even if it's a trailing exit, there's got to be something that happens that kicks me out of this trade. You know?
Yeah, no, totally, I agree. And I think that if you just look at how the world works, right? Things go in cycles. There's the tides, there's the stock market goes in cycles, all this kind of stuff, and there's the weather. So why won't investments go in cycles, right? So I think that, you know, yeah, you could make a case for buying Bitcoin or maybe gold super long term, but I think in the end, especially in technology, there's going to be cycles where the next technology comes in and that's going to be better than the last one. And those guys are like the old fogies saying, back in my day, you know, this and this was the best thing, and I'm going to do that forever. I think really kind of locks you into something that might not be working 10, 20 years down the line, right?
Yeah, that's right. And remember, like this dollar cost averaging idea of buying every year or buying every month or whatever, that was manufactured by the brokers to keep clients.
Makes sense, yeah.
You know what I mean? Yeah. I mean, in Asia, they came up with that idea to keep clients in the game even when the markets were down, because as you and I both know, when the market, like especially when the stock market is raging, there's a lot of interest in trading, right? And funnily enough, the other time when there's a lot of interest in trading is when it absolutely crashes. Like those are the two. Do you know what I mean?
Yeah.
If it's just kind of doing nothing, just chopping around, there's the interest wanes. It's only when it's absolutely at a peak, or if it's completely crashed.
Yeah, totally.
Yeah. Or is it because you want to convert it to something else that's more useful? Because I can't, like, if I take my gold coin to across the street to the sushi shop, they're not gonna, like, they're gonna go, huh? You know what I mean? Like,
well,
maybe
if they were smart, they would take it, right? But
yeah.
but not
Dude,
most places.
Have you seen? Yeah, exactly, dude. There's actually, I'll see if I can find it and put it in the show notes. There's this guy that went around and he was trying to sell like a gold coin. It was on YouTube, and he was trying to sell a gold coin to people for like $20 or whatever, and you know, and it was worth like $1,500 or $2,000 or something. You know, it was worth a lot, of money, and nobody took him up on it because they're like, no, I'm not going to give you $20 for that. You know, and he couldn't get anyone to buy it. It was so funny. You know what I mean? It just shows you the disconnect between what, like, people like you and I, like, what's the market? You know, the people that are kind of in tune with the markets versus the general public. There's no utility for something like that in the general public. You know?
Yeah,
it's funny.
Totally.
Yeah.
But hopefully that'll change soon. All right. See you, Walter.
See you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Some people don't like to talk to people. You know? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I'm interested to hear your thoughts on talk therapy and how that helps people through, you know, certain psychological roadblocks or whatever.
When you say talk therapy, you mean like talking to someone?
Yeah,
like
so you go to your therapist and then you just sit down on the couch and, you know, all that.
Yeah. Well, I'll tell you one thing that I found really fascinating, like when I was learning about psychology and stuff in university. Do you know that, so one of the biggest things that you go and talk to someone about is depression, right? When I was going through university, they had drugs for this sort of thing, but it wasn't, I don't think it was at the acceptance level. I don't think it took a big portion of the treatment. You know what I mean? Like, I don't think that as a large percentage of the population maybe I'm wrong, but I think maybe it's just the world that I was in. But a lot of people would go and talk to a therapist, right, if they were depressed. Whereas today, I think even in psychology, I think I don't know if it's true, but they were pushing for some psychologists to be able to prescribe drugs just as psychiatrists could for years. Because psychologists could never do that, right? And I don't know if that ever got anywhere, but I remember, 20 years ago where they were that was what they're trying to do. They're trying to get it to a point where certain psychologists could prescribe drugs. Now, depression is one of the big ones that people depression and anxiety are the two big ones that people go to see a therapist for. And they've done studies on depression and these talk therapies, as you say, right? And what's interesting is it actually didn't matter the theoretical orientation of the psychologist or the therapist. So there's all these different theories, right? Like people have heard of Freud, but there's other ones like cognitive behavioral, which is a lot like in pop psychology, you'll get a lot of cognitive behavior where they're like trying to get you to quickly change your thinking, and that will therefore change your behavior. So that's a lot talk radio or like TV. You'll see that a lot. There's also humanistic, where it's almost like when you go to humanistic therapy, it's almost like they're just trying to get you talk as much as you can. And they're just trying to reassure you and like get you to open up. It's almost like a lot of the tell me more, and that's interesting. How does that make you feel? They just keep like they did, you know what I mean? And so it's fascinating, I find, that it doesn't really matter if your therapist is Freudian or humanistic or cognitive behavioral or whatever. It seems like they're all about the same in terms of effectiveness. If you look at studies where they had people go through really traumatic life events, it's usually the ones that go and talk to someone and the family or the community that talks about what happened rather than just kind of brushing it aside. Those are usually the ones that do the best. I think it's useful. And in terms of trading, having someone that you talk to every week about your trades, about your feelings, about, having a trading accountability partner, that's extremely useful. So I think in terms of from a trading point of view, I think it's great. It's a great use of your time. So you can do all you want with hypnotherapy and all that stuff and subliminals and all that, but having someone to talk to about your trading, even if it's a non-trader, I think can be really helpful. Or writing it out in a journal, like talking about writing about your feelings about your trading and how things are going, rather than the technical details of every individual trade. So more of a big picture sort of thing. So no, I think it can be very useful. I think it can get a bad rap sometimes. People will say things about therapy that for certain things, or there's bad publicity. Certain therapists might do crazy things or whatever. But I think overall the data is pretty good. Like I think it's pretty good, and I think just having, like I said, it's hard. I mean, trading is a lonely thing, and so having other people to talk to about it, I think is really useful for a lot of traders. Yeah. What are your thoughts on that?
Yeah, no, totally. I don't have a lot of experience with that kind of thing, but yeah, I think from personal experience, talking to another trader is definitely good, because nobody else in your life knows what you're talking about. I think a lot of people, especially in our modern culture, like they shove their emotions down. So I think talking about it is definitely helpful. At a certain point, you have to kind of say, okay, is this working as well as it did in the beginning? And if not, maybe I should try something else. Because I know some people who have gone to therapists for 10 years, and they're kind of at the similar spot they were in the first 6 months. So that's something to consider too. But yeah, I think it's helpful overall to talk about things.
Yeah, some therapists, that's their design, right? So like the Freudians, they kind of want you to go through this huge process that takes years, and they'll tell you, it's just like you go to some chiropractors and they'll be like, well, it's going to take 15 sessions. You know what I mean? So they're like, okay, it's good marketing for them, like, okay, you can't just come in once and I'm going to crack your back and you're all good. We gotta really work on this, sort of.
Yeah. And sometimes it's true, but.
Oh, absolutely. Yeah. No. If you believe the Freudian thing, or if you believe in what the chiropractor is telling you, yeah, exactly. I mean, there's reasons for what they say. But the cynical people can say, oh yeah, you're going to a Freudian. Well, to get to the point of what's called transference, it could take decades. You know what I mean? Like literally. I mean, is your therapist going to live that long for you to get to the point? Like if you have an older therapist, you got to start doing the math. Like, you know what I mean? Am I going to have to am I going to go to a new therapist before I get to the point? So yeah, it's I
think it's also on you to research all the modalities, right? And kind of see what to expect and look at people's experience with those things and say, hey, okay, I'll try this. If it's not going to work, maybe I'll try this, and this is the average time that those people seem to get results, and just kind of not take their word for it at face value.
Yes, absolutely. Yeah, and our friend Adam, he knows the tapping thing.
Oh yeah, the EFT.
Yeah, EFT, emotional freedom technique, or whatever it's called. That thing that he talked about at the London conference, that was cool. Like, some people can try that. That's kind of one of the quick fix sort of things like that. But I would never say to someone that you need to talk to someone because that's the best thing to do. It's more about what works for you. Like, you might find that EFT or subliminals or whatever, but I think just in general, it can be useful,
Yeah.
Some people don't like to talk to people,
That's true.
So, that's true. They're out there. Some people they're not, they could take it or leave it. So,
Yeah.
But yeah. I think overall, it's definitely something to consider. If you're considering it, it's probably a sign that you should definitely do that. And it doesn't have to be a professional. It could just be a trading buddy or someone that knows that you trade or whatever. Yeah.
Cool. Awesome. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Find a way to discipline yourself not to close it early.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we got a question here from a trader, and he says that he's been a break-even trader, although profitable as a long-term investor, and he's been developing some strategies, and he wants to get out of the cycle where he makes really good progress and then he gives it all back. And so he says, look, it's good that I'm not overall losing money, but I'm not making that much too. And he noticed when he looks through his trading record that he closes trades when they were in profit rather than waiting for them to fully play out. And so that would have been better if he waited a little bit further. And so what I clearly need to do is practice my exits. And this is what I'm doing in Forex Tester in my testing. But how to judge when an exit proves to me is how to judge when to exit is difficult. So when do I exit basically is the question. What are some of your thoughts on that?
Yeah. So I think number one, you go back to your testing, right? Okay. When I don't exit early and I just hit that profit target, sounds like he has a profit target, then, what are the results? And if it's acceptable, then you just go with that and find a way to discipline yourself not to close it early. Second thought on that is that maybe you're just a better investor. Maybe you should just stick to like long-term investing and, kind of double down on that instead of trying to spin your wheels with trading. Maybe your personality is such that it's not quite suited to trading. But I mean, if you want to do that, obviously, then, that's your choice. But I think going back to your records, looking at what happens when you do close it early versus when you hit the take profit. What do you think?
Yeah, no, that's great. I hadn't thought of the you should just be an investor thing. That's actually a good point. Yeah, that's a really good point. It's tricky though, isn't it? Like, sometimes everyone's a really good investor in certain markets. You know what I mean? Like,
yeah.
I think back to when I was trading stocks in the early 90s. Like, I was a really good investor.
So was most people, right?
Yeah, until 99. Yeah. So, So anyway, but yeah, and I'm sure it was the same in the 80s. Like, if you got into investing in 81, it was great until 87 and all that. Yeah, it's interesting. I kind of think that I almost feel like everyone needs to take a side or decide to be on both teams. And what I mean by that is, I think it's really important to consider what's more important, like what's more painful for you to have 100 pips and then watch the market go another 200 pips and go, oh, I lost out on 200 extra pips. I could have had 300 pips on that trade. Or watching the market go 300 pips in your favor and you're high-fiving yourself, and then it retraces and goes against you 200 pips and you get out with only 100 pips. One of those is probably going to be more difficult. And depending on your answer to that, that means that you should probably focus on profit targets if you find it okay or relatively okay to hit a 100 pip target and then watch it go another 200 pips versus, the idea of having 300 pips and giving it back giving back 200 of those, so you only get 100. If that's so painful for you, which is obviously the trailing exit scenario, then you should probably, go with just targets. But you can do both, and that's what I do. So you can have a trailing exit on half your position, or a third, or a fourth, or whatever, and then you can have targets on the other bit. So I usually have a target and then trailing exit, or I have 2 targets and a trailing exit, depending on the. Sometimes I'll have just a target, but that's kind of rare. Although my yen trade yesterday was just a target, and that was just because it was kind of in a range, and I had no reason to suspect it would get out of the range, So I just will use a target in that instance. But so that's what I would suggest. Just figure out which one is more painful. Is it the trailing exit scenario where you give back 200 pips after having it, or is it the target scenario where you got out and then you watched it go another 200 in your favor? Because one of those is probably going to be something or if you just want to have both a trailing exit and a target, that way, no matter what, you kind of feel like you're right. Yeah, it's tricky though. I think you might be right. Like it might be something to look at. Am I even cut out? Is this something I should do? Do I still want to do this? Make sure that you have good records and that you're knowing it. If you're taking the trades as you should, like you're getting in as you should, you're getting out as you should, you're following all your rules, because that's really important. So so that's basically, that's it for me. Yeah, that's my thoughts. Yeah.
Yeah, no, great points. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
The idea that your personality is formed when you're 5 is ridiculous, and that's we know now in psychology from studies that's not true. You can completely change. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I thought we could talk about personality tests. I know you've given people quite a few. I've taken a few. And how can they help traders? And is it better to take multiple tests or just rely on one test? And what have you tried before?
Right. Well, it kind of depends on what you're trying to do, I guess. If you take your car into the to get serviced, or like something's wrong with your car, they're going to ask you a few questions, like does it shimmy when you go up a hill? Or does it squeak? Does it make a noise when you stop? You know what I mean? Like they're going to ask you some questions, right? It's the same thing in psychology, I guess, is what are you trying to do? So like if you're trying to find out what you do really well, or your default mode is, or whatever, right? You know what I mean? Or are you trying to find out like if you have some challenges that you might not be aware of right now? You know what I mean? Mm-hmm. If that's what you're doing. Because psychology is such a screwy science, and some people would say it's not a science. There's a lot of it's so new. And it's so complex. There's a lot of, because people are different, right, and complex. There's a lot of different theories about what personality even is, right? So because of that, you have all these different tests that are all meant to test the same thing, right? Yeah. And I guess in some ways you would have that in other sciences. Like even in medicine, there are different approaches to health, and some that are not the traditional allopathic medicine way of trying to deduce what's going on. So there's a lot of different, it's throughout life, it's like that. But I guess from my point of view, my question has always been with a trader, where are the things that are going to be difficult for you in terms of your personality and your trading, and what are the things that are going to be that you can leverage, right? What are your strengths and what are your weaknesses, sort of thing. And so in trading, the things that I know that we got to look out for are impulsiveness. So that's like the tendency to just kind of like, quickly take a risk or something, those sorts of people that will like get on a plane right now and go to another country, sort of thing, right? I guess, back in the days when you used to be able to do that.
Yeah.
So, someone so-and-so says that the euro is going to go up, so I'm just going to take a trade on the euro. Has nothing to do with anything I've backtested or anything. It's just a tip, right, or something. So if you're impulsive and you're willing to just kind of do it on with little reflection or consideration of the risks, that can be a difficult thing for traders. On the other side of that, if you're conscientious and you're very deliberate and you're very measured, you kind of follow the steps whenever you do something. If that's your mode of operation, very conscientious, that's really good. I mean, it can run into problems with pulling having difficulty pulling the trigger and so forth. But so when I designed the training test that you're talking about that I've given to thousands of traders around the world, what I was trying to figure out was what kind of market are you most comfortable with trading? Like what's your style, right? Because we know that most traders, and I know this now after surveying people, but we know that most traders like to take reversal trades. Most traders are more comfortable finding the high or the low and trading off of that, because it's such a, visually, I mean, I was like that when I first started trading. It's so visual to see that high or that low on the chart and go, wow, if I had just gotten in there, sort of thing. Right.
Yeah.
So that's a really common thing. So I guess I would say it depends on what you're looking for. If you want the Big Five test, I can link people up to a free Big Five test. Big Five is has a lot of followers in psychology in terms of the Big Five personality. So you could take that test. There are other ones like the 16 PF or whatever, or the Myers-Briggs, and there's a guy named, I think his name's Howard Gardner. So his intelligence is defined as like there's all these different domains. So you might be really good kinesthetic intelligence, like an athlete or a ballet dancer, whereas other people are really good with interpersonal. So they're really good at like interpersonal relationships and really kind of connecting with people. So it's not sort of the broad domains that that's in the Big Five. So the Big Five tries to boil it down to basically 5 things where you're on one end of the scale or the other, or it could be somewhere in the near the middle or something like that. So, but I'll give you guys the link to the Big Five if you'd like to have a look at that. So I guess my question would be, if someone wants to do a personality test, what are you trying to figure out? That's you know what I mean? That's the overarching kind of point.
Yeah, no, totally. I think Colby's another big one too, right?
Oh yeah, Colby. Yeah, so Colby's really interesting. That's a new one that I came up on the last 6 years. That's basically exactly what you're saying. About 6-7 years ago, I found that one. So that one is, what do you do well, right? So it's kind of like this is the interesting thing about Colby, because the psychologists have been talking about things about personality in terms of how you think and how you think about the world. So an introvert sees the world very differently to an extrovert. Extrovert sees crowds, lots of action, parties, a restaurant where lots of people are talking and there's a lot of, stuff going on. They get energy from that. Whereas an introvert gets energy from just sort of like decompressing, being alone, that sort of thing, right? So they see the world differently. But with Colby, that is about what you do in the world. So it's not really about what you think, it's about what you do. It's not academic in a sense that I think it was designed like in the workplace to find out, for managers to figure out how, what am I going to do with this person in my team so that I can get the most out of them. You know what I mean? I'm not sure if that's true, but I'm guessing that's where it probably came from. That sort of that IO, it's called IO psychology, industrial organizational psychology, where it's kind of like applied to business sort of thing, right? So I think that's where that came from. So so that's a really good one too for people who are trying to figure out, how do I do things? How do I do things in the world? So it's not about thinking or considering or the way you see the world. It's actions. So that's really good for people who are trying to come up with a trading plan and figure out an approach to the markets and all that sort of stuff.
Yeah, no, those are great suggestions. I think another thing to consider also is that there's no one best personality test, right? I think a lot of people get stuck on that and they say, oh, the Myers-Briggs is the best thing, or the Colby's the best thing, or whatever. But I think each one has its strengths. So you have to kind of like take a few, see what each test has to offer, and then kind of take the ones that resonate and leave the ones that don't.
Yeah, exactly. And just like what you said, it's also true that there's no one ideal personality for trading as well.
Yeah.
I mean, there's always going to be like gradations of things that fit really well with trading and things that don't. So like you'll find on the internet people talking about the INTJ personality, which is the Myers-Briggs INTJ. So that's introvert, neurotic, I don't know what T is, something, and then J, justice or something. I don't know, but that I'm not up on the Myers-Briggs, but they say like that's the perfect personality for trading. So I wouldn't get caught up in that if you take the Myers-Briggs and you find out. I can give you guys a link to the Myers-Briggs too, but that you're not INTJ or whatever, right? Like that's just, do you know what I mean? Like that's not. I think I am INTJ. I think I took it on. I'm either INTJ or INT, the other thing that's not J. I'm not sure. INTF or INT, whatever the dichotomy is with J. But yeah, so I mean, it's not. I don't like. I wouldn't like. It's the same thing like your horoscope or whatever. You get the because personality changes. That's the other thing.
Yeah.
Like people will say to you, "Hey, Hugh, your personality was formed when you were 5," or "Hey, Hugh, you got to be really, really careful with your kid when they're growing up and get to age 5 because that's when their personality is formed." That's a bunch of bunk. Like anyone who knows that, like if you've ever been someplace, actually you've been someplace in a certain situation and then you move to another area and then you have new friends and a new environment and you actually change and then you move to another place, right? And that's why I think I've always liked moving because you get to be like a new person. You know what I mean? You go to these places and you kind of adapt and you learn from other people and stuff. And so the idea that your personality is formed when you're 5 is ridiculous. And that's we know now in psychology from studies that's not true. You can completely change and become I became very outgoing when I went to graduate school. I was pretty introverted up to the point where I went to graduate school and I became more outgoing than I was before, and that was like a deliberate attempt for me to kind of become more extroverted, become more like sensation seeking in the world. You know what I mean? So so that's another thing to remember, that if you score a certain thing and you think, oh no, you can become more conscientious if you're worried about that. If you worry that your conscientiousness score is low on the big 5, you could totally change that. It's not something that's set in stone. So that's
totally. Another resource to look at that I found was useful was Principles by Ray Dalio. Have you read that book?
No, I haven't. I know who Ray Dalio is though.
Yeah, he basically profiles all of his employees or whatever, and he gives them baseball cards, what he calls baseball cards, and they have their, personality traits on there. And obviously that can change, like you said, but I think it was a really useful thing to keep in mind because if you know what your traits are, at least for now, you can kind of like, either change them or play to their strengths or whatever. And I think that's a really cool concept that he explained in that book.
Yeah, that's awesome. That's great. Yeah, that's totally cool. Yeah.
Yeah. So, I mean, I think, I don't know, I've never found Myers-Briggs that useful. Like, I look at it, I'm like, that doesn't make any sense. But, that's just me. Maybe somebody else thinks it's useful. But I think some other things to look at also are like these books that give personality types. And like I mentioned before, Trading Sex and Dying, I think is a good one. And it not necessarily to fit yourself into a box, but to kind of like see, okay, where do I stand relative to other people? And I think that could be something useful. You talked about horoscopes. I'm going to get on my horse and ride off the ranch right now. But I think that if you go with like a qualified Vedic astrologer who reads your birth chart, I think nothing is set in stone, like you said, but I think there are tendencies. So like if, I had a reading and I sat down with her for like 90 minutes, right? And she got everything right. Like it blew my mind, everything right. And so I kind of, at that point, I was like, okay, this is probably a science somehow, right? And I think that is another thing that can also help you understand who you are, what your core maybe personality type is like. And obviously that can change, but there are those tendencies that everybody has, I think, right? And I think those are a couple other things that you can use to go beyond the basic personality test.
Yeah, and that brings up a good point. I think one thing that I've been thinking a lot about the last 2 years is this idea, like you bring up Vedic astrology, right? Mm-hmm. And one thing that I've kind of and I see more and more examples of this, like when you see things that are like thrown away in the corner and put away as, not useful or pseudoscience or something like that. Like if you go back and look throughout history, a lot of times what's happening is there are really good things, really useful things that are kind of shunned for whatever reason, to the advantage of some other group or, domain, like another approach. Do you know what I mean?
Yeah.
Like you can go back in time and see the direction that medicine has taken, or like you say, like astrology, or there are certain forks in the road where it's like, wow, we could have totally gone down this other path, but we ended up here. And it's the same in anything, right? Like with a country, the way that a country ends up could have totally gone different if there was just a slight, you know what I mean? If there was just a slight difference at this key juncture. And I think I'm at the point now where I am, because I look back, like when I was in academia, when I was in teaching courses in college and stuff, and I was doing my degree in psychology, my doctorate in experimental psychology. And I look back, like the dominant thinking back then. Okay, so this is like 20 years ago, right? Or more. That thinking back then, a lot of that stuff that everyone thought was definitely true has been proven, or has, I don't know if proven is a big word, and it's a key word to use in science. You're not supposed to release. You just find evidence for, evidence against, right? So I don't want to say proven, but there are a lot of things that we thought that were true. And today there are some questions about whether it was valid to, go down that road. So I am like, when you say that, like, some people might think, oh, Vedic astrology, and they turn off. Like, I think of the Chinese astrology, how can there only be like 11 types of people, whatever? But apparently there, the rat, the ox, all that stuff, the dragon and stuff. But apparently, like, it's more nuanced than that. It's not just the year that you're born. There's like, if you drill down, I never knew that until recently. But like, I always think about these things that have been thrown away, and I think maybe there is something there. Just because it's been thrown away and officialdom has thrown it away doesn't mean that there's nothing there, right? Because if you go back in history, you see this over and over again, where things were thrown away that everyone thought, oh, that's definitely wrong. Turns out that actually there was something there.
Yeah, so you've basically just described the past 3 years of my life. So anything that's in a book, I have the tendency to think, okay, that's probably wrong. So what else is there, right?
Yeah. Well, I think we're not alone, right? Like, there's a lot of people right now that are questioning, going through that exact same process right now at this moment. Yeah. So people are everything is kind of shifting right now. It's kind of turning around. So anyway, I just wanted to throw that out there. So so I think we're not alone. A lot of people listening to this are probably doing the same thing. Things that were thrown away and thought of just ridiculous are being re-examined from a slightly different light, going, wow, maybe that's interesting. Maybe there is some, that sort of thing. So I just want to, I think, because that's a personality trait in itself, openness. The openness to new ideas, the openness to new experiences, openness, right? Like that openness idea. How open are you to, and how dogmatic are you versus how open are you to new ideas? Like that's another thing to consider. So anyway, I think that
if there's a personality test that we haven't mentioned, or if we have mentioned one and you don't think it's valid or whatever, just give it a try. Try it out and see if it works for you or not. And I think that goes for anything in life.
Exactly.
All right, thanks, Walter. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
It was amazing to me how often those systems didn't make money, even though when you look back, you see all these big winners and you think, wow, that's amazing, right? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about this concept of prospect theory in trading and investing. And if people don't know what that is, it's the idea that a trader or investor is going to focus more on the profits as opposed to the potential losses when taking a trade or investment. So how have you seen that playing out?
That's really good. Actually, I was just thinking the biggest thing I've seen when I first started trading was when I would look at the charts through the filter of a new strategy. That's where it would come in, right? Because you would look at the charts before I was doing any sort of back testing with Forex Tester, before I ever found Forex Tester or whatever, or maybe it didn't exist. I don't know. I would look at something and I go, wow, that looks really good. And you would pick out all the perfect trades, right?
Yeah.
And so then I was smart enough to scroll back, okay, and then pull out a spreadsheet or a notebook, and I would take the trades, like usually in a notebook by hand, and see where they would, where I would go if I took all the signals, right? So it's sort of like a tedious back testing. And it was amazing to me how often those systems didn't make money, even though when you look back, you see all these big winners and you think, wow, that's amazing, right? So it's exactly what you're talking about, right? The other thing is what's called hyperbolic discounting, right? And that's this idea. so it definitely comes in back testing, or when we're looking at sort of determining what sort of strategy you should use, right? But in hyperbolic discounting, that's when you're in a trade, okay? And if you're in a trade and you've actually got some profit, and yet there's the potential for even more profit if you hold and wait, right? And this always reminds me of the quote by Jesse Livermore that said, he said, any man can pick the bottom of the market or the top of the market and get in at exactly the right time, the perfect timing. But it's rare that someone can hold on to that position. And that's what really made my money. You got that? That's where I made my money, was by sitting tight. And so by holding on to his very best positions, that's how he made all of his money. And so with hyperbolic discounting, what you do is you go, well, I would rather have the $100 now and cash out this trade than to hold on to the trade with a possibility of $2,000. And so this sort of thing is what we see if you look at the data, and we can link up in the show notes here the data, the 43 million Forex trades data, where they talk about how most traders, actually retail Forex traders, they actually win more often than they lose. They have a better than 50% win rate, but they take profits so quickly because of hyperbolic discounting, this idea that what you have right now is so much more valuable than what you could have. And you think about it, you could just move to break even, right? If you move to break even and you get stopped out, that's like a trade that never happened. But that's so painful for people to consider, that I could have had that $100. Why did I move to break even? I could have just taken that $100. Next time I'll take the $100. And that's what happens over and over again. That's why we see these traders. The standard retail trader has a better than 50% win rate on all the currency pairs, but it's that those losers are so much bigger than the winners, and that's the killer. And so, yeah, to me, though, that's the big one, right? Those are the two biggies. You fool yourself into trading something that's better than it is, and then once you are in a trade and it's a winner, you fool yourself into thinking it's better to take profit because you can't go broke taking a profit, right? That's what they always say. Can't go broke. That's exactly how you go broke. So, yeah.
I think it's interesting to see, like back when you used to be able to go to trading conferences, you see everybody open their laptops, and the manifestation of this, I guess, is you can tell the beginning traders because they have a Ferrari on their desktop wallpaper. And then so they're really focused on those short-term gains, right? So I think that's, and then you see those guys who've been trading for a while and they got something else on their, desktop or whatever. And that's one clue that you can kind of tell the psychology of the person. So I thought that was interesting.
Yeah, that's really interesting. That's super interesting. I found that. Yeah, it's fascinating. So how do you think that this relates to trading, the prospect theory idea? Like, what are your thoughts on that?
I think the prospect theory might be only half right. I think before you get into the trade, most people are generally looking at the benefits, right? But I think once you're in the trade, I think the losses become more painful than not having the gains. So you might stay in the trade longer and it might be more painful, but then that could get you to stop trading ultimately. So I think that there's two sides to that prospect theory.
And I think the pain, like the painfulness stuff, like that's kind of, you can almost see it on the charts, like in support and resistance, when you see like a support and resistance level. So you can see where, like, let's say you have support and the price comes down to support, right? So there's traders that thought, okay, that's definitely support because it was support, back in the past. So it's going to be support again. So they buy there, but then it falls through that support. Okay. And then it comes back up and touches that support level from below. So now it's resistance. And that's where all the traders get out there, right? So then it falls again. Those traders that were long, they just want to get break even now. They're just like, oh, just come back to break even, please. And it comes back to break even, and then they get out and then it falls. You know what I mean? It's so fascinating, like that you can see almost like the psychology on the line, like literally just on the line chart. Just looking at the line chart, you can see the psychology of the crowd and what they're doing,
Yeah, no, totally.
Yeah.
All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
They say there's nothing really new in trading, but I think there are certain advantages that you can come up with for yourself that could be new for you.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Hugh. So I have a question here. This question from a trader was, hey, Walter, what is it that I can do to ensure that I'm going to be successful as a trader? What are the things that I should do? What are the books I should read? How should I approach trading so that I can make it work? I'd be curious to get some of your thoughts on that. So my ideas were that what you want to do is approach it like a job, right? So it's not like treasure hunting where you just uncover a perfect strategy and then you're set, right? It's more like mining, right? So you got to find a good spot to build your mine. And then once you find where you want to build your mine, then you've got to get the right tools, right, to dig in there. And then you just got to be persistent. You got to keep digging because you're going to pull a lot of rock out. It's useless, right? Before you find the gold or the silver or the, unobtainium or whatever you're trying to get. So that to me was the key thing, was that you approach it like a job. You approach it really in a consistent manner where it's like, okay, this is what I'm going to do. This is how I'm going to approach my trading. So that's, where I find my mind. And then these are the tools I'm going to use. So that's the systems or whatever. So it's almost like you're defining your life. How am I going to trade? What are the systems I'm going to use? How do I determine that the systems are valid? How do I know if they're invalid, like they're not working anymore? What's my risk? Like, how long am I going to dig in that mine before I come out and have a break? You know what I mean? Like, are you going to trade 12 hours a day, 2 hours a day, 20 minutes in the morning, 20 minutes in the evening? Like, how are you going to, all that stuff you have to come up with. So it's basically about determining what you want to do, how you're going to do it, and how you know if you're doing it well. That's basically it, the three. So what are some of your thoughts on that?
Yeah, no, I totally agree. I would add maybe two things to that. One is follow what interests you, follow what you think is fun and interesting and you enjoy doing in trading. I think that'll get you a lot further than just trying to be like this other guy or be like Trader X or whatever. And, figure out something that works for you and you find some enjoyment in. The second thing I would recommend is to just commit to being the best you can be. And that entails finding these little advantages that other people may not have thought of before. And it might not come in a course, it might not come in a book, but it's something that you figure out that could make you one of the best in the world. And that you're perfectly capable of doing that. Everybody is. But you just have to kind of, like you said, persist, kind of like commit to that excellence, that level of excellence, and just look for those little things that other people may have missed.
Yeah, definitely, and adapt it to your approach. And yeah, exactly. Yeah,
because you could probably think of something that nobody else has come up with. I mean, they say there's nothing really new in trading, but I think there are certain advantages that you can come up with for yourself that could be new for you, right?
Yeah, there's a lot of creativity in the development phase of it, for sure. Yeah, like I'll tell you a story. I met some guys that were when I first came to Australia, that they wanted me to come work for them, and I didn't want to, but they met in Costa Rica, and they're biologists, right? Mm-hmm. And they basically came up with like a marketing idea for a marketing company based on the biology of how genes are shared. You know what I mean?
Okay.
You know what I mean? And that's really cool. Like, because I was reminded of that on how you were talking about how, there are new ideas. You just take a lot of new ideas, is just taking something from another area and applying it in a different way, like moving averages, like using moving averages in a different way. I'll never forget the time that I saw moving averages applied as multiple moving averages where they spread out. The Daryl Guppy idea of the trend is stronger when the moving averages are spread out and further apart, that sort of thing. Because I'd always seen 1, 2, and maybe 3 moving averages in a strategy. I never really saw this idea of like having, whatever it is, like 10 moving averages, on there and using that. So, you can use tools in a different way. Or another one was when Jake Bernstein's book, The Complete Trader, I learned about the stochastic pop. So stochastics were always about oversold, overbought, oversold, right? So when it's oversold, you buy. When it's overbought, you sell, and you're waiting for it to get back, return to the mean sort of thing, right? But in stochastic pop, he was like, no, wait for it to get oversold and then buy, and wait for that extra move, that little pop that you get there, and wait for it to get oversold and then you sell. I was thinking, wow, that's amazing. You know what I mean? And I really like that idea because I'm contrarian by nature. But so, yeah. So like you're saying, I would agree with you totally. There are a lot of things that you can do that are different, that are creative, that are new approaches, even if it's using an old indicator, it used in a new way. So yeah, definitely think some of the coolest stuff in trading is that where you take something and you apply it in a slightly different way. You take something that's old. Yeah.
Talking about that Darrow Guppy thing, I think Raggy Horner uses something similar, and she has this like rainbow, like moving averages all over the place. And like, I understand what she's doing, but it's not for me. And she doesn't use stop losses, right? Which is like against the Holy Grail or 10 Commandments of trading or whatever. But it works for her. So just figure out something that makes sense to you.
Yeah, absolutely. Yeah.
All right. Thanks, Walter.
Thanks. See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Like in some ways, the more educated you are, the easier it is to brainwash you. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think about this idea of genius versus work? Do you think some people are just born with this genius, especially around trading, or do you think everybody has to work for it?
Yeah, I would say like in psychology, a lot of intelligence researchers have kind of even early on they kind of fractured up what intelligence. Well, actually, think about when you take like an exam, like if you're in the U.S. and you take the SAT, then you have like a math, like basically a mathematical score, language or English, or like a language score, and then you have an analytical score. And when you go to law school, they make you take a test that's all analytical, right? Mm-hmm. So it's kind of like that analytical component. So like in intelligence, and there's a guy named Gardner who has this like multiple types of intelligence that are, related to different areas of life. So I would say like there is one thing that's advantageous if you have what's called normally like high IQ, or like a really high IQ, which is that high IQ is normally negatively associated with anxiety. So the most anxious people in the world often have low IQ. The highly anxious people usually tend to have a lower IQ, and the people that tend to have a higher IQ usually aren't as anxious. So that's one thing that you have going for you. And I think that could possibly help because of like meddling with trades, as we all know. You probably know as well as I do that can happen, like going in and worrying about a trade, waking up in the middle of the night, things like that. So that possibly could be related. But other than that, I would say probably more likely personality characteristics. So outside of intelligence, things like how conscientious are you? How deliberate are you? How likely are you to be, make spontaneous decisions? So impulsiveness, like you want to be low in impulsiveness, pretty high on conscientiousness, that sort of thing. So I would say most of intelligence wouldn't be related to trading success. And I probably told the story, like when I took the trading class, I think it was the same one that we've worked out later that we both took the same class, right? Yeah. The one in LA.
Kind of fly-by-night one.
Yeah, fly-by-night guy, yeah. That's how I was introduced to currency trading. There was a guy in my class, and he was not very smart, and that was very obvious, but he was also a really good trader. Because he just did he was the best trader of our group. Like it wasn't even, like, we knew a month out, like, because I kind of kept in contact with some of the people in that class, actually. He was the best guy. Like he was literally the best guy. And you know why? Because he just did what the teacher said. Like our instructor said to get in on the retracement, and that's like what he did. Like it was kind of amazing, actually. And that was a real eye opener for me, because I think when you're new to trading, you tend to think that you have to crack the code, or you have to like be really smart, or have some really good computers that can be smart for you, or you know what I mean? Mm-hmm. Those sorts of things. And I don't think that that's necessarily true, obviously. And that was my first kind of clue along that line. So I would say my belief is that general intelligence, what we call IQ, possibly has a loose association with trading success, but overall it's not that The only thing would be anxiety. So through anxiety, it might have some association with trading success, but that would be the only thing that I can think of. Yeah.
Do you know if that guy went to college or anything like that, or was he just?
I don't know. He seemed, and I'll be completely honest, I don't know, but he seemed like the kind of guy that might have gone to junior college.
Okay. Yeah.
You know, maybe like that kind of, you know what I mean? Like he didn't get into 4 years. And I'm just stereotyping here. I don't know. I haven't kept in contact with the guy or anything like that. But we were all amazed at how good he was. Like we were like, wow, this guy's amazing. You know, he didn't analyze things. He just kind of traded. Like, I guess in a way, you know how trend followers, you know, they just take the signals, right? And they don't think like, oh, there isn't any news to make a reason why gold's going to go up now. They just take the gold buy signal. You know, he was kind of like that, but he traded the retracements that we were taught in our course. We had 2 instructors when I went, the main guy and then his sidekick, you know, and I was amazed. It was pretty cool to see that. Yeah. No, it gives you hope.
Well, the only reason I bring that up is because I think for those of us who have gone to college, I think there is a tendency to overanalyze things, and people who haven't had that programming, they just say, hey, that looks like it's right, I'm going to do that. Right. So I think that's a good point to bring up. Sometimes we overthink things.
Yeah, I absolutely agree that it's easy to like in some ways, the more educated you are, the easier it is to brainwash you.
Yeah.
You know, because if you think about it, like someone like me, I just went to school forever and I was a professional student into my 20s. And like, I got into that mode of learning from someone who's quote smarter than me. In a way, that's really easy to be brainwashed if you just naturally assume that your instructor, the person who's like has higher authority than you, is going to tell you the right thing or show you the right way to think. And so in some ways, I think that the quote uneducated, they can be more free thinkers. They don't have to be, because they could also do the same thing. Like imagine like somebody, you know, who's a roofer and he never went to college or whatever, and he's just working with his roofing buddies and stuff. And then so-and-so, this happened to so-and-so and he got gout. All right, well, I'm never going to eat yogurt because he ate yogurt and he got gout. You know what I mean? Like you could always fall into these thinking traps just because of one example, you know, the anecdote and things like that. So it's not, but I do think that as a student, you become, like you say, indoctrinated, and you get into this zone of like learning that, okay, this is where I go for this is where I go for that. And you always know where to go for your information, but that assumes that they know what they're talking about. You know what I mean? Like, yeah. And like anyone will tell you when you go into PhD or like when you go into graduate school, it's always about theories. So like, you know, like if I have a theory about personality, there's a lot of other people who are getting grants for their research, and you know they have students that they're pumping out and giving PhDs that have a different theory, right? And that's the way it is everywhere. It's only been recently, in the name of science, we've deleted some of the theories. Like, you know what I mean? Like historically, the science has always been a battle of ideas, you know, and it's only in recent times that we've got to the point where it just seems like some theories are not allowed to be discussed, and they are, you know, verboten.
Yeah, no, totally. I mean, like, during a certain situation that will go unnamed, my PhD sister wrote us an email about the situation, and it was pretty much verbatim what they're saying on the news. And I was like, stop following news. But you can't snap them out of that, right? It's just so built in that it's all about the news, trust authorities and all that.
Yeah. Like I always say to people, what do you trust more? You know, the 30-year-old on the news who's reading the cards, like reading the monitor, or like if you open up a journal article, like a medical journal or a scientific journal, and read, you know, the study. Like, what would you rather get your information from? The person reading the cards, reading the monitor, or the scientist doing the work? Well, you know, and some people say, well, I don't know how to read that. Or, you know, anyone can read a journal article. All you got to do is read the abstract, which tells you the whole thing, read the introduction, and read the discussion. Skip the middle, skip the guts of it, skip the statistics. Don't matter methods and results. Methods and results doesn't matter. Introduction and discussion. And you can just read the paragraph blurb, the abstract, and that'll tell you the whole study. But if you really want to know, read the introduction, read the discussion, and you'll know what the study was about, what they found, and what they think about what they found. So in the discussion, they'll say, this is what we found, and based on this, it could be this and could be that, and in the future, we'll look at this. You know, That's it. I mean, it's so easy to read. Like you can literally teach a 12-year-old to read journal articles, science journal articles, and yet you hear in the news people they get it wrong. The reporters that are supposed to be the science journalists, they get it wrong all the time. My professor in undergraduate used to laugh about it because he did research on mood, and he always found that the best thing for your mood was a short 15-minute brisk walk. That was beat everything, beat caffeine, beat a candy bar, beat listening to music. Just go on a short 15-minute brisk walk like you're late. Okay, that was his bet. That was his number one thing. And yet they would release his stuff in the news, and they would always talk about sex. He's like, oh, what? Sex didn't even make the top 5. Like, what are you talking about? You know what I mean? It's so funny. So anyway, it's just funny how, you have the power to see what is actually going on in science. And yet, as you say, we get it filtered through many, many filters before we actually see it. Yeah.
You actually bring up a good point there, and I'll take it one step further. A lot of people don't trust what they see for themselves, right? Their own personal experience. And they look at these journals, which, are probably very scientific, but may or may not be correct, right? In certain situations. And then the news is obviously not correct most of the time. So I think trusting yourself is a big thing too. I don't think enough people do that. It blows my mind, but they observe something and then they won't act on it because they say, oh no, the news said this, so I'm not going to do that.
Yeah, that's right. That's right. Yeah. And you know what? A really good doctor or scientist will acknowledge that. Like, I will remember we took our kid into the hospital once, and it was really just, kid was really young and stuff. We were stressed out, and the doctor that we had was like asking a bunch of questions. And then in the end said, and I'll never forget this, said, but you know your child better than anyone. What's going on here? You know what I mean? So they were going through the list of symptoms and blah, blah, blah. But then they're like, but like we know that, you've been around this kid for the last 2 years or whatever, year and a half, however old. And, and it was our kid was pretty young when they went in, probably a year or less than. It's really hard to see your child sick and all this, but it wasn't like the doctor was just going to go through the checklist and let us give the data and then decide. It was like, okay, you tell me, you know what I mean? Because I know you've been around your kid every day. You understand what your kid is normal and not normal and all that. And I thought that was really smart because it's exactly what you're saying. It's forgotten, isn't it? We forget that your body, your family, what's going on better than anyone else. And so when something's off, right? So, yeah.
I think that's becoming more and more rare nowadays, right?
Yeah.
People saying, hey, what do you think, right? And they want to be the expert or whatever.
Yeah, exactly. Yeah. Exactly.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
A lot of people try to throw in too many variables in the exit, but if you just do like 1 hour exit and test that and see how that works out, and if that's profitable, then you know that the entry is at least pretty decent, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I got a question here from a trader. He says, hey, I'm not making profits. I have losing trades and winning trades, but I always end up at break even. For months and months now, and my account doesn't seem to surpass the amount I've deposited. I feel like I'm stuck in the same place. I really want to become an expert and consistently profitable trader. So what should I do?
Yeah.
So what any thoughts on that? Yeah.
I think it comes down to initially, like we mentioned before, the record keeping, right? Trying to keeping good records on what you're doing, on your intuitions before you enter the trade, any thoughts after you exit the trade, screenshots, making sure you're following your system, seeing if your results are in line with your back testing. Also just trying to improve, like trying to get just a little bit better, just 1% better a week or something like that. And always try to figure out different ways to optimize your skills and improve your skills. And that's what I would say.
Yeah. I think the record keeping thing is really good because a lot of people don't know what's going on. Mm-hmm. So when you have good records, like maybe there are certain pairs, certain strategies, certain times of the day where you just shouldn't be entering trades, right? You shouldn't be trading. Like I was surprised when I found out that the dollar yen wasn't working for me on a certain daily setup on a specific daily kangaroo setup, I thought, oh, that's interesting. I didn't realize that. So you're going to find patterns there, but more than that, is the numbers. So knowing average winner and average loser, we know, if you want to make your so like this trader it sounds like basically break even or, gets up to break even. And so
it's a good place to be.
Yeah, it's a good place to be. It's a great feeling to know that you can at least get back to your original balance. And then now all you really need to do is to fatten up your average profit. Now there's a couple ways to do that. You can cut your losers faster. So instead of letting them hit the stop loss, you could time them out. Like I take a trade on the 12-hour charts, and after 36 hours, my trade isn't really going in my direction, 3 12-hour candles, 36 hours, boom, I just pull out, right? You could do that. You could also increase your average winner by changing your exit rules so that your average winners are fattened up a bit. And that could be as simple as just splitting up your trade. So if you currently right now have like a 2-to-1 target where you're going for 100 pips on 50 pips risk, you could do that on half the position, and the other half you have a trailing exit. Ideally, in the perfect world, if you have a really good trade, it'll go and go and go for you. So that's what I would say. I would say definitely the record keeping thing, and remembering that there are ways to improve your average winner. Usually it's easiest to change the way you get out of losers or change the way you get out of winners. Most people focus on the entry signal. Can certainly be a place for improvement. Like if you find that your entry signal is not giving you anything, then for sure. But in most cases, people are pretty good. I mean, there's enough entry signals out there that are pretty good, that are available freely anywhere you go on the internet, right? You can find these entry signals everywhere. It's going to be more about how you manage your losers and how you manage your winners. It's going to fatten that, and remember, like casinos, think about casinos. They just make a small percentage of the volume. Like like on slot machines, they only make like 3% or something like that so I mean, it depends on where they are, if they're on the strip, off the strip, and all that. But the point is, like the volume goes through these machines and they just skim off a little bit and they pay out everything. Like 97%, 98%, 95% is all paid back. And so as a trader, if you kind of think like that, you go, okay, hang on. So I feel like I'm losing, but really, if you're just able to make a little tiny percentage every week, every quarter, every month, whatever it is, that's actually, you're like a casino, And obviously the more trades that go through the system, if they're executed correctly and the system's a good one, then the profits will accumulate. So just keep that in mind, that it doesn't have to be a thing where you just get a straight 45-degree equity curve. And those are usually martingale anyway. Like those are usually some element of martingale, and those are bad news, as we all know, right?
Yeah. And I think a good place to start too, like you're talking about entries, is just to have a 1-hour exit and then see how that works. I think a lot of people try to throw in too many variables in the exit, but if you just do like 1-hour exit and test that and see how that works out, and if that's profitable, then you know that the entry is at least pretty decent, right?
Yeah, exactly. Yeah, and a lot of traders I know are using the R-based exit too. So like you say, like they'll if it goes to 1R, they go to break even. If it goes to 2R, they go to 1R. If it goes to 5R, the stop loss goes to 3R. It goes to if it goes beyond like 6, 7R, then it goes to 5R. And they just trail by R. You can do that too, which is so simple, like mechanically done. It's really easy to do. So yeah, there are a lot of really cool things about exits that people don't even think about.
Yeah. Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
In the testing process, you could also have some sort of automation that tests a certain exit or whatever.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I have a question here from a trader who's asking, hey, Walter, I really need a trading plan that works because I really just don't know when to get out of a trade. So, I mean, this is common, right? This is something that a lot of people go through, and I have some ideas. Do you want to hear my ideas, or do you want to go first? Okay, yeah. So my thoughts are that there are different types of traders, right? And we have different ways of interacting with the market. So you might find that it's really, really difficult for you to hang on to a trade. Okay. So there are things that you can do if you work out that you should be holding onto a trade longer, your trade's longer, like you're getting out too quickly. If you figure that out by your numbers, and the way that you'll know that is you'll see things like your maximum favorable excursion is a certain number, and yet you're only taking a small fraction of that, like 20% of that or something like that. So if you have these signals that are giving you nice runs overall on average, but you're not capturing much of that, then you'll know that something's going on with your exits, right? And you're not doing a good job. So you can automate those exits so that it does it without you having to interfere and changing things up. You can also change your approach. So if you have like a 1R based exit or a 5R based exit or whatever it is, you can have a trailing one as well. So you're adding trailing exit along with the target. But the most important thing I think that traders forget about is the way that you interact with your trading system is that you are going to modify your trading system if you're not trading in a way that works with your beliefs. So I'll give you an example. So if you have a trade and that trade goes up 100 points, 100 pips, okay? It's up 100 pips, 100 points, whatever, and you're like, or 1,000 pipettes, 1,000 points, but whatever, it's going up for you, and then you get out. And then you come back the next day, and the trade that you're out of, that you're flat. You don't have that opportunity in the market anymore. It's gone because you cashed out. The next day you come back and it's up 500 pips. So you just missed out on 400. You would have had 5 times the profit if you had just waited one more day. Versus you're in a trade and you watch the trade go 500 pips in your favor, right? And then all of a sudden, you come back that evening or whatever, and it retraces, it goes against you, and now you're only up 100 and you get out at 100. Now, in both cases, you've basically missed out on 400 pips, but you did it in a different way. And so one of these scenarios is more difficult for traders to deal with, and that sort of tells you whether or not you should be using targets or whether or not you should be using trailing exits. You can certainly use both, and I like to use both because I like to kind of always be right, and it feels good, but it's not necessarily the most profitable way. It's just more for psychological, keeping my psychology in check, basically, so that I can keep trading. So those are my thoughts. So obviously in the example I gave, if you have a situation where it's really hard for you to see that 500 pips that you had disintegrate into 100, if that's more difficult for you than having 100 pips and getting out and then seeing it go another 400 pips up to 500 pips, if that's that situation, then you would not, trailing exits are tough for you. But if it's more difficult for you to have 100 pips and then come back and see that it would have been 500 had you waited, then trailing exits are more likely something that you should look at. Or you can do both. I mean, it certainly is possible. So people say things like, I need to know when to get out of trade, as if there's a perfect way to know. It's really more about you.
That's the real question, right?
Yeah, it's more about how are you going to deal with this? That's the question. Yeah, exactly. When people say that, they're acting like there's a secret. There's no secret.
Perfect one way to do it. Yeah,
exactly. Yeah, there's exactly right. So what are your thoughts on that?
Yeah, no, that's a tough one, right? I think there's so many variables that you could put into an entry and an exit, and I think people get really wrapped up into that. And that's what I'm reading into the question, that she's confused that, there could be all these inputs for each thing. So I would suggest separate out the entry, separate out the exit, and then, just learn from different people, learn different strategies, write it down on a piece of paper, your trading plan, and then just have the entry. And then with that one entry, test a bunch of exits, like this one exit, this exit, and see, like you said, we'll see what resonates with you, what you like the best. If you need a place to start, like I mentioned on the last podcast, just go with 1R. Like you talked about that, right? An R-based exit, and just kind of go from there. Otherwise, there are just too many variables, and everything gets shoved on you, and you feel like you have to test every single thing, and it just gets to be too much.
And if you can automate it and slap an automated exit, so that you as a discretionary trader, if you can just put all your focus on when do I get into a trade, and then the last half of it, the exiting part, you're just babysitting, making sure that the script does the right thing for you. That can be really helpful too for a lot of traders. That you're at that point where you're no longer in charge of taking profits, that the system is. And so it just removes that element, because I've always found that to be the most difficult thing for me is, when I was just trying to figure out, is the market still going to go or not, right? It's just easier to have some rules that you use, and that when everything is lined up and it says get out, you get out, and if you can automate that, I think it makes it a lot easier. It can be super overwhelming. I agree. It's one of those things where we can get to the point where we're just like, wow, this is crazy. How do I know? And you beat yourself up because you have hindsight bias. So you beat yourself up for those situations where you should have held on. You beat yourself up for those situations where you shouldn't have held on. You should have pulled the plug. But really, I think should only relate to what the system rules are.
Yeah.
Not about what happens in the market after the trade's over. Yeah. So that's the issue, is that your template, your rules, your grade, your score should come from how well you align your actions with the trading system rules, and not what the market did. And that's where I think we get in trouble, is we kind of we kind of curve fit our trading systems we adjust them to make so that they would have done better, based on what happened in the past. And that's obviously, if you do that too much in automated trading, systematic trading, that's called curve fitting, and it's the road to ruin. They're really aware of that as system traders, but sometimes discretionary traders, we're not aware of it so much. We're not aware of the fact that we're curve fitting. We're not aware of the fact that we're doing slight adjustments to our strategy based on the recent market moves, and so in that instance, we're actually, it's even more dangerous what we do, because we're not as aware of the fact that we're making our system work really, really well on the trades that just happened. It has nothing to do about the future, right?
Yeah.
So yeah.
No, that's a really good point, and it brings up another thought also, that in the testing process, you could also have some sort of automation that tests a certain exit or whatever. You can partially automate that testing process, and you can have all these testing scripts, and you just enter maybe manually, but then that script takes you out. And that can be an easier way to test the exit also.
Yeah, absolutely. That's a great idea. Yeah.
All right, cool. Thanks, Walter.
Thanks. See ya.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
What is your goal here? Is your goal to make money, or is your goal to be right? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I got a question from a trader the other day, and his question was basically, how do I trade my system if the win rate isn't high enough? And so he was telling me that he had a system that it worked, but he didn't think that he could trade it because the win rate was like 37% or whatever it was. And so my question for you is, what would you tell him? Someone comes to you and says, look, I have this system, it works, I know it works, but the win rate's too low, I need to get it higher. Like, I can't trade it the way it is right now. What would you say?
Yeah, that's tricky, right? I mean, two things. I think there are two options there. One, you take that low win rate system and you just add something else on top of that. That might be a higher win rate system, if you don't want to throw that system away. Or you just throw that system out and say that win rate's too low for me, and you go look for a higher win rate one. But that's dangerous, because you're always going to be searching for the next system that has a higher win rate and a higher win rate. And in reality, what are you trying to do here, right? You're trying to create an advantage. You're trying to find a system that has an advantage over the market. And if you're stuck on the win rate specifically, then I don't know, that's something that you have to really look at and see if that's what's really hanging you up, or if there's something else that you don't like about the system, or you have this thing where you need to win a lot. That would be what I'd say. What do you think?
Yeah, I agree. So you got to think about, what is your goal here? Is your goal to make money, or is your goal to be right?
Yeah.
Right. Exactly what you said. You can change it. You can change the strategy. Usually changing the exit will completely change the win rate. So if you make it easier for your trades to hit that to hit the winning status, right? You could also add a break-even rule so that a lot of those losers are filtered out. But again, that may get you out of some. It's going to get you out of some winners too. But beyond that, I would kind of tend to say what you're saying. It's more of a psychological thing of thinking about I need to be right rather than I need to make money. Like there's a trader in our Naked Forks now in the forum. He just posted a system that I know a lot of people won't trade because it's got a 32% win rate, but the profitability is off the charts. Like it's literally off the charts. And so it's like, it's the old thing. Like you hand somebody something that works. You give them this tool and you say, oh, you've been looking for this tool to fix your motorcycle or whatever. Here, take this tool and you can fix your motorcycle. Like, I don't like to use monkey wrenches or whatever.
That doesn't look like it'll work, right?
Yeah, that doesn't look like that'll work, but it will work. We know it'll work.
Yeah.
But I don't know. I don't want to hurt. I don't want to skin my knuckles, trying to tighten that up. So it's like, you got to think about what is your real goal here, right? The other thing I would say, kind of a way to trick yourself would be you trade that low win rate strategy with a super low risk per trade. And you do that for, let's say you commit to that for 6 months. Okay. You say, I'm going to trade this system, but I'm only going to trade it at, $5 a trade or whatever. Okay. And at the end of that 6 months, you look at how much money you made in this little tiny account, right? And then you can, okay, now what if I was trading $500 per trade instead of $5? Would I be happy with where my account? You know what I mean? So I started with a $500 account and I traded $5 per trade. And this is where I am after this. Now, what would I say if I started with a $50,000 account or a $5,000 account? And you know what I mean? Where would that be? Where would I be with that? Would I be okay with that? Do you think I could do? And look at the drawdown and all that. Now, obviously, past does not dictate future performance. You might have a 17% drawdown over that 6 months. In the future, you have a 34% drawdown. You never know. But the question is, you've gone through it, you've executed it, you've been able to pull out of the the drawdowns that are inevitable with the strategies with the low win rate like that. So what do you think about, do you wish that you would have traded it for $500 a trade instead of $5 a trade? Okay, maybe it's time to kind of wrap this up and move to the next level. Maybe only $50 a trade, right? So you can kind of like ease yourself into that by taking trades that don't hurt so much. So that's just a good thing in general, right? For any system, but especially for one where you're just like, I don't know if I can do this with such a low win rate. So, yeah.
Yeah, no, I think that goes for a lot of things in life, right? Like we need to see it in action and see it working first before we can like subscribe to it. I think, I've obviously had that a lot. So I think, if you do, like you said, then you'll see the success and then you can just scale it up if you want to.
Yeah. And it's so much easier to follow your rules when you have such small trades.
Yeah.
Like it almost like it takes the focus off the money, doesn't it? Like it almost like, and it's not demo, it's not Forex Tester, it's real money. But when you're losing $5 a trade, it's so easy to like wait for it to hit the 2R target and make $10, right? And that's different. If you're trading 500, 5,000, it's a lot different because you start thinking, well, I've got $575 that I can bag right now. Do I really need to wait for the 1,000? That 575 could really come in handy this weekend. Or, you know what I mean? That's sort of like you start doing these mental games when you're trading really high, and it's all relative, but when you're trading for higher stakes. Whereas when you're trading for lower stakes, it almost makes no sense to do anything but follow the rules. So you get into good habits. Yeah. It's
because you're already spending that money in your mind, right? With the bigger numbers.
Yeah, exactly. Yeah.
Cool.
Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
And then after I'm in the trade, then I prefer to journal at that time because it's a little more relaxed. I've looked at all the charts already, and I can just take my time with the journal.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I have a question here. I know some people like checklists. So what's like a trading psychology checklist you could give people before they start trading?
Yeah. Well, one thing that I would say is you want everything to be a routine. if you want to keep good records, which is a good idea of your trades, what I like to do is I don't like to look at the charts first thing in the morning. I like to have a routine before I get to look at the charts, right? And so I don't usually make trading decisions until after 9 a.m., which is evening time in New York, and really late over in London, late evening. So I like to go through a certain routine. So what I will do is, like, if you're going to use a journal and keep data points on your trades, then you're going to use the same journal, right? In fact, I even go to the thing of, like, when I buy a new trading journal, I'll actually put all my trades in that journal, and then when it gets to the end, I'll go and buy another one, and I keep them in my bookshelf. What I like to do is, like, have it's almost like an annual journal, you know what I mean? Where it has the trades in it, and, like, each journal is different. It's hard to explain it, but, like, you can get these journals that have different covers, you know what I mean? So it's not just they're all the same. So it's almost like when I see that book that has that printed, I should go get one, really. But when I see that thing, it's like, that's my trigger. So, like, when you have a habit, you always have the trigger, and then you go through the ritual of the habit, right? So with trading, what I want to do is I want to get into that habit of, as soon as I see the journal, I know that's part of my habit, right? Now I need to record. And there's something about writing something down that's different. I know a lot of people that like to take trading journals with typing it. You know, they'll use it in a spreadsheet or whatever. But when you write it down, it's, you know, it activates a different part of your brain. It's actually really good if you're trying to remember things to write it down. So what I'll do is I'll write down, what is the system, what is the pair, you know, what's the market, what's the time frame, where's my entry going to be? Is it right now market, or is it, like, at a different level or whatever? Where's my stop going to be? Where are the targets? And I also like to put, like, a score on how well I got in, right? And also how well I got out. And I also like to give it kind of like almost like an intuition score, like, how well do I feel that this is going to go, right? So what I will always do before I sit down, like, I hate sitting down and making trading decisions first thing in the morning. I don't want to be, you know, I don't want to start, like, I don't want to be that guy who's addicted to the charts, you know what I mean? So I want to go through other things, go through other, like, you know, hang out with my kids, give them breakfast, you know, stuff like that, and not really just, like, jump right to the computer, you know. I used to be like that. So my checklist is, first I need to be in a good mental state before I go to the charts. And another thing is using, like, binaural beats or a meditation before you actually analyze the charts can be useful. There are other things that you can use that are along those lines. It really depends. Some people might find it a little bit arduous to have, like, the journal going through the whole, you know, 20-minute, 30-minute thing before you can actually look at the charts, and they'll skip that, right? So sometimes that can be useful if you slice that in when you're already in the trade. So you're trying to relax and stick to your rules, you know, using, like, I have a Forex hypnosis track that is kind of like about sticking to your rules and stuff like that. So you could use that also when you're making trading decisions or when you're in the trade. But so what I like to do is have a good mindset, be awake, not groggy, not late at night, not early in the morning. So I like to be that. I like to have my journal with me so that I'm writing it down. It's kind of like, it almost is a confirmation that I'm taking a really good trade by writing it out. Sometimes you'll catch yourself writing it out and going, wait, hang on, is this really, I don't know what this is. You know what I mean? If you can't put a system on it, then you're just, like, using gut, right? So you just have a feeling like the retracement's over and I'm going to get in now or whatever. So my checklist would be, have the right mindset, have your trading journal. Also, I like the idea of walking away after putting it in the platform. So if I put my orders in the platform, and whether or not they're triggered at market or they're waiting for a, you know, market to hit them, I don't like watching that. I find that really stressful. And maybe you limit yourself to the number of times you can check your charts too. That might be another thing. If you're impulsive and you have impulsive tendencies, you might say, I can only look at my charts, you know, in the morning, and then, you know, once in the evening, and that's it. I can't, you know, always be on my phone and stuff like that. If that's, you know, if that's part of if you're trading higher time frames, that can work like 12-hour or above. The other thing is, you have to learn at the end of it. And what I mean by that is not about, like, trying to fix what went wrong, you know, system wise, but more about you and you, the trader, and what did you do? How did you react? So, for example, I'll give you an example. So I'm in a trade right now where I took 4 trades on one day, and all 4 of them that got triggered. 3 of them were at market. 1 of them I was waiting for a bit of a retracement. So 3 of them have been stopped out now, right? But 1 of them did not get stopped out and is actually just rocketed in my favor and is really close to the first target. Okay. And hopefully the trailing exit, if it keeps going, the trailing exit that trailing position will pay for a lot of the other 3 losses, right? We'll see. We don't know, but we'll see. But what's interesting about that one is that one was looking really bad, just like all the other ones were. In fact, it looked like one of, like it was going to get stopped out. But I said, look, I'm just going to stick to my rules. It's either I could get out right now and save myself 20 pips or whatever, or I could just let it ride, see what's going to happen. And then I've learned over time to be more of the let it ride trader. And so when I look back and I write in my journal, when this trade is all over, I don't know what's going to happen to it, right? It's probably going to hit the first target though. At least that. When I look back at my journal, I will give myself a very good score, provided that I follow with the trailing exit and all the rules, for the way that I manage that trade and the way that I exit that trade. Because I didn't exit when it looked like it was going to, pop me out and come down low enough to pop me out. Everything about the chart said this is a loser trade. But today I wake up, I look at it. Actually, I only looked at it 20 minutes ago. I didn't even, see it until then. Boom, it just took off. So that's what I would say is that, for your trading, I like the idea, for your checklist, as you say, I like the idea of having a routine of looking at you and trying to be introspective. And how are you relating with your strategy? How do you interact with your trading strategy? And I also have to guard against being in a bad mental state. So a lot of people, like when you work at home, it can get really old. I mean, trading can get really boring, and it can get really, you know what I mean? So you have to guard against that. And so I have to make sure that I'm not super tired, that it's not super late when I'm making these these decisions, or too early in the morning or whatever. So it's really important that I have a clear mind, and that could be just as simple as doing some stretches or going for a walk or whatever before you actually sit down and look at the charts. I know it's kind of a long-winded thing, but that's my checklist, and I'm curious to hear what yours is.
Yeah, cool. I think I agree. The routine is really important. Like when we used to play soccer, they would have the same routine before every game, right? And I never realized the importance of that until later. And I guess those rugby guys or whatever, they do the haka or whatever that is, right? And it just gets you in the mood. Yeah, it's a similar thing, like get in a good mental state. So either a meditation or using like the Inner Balance app or one of those recordings, whatever I feel is the best that day. Yeah, when I get into trade, I make sure I have the journal open. And then I'm actually better at journaling after I enter the trade. So I just be sure that I get the screenshots in the beginning and then write down a few notes about why I took the trade and, what I expect out of it. And then the system. Yeah, the system's a big one. That's why I kind of prefer more of a computerized system, because then you have a system that you have to fill out in that little field, right? And then that helps you double check, okay, I'm actually using a system, or am I just, taking random impulsive trades? And then after I'm in the trade, then I prefer to journal at that time, because it's a little more relaxed. I've looked at all the charts already, and I can just take my time with the journal. Yeah, and maybe like once a week or once every 2 weeks, I go back in there and take a look at the journal. I do the similar thing as you do, like I give it a score from 1 to 4. So I believe in 1 to 4 because you can't have like an average, just an okay trade. It was either overall good or overall bad. So I just do 1 to 4 to keep it simple. Yeah, then that's about it. Just maybe monthly review the results and the statistics, but that's about it. Keep it simple.
Yeah, that's interesting, the scaling thing that you're talking about, because that's like a really big survey design and stuff in psychology. There's the debate about that. You know what I mean?
Yeah.
Yeah, no, I understand why you're doing it. It makes perfect sense. Like they found that using a 1 to 100 scale or using a 1 to 10 scale, you get the same, like there's no added advantage. When you're dealing with humans, when you're asking humans to decide on a 1 to 10 or a 1 to 100, there's no. And what you were saying is like there's no middles to this, like a forced choice to either you're basically forcing yourself to say it's either mostly good or mostly bad, right? By giving it a 2 or a 3. Yeah, that's really interesting. And the theory, like the theory behind that would be like overall, like let's say you have thousands of trades in your journal. Okay, you get to that point, you have thousands of trades in your journal. If there's a true average, then you'll have like an equal number of twos and an equal number of threes, right? That the average is in between that. You know what I mean? 2.5, right? So that a 2.5 is actually the middle of a 1 to 4 scale, right? Yeah, it is. Yeah. Yes. Yeah. It's weird. It's weird when you don't have 0. You know what I mean? Yeah. Do you find it hard to choose sometimes if it's a 2 or a 3?
No, it's pretty easy. I think it's a lot harder to choose between like on a 10 scale or like a 20 scale, right? I think that gradation is like really harder to define as opposed to, okay, that, I really messed up. I kind of messed up. I did pretty well. It was a perfect trade, right? That's what it comes down to.
Yeah. I think of it like A, B, C, D, and F, like in the old, like in the American grading system. I think of it as that. Like I kind of think of the trades as that, like a 4 or 5, and then a 3 is like C, and then a 2, and then a D and an F. But like if you're really trying to force yourself to learn new habits or to improve in a certain area, I could see where you would want to have to make that choice, whether it's on the good side or the bad side. It makes sense. I mean, they had studies where they would ask someone to write a line, so they would have a line on your piece of paper, like, this is like total good, this is like total bad. And you were just supposed to put a slash like with your pencil, like, and then they would measure it. They would measure it in like, centimeters from the beginning to the end, like that. And that's how they would do it. And it's like, all that stuff is just with humans. That's just ridiculous. Like we're not, you know what I mean? Like we're so imprecise in that way. Most of us anyway. Yeah. And that's actually a really good point for traders to think about, I guess, is like when you were measuring your trades in your journal, we also, with our systems, we kind of measure the market, right? And measure the movements and all that. There's a lot of measuring things to think about in trading, not only measuring your performance, but measuring the way that your system sort of measures where the market's headed and that sort of stuff.
I think there's a tendency to like say, I have like 4 entry, criteria, and did I follow 3 out of 4 and then try and create a score out of that? And I think it gets way too technical. So I think that the simpler you can make it, the better. And I think it really depends on your personality too. If you prefer the bigger, scale, whatever, use that. But for me, I'm more of a, minimalist. So I use the 4, whatever.
4, yeah. Yeah, I used to have a spreadsheet like you're saying where we had 13 or 15, I can't remember, it was 13 or 15 different characteristics had to be achieved.
Yeah, I did that
we would
too.
say, before I would take a trade. And then, but it had to be like 10 out of 13 or whatever, or 9 out of 15 or something like that. But what I found was that actually some of those characters, and it gets to your point of minimalism, right? What I found, I didn't realize this till much later. Some of those characteristics, like in my checklist to take a trade, some of those characteristics would clump together, so they would all be like off, like they wouldn't be triggered, right?
Yeah.
And so basically, what was happening was, by throwing away most of the 3/4 of the checklist and just using a few, I had a much better strategy. You know what I mean?
Yeah.
Like in other words, you cut the fat away of the 15 different on the checklist, right? And those like 3 or 4, whatever it was, I can't remember. I think it was like 3 of them that would actually were the best indicators of whether or not I should take a trade. So the other stuff was all fluff, or like it was kind of like people use, they use like the stochastic and the MACD for confirmation, or you know what I mean? Like it was kind of like that. Like it was like, well, that's just there's overlap. There's shared. They say in statistics it's shared variance, where they're both accounting for the same thing. So it was ridiculous. So measuring is really an important topic for traders, I guess, in many different aspects. It's fascinating, actually.
Yeah, it is. There's a real tendency to get really specific and technical about it. But I think if you take a bigger, more holistic view of it, I think it becomes a lot more useful.
Definitely. Yep.
All right. Thanks, Walter.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
That it's not always going to be there. It's just not always going to be there. It's always transient. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a training strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are your thoughts on cultivating a growth mindset? What kind of things can you do so that you are willing to take in, new information and try to do things differently and see things from a different point of view?
It depends on how you learn or see the world, but you can often use like examples from the world. So for example, this morning with one of my kids. So when you say growth mindset, I immediately think resilience. I immediately think when challenges creep up, as they always do in life and certainly in trading, what are you going to do about it? Okay. So one way to look at things is to see the world as constantly changing, which it is. The world is always changing. We have this, like, we can romanticize what it was like back when we were kids, or when we lived in a certain place, or when, this person was around who's not around anymore, or whatever. But if we think about life as always being changed, as a person in this world, we have to learn how to deal with that. You can look at things, and that could be an example of that. So like I was telling my kid today, we were talking about making a sandcastle at the beach, and how, like, if you come back later, the sandcastle might not be there. Like if you make it right on the verge of if you build a sandcastle and the tide's coming in, the tide's going to come in, and it's going to, mess it up, weather it down. Probably, you wouldn't even know within a day, you wouldn't even know that there was a sandcastle there. Right. Mm-hmm. But sometimes you make the sandcastle and then the tide's going out. So it actually stays a bit longer. Right. So that's how I look at challenges and things that come up in your life. It's like, that's kind of like that sandcastle. It seems like it's really strong, and the waves that come up, they can't even get over the wall, and it's so, it's so powerful in that. But then you come back later, and over time you see it's completely gone. So, and that's how it is with our trading challenges. Something feels like it's so difficult to get through, and there's no way you'll get to the other side. But yeah, if you think of the fact that the world's always changing and that you just have to deal with that change, it's a much more easier approach to see your ability to be resilient when you know that it's not always going to be there. It's just not always going to be there. It's always transient. Everything that you're dealing with right now is transient. Whether even life, whether you believe it or not, it's transient. It's going to be gone soon. Sometimes it takes a little bit longer. Sometimes it happens fairly quickly. So I think just seeing that there's a lot of change and thinking about the fact that you have something that's bothering you in your trading or whatever, and then knowing that it's not going to be there. And so it's up to you to decide, what do I do with this? Is this an opportunity for me to get better? Because it is, of course, right? When we get into the victim mindset, we see the challenge and we think, oh, that's it. It's over. It's never going to get better. This is just going to get worse. I can see it snowballing, blah, 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 blah. But instead, if you look at it as, okay, this is a challenge. What is this going to enable me to learn? What is the new skill or the new approach or the new way of thinking that I can gather that it becomes part of me because of this? If you're trying to help someone through it, I think sometimes that's a good way to look at it, is that change is constant. The only thing that's constant is change. And so, there's really no reason for you to throw your arms up and think that all is lost, because it's just where you're at right now. That's all it is.
Yeah, no, totally. And I would add to that, I think one useful thing to do is to commit to, if you think you are kind of stuck in something, maybe commit to taking on or challenging one of your beliefs, maybe once a day, once a week, once a month, whatever makes sense for you. And just try to see the other side of that belief. And if you can, at least consider the other point of view, I think it goes a long way to helping you see other points of view in other parts of your life. And if you have a big problem, it might be hard to see the other side of that immediately, or change that immediately. But if you start to use like small examples, something like, oh, I shouldn't eat oatmeal at breakfast or something, and why not challenge that idea? Maybe eat oatmeal. Maybe it does give you more energy, or maybe not. But at least you try to explore that idea. So I think that's another useful exercise to help you kind of overcome some of these ideas that have been really deeply ingrained in your psychology.
Yeah, absolutely. Yeah, that makes perfect sense. Like, you can use that approach to challenge the limiting ideas that creep up. Like catastrophizing is a big one for traders. Like, oh no, I've lost for 3 weeks now. I'm never going to make it. It's never going to work, blah, 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 blah. So you can challenge that. Say, well, hang on. Am I doing the same thing that I did in my back testing? Yes. Okay. Well, what did my back testing show? Did it show any drawdowns that were similar to this? Oh, yeah, absolutely. Okay. Yes. So is this really any different from what I would really expect? I'm getting a drawdown that's the same as I had in my back testing. I'm doing everything exactly like I did in my back testing. It's not that the market's changed, most likely. It's not that I've changed, most likely. It's just that I am in the midst of a pretty bad drawdown, but that was kind of to be expected. So, like challenging those thinking patterns that lead to the feeling of desperation and almost like, it's just not worth it anymore, giving up. Challenging those thoughts can be really useful.
Yeah, and I think
just like challenging our habits, I guess.
Yeah. And I think when you go back to your journal, sometimes you realize, I was only maybe like 1 or 2 mistakes away from a profitable month, and that can give you a lot of hope. Also, it's just like, you're not that bad.
Absolutely, that's a really good point. Actually, that's a really good point. Yeah, I heard an interview with the other day with the Tom Brady, the quarterback, right, the really well-known quarterback in the National Football League, and he was saying almost exactly what you said, but he said it in his world. He was saying that when his team plays at a really loud stadium, like the one in Seattle or whatever, it makes it really hard for them to audible out of their play into a different play and stuff like that, because people can't hear, and it's hard it's just really difficult as an offense to snap the ball and everything and everyone be on the same page when you can't hear because the crowd is so loud, right? And what he said was that might mess up 6 or 7 plays a game. If the crowd noise screws up 6 to 7 plays a game, that's 10% of your plays. You have maybe 60 plays in a game. So that's like about 10% of the offensive plays that you have in a game are actually screwed up. That's a lot to overcome. And it's kind of exactly what you're saying. Let's say you have 20 trades in a month and 2 of them you didn't do so well at for whatever reason. You didn't execute very well. But looking back on that, just having done those, if you had done those the right way as you should have, like, instead of getting out early, you held on for the whole trailing exit to get you out and all that, it would have been a completely different month, right? It's sort of the same thing. Just that little time, like sometimes it's hard for us to see that it's just right there. It's just so close. It's just that little bit, like just a few things, if they fall in the right place, if you approach them as you should, it completely changes everything. So
yeah, and that's what I respect about Brady so much too. I think is that he always looks at those little things, right? And I think that's why he's so good.
Yeah.
Are they undefeated this season?
Yeah. I think they have 1 loss.
1 loss, something like that, right?
Yeah.
And I mean, he got kicked out of the Patriots basically, and now he's like killing it with Tampa Bay. So the little things matter too.
Yeah, exactly. That's exactly right. Yep.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I don't know if I fully trust it. Like, do they really have that much silver on hand? You know what I mean?
I don't know about that.
In some ways, yeah. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, each market has its own psychology, and we talked about cryptos before, but what do you think about like precious metals, the gold and silver markets? What kind of psychology do you see in those markets, if you see any?
Manipulation? No, I don't know.
Pretty much.
Pretty much, yeah. I mean, there's some weirdness, obviously, there. So I don't know. I think some of these things may change in the future, but it's interesting because a lot of people, in like things like gold, or silver, a lot of people talk about what the demand is. So for gold, for example, there's like the wedding season in India, and people always get gold for their wedding gifts. So like, when everyone gets married, the price of gold goes up, because everyone's getting married in September or whatever. So like people talk about these fundamentals or they talk about how silver is used in industry, and that the demand for silver in industry has been going up and is expected to go up even more over the next 10 years. And that it's kind of squeezing the amount of silver that'll be available, just for investors or whatever, So like there's a lot of fundamentals involved in that. and with the way that they set the closing price for gold and all that, like there's a lot of weirdness, I guess. What I find fascinating is that there are places like there are cryptos where you can buy like the coin, and that coin can be, you know, exchanged for actual silver. So that, you know, that's kind of interesting to me. I don't know if I fully trust it. Like, do they really have that much silver on hand? You know what I mean?
I don't know about that.
In some ways, yeah. It's kind of like the bank, you know. The bank has your money, but they've loaned it out 10 times. So, you know, I'm like, are you really going to get your money? If everyone goes in and wants their money back at the same time, there's a problem there. But yeah, so, yeah, I mean, part of me is kind of wondering if they're just banking on people not cashing it in or whatever. And there's certain limits, I think. On some of those coins, you have to have a certain amount before you can cash it in for, you know, an ounce of silver or 10 ounces of silver, whatever it is. I just find it interesting that, like, in the metals markets, there's a lot of strings attached, you know, because there's different types of silver too that can be used in this, but not in that. And so, yeah. And like, I'll give you an example. So I had a friend, he was with De Beers, the diamond company, right? And he said, like, that is a manipulated market.
That's
right?
the hugest, biggest manipulation.
Yeah. Oh yeah, he was a currency trader for De Beers, and he said that every year they would send out, let's say you were like Tiffany's or whatever in Europe, okay, like you were the head of, you know, you were the Tiffany's Europe guy, okay, so De Beers would go, you know, to Tiffany's and say, okay, this is what we've got. Do you want it? You know what I mean? They would say, okay, we've got, you know, this amount of, I don't even know how, like, I don't think it would be in the tons. I don't know how, but we'd have this many diamonds, and, you know, this is the price, and do you want them? Right. And so if you didn't say yes to them, then obviously in future years, they're going to give you like the scraps or whatever. You know what I mean? Like, according to him, okay, this is all, you know, secondhand. According to him, he was like, you were forced to basically acquiesce to their, like, they would basically give you your annual order. They would say, this is what we have for Europe, this is what we have for you guys, we have this many, this is the price, blah blah blah, do you want it? You know what I mean? Like, it was just, you know, so it's just crazy. Yeah But anyway, I think of the metals as, you know, the metals is maybe not that bad, but there's a lot of weirdness going on for sure. Yeah,
for sure. I mean, like, if you look at any of the fundamentals in the metals, it never adds up. Like, there should be more demand. Dollar's not doing so well. There should be more demand, and it never happens in the market. So the long-term view of that, in my opinion, not advice, but is just to, you know, stack some up and have it on the side somewhere, and you know, buy when it hits the support levels, and that's the best you can do. Otherwise, every time somebody says, "Oh, it's going to go up, it's going to go up," and it never does. It just goes sideways, or it even goes down. So yeah, it is tough to
exactly
play.
Yeah, that's exactly right. Yeah, you know, it's fascinating. Like in the metals, it's like people forget, because like we're at the point now in our generations, like that we're at a point now where a lot of people that are alive today, they never knew money that was actually backed by something, by metals. Like you know, in the old days, you used to like be able to take your money in to the bank, and you give them the money, and then they give you the silver, right? Like that's how it worked, right? Like that, because the money was worth, kind of like these cryptos are like reinventing, like redoing this. It's the same idea. You have this many coins that's worth so many ounces in silver. You want to cash them in, you can. That's how it used to be. Like, money was actually backed by something, and it's weird. It's kind of like what I said about before the GFC. You know, there was a whole generation of people that never had lived through any sort of economic turmoil, and then the GFC happened. Right? Yeah. Like, it was at that point where it was like that generation. It was only after 2008 that they actually knew anything that was terrible. Like, there was a bad economic, like, it was always just straight up. I mean, think about it. If you're born in the 80s, and then you had the dot-com boom in the 90s, and then it's just like a straight line. The stock market was pretty much on a tear in the 80s, except for the crash in 87, right? So if you're born in 87, you could have been like 20 years old, essentially, before you saw any kind of a real, you know, market impact. It's just kind of interesting. And the same thing with this, we're talking about metals. You could be alive today and never have known money that was worth anything, like it was actually backed by anything.
Yeah.
And we're at that stage now, which is fascinating to me.
Yeah, it is. Do you think the manipulation is mostly because of the paper markets?
Yeah, I don't know.
Paper markets?
Yeah, I think so. I think like people who know more about it than I do, that's what they say, right? They say that there's like a bifurcated market. There's like the real metals market, like if you want to buy metals, and then there's the paper market where it's like, you know, you're quote buying gold or whatever. So I think so. And you know, people will say that the paper markets are manipulated so that, you know, the powers can actually go and buy the actual metal cheap, right? That sort of thing. And they say the same thing about cryptos. I mean, there's always been the market manipulation boogeyman. Like we're always talking about that in the markets, right? It's like, but I mean, then you have these things that come up like the LIBOR scandal and all this stuff. Like these things come up and people are like, well, hang on, or maybe there is something weird going on, right? Or all these politicians who have these amazing portfolios. Like, why would they want to remain politicians when they're so good at picking stocks, right? All that sort of stuff. Yeah,
that's the conclusion I came to also. I think the paper market probably has something to do with it. I don't know if it's the entire story, but I think going forward, like stuff like Bitcoin that is going to have futures and options and ETFs or whatever, I think is going to be kind of fall in that basket too. Like it might be somewhat manipulated.
Yeah, that's right.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
But then I think it only works on the strong trend.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, we've talked about the Elliott wave principle a couple of times in the podcast, but I thought we could go into it a little bit more in depth and talk about the psychology behind that. And do you think that Elliott wave works? It doesn't work some of the time. What do you think?
The problem with Elliott wave is the same problem I have with like Freudian psychology. It's difficult to disprove. You know what I mean? Like Freudian psychology, you know, has these concepts like id and ego and whatever, and science so far hasn't really determined a way to test those. You know what I mean? These concepts. Yeah. Although people could argue the same with support and resistance. They could say the same with Elliott waves, which is, you know, you see these waves going. And for the people that don't know, Robert Prechter's book is probably the best one on it. The idea is that the markets tend to move in the direction that they're going. They tend to move in waves where they go up one and then down one and then up two and then down one and then up three, which is the big wave, the longest wave usually, and then down. And then the fifth wave, it goes kind of almost like parabolic sometimes. It doesn't last as long as wave three, but it, you know, obviously makes the high. And then it does an A, B, C correction before it might then, you know, do another one. And so people like start another first wave, right? And so people will apply this to lots of things. You can obviously apply it to bear markets too, which would be something that, you know, like commodities or cryptos or even forex traders would trade. But typically it's seen as a bullish pattern. You know, they look at it for bullish patterns like in indices and stuff. The problem is if I look at a chart and I say, look, I see we're in the fifth wave, Hugh, don't you see that? And then you look at it and you go, no, I think we're still in the third. You know what I mean? It's a difficult thing. It's like support and resistance in that sense, where you might see it and I may not. I may not see it the same way. So, but that's a separate question to what you were saying, which is this an example of how we as humans interact with markets? And that I would say is probably true. I mean, the best thing I've seen on that is if you just search the term like stages of a bubble or something like that, and you can think of each wave in the Elliott wave as like the stages of a bubble cycle, you know, where there's like euphoria and, you know, people are drawing a straight line to the moon and then it collapses. And then there's capitulation at the bottom of that correction. And then the new wave can start. So only once there's capitulation, which is basically a fancy word for saying everyone's given up, that the new wave can start. And so, yeah, I do believe that those emotions, and, you know, Prechter even went further. I do believe those emotions are you can see those emotions on charts, right? You can see those emotions in the markets. But Prechter even applied it to his life. Like he said, I as a person am going to go through these waves as a trading personality where I'll get really popular and then it'll fall off, and then it'll go. You know what I mean?
Yeah.
And I think maybe he's in his fifth wave now. I don't know. You know what I mean? Like maybe people are, because it's funny you mentioned that, because somebody was talking about that yesterday about Elliott wave. You know, and it's funny. I haven't heard it mentioned in a long time. I mean, we've mentioned it a few times. So my thoughts are that yes, you can sort of graph those emotions, but Elliott wave in itself, I think, can be useful. It's really a microcosm of the markets where everyone's going to see it a slightly different way. So even if we're all Elliott wave theorists and we all participate in the same market, we're still going to have differences in what we decide to do in terms of buys and sells and when it's oversold or it's a good time to get in or whatever. So it's interesting, but I wouldn't use it for anything other than like a long-term cycle. Let's say I'm retired and I have a lot of my money in shares. I might look at Elliott wave for a way to maybe lighten up if I'm worried that there's going to be a general market correction, you know? Mm-hmm. That could be useful, I suppose. But as an everyday tool, I don't know if I would necessarily depend on it. That's just me. What do you think?
I've personally only seen Elliott wave work on a strong trend. So I think in the beginning, when everybody first learns Elliott wave, at least for me, I had the tendency to try to explain every single move in terms of Elliott wave. But then I think it only works on the strong trends. And if you look at like, what's his name, Bill Williams' work, right? He said that Elliott wave works not 90-something% of the time if it's in a strong trend after his breakout signal, right? So I think that that's one way that it can be useful. And I think that it kind of shows not only what you're talking about, but I think the overall mentality of the population. So for example, you're going to have your early adopters, right? So that's like your wave one. And then those guys are going to jump in early. They have some sort of early indicator. They have some sort of hunch or whatever it is, right? They're going to jump in early. And then they're going to take some profits. Or there's going to be a pullback. And then your general population gets in, right? That's the, was that 1, 2, 3, wave 3, right? And then you got your late adopters, people who are always late to the party. They're always jumping in at the wrong moment. And then that's your wave 5. And then it blows off or whatever, right? So I think that's another way to look at it. Yeah, I've never really found it to be that useful in anything but a trend or strong trend. So the trick is to like figure out if that's a strong trend or not also, right? But I think that seems to be the only way it's really useful. And like you said, maybe it helps with lightening up your position or taking profits in the case of crypto, and instead of just using that to trade on an everyday basis.
Exactly. Yeah, I would say like if you're in cryptos, you could argue like it depends on how you look at the chart, like the time frame of the chart and stuff and the scale. Like you could argue that, for example, Bitcoin, which is the crypto that most people talk about, you could argue that it's either just had its third wave or it's just had its fifth wave. You know what I mean? That's to me is the problem with Elliott wave. Yeah. Like if you go back and look at Bitcoin when it ramped up to 1,000, is that like wave 1 or you know what I mean? Or is wave 1 the one where it went up to like 19,000? Do you know what I'm saying? Like where it really depends on the chart, the scale, and all that. But that's what Elliott wave theorists will say is the strength of Elliott wave is that it's fractal in nature. You can use it on the 1 hour, you can use it on the weekly. That's kind of one of the things that they'll say. But I guess I'd probably say it's just completed wave 3 and it's in the correction now as we record this in December of 2021, mid-December 2021 as we're recording this. I would say that it has completed wave 3, it's correcting, and then it'll ramp up for another like really strong wave 5, almost parabolic, and then it'll have kind of a major correction, and that's just my male intuition. I don't really know, you know what I mean?
Yeah, like that's the problem, right? It's so subjective.
Yeah.
Like kind of like Fibonacci.
Exactly.
Where do you draw the high and the low? And
exactly right. Yeah,
whatever works for you, I guess.
Yep.
Right.
Exactly. Yeah.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You have to be really on your game in terms of execution. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I have a question here from a trader, and he was having issues with taking losing trades. So his issue was that he really didn't like losing, and he had been through some, life experiences recently that were difficult for him to withstand, like financial losses related to the trading world, but not really his, it wasn't related to his trading, right? So it was related to his investments. So he's having troubles losing. He came up with this strategy that was really good. It was interesting though. It's funny side note is that he learned the strategy from a guru, but he and all of the students that were learning it from this guru all figured out that the strategy had a losing expectancy. So they got together and they kind of flipped it around. So no, they took elements of it, but they flipped it around and they made it into a winning strategy. So they used elements, but they actually just changed it so that they didn't take as many trades. Not a complete 180, but almost like a 180 on the strategy, right? Anyway, so they were trading it and it was working quite well, but he had an issue because it had a low win rate. I think it was a 38% win rate, if I remember right, but it had a really good reward to risk ratio, risk to reward ratio. It was like 4-1 or something. I can't remember exactly, but it was around that, So, so he's like, he was having issues. He's like, I know it makes money, but it doesn't trade that often. The trades come and go very. So I'm going to switch to a lower time frame, and it's like a 1-to-1, right? And it has like an 80% win rate, but it's actually less. It wasn't actually 1-to-1. It was a little bit 1 to 1.3. So he's risking 1,300 to make 1,000 basically, right? But it had a really high win rate. And so he was asking me, what do you think I should do? Well, I think what's happening is a lot of you've had these issues around your life around finances, and so you really dislike that feeling of losing money because you've gone through a lot lately in terms of losing money and stuff, which is not really his fault at all. It's just bad decisions, like bad partners and stuff. So I said I would probably do both. You know what I mean? Like I would probably trade that higher time frame one that doesn't trade that often, but has a really good, because that might save your butt if you're trading the lower reward risk ratio strategy one that's a scalping one. And he likes the idea, and everyone does, right? Of sitting down, trading for 2 or 3 hours in the morning, and then being done for your day, being flat, not having any open positions. And that's kind of the draw of that. The issue I said with that is that you have to be really on your game in terms of execution to make that work. You have to have a really good broker or brokers that you're dealing with for those tight, really quick in and out profits, right? Like on the 1 minute chart or whatever. Your broker choice is really important. You have to be super on your game in terms of your psychology and, setting that time. Like I'm only going to trade 2 hours or 2.5 hours or 3 hours, whatever it is, and just walking away no matter what. Maybe even giving yourself a certain number of bullets. Like you say, I've got 3 bullets today. I can take 3 trades. The first one's a winner. I can take a second. If the second one's a loser, I can still take a third. All right. But if the first one's a loser and the second one's a loser, I can't take the third. Things like that. You have to have these rules in place so that you don't overtrade and stuff like that. So anyway, that was my idea. I don't think he necessarily liked that idea of trading both of them because he really wanted to move just to the one. But it's just, for me, this idea of getting away from losing can often lead to even more difficult trading situation because when you're trading those lower time frames, you're open to broker issues. Let's just call it that. You're open to more larger losses, really. Like if the market really moves unexpectedly while you're in a 1 minute trade, you can lose your account and then some. So there's no guaranteed stops that I'm aware of anymore in Forex. There used to be, but there are no now that I'm aware of. So there's a lot of reasons why you would want to split up your money, I think, and at least do like personally, that's what I would do. What are your thoughts?
Yeah, I mean, I think it's either you just got to figure out what's the best thing for you, and is it a case of you're trying to find the grass is always greener on the other side, or is it really because you don't like to lose that much? And I think, like you said, I think the situation played a lot into it. So maybe he should take that into consideration. Maybe take a little break or something, and then see if that's really the case. But I think that you'd have to figure out what's really the best for you instead of asking somebody else. Kind of just do, like you said, do all 3 or do both, and then see what happens. And then you have the 3 scenarios you could go, right? You could go both. You could go one way. You could go the other way. And I think it's just a matter of trying to figure that out and see what works the best for you.
Yeah, and sometimes I think as traders, we, like normal people, we react to the last thing that happened.
Yeah.
You know how you react to the last trade or whatever, the last month, last week. And it's easy to do that. It's easy to react and say, I'm going to go against my my last, I hated trading the 4-hour charts. I hated checking the charts every 4 hours. I hated going to sleep knowing that I had risk on, all those sorts of things. So I'm going to move to the 1-minute charts and trade that, and then I'll be done. There's that sort of thing too, where you kind of react to what happened in the past.
Yeah, but then once you get into that 1-minute chart, you're like, oh, this sucks because I have to watch it all the time, and then these losses compound quickly, and so
yeah, exactly. Like I know a couple that does the 1-minute stuff on the Euro every morning, and they take, I've mentioned before, I think they take breaks, so they take the summers off in Europe. They're in Europe, and they just sail around and stuff. In the summers, they don't trade at all, like June, July, and then also what's kind of cool is they have their own offices in their house. So they both they trade similar system, really. It's almost the same thing in different rooms. And then after the London Open, they come and meet and they kind of talk about like, did you get this trade? Did you get that one? You know what I mean? Because they're trading the same, they're just trading the Euro on the 1 minute. And so it's interesting because it's almost like they have like an accountability partner, inbuilt in like the husband-wife team. It's kind of cool that way that they every day can have someone that say, well, hang on, we said that we were only going to take 5 trades. Why did you take 6? That sort of thing. So, the reason I mention this is I think for the guy that I'm talking about, that element is really important if you're trading lower time frames. And if anyone's trading lower time frames, you kind of need that accountability to someone, even if it's a non-trader. You need someone to look over what you're doing to make sure that they understand the parameters, the rules, what you should be doing, and that you're actually doing that, because it can be tough for you to be, your own coach. So, yeah,
no, totally. I think a lot of those guys who used to be bank traders can attest to that, right? They had a supervisor, and now they don't have the supervisor at home, and then
that's it. Yeah, exactly. Yeah.
All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. The goal they set isn't concrete enough or something, like it doesn't motivate them enough.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, how important do you think the big why is? Your big why of trading, why you want to do it? Do you think it's necessary, or do you think it's kind of optional?
Like why you want to trade? Yeah. For me, I think it's more like you just kind of know. Anyone was the first time you took a trade, or the first time you saw people trading, and you just knew you wanted to be a part of that, I have a friend in England, and he was kind of like that, like he ended up getting a job where he saw the traders in the trading room, and he saw what they're doing. He's like, I want to be a part of that. You know what I mean? So sometimes it's like maybe the first time you see someone do a sport or whatever. Like I remember the first time when I was a kid, I saw some kids surfing, and they're like my age, but they were having fun, and it just looked like something I really wanted to do. So sometimes I think you're just kind of drawn to it. Like, it's just like, you want to do it. Like, it just makes sense. But I think maybe what you're talking about is a little bit more of like building on a foundation of, could be wrong, but like building on a foundation of sort of like, who's that guy that wrote the book, The 7 Highly Effective Habits or whatever, the guy in Utah, Stephen Covey. Yeah. Like, he has that company, Franklin Covey, right? Where you get these planners, and maybe people have done the course. I've done the course. You get these Franklin Covey planners. It's just a planner, right? It's just like a diary. And I'm sure they're all electronic now. So I did this back in the 90s, right? So this is a while ago. Like, you take the course, and they tell you how to use the planners, right, to be efficient and have your life. But they start with like the foundation. Okay, this is who I am. This is why I'm doing what I'm doing. This is what I'm trying to do. And I understand that. Like, that is a real thing. Like, if you look at team sports, the teams that don't have the leadership, like the coaches, the managers, or whoever's the boss in that situation, if they don't have like a real consistent, almost like theme or reason what we're trying to do here as a team, if they don't have that, you can tell those teams right away, because they suck. You know what I mean? They don't win. The ones that win, there's a leader somewhere in there, whether it's the coach or the manager, whoever, I think in baseball they have a manager, right? I don't want to get this wrong, but yeah. Whereas in a lot of sports, it's the head coach, and he or she defines what the culture is. This is why we do what we do. This is how we look at, this is what it means to be on our team. This is what it means to do what we do, sort of thing. And so that can be a very powerful thing. So for traders, you might just say, look, I'm just trying to build up my trading account so that my family can live comfortably and I can retire and take care of my kids and my grandkids. Or it could be, I'm doing this because I want to have more freedom in my life. I want to get away from the job that I have to have right now. That job that I have right now, I want to get out of that. I need something more. I know that, in my life, I'm meant to do more than just, sit at this desk and look at Excel spreadsheets all day or whatever, whatever your job, or like make salads at, the local salad restaurant, or, you know what I mean? Like, or sushi or whatever it is. So that can be a thing too, where it's like a motivating factor, but I do think that sometimes people are you just know. It's like that first time when you meet someone and okay, that's going to be my wife, or, you know what I mean? That's going to be my job. You just know that's what I want to do. So it could be as sort of simple as that, or as sort of, what's the word I'm looking for? Like it's a wild instinct. You know what I mean? Like you just associate with it, or you can build it out very deliberately. Like what I think you're saying, is that what you're saying? Like you're kind of like building out your goals and sort of like, this is where I want to be. And this is who I am. This is why I do this. This is why I'm spending time doing this. Is that what you mean? I don't.
Yeah, I was thinking of it more in that sense. But yeah, this is an interesting point. From what you've seen, if you could put a percentage on it, like what percentage are those people who say, oh, this is what I was meant to do? And what are the percentage who say, like, this is just an ends to a mean, or a means to an end that I'm trying to do?
Yeah, it's really interesting. I used to overestimate the percentage of traders that like felt like this is what I was born to do. I think it's actually quite small. And I'll tell you why I say that, because when we had our London conference, there was a speaker and he was amazing. He's a really cool guy. He was a bank trader. And I thought that people would be really wanted to know, you know what I mean, what it was like and the you know what I mean, to be behind the trenches as a bank forex trader and stuff. And you know what? It wasn't as into it. I mean, there were a few people that were super into it and really wanted to know what it was like. But a lot of people, I could tell, they were just traders just as a means to an end, That's when it really drove home for me, actually, was at our conference when we did that. And I'm not knocking him at all. He's a great guy. He did an awesome talk. It was really interesting to hear about the LIBOR scandal and all that stuff. But it was interesting to me to see the reactions and like the feedback we got from people. You know what I mean? Is they thought it was a really good talk, but they never wanted to be a bank trader. You know what I mean? Yeah. That's what they said. They said it was really cool, and I loved hearing about it, but that's not me. You know what I mean? And so you could tell that their motivation was really freedom, wasn't it? It wasn't that it was the motivation to be a trader, right? Because if you think about it, almost like the pinnacle of being a trader would be either a trader at a bank or like a hedge fund, I guess. I guess it would be hedge fund. Like a massive hedge fund where you're like the star trader. That would be like the pinnacle, I guess, But for a lot of traders, that's not what they want. They just want a means to an end. It's like freedom. It means more time. It means more opportunities, in life. So that was an eye opener for me. Yeah.
Interesting. Yeah. Most of the people I come across are more about the freedom, but it also seems like the goal they set isn't concrete enough or something. Like it doesn't motivate them enough. I don't know. It's kind of tough to put your finger on. So I was wondering if you saw anything like that.
Yeah, I think you're right. I think you're absolutely right. I think it's kind of, and that's why they give up so easily. So what you're saying is like, they're kind of like, well, let's see, what can I do? I could do trading. Let's see if that works, or I could like flip some houses, or, I could do like an internet business where I sell stuff on Amazon. You know what I mean? It's like they have these different options, things to do, or I could do options. I could trade options. I could trade crypto. Like, they have these different ideas about what they can do. Trading is just kind of one of the ones that they're going to try along the way. So it's definitely not that they feel like they're built to be a trader or born to be a trader. It's just like, okay, this is something I'm going to try and see how it goes. So they're not exactly married to the idea that has to work. And the traders that say like in their head, I got to make this work, those are the ones that generally make it work. The ones that say, I'm going to try this for a while, and if I can't get it to go in the next year or so, I'll just do real estate or, something like that. So that I think you're absolutely right. I think there's a lot of that going on where it's just they're not really focused on the goal of succeeding as a trader. They just want something kind of easy or quick. They don't want to trade time for money. So they've got to do something that's not trading time for money, essentially. Yeah.
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 Totally.
Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
And the guys at the seminar were saying that the girl that they learned it from, like she was driving Ferraris and stuff. Okay. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I thought we could talk about your experience with grid trading and using EAs to get rid of your emotions, so-called emotions around trading.
Yeah.
What's your experience with that, and how did it work out for you?
Yeah. So the way I found out about it was actually the one and only trading seminar I ever went to. Mm-hmm. And they were talking about it, that was one of the strategies that they discussed. They talked, the two traders that were kind of in charge of it during the time. And it was funny because, I was at the phase where I thought that my strategy that I had, that was actually making money. When I went to that seminar, I was actually making money. And I thought that the strategy that I had that I was using was the one they were going to talk about. I don't know. In my head, I had it like, you know what I mean? Like this was the strategy. And so I thought, and it blew my mind because they talked about things totally different, like grid trading. So for those that don't know, what happens with grid trading, you layer these orders on, and you can do it directional or non-directional, where, in other words, you could have stacks of buy trades and stacks of sell trades. And the big thing is when it goes kind of like a grid. So when it goes from one level and cashes you in, it goes up, and then it gets to the next level where it cashes you out, but it also gets you into another trade, right? So you can have these distances really wide, like 50, 25, 100 pips apart or more, or you can have them really tight, which is like kind of what we were taught at the seminar. And that's what I did. So I traded. So they were trading it on the pound yen. So when you figure that, when you want to say you want to do grid trading, and the guys at the seminar were saying that the girl that they learned it from, like she was driving Ferraris and stuff. Okay. So let's just set that up as a context. So I was, like I said, I was making money with my strategy, and it was really exciting. And so I was like one of the only persons at the event that actually were making money, because you have lunch and stuff and you talk and chat and stuff. But I still wanted to try grid trading because it was so interesting. So I did it on the pound yen, and it's really funny because it's like one of those things where we were kind of banking on the pound yen going up. And at the time it was going up, right? But then it totally crashed. And it was like 2 months after the seminar, right? It totally tanked off, which means in grid trading, you're going to have a couple of trades that you just took at the top that you're holding when it's underwater. And the whole thing about grid trading is, what do you do with those trades, right? Like that's kind of the defining. Yeah. So to make a long story short, I eventually stopped trading the pound yen. Then I got into the Aussie yen, because you kind of want a pair that you have a reason to suspect. Well, at least in my thinking, I wanted to have a pair. We had a reason to suspect it was only going to be going in one direction. And that's what they were doing with the pound yen. They were basically just buying it. And with my Aussie yen trade, like a year later or whatever it was from that seminar, I was doing the same thing. I was just buying it. But my trading buddies and I had figured out that instead of having stop losses, or instead of getting out of our trades, we would just have a few options running. So that would be a put option, right? Yeah. So we had put options so that if we did get stuck with a few of those trades, and we were trading 3 pip grids. So every 3 pips we had, I know. Every 3 pips we had the stacked orders, right? Yeah. It was crazy. I think we had like 4 or 5 options, something like that, or maybe it was only 3 or 4. But we were basically anticipating that we get spiked, and we'd have like maybe a couple of trades. Oh, and our grids weren't such that we would get in at 3 pips and we get out at 3 pips. I think it was, we would get in at 3 pips and we get out at 6 or something like that. So there's a little bit of an overlap. See, there was even more risky than a normal grid, right? So anyway, and it was working for about 3 weeks. And then by the fourth week, into the fourth week, it was actually less than a month. What happened was my broker, who I totally adored and believed in at the time, started slipping us. So instead of making, where it was 6 pips on the grid trades, like from 3, you get in 3 pips here, and then you get out, the second, 2 more grid touches later. We weren't getting 6 pips on our winners. We were getting like 4 or something like that. And what ended up happening is it just ruined the profitability of it. Basically, they were slipping us on entry. So that's kind of how they did it. The broker did it. But it was fortunate because this is, again, the hilarious, like Forex is crazy, man. What happened was I stopped trading the grid because I'm like, guys, this isn't working. Because I was like the main man that was running the operation, and the other guys were just, I don't know, like the money behind it. And so I was like, dude, this is not working. Our profitability's gone way down because we're getting slipped on entries. And I'm worried that if it spikes and then falls, we're going to get caught with a lot of trades. Like it might slip us on exits too. And, our options might not cover it and this and that. You're always going to take a loss. Even like the way we calculated it, we were going to take a loss even if we did have to execute the options, right? But anyway, so the point is, I decided to pull the plug on it because of the slippage. And guess what happened? You're never going to. The broker that I had the options from, it was one of those brokers. It was a different broker from where the trades were. So it was two different accounts. He took off, like he was one of those brokers where like the broker folded, the brokerage folded, and the head dude took off with the money. So we got out of that broker before that happened. And we actually had significant money in the account, like client money and stuff like that or whatever. It wasn't my money. But the point is, we were really lucky, super lucky. So long story short, I think that grids can work. Your choice of broker is really important. It's probably going to be best that I've seen people talk about using like wide grids, like 25 pip grids and stuff. I almost think that would work better. But you could do really well with a directionless market, like say the Euro Swiss or something, or the Aussie Kiwi. If it's kind of just stuck going up and down, you could just have a directionless grid, and grids love that stuff. They eat that stuff up when it goes up and down and up and down. I mean, it just cashes in all day long. So I think it's definitely a potentially viable strategy, but that's my experience, and I'm really lucky that I got out of it alive because, like I said, we could have had big problems with that. Just losing the one account on the options side, that would have been a big hit. So that's my. What about you? Have you done it before?
Yeah, I've been experimenting with it, but just to go back real quick. So just to clarify, you're saying that you were trading Forex in the retail market, right? And then you were trading options in the futures market. Is that right?
No, they were Forex spot options or whatever. Yeah.
Oh, okay, cool.
Yeah, I would name the name of the company, but I've kind of slagged them, and they don't exist anymore.
Yeah.
And we could have done both with that broker. Like we could have done spot and we could have had options there, but they were just. Oh, I know, because we wanted the EA, so we needed a MetaTrader. We needed a broker with MetaTrader. Yeah, that's right.
Yeah.
So I think that's why we did it, but it also just kind of felt safer to me to have like them separate,
Yeah.
Kind of like when you run the carry trade, the free money trade, where you have like 2 accounts and stuff. I don't know. It just kind of felt like that. Like you were trying to balance it out, like make sure that, you had these options going. So think about it, as price goes up, and it was going up on the Aussie yen for us, your options are an expense, right? Because you have to keep getting these options as it stair steps up. So, that eats into your profits. And we had slippage and we had these options eating into our profits. It just wasn't, you know what I mean? Like it wasn't viable. Yeah. So that's kind of how it ended up for me.
So you're buying puts with like a way out of the money.
Yeah, exactly. So you're kind of like just a few. I think I calculated that we'd have like 4 at most. We'd be hung with 4 open positions. You know what I mean? And it's funny, that I wasn't comfortable actually taking the losses. Hindsight, if you had some really good rules around it, might be a better option. I don't know, to just take the losses. But I do think they are viable for sure. Potentially, it's just the whole thing is, what do you do with those few big losers that you're going to have? Because you are going to have them. Like, how long do you let them fester before you dump them, and all that stuff? That's, to me, is the meat of grid trading, is the rules around that.
You ever think about getting back into it, like you said, with the wider grid spread?
It's funny that you said it. Yeah, I have like this year or the last 6 months, I have kind of dabbled with it. But again, yeah, I mean, it'd be something for a small account or something, maybe, to try and, I don't know. I mean, I'm not totally there, but I've been thinking about it. I've been thinking about it and looking at some tests and stuff, but I'm not like 80% there, but it is in the back of my head. So it's funny that you bring it up. Yeah. Are you going to do it?
Yeah, I actually have a good idea for like a EA. I haven't been able to program it up and test it out yet, but
right.
Okay. I think I got something, so I'll send you some ideas if you want, and we can
totally
bounce
cool.
ideas. But I haven't really actually done anything with it because I was like, that's kind of like you said, you're gonna get hung with a few big losers, right?
Yeah.
So I'm like, okay, how do you get around that? But so it's interesting to hear what you had to say about that, and how when you're trading that, when you're using that, how was your psychology? How did you feel in terms of like
Yeah, well, you feel like a hero, like when things are going well, right? You're invincible, and they're small. Like I should have mentioned, these were super small positions, so they weren't even like a standard, 0.5% or anything like that. Like it's just they just keep adding up. Like if you're as old as me and you ever played like Super Mario Brothers, where you jump up and you catch those coins, that's what it kind of feels like.
Okay,
you're like jumping out, ching 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 ching. That's what it was. That's what it was like, Yeah. So my psychology was interesting because I was thinking about this as you're asking me questions. When you're in the drawdowns, you in a sense you kind of feel like, oh, it's definitely going to come back, right? Mm-hmm. And remember, you're trading a pair where you make money on the swap. So when you're hung up on those 3 trades or whatever, and then it falls 50, 60, 70, 80, 100, 200 pips, you're still kind of making a little bit of swap to kind of make a dent in your loss. Mm-hmm. It's not a huge dent, but it does feel psychologically kind of good. And you also feel like, you know what, it's going to come back. It's going to come back. I know it's going to come back. So, you get into this stage where you don't want to take the loss, because you feel like it's going to get back up there.
Yeah.
So that's why I thought the options were the smarter choice than kind of going by my emotions. That was just, if you have some solid rules around there, I think you'll be fine, but you got to have something to deal with that. And to me, I don't think we ever had a point where we used the options. It was just an expense for us, I think. It might have been one time where we actually decided to pull the plug. I can't remember now. And that's the other thing is, so let's say you have a loss. Let's say you have like a $100,000 account and you're making these little, 25, 50 pip trades like that. Each one is just a little cha-ching, cha-ching, really small, right? So, okay. So what happened if you have these options? So you would have, let's say you had 3 positions and you had to hold them through like a 200 pip drawdown, right? Mm-hmm. All right. So now you've got some pretty big losers. Instead of those turning into $25 winners or whatever, they're each of those is like a, I don't know, $700-800 loser, right? Something like that, right? Mm-hmm. Yeah. So it'd be about an $800 loser. Okay. Let's say if I'm saying 25 pips on the winners. So now, but remember, you're paying for these options. You've paid for all these options. So the options don't exactly cover the loss, right? Mm-hmm. There's a gap there, and there's the gap that you've been paying for these options all the way up the ladder. So it kind of felt like I do think we did at least one now that I think about it. It kind of felt like the option wasn't doing much for me. You start thinking, should I even use these options? You know what I mean?
Yeah.
Which again is a dangerous thought because I think the key is the solid rules around what to do when you're in those, you get hung up. It's crazy, man. Like you're always like, but if you have the 25 or 50 pip grid, you might only have one, right?
Yeah.
In theory, you might only have one trade that you have to deal with. The advantage of those is that you have the one trade if you get stuck, but your winners, you have fewer trades because you have a wider grid, but your winners are bigger because they're wider, they're apart. So I could see someone getting excited about grid trading with a higher, and then slippage wouldn't hurt you as bad if you have like 25 or 50 pip grid. So yeah, I mean, now that I think about it, I still want to look at it. It's such an interesting, it's so different to all, normal.
Yeah. In the back of my head too, I'm like, this should work. Something about this should work. You know what I mean? Like, I don't know.
Yeah, totally. Like it almost is, like I said, it's almost best to find like a directionless pair. Like I could see where people would use a filter. Like they go, okay, this pair is not going anywhere, so I activate the grid. Like I could see people doing that. Mm-hmm. And then it finally breaks out into a trend, and then they just get there and they just dump that last trade. Mm-hmm. Right? I could see people doing that and being pretty happy. or even using seasonality. So they go, oh, well, it's June, July, so it's unlikely that, the Euro Swiss is actually going to go anywhere. So we're going to activate the grid. It's usually pretty, I could see that making sense to a lot of people. Yeah.
And I guess on the option side too, you could do a little bit of stuff like maybe some sort of credit or a break-even spread where you would cover like most of your downside or whatever.
Yeah, that's what we did. We try to cover most of it, but if you try and cover, the problem is if you try and cover more or all of it, it just means your option expense goes up as you're, assuming you're trading a direction. Yes, exactly.
Yeah, and
that's assuming you're trading a direction like a grid where you kind of have a bias. Like we were only buying, we weren't selling. We had no sells, So, but that we had good reason. There was a big wide gap between the Aussie interest rate and the yen interest rate. So we were collecting swap on our trades and really on our losers. Like when there was a pullback, that's the only time you'd ever get swap, because otherwise you just get cashed out almost immediately.
Yeah.
So yeah. So it was really interesting. Yeah.
Okay. Cool. Yeah. I just wanted to kind of see what you did with that, but
yeah.
Appreciate you sharing.
Yeah. Thanks.
All right. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
The only time that I've been overconfident was before I took my first trade.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, how often do you see the overconfidence bias in trading, and how do you get over that?
For me, when I look at this, the traders that have confidence are the ones that have a lot of experience with their strategy. So they may be trading for a long time, and that it gets tempting. So two things: people who have a lot of experience in their system, a lot of time trading, testing, and they really want to ramp it up. Or the other side of it is when you have people who are like on a win streak, right? And so then they want to ramp it up. They want to bump up they've had a really good month, and they decide, you know what, I'm only making on these trades, I'm only making 4.5% with 2% risk. I should really ramp it up and go 5%. Look how much more I would have made, Like, to me, that's where it usually creeps up, because it's so rare. Like, it's so rare to be overconfident. Most traders are typically, that's the big issue, is confidence. And that can be sorted out by, doing your homework, making sure that your strategies work for you, getting your data, looking at that, applying that to your analytical mind and saying, look, I have all these data that say this works, and then getting all this experience and all these feelings of winning, even if it isn't just Forex Tester Simulator or something like that. The other thing is, if you trade a lower win rate strategy, you never have confidence, because you just know the next trade is going to be a loser. The people that I can think of that are like high win rate, very experienced sort of scalpers, and they by nature get sucked into really high risk, because can you blame them? If you have an 86% win rate, why wouldn't wouldn't you just ramp it up? So I had, like, my first trading mentor, he was like that. He was hardcore 3-minute chart, just boom 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 boom. He would trade the New York Open. He would trade in like an hour and a half, 2 hours, right? So he'd get up really early California time to trade the New York Open, and he would be like, oh, there it is, there's my wife's car, or I remember one time I was sitting with him, he goes, okay, I just paid for a new kitchen, like, he's just like that. Like, he's just like super confident, just I know. But then also he would beat himself up. He'd go, oh, I sold the pound at the high of the day, I sold the pound at the high of the day, and I only made 15 pips. Look, I would be up 75, 85 pips right now if I held on to that trade. I'm like, but dude, that's not your system. You're a scalper. So you can't beat yourself up over that, But yeah, he was one of the most confident traders I remember trading with. Yeah. What about you? What do you think? Have you ever been at a point where you feel super duper confident with your trading? Because I have a hard time getting there, to be honest. Like, I feel like I'm at the point where I want to let the numbers play out, but not necessarily that, like, I'm like, yes, I'm a hero, I'm going to win this one. Like, I just never know. I always just assume it's going to be a loser, calculated as such. But I do feel like, I guess, like the casino, like, I don't know if this player is going to take a lot of money from me, but I do feel like overall I'm going to win. You know, I guess I kind of feel like the casino. So kind of like the casino's worried about someone tricking them or, you know, stealing some money from them or something. I kind of feel like that, I guess, more than like a super confident. I don't know. It's just, maybe that's just my nature.
Yeah, no, I mean, I think to be a long-term trader, I think you do have to have like awareness that something could go wrong like all of a sudden. So you have to be vigilant about like, you know, keeping up with your journaling and looking at your trades and making sure that you're doing the right things, right? So I think, yeah, that is really hard. And the only time that I've been overconfident was before I took my first trade. It's like, oh, this looks easy. Let's do this, right? And I think that's a group of people that I've seen before, like really intelligent, really educated, and they think that trading is like something that they'll pick up in a weekend or whatever. And that's even if they're along in the process a little bit, I think they can still be really overconfident. That's like one of the few groups that I've seen. But otherwise, yeah, I agree with you. I think it's really hard to be just confident in your trading, right?
Yeah, it is. I mean, I really do. When I put the entry orders in, I really do think, well, this is a loser. Like I just calculated as such. I assume it. And then once I put the order in, then I just really hope. Like, I'll give you an example. So yesterday I had a breakout trade on the yen, and there's 3 profit targets. And it could be a buy or a sell, right? In the morning, which is the Asian Open, right? And so I saw later during the day, like late in the afternoon, around before dinner, I saw that it was going to be a winner. Well, I saw that it hit target 1 and target 2, but I didn't know if it was going to hit target 3, right? And so I did kind of have that in the back of my mind, because they're kind of rare to hit all 3 targets. You mostly just hit 1 or 2. Like if you can hit mostly 1 and 2 target, you're fine. It's a profitable strategy. But I was just thinking, like during the day, I was thinking, yes, you know, because it had been like a week since I had another winner like that. So like the winners make 100 pips, and then if all of them lose, you lose 75 pips. So that's basically the strategy, right? Based on the targets. So you just need to have more of them kind of hit that second target, you know, if it does break out. So yeah, I was pretty, like, I was kind of high-fiving myself yesterday when I was walking around, because I knew that I had hit the first 2 targets, you know?
Yeah.
But yeah, I mean, just little things like that, because you'll find a lot of traders out there who are super experienced, who are really confident. And I feel like there's a danger that, you know, there's a line that you can cross, because that it just comes down to risk. You know, your psychology is so pumped up that you just feel like you can really push the risk, you know, pedal to the metal with the risk. And I feel like that's something that people should be guarded against. But that's just me, you know?
Yeah.
I feel like you're better off, like the end result of that being a little bit, you know, worried and a little less confident. The behaviors that come out of that, I think, are more profitable than the behaviors that come out of someone who's like, you know, I'm the best, you know, sort of thing, you know? Yeah.
Totally. All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
It's not a shortcut. It's not a, you know, get rich quick or whatever. It's a job like anything else. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I was talking to or messaging a student, and he was saying, like, I really like this strategy. I know it's going to work, but why do I have to spend all this time backtesting it in a simulator? Like, why is that important? And what I was trying to explain is that's the key. Like, the only way that you can lean back. So the thing that's going to give you fuel when you're in the midst of your worst drawdown of the year or the decade, whatever, the thing that's going to allow you to get yourself out of that, pull out of that hole, is all of those accumulated experiences during your simulator, during your back testing. That's it. That is the confidence. That is the well of confidence that you build during that time, so that you can use it later when you're actually trading live and you're actually in a terrible losing streak. So I was trying to explain that to him, and it made sense in that way. Like, it's kind of like drugs, right? So drugs, you take these drugs and it gives you like all of this future happiness right now, right? So then what happens later is you have these you have the issues, like could be a brain chemical imbalance or something. You know what I mean?
Yeah.
It's like you're just kind of like,
right.
yeah, it comes back down. So you took your happiness. So you could have just been this happy your whole life, right? Instead, you said, okay, I'm going to take drugs. So now I'm going to get really happy now. All right. But now, 20, 10, 15 years later, I lose that happiness that I would have had today because I used it back when I was 22, right? So that's the kind of, and it's kind of the same with trading. You get all of that experience in the simulator. I like Forex Tester. I know there are other ones out there. Our friend Denis, he created a really cool one too. So there's lots of them out there. But the idea is that I get all this confidence now in my strategy so that I can spend it later when I am in a drawdown. That's kind of the way I look at it. It's like the opposite of drugs. So I don't know. It's weird, I know, but it hopefully that makes sense to people.
Yeah, no, that totally blows my mind. Like in every other endeavor, you're always going to have to practice, right? Like you can't become a Premier League soccer player without going through the, starting in first grade or whatever, playing and then going into the academy and all this stuff, right? Just taking a system and trading it is like trying to play in the Premier League when you haven't even done all that stuff, right? So yeah, it's just like getting the repetitions in, getting better, and it's a foundation of your training. Yeah. So that's the way I see it.
That's a perfect example. Yeah, that's exactly it. So it's not a shortcut. It's not a, get rich quick, or it's a job like anything else. And doing your apprenticeship, building your confidence, it all happens then. Yeah. So it's a good way to look at it, I think. Yeah.
Yeah, totally. All right. Cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Scalping is really good because it gives you quick feedback, but it's also really bad because it gives you quick feedback. You know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I've noticed some pretty common backtesting mistakes, especially from a psychological standpoint. So I want to get your input on that. And there's a list that I came up with here, and maybe you can add or disagree with whatever. But I think that when it comes to backtesting, some common mistakes that I've done and I've seen other people do are they have a preset bias to prove or disprove the system. They don't want to be wrong, so they try to only take profitable trades. They're not testing enough in terms of years or number of trades. They're testing too few times to be sure that the results are correct. They could have a bad testing session or be in a bad mood or whatever. They're quitting when the results aren't great. They change the system in the middle of a test. That's a common one. They don't follow the system. They don't do enough analysis after testing, and they don't have a good reporting system. They think that live results will be exactly the same as back testing. They don't consider risk management and what to do about correlation in the portfolio. Only test on one pair, stock or commodity or whatever, and then assume that that will work in other markets. They don't pay attention to missing trades. They enter and exit trades optimally and not honestly. So they try to follow the system, but then they don't kind of factor in, what would I have actually taken it there, or would I have taken it somewhere else? They only follow other people's rules and they don't experiment for themselves. They throw out a system because it doesn't make X% a month. They try to optimize or over-optimize by adding more indicators or conditions. They try to be an automated trader when they should actually be a manual trader, and vice versa. And finally, not understanding the rules of a system that they are testing. They learned it from somebody else, and maybe they didn't get the complete instructions, or they're not following the instructions. So I know that was a long list, but what do you think? And is there anything you want to add or disagree with?
Yeah, no, that's a good list. I would say, so I'm working with a couple of coaching clients now, and who are going through this process right now. And one of the things I've noticed is, I'm not sure if it was on your list. Your list was long, but they were. I think you kind of touched on what will happen is they'll do the test, and then they'll be like, oh, well, I did this 5-year test and I only got, 47 trades or whatever. And so my thing is all right, but what happens if you add another 20 pairs or 20 markets? Yeah. So they kind of get discouraged, or they'll switch midstream,
So like, let's say you're trading a strategy and you have one exit strategy, and then halfway through the test, you're like, oh, I should try this instead.
Mm-hmm.
And they do a lot of what you're talking about, like where they say the results aren't good enough after 30 trades, so they scrap it. Remember, I mean, the system is important and no one's going to deny that, right? But you can massage your equity curve in different directions by the way that you manage your risk. I feel like that is a lost art in trading, where people simply assume that their strategy has to get them to a certain point, when really I think it's the opposite. I think your strategy just needs to get you to the starting line, and then from there, risk can get you where you really want to go. Like if you really understand the amplification that risk management's rules can do. So yeah, I think that's a great list. I would just say the most common ones I see are one of the ones you cover, like they basically scrap it too soon, or they assume that the end result is going to be, what they have there on the test, when in fact the end result can be something drastically different if you change the way that you manage risk, right? And then obviously everybody focuses on the entries. So everyone thinks like that's where they get a lot of their tweaking and stuff, and the multiple tests are based on the entries, when in fact you first verify that your entry works, and then once you verify you have a good entry, you would really spend a lot more time on the management of the trade once it's initiated, so the exits, right? And then in the end finally you can use the your risk to get the look of the equity curve that you want. So I think that's a great list. It's easy to be impatient when you're using a simulator and doing your back testing, because you know what I mean? Like you can, in some ways it's too bad that there isn't like an in between a demo account and a simulator. In other words, like with a demo account, it's exactly as real time, because you have to wait the amount of real time that you would in a normal trading account to see what the results are. And then in a simulator, you can literally blitz through years in like an hour, and take years worth of trade. So it's too bad there isn't like an in between where you could you could make that. In other words, you could tell yourself, okay, every day I am just going to back test, 3 months or something like that worth of data. And then tomorrow I'll back test another 3 months to kind of keep it fresh and make sure you're following the rules, because I feel like I get sloppy. I don't know about you, Hugh, but I get sloppy when I'm back testing.
Yeah.
So I need to take breaks and stuff like that. So I can't just push through and do 3 hours of back testing, because I know my last 30 trades are going to be completely different to my first 30 trades, and they're not going to be nearly as good or as representative of probably what I would do in quote real trading. So I think that's a great list. I just feel like it almost like feeds impatience when you trade in the simulator, because it's so easy to get this feedback really quickly. It's like scalping. Scalping is really good because it gives you quick feedback, but it's also really bad because it gives you quick feedback. You know what I mean?
Yeah.
Like, oh, well, I'll get the next one, and sort of thing. So I don't know. I feel like it certainly is invaluable. And all the best traders I know, they all have that one thing in common. They use some sort of simulator, obviously, but it's like any tool. You just have to manage it carefully, I guess.
Yeah. A couple of questions that people might have about what you talked about. So first, you mentioned if the entry is good. So how would you kind of define if the entry is good? And second, have you ever seen a case where the current system had a terrible win rate and it was losing money, but you switched up the risk management and it started making money?
Yeah. So, well, that was more the exit. So I don't know if that counts. So I consider, like, for example, if you use a trailing exit, that's a different way of managing risk, because you're allowing unlimited profit to come your way. Whereas if you use a 0.5 R target, as in I'm risking 100 pips to make 50 pips, you are cutting off your profits at half of your risk, and you will never allow the market, and neither will your broker if you do that. Your broker will never allow you to gap over that, right, and get cashed out at a better price than the 50 pips, for example. So I mean, in that sense, yes, I've seen systems that didn't look very good end up looking really good because we allowed more profit into the signals, right? So we allow those entry signals to give us more profit. I've seen break-even strategies go very profitable by simply changing the risk, right? So that's good. And then what was the other thing you said? You said the entries.
Yeah.
So the best way to do that is what I call the juice test. And what you do is, this is what I use. This is what people that I know use, my students. I say, look, and this is what we've been doing with the coaching clients. We go, okay, you've got this strategy that you really like, but things aren't as good on your test as you want. So my question for you is, do you know that the entry is good? And well, I don't know. Well, do the juice test. So what you do is you run through your back test and you mark down, or it's easier to mark it down like on a spreadsheet, or you go, where after 5 candles, where am I in profit? Like mark that. After 8 candles, where am I in profit after 12 candles, for example? You could use 3, 5, and 8. You could use 5, 10, and 15, whatever. You need to have it just a spread. And what you want to see here is basically, does my entry signal give me a hint at what is likely to happen in the future? In other words, do my 3, 5, and 8 candle exits make money, right? And also what you'll see is you'll get a hint about where your exit should be. Because if you find that with every, like, let's use the example I said, so 5, 8, and 12. Right? So 5 candles after, 8 candles after. If you find that the 12 candle exit is the one that makes the most profit, then you need to work out, backwards engineer where your exit should be. That means, like, if on average it's a 3R exit or a 2.8 exit or something like that, that's probably where you should have some targets if you're going to use targets, right? You should have them in that range. And also, you should probably run another juice test, because if your 12 candle exits best, how do you know that that the 16 candle exit or the 20 candle exit isn't better? You don't know. So just, find that. It's kind of like you want to find the point of diminishing returns. Now, you also might run the juice test and find that it's an absolute crapshoot, that all the candle exits are not really making money at all. Then okay, my signal's crap, right? Like you're just trying to, like, it's like a mechanic or a doctor. You're just trying to, like, pull the pieces apart of your strategy and go, okay, is it this? Is it my entry? Is it my exit? Is it my risk? Is it me? What's going on here? Because that's basically what it comes down to. It's your entry, it's your exit, it's your risk, or it's you. Like, that's it.
Yeah.
I mean, there's nothing else really. And obviously, in this podcast, we talk a lot about the you. Like, how do you tweak in your interaction with your strategy? So yeah. So that's what I would encourage anyone listening to this to do, is if you're concerned and you don't know if your entry is any good, try and run a juice test and see where it falls out.
Yeah, that's a really good one. I do it a little bit like quick and dirtier. I just do like a 1R, and I kind of can get an idea of how the system will work from there. But yeah, your method is much more detailed, so that's a good way to go.
Yeah, it makes sense. Yeah. 1R makes sense too, to see. I mean, I'm it's kind of like the same thing. Like, I'm saying, let's look at a 1R, a 2R, a 5R.
Yeah.
You know what I mean? Like, it's kind of the same, but it's just a simple brute force way of saying, my signal is telling me that the market's likely to go somewhere. Is that true? And you don't even have to be right 50% or more of the time. You just have to be right enough on the winners, right? That's what trading is. You just have to be right enough. And so that's why having some sort of, timed exit like that, you can work. And some people like it. Some people will do that juice test and they'll go, oh, I'm going to use a 6 candle exit, right? Like they like it enough. They're like, this is fine. I'll just do that. And for some people, that's perfect. So that's another cool kind of side effect. Yeah.
Yeah. It introduces that element of time, and you can kind of like also say, oh yeah, I should bail by the 3rd candle if it's not working out or whatever too. Right.
Yeah. Yeah. I learned that. The guy who taught me that timed exit idea, he lived in a mansion in San Diego. he knew what he was doing.
Yeah.
He was a stock trader and he had his hands in lots of things. But I learned that from him, and it was a real eye opener for me to think, oh, okay, you know what I mean? That's something I should be looking at. Yeah. He was looking for someone to work for him, and I guess I kind of lied about my typing speed, because he wanted someone to like take notes for him or something, or like there was another girl at his house with big stacks of papers and books and stuff. Anyway, I was like, wow, this guy is wild. And he like was really into piano and everything. And so he started asking me questions, did you play piano when you're young and stuff? I'm like, no. I'm like, why is he asking me these questions? It's because I put on my application that I guess I overestimated my typing speed. But we ended up having a really good chat about trading, because he asked, what motivates you and stuff. And then, and I told him, trading and stuff. And he said, and that we were talking about exits, and I was like really into exits at the time. And he said, I have the perfect exit. And then I go, what? Well, do share. And then he was talking about, timed exits like that. So it's stuck with me ever since, basically, since I learned from that dude. Yeah.
Ah, cool. That's a great tip.
Yeah. Yeah.
Right.
Yeah.
Thanks, Walter.
See ya.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Oh, yeah. I'm thinking about buying a motorcycle. I was like, a motorcycle? That's so dangerous. Why would you ride a motorcycle? What?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Hugh, so I have a question from a trader here, and this trader is saying, I like to trade the trend extension. So when the market goes and then it kind of pulls back, and then he wants to get back in on the pullback in the direction of the trend. But he's found that he's been getting stopped out a little bit more often than he would like. And he said he's learned from other traders this idea of using, different momentum type indicators to decide when the pullback is sort of ending. The idea is that you're going to miss out on a lot of entries because you're only going to take the best ones where the momentum is kind of dying in the pullback and then get into the trade. And he said this will, in theory, increase my win rate, and you're only taking high probability trades. What do you think about that? So that's his question. So I would say that, from my point of view, basically what he's doing is he's refining his beliefs, right? So he's come to the conclusion that it makes sense to trade the trend. If you're going to trade the trend, you might as well get in on a discount. And if you're going to trade the discounts, you might as well make sure that the discount is sort of turning into, it's kind of losing steam. And so I'm going to do that. And I say, yeah. But it sounds like in the back of his head, he's thinking, it looks like if I do this, I'm not going to have a lot of trades. Right. And so he wants the blessing, like, okay, my son, you can trade fewer trades, right? Yeah. I mean, it kind of sounds like that, And look, I don't want to tell anyone what to believe about the markets, but I could definitely understand why someone would want to trade this way. I like to trade this way as well. And I would say that, sure, go for it. Like, there's nothing really wrong with that idea. The idea that you're going to miss out on some trades, if win rate is really important to you and you find that being picky allows you to have a higher win rate, then my thing is, go for it. Why wouldn't you do that, right? So that makes perfect sense to me. You probably in the end will end up trading several markets, so you'll probably want to make sure you back test all of those markets that you're going to trade. But other than that, it's perfectly viable. And there's a long list of very profitable traders who trade in essentially the same way as has been described here. So there's really nothing I would say that's wrong with that. It's just a little bit of doubt in this trader's mind, I guess. So what's your take on this, Hugh?
Yeah, no, totally. I think it's mostly about permission. And then, like you said, testing, just test all the things. And a third thing I would add is maybe perfection, going for a little bit too perfect of an entry or whatever. Yeah, just play around with different ideas and then see if they work out, in a way that is acceptable to you, either from the win rate or from a return standpoint. So, I think you had it spot on for sure.
Yeah, that's a good point about the perfection, because depending on how you trade, essentially going to come down to, there's one of two kind of camps that a lot of traders fall into. It's the camp of fear of pulling the trigger, which is kind of what this trader is in, right? Like, I want everything to be perfect sort of thing. Or there's the over trader, the trader who like revenge
super
trades,
aggressive,
and has So it's basically like the hyper aggressive scalper or person who just wants to take a bunch of trades and make sure that I'm up on the day sort of thing, versus over trading, and versus this trader who kind of wants everything to be perfect, like you say. So I mean, in a lot of cases, depending on your personality and the way that your system operates, you're going to end up with that issue. I mean, that's pretty common for most traders to either have a fear of taking a trade or taking way too many trades, like one or the other, right? Yeah. And the fear of taking a trade is usually when you really want the win rate to be higher. And that could just be that you're trading a low win rate strategy, like a 25% win rate strategy or something like that. It could be as simple as that, or it could just be that you're like you say, like a perfectionist, you just want to be right a lot. And the other one where you overtrade is just, it's almost like a gambling mentality, right? Where you just that's how martingale comes about, right? So martingale strategies come from that, from the sort of the over trading thing. Like, I don't want to ever end up a loser. I'll get all my money back on this next trade, sort of thing, right? So it is interesting though that you can kind of, in a gross sense, you can kind of split the trading world into one of those two camps. Like, you can pretty much guarantee you're going to be dealing with one of those two issues.
Yeah, totally. And I think it comes down to also like more introverts and extroverts, maybe. Like, that's kind of where that lies. Maybe people who are worried or afraid of making a mistake are going to undertrade, and the people who are really gung-ho and are all about getting things done are going to overtrade, right?
Yeah, so one way to characterize that would be like sensation seeking. So people who are sensation seeking, they're like scalpers. They take a lot of trades. They put on a lot of risk. They're like bam, bam, in and out of the market. Whereas people who are a little bit, like you say, maybe more introverted, or kind of like, one way to look at introverts is to say that they're overstimulated just in normal life, whereas extroverts are understimulated in normal life and seek stimulation. So they do like, what is it called when they jump out of the, like, off the cliff on the, is it called a squirrel suit? Yeah. Squirrel suits and base jumping.
Squirrel suits,
those. Yeah. Those are like the sensation seeking sort of extrovert type people. And so, so it's interesting. I went to a wedding once where it was all of these like base jumpers and like crazy, like Hawaii big wave riders and stuff. Like, it was wild, man. You know what I mean? Like, weren't all, it's interesting. Not all of them were like super extrovert, but most of them were in that way, like you could tell, like you could see why they were drawn to like base jumping and stuff. Yeah, it was really interesting. Like seeing that, like a bunch of those people in the same room. Yeah.
It's funny. I talked to a guy who was a big wave surfer in Hawaii, and they called him the crazy Hungarian because never surfed before in his life, and he goes to the North Shore and he surfs like 40-foot waves or whatever. And I was like, oh yeah, I'm thinking about buying a motorcycle. He was like, a motorcycle? That's so dangerous. Why would you ride a motorcycle? What? So there's a lot of nuance with that, I guess, right?
Yeah, it's so funny. Like, I was talking to one of my my son's friends, his friend's mother, and we're like, well, we're going down to the skate park, and she's like, and we go, does your son have a skateboard, and would he go down to the skate park or whatever with us one time? She's like, skateboard? I'll never let him have a skateboard. I'm much too sense for that, like sort of thing. Meanwhile, like, her son's like climbing up these big towers and jumping off into the water at low tide and stuff like that. Like, you know what I mean? Like, doing all these crazy things where you're like, really? Okay. It's just like perception. Like, people say that riding a bike is dangerous, a bicycle, right, on the roads. And yet, you look at the stats for people in the cars on the roads, you got a pretty good chance that throughout your life, like, you're going to get in a real nasty accident at least once, right? That's pretty much baked into the cake. Like, that is going to happen because of just the odds. Whereas people are terrified to go out in the water because of sharks, and that, like, you probably be struck by lightning twice before you be bitten by a shark. So, it's just, it's crazy.
Yeah. Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If you think that's a good idea, then you should test that idea. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk about confirmation bias. I've got it, you've got it, everybody's got it. It's just a matter of to what degree, right? So what are some ways that we can be aware of our confirmation bias? And is it a good thing to have a strong confirmation bias?
Well, no. For trading, I would argue no. Not a good thing. one of my favorite studies is this one where they did with little kids where it was in England. And so they had like this box of like lollies, like candies. And they do this for like a 3-year-old, right? Like 3 to 5-year-old. And they put pencils in the box, but the box looks like it has candies in it. And so they bring the box out and they say to the kid, what do you think is in here? And the kids say candies. They say lollies. It's a bunch of lollies in there. And then they go, okay, open up the box and there's colored pencils in there. And they say, what's in there? Oh, it's a bunch of pencils. Well, what did you think was in the box before you opened it? Pencils. And so this is confirmation bias, right? Confirmation bias is a big deal in backtesting because you can go past a trade signal and then go back. Oh, I would have taken that, right? Mm-hmm. No, you can't take it. And then, but more importantly, the best thing you can do, like in your live trading, is to have a journal, and more data, the better. So what you want to do, this is my solution for this, is you have a journal and you write down in the journal when you take the trade, what is the likelihood of this trade working out? Because you want to know, we want a snapshot of that time when you took the trade of what was the likelihood that, what did you think? Because later on, when the trade's over, you're not going to have, you no longer have that ability to be honest with yourself. It's gone, right? It only exists at the moment you take the trade. So you write down when you take the trade in the journal, I think this is a 5 out of 5, or I think this is a 2 out of 5, but it fits my rules, so I'm going to take it. So that's what you do. And then you can go back and you can see, are my 5 out of 5 trades, right, where I rate my entry 5 out of 5, are they, do they make the most money or not? Or what's the deal? How good am I at figuring this out? Because, after the exit's all done and dusted and the trade is out and you're flat, you can't really go back. There's no ability to see whether or not you thought the right thing. The only time that whether or not, what you were thinking about the trade is in the beginning, and that's when you should capture it. So that's what I would say about confirmation bias, is that you can counteract that with a journal. I mean, you can also take videos of your trades where you talk about why you're taking the trade, what you think about in that. But I just think it's nice to have a number rating, even if it's a 1 to 10 scale or 1 to 5 scale, something like that, so that you can go back. And because the problem is, when we first start trading, we think that we know what a perfect trade is, and we want to put more risk on those and all that. Well, do you really? That's the answer. That's an answerable question. Do you really know that, or is that just confirmation bias kicking in? Like all the systems that I tested before, or most of the systems I tested before I had Forex Tester, I had confirmation bias, because all I was doing is scrolling back on the charts going, oh, look, this works really well. Like, and I was just highlighting the perfect trades and skipping over the losers, right? It wasn't until you actually scroll back in the charts and one by one move the candles and start taking, I used to write them down in a notepad, like take the trades that way before I had Forex Tester, and I would go, why isn't this working? It was confirmation bias, basically. Yeah.
No, totally. I think if you zoom out a little bit from trading, I think it's a really important skill to be able to hold like conflicting ideas in your mind at the same time, right? And that really helps with confirmation bias and not thinking that you know it all. And maybe there may be a case where part of this idea is correct, but mostly, the other idea is mostly correct, but part of this other idea is correct, and you could benefit from that. So I think that's a really important thing to consider also, not to get too entrenched in a certain idea or dogma or ideology.
Yeah. You know what? You remind me of something. I just want to point this out to people. If you're listening to this, you're probably a podcast fanatic. And what you just said, they talked about in one of my podcasts I listened to. It's called Dark Horse Podcast. They have it on Odyssey, like the actual video and stuff, but you can find it on, wherever they have podcasts. It's called Dark Horse Podcast. What they talk about in there, so it's 2 evolutionary biologists, and they're married, right? And they talk about lots of things in life. But what they were talking about the other day was exactly what you said, Hugh. And I was just listening to it yesterday, so it reminded me of what you said. What he was saying was, Brett is his name, Brett Weinstein. He was saying that one thing that he likes to do is he likes to go, what would have to be true for my belief to be false? Right. So that's how he approaches things. It's kind of like an anti-evidence sort of thing. So like, let's say, for example, let's say that you're using volume for your trading, to make this more concrete, right? So let's say using volume as an indicator, right, in your trading system. And so you see there's heavy volume, right? And the market is printing a reversal, right? Like a kangaroo tail or some sort of reversal candle. So you go, okay, there's heavy volume and the market was unable to penetrate the support level or whatever. So I'm going to go long here. Well, what would have to be true for my belief to be wrong? Well, my belief was that heavy volume on a reversal candle equals, strong belief in that candle. Okay. Well, what if, for example, we were just moving into a period of heavy volume, and that like the heavy volume that we had on yesterday's kangaroo tail daily candle is now going to be exceeded by today's heavy volume, right? So that would be, you know what I mean? Like then it would send it even lower, for example, right? Yeah. So, that could be I could look at that and say, okay, what does the volume look like so far today? Does it look like we might eclipse yesterday's volume? If it's really heavy volume today, then maybe that's not going to work or whatever. The idea here is that you're searching for evidence that would discount your base belief. He explains it really well on the podcast, and we can put in the show notes the episode of it. I think it's episode 111. So if you like podcasts and you like biology or whatever, Dark Horse podcast they're really interesting. And it was episode 111 where he talks about that kind of in the middle there. But I just thought it was a really good thing for us traders to remember because of confirmation bias, right? Because we're it's such a big deal in our world, is having the wrong ideas and just seeing everything that you just only seek out evidence that fits your ideas and your hypotheses, and then you're stuck. You never get out of that. And so thinking what would have to be true for my base hypothesis to be false is a good way to seek out counter evidence. And that's, when I take a trade, I always think, what is the other party? So what is the person that's doing the opposite? If I'm buying right here, the people who are selling, what are they thinking? Like, why would they sell here? And I'm trying to do that too. I think you should know that. I think every time you take a trade, you should say, well, the guys on the other side of this trade, what they're doing is this, and their thinking is this, right? And maybe they're looking at a higher time frame, for example, and you're looking at a lower time frame, or whatever, or they're the kind of trader that's looking at stochastics, and you think in this instance the stochastics wouldn't necessarily apply. It would be a case where stochastics would break down. For example, in a strong trending market, that's when stochastics break down, right? When the market's trending, you're going to see oversold, overbought all the way, but it's never really. But if it's going one direction, it don't matter, right? Yeah, it really don't matter what that stochastic says. Yeah, so
yeah, and I think in trading also, like I guess in a lot of education arenas, but like in trading especially, there's a strong like guru bias, right? Like follow the guru, and he's the one who knows everything, and there's not a whole lot of, sometimes there's not a lot of thinking for yourself and saying, oh yeah, I trusting yourself to know that I can figure this out, and maybe that guy could be wrong. So I think that's something to consider also.
Absolutely, you're right. And that's what people ask me. They say, have you ever heard of so-and-so? And usually my, some trading guy or whatever. And I'm like, no. And then they say, well, so-and-so says X. What do you think about that? And I'm like, it doesn't matter what I think. Like, honestly, it matters what you think. If you think that's a good idea, then you should test that idea. I'm not here to be the arbiter of truth. I'm not the whatever it's called, Saint Michael at the gates of heaven, allowing people in and out. I'm not doing that. Like, you know what I mean? Yeah. I am just here to tell you, you need to find out what you believe and then base everything on that. And so, like, it happens all the time. It happened last week. People will come up to me and say, hey, have you heard of this trader? He trades this way. And I'm like, no, never heard of him. And like, he trades this way. I go, okay, yeah, it makes sense. And they say, okay, well, should I do it? Well, I don't know. What do you think about it? It's all about you. People, like, you're right. And I think part of that, like, it's weird. Certain things, like certain industries are like that, where it's kind of like art, and they say, well, so-and-so is like he's a impressionist, or, like they kind of categorize you in that way. And I think some of it is because you don't really learn trade. Like, you can't go to university and learn trading, right? Yeah. You don't really, like, there's no real like trading degree or whatever. You have to kind of learn under someone or under the guidance of someone, or maybe you try on your own by reading books or whatever, or websites. It's interesting. I mean, a lot of things, I guess, are like that, and in Australia, if you're going to be a plumber, you pretty much have to work under a plumber. Like you wouldn't just go out and get a plumbing certificate or whatever and then just start. Like it's pretty much everyone kind of has to learn under someone, there's a lot of good things about that, I suppose. But yeah, I think you're right. I think there's a culture in trading of like, so-and-so is in the, the swing trader camp, or he's in the, the price action camp, or the, and they put these people in different areas of, based on, basically what other people say about them. It's weird. I agree.
Yeah, I think a lot of it's also baked into the cake, right? Like with the education system, it's always about the teacher knows best. So always follow the teacher. Don't think about anything else. And
yeah. I mean, like we used to have, like in the US, they used to teach economics and home economics. They don't do that anymore. You only get that if you go to college and you say, I want to be an economist, right? Like and then they teach you some weird stuff. It's not even, I would argue not even really applicable. So like, it's weird. It's like in a lot of ways, you'd almost be better off learning principles, like you say, like learning principles of how to determine how to make a decision rather than learning the book knowledge that you come out with. Yeah. I mean, there's a lot to be said there, but yeah, I think you're right. I think you're absolutely on the right on like if you get to the point as a trader where you start thinking, you know what? I don't know if I believe any of this. Like if you get to that point, that's a pretty good spot to be, because what that means is you're going to tear it down and rebuild it based on what your driving principles are, what your core beliefs about the market. If you believe the only way to make money in the market is to follow the trend, then you're going to build something based on that. And that's good. That's good. That's a good thing that you do that and that you follow that. So I'm all for it.
Yeah. I think that's one of the biggest benefits of trading, right? You get to know yourself, you get to trust yourself, and there's a way to keep score. So I think that's great.
That's exactly right. Yeah. Well said. Yep.
Okay, cool. Thanks, Walter.
See ya.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Each of us has a built-in personality.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk a little bit about something that I've been kind of researching for the past couple of years, basically trauma. My hypothesis or my research has shown that trauma is basically the cause of most things that we don't like, I guess. Basically diseases, addictions, bad behavior, so-called bad behavior. And somebody likened it to like having a ship with multiple anchors on it. And each of those anchors is like a trauma from wherever, your childhood, whatever it is. If you have all those traumas on your ship, then it's hard for you to move forward. So I was wondering what you thought about that, what your experience is, and how we could get rid of those things.
Yeah, so I think you're right. I would agree in a sense, but I think that there's another component. So like when you're thinking about trauma, so for example, in the child abuse literature, we know that there are some kids who are sexually abused who don't, like, things are pretty normal. In fact, in a lot of cases, like, they do really well in school and stuff, right? Mm-hmm. And then things like neglect, which doesn't really have, I guess, the same stigma that like sexual abuse has. I mean, they're both awful, right? Mm-hmm. In the case of neglect, that's usually one of the worst forms of abuse that a child can go through, right?
Yeah.
So, but here's the thing. Like soldiers, for example, when they go off to war and they come back, a lot of times, they go through PTSD. If they were in a really bad, in a combat situation, the things that they see, all of those things can really impact them when they come back and try to reintegrate into society. Mm-hmm. But here's the thing, they normally do reintegrate into society. It's usually just a process, right, that they go through. It may take a couple of months, 6 months, 2 months, 2 years. But at the end of that, they're actually pretty well functioning in society. So I think what it comes down to, and there's a lot of research on this because it's kind of like a trendy area of psychology at the moment, is resilience. Mm-hmm. And so some people have a very low resilience. Mm-hmm. So when they are presented with trauma or a challenge, they have a difficult time trying to see a way around it. And it becomes overwhelming. Other people, on the other hand, they're almost built for challenges and they're able to overcome them like very quickly. And it's fascinating as a parent. I have a kid of each. One of my kids is incredibly resilient, and the other one has a hard time and needs to learn the tools. And then of course there's a lot of people in the middle, right? So I would say that what you're saying is true, but it's probably mediated by the resilience skills of the individual. In other words, you would say that, yeah, traumas are a big deal. Traumas can impact you for life. But normally, for most people, as long as they have a certain level of resilience, that they'll be able to overcome it. And you can think back to like whenever you had a really bad breakup or something, you thought the world was ending, my life is over. And, you think about when you were younger and stuff like that. But now, when things come up, if you're older, you probably have those tools you've accumulated over time to be able to withstand the challenges and the traumas that creep up. And they're always going to be bad, but there's a process, just like the grieving process with death, you go through a certain process. Same thing, I think, with these. But again, the key is how well are you equipped, with those resilience tools. That's what I would argue. That would be my argument. Yeah.
Yeah, no, I agree. I think, like you said, each of us is kind of has a built-in like personality when we get here, right? And each of your kids has a different one. And I think that from what I found, at least, the trauma can be something, like really small when you're a little kid and you might not even know it. And that can carry forward in some ways. And, it could come from other places, like you said, a breakup or whatever like that. But yeah, I think that is the bottom line, right? Like having the tools to be able to deal with it, either innately or externally, where you have some sort of process where you go through and get rid of those things. So I think that's an important thing to look at, especially if you're trying to change your behaviors from a conscious standpoint. And, if you can keep telling yourself a mantra or whatever, and your behavior changes, then it's probably more of a conscious level kind of thing, right? But if it's really deep in your subconscious, then you might want to think of other ways to kind of dig it out there and kind of examine what it is.
Yeah. And there's a Denise Scholl book. We can put a link in the show notes that kind of talks about that for traders, right? About trying to uncover these patterns and things. It's a great book. So absolutely. I mean, trading is, in some ways, I view trading a test of your resilience because it's so difficult, and a lot of people, they give up along the way. We see that. Anything in life where there's a very few people that end up making it, in the end, like pro athletes or whatever, Olympic athletes, there's this sort of like this natural culling mechanism where people will fall off along the way. And I think that's, trading is very similar to that. It has a lot of those aspects. It's not to say that trading is difficult, because I don't like to say, well, complicated. It's not that trading is complicated. It's that we're built in a way that makes it a little bit more difficult than it should be, because it's so, you know what I mean? So then we tend to overcomplicate it because we think, I'm doing something wrong here, so I need to add this or incorporate this, or, it's almost like this idea. Computers have made it easy to do that now. It's almost like, the more things we have, the better off we are, sort of deal. But resilience is the key. So, I mean, if you're thinking about trading, resilience is the key. Resilience is the key for, developing the strategies that you're going to use and throwing away the ones that don't work for you. Resilience is the key when it comes to fine tuning your risk management so that you don't deal with the terrible drawdowns. Resilience is the key when it comes to the psychological pain that drawdowns and, questioning whether or not you're doing the right thing. Drawdowns can come in the way of a broker going bust too, right? It might not be any fault of yours, but it's like a extraneous event. So there's a lot of things that can come up for traders, and many of them, unforeseen. It's like the old quote, the old Donald Rumsfeld quote about there are known knowns, there are known unknowns, and then there are unknown unknowns, which is so true in trading. Like there are those things that are going to come up that you have no idea about, right? And they're going to come up. There are also things they're going to come up that you know about, And then there are some things that you don't know about, but you know they're going to come up, right? It's all this. It's crazy when you think about it, but it's true, yeah. And so I really would implore anyone listening to this to figure out what are the tools that you have for resilience, because that's going to be the key when these challenges creep up, and they will creep up. So yeah.
Yeah, I was just having a conversation with somebody today. And they said it's a little bit ironic that trading is all about making money and all this material stuff, but ultimately it's looking within and figuring out what's inside of you, right? So I think that's something really important to remember.
Yeah, that's absolutely. Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
To me, that smells like, this is an education company wrapped up in in sheep's clothing. So I don't know. Yeah. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think about these programs like Get Funded as a Trader, those type of programs, and how does that play on trader psychology?
Well, in a way, so there's two different types of them, broadly speaking. There's the ones where you trade and people can hook up your trades to their accounts. So you would get paid usually either a subscription fee or even maybe a percentage of the profits or something like that. And then there are those where you kind of are coming in at like a student, and then they want to qualify you. And once you get qualified, then you can make certain levels where they give you money to trade, sort of thing, right? Like a prop firm or whatever. Yeah. So I've probably mentioned in the past, I had a friend who set up this thing like this. They had the platform created in China, to qualify the traders, and they reversed all the trades. So all these traders were coming in thinking that they were going to trade the fund, and what the fund did, and they were trading demo, that they weren't trading a live account. They were in fact trading the fund from the beginning, but the platform was just flipping their trades. And I said to him, and it was making money hand over fist. And I said to him, I said, aren't you concerned that you're going to get some trader who's really good or whatever and wipe you out? And he said, no. I said, nah. I mean, they will come up, they will, but they always cut their winners short and they let the losers run. And so, and if you think about when you first started trading, you were like that. And he said the biggest challenge they had was trying to convince these traders to keep going. Because they didn't realize they were making money for the fund, and he was trying to convince them. He would like reset their account, so that the demo side of it that they saw was back to zero losses, and he'd do all these things to try and keep these traders to keep going because they were very valuable to him. And now he would get traders that were good, that qualified, and that would move on to a live account and stuff. But there were very few, and so that's because he was targeting beginning traders. He was looking for people like that. So I guess the reason why I mention this is because these prop firms, they know that most people aren't going to qualify, right? So what they typically do is they will charge in some way. I don't care how they phrase it, they'll charge you money. And so really what they could be is, and I'm not saying that they are, but it's logical to suspect that what they could be is they're just an education company masquerading as a prop firm. And so they'll say certain things like, if you pay $2,000, you can trade a small account. If you pay us $5,000 to go through the intermediate course, then you can trade $50,000. And if you pay us $10,000, you can trade the expert. You go through the expert course, and if you qualify, you can trade $500,000. Things like that. So I would just be wary if I were a trader looking for these, because it sounds really good. But you need to ask yourself a couple of questions. How many other traders qualify? Are there any known traders that have qualified for this? What sort of payouts am I going to make if everything goes according to plan? And also, so when you're trading these things, like how soon are you going to get back your money? So if you've put up $10,000, how soon is it going to take for you to get that $10,000 back? And do you trade in a way that they want? Because sometimes they have rules like you can't hold trades over the weekend, which for me wouldn't work because I have long-term trades on all the time. That wouldn't work for me. So it's almost like you have to make sure that there's a good marriage between their qualification rules. Obviously, they have stuff around drawdown and all that, but also the time frames that you trade and the methods that you trade. Because if you're trading a trend following strategy on the 6-hour charts, and they want you to close it at the end of the week and all that, that might be difficult. Now, you could close it out at the end of the week and re-engage, at the beginning, but you'd have to look at what sort of drawdowns would they allow for and all that sort of stuff. So if I were looking for something like this, I would just be really careful that I'm not choosing one that doesn't match my, trading profile. Mm-hmm. So that sort of thing. Yeah.
I mean, for me, there's been a lot of opportunities to promote these things, right? But I've always steered away from them because it's like you said, it's always funneling the person into a certain style of trading. And I almost feel like they want you to day trade when you have to close out your trades at the end of the week. So I think that doesn't work for a lot of people. And there's like the drawdown, like the 10% drawdown for a lot of them that I've seen. And I think it would work if you have a strategy already and it fits the criteria. But I think the way those are marketed is that they want people who want to get funded into those things. And they're making money on the front end with the fee or whatever. And I think most people won't fit into that mold. So I think you just be careful about that.
Absolutely. It almost seems like in some ways what they're trying to do is create, like they teach you how to trade, right? So presumably they're teaching some systems, and then they have all these rules on it. So what they're doing is they're forcing the accounts to not be diversified, right? You think about it, because they're, you know what I mean? They're forcing everyone to trade a certain way and get out of trades, in a certain time frame, that sort of thing. So it almost seems like if they were really honest about what they were doing, they would welcome many different approaches to trading, because that's the best diversification. You don't get diversification when you trade the Swissy versus, the Aussie Kiwi. Like that doesn't work. The markets are way too correlated. So if I were them, what I would want, and I've talked to people about this, and I know people that have done this actually, is they have teams. Right. So they get teams of traders, and the team trades in one way, and they have a leader, and they have someone they can ask questions to, and they're all kind of learning the strategy. Then they have another team, and they're sort of competitive. So they're all trading the fund's money, but what's happening is they're completely diversified because they have all these different strategies and all these different team leaders that have different approaches. And so this is really cool because you do get that diversification effect. But if everyone's going through the same course, and everyone has the same rules on how they, apply their trades, I don't see how you get any diversification there. And to me, that smells like, this is an education company wrapped up in in sheep's clothing. So I don't know.
That's interesting. I mean, ideally, even if they were going to do that, they would benefit from like having people trade demo to build up a trading track record, flip the trades, and then the ones that survive would get funded, right?
Yeah, exactly. Yeah.
Interesting stuff. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
That's the big pitfall, right? Making those opinions part of your personality and your identity. And then once that becomes part of your identity, then you're going to defend that to the death. And
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have this question from a trader, and the question is, what should I pay attention to if I don't have a model of the world yet, and I want to incorporate some fundamentals into my trading? So do you have any thoughts about how you would go about creating a model of the world if you're using fundamentals?
I think you would start, or at least I would start with work it backwards, like who's successful trading fundamentals, right? And then what are they looking at? And then kind of learn from there and then go from that. I think that a lot of people will try to make a model of the world that they think is right, but it will be way off. It won't approach reality. Like one example I heard was this guy used to be a coffee bean trader. Like he actually physically bought and sold coffee beans. So he knows how to trade the coffee bean futures market because he's really good at that. he knows how the mechanics work on the back end. But if you're just sitting you're at home and you're just looking on Bloomberg or whatever and looking at news about coffee, then what you get from that news can be really skewed in terms of how the mechanics of that market actually works. So I think that would be my place to start if you're going to do fundamentals, or if you know something, or if you know a lot about a market. Let's say that you work in cybersecurity or something, then you might want to look at trades in that market, like stocks or whatever it is, and kind of take it from there. Otherwise, it's such a huge pie that you have to like try to whittle down to a small little trading strategy that I think it's almost impossible to start from the big and go to the small. What do you think?
Yeah, I agree. Yeah, so I was saying that I mentioned to this trader, I said, well, you kind of, like you said, kind of want to work backwards. So like, for example, some people, what they do is they'll actually plot out the non-farm payroll numbers or the CPI numbers, and they'll sort of superimpose that on the chart of like euro or whatever, the pound or what have you. So they can do that. So that's kind of a way of like turning the fundamental data, the CPI data, for example, into almost like an indicator. And so you can see if there's like, is there any correlation there, or you can run correlations on that. You can also pull the data off of economic calendars. So you go and get the economic calendar historically, pull that data off, and then you, like if you're going to use these data to dictate your positions, you would go back in Forex Tester, take your positions based on where the data drops on the calendar, right? So you're going through like the Excel spreadsheet and then taking these trades and seeing, if you can make it work. It's really hard though to say, I want to trade fundamentals, but I don't have a model of the world. You kind of need to have the model of the world first. Yeah. You might have some ideas, like some very simple ideas like CPI or interest rates or whatever that you think is a really important thing, consumer confidence, whatever you think is the big, obviously with currencies, it's interest rates are important, elections, jobs, inflation, all of those things are really important. Inflation, because it kind of relates to the interest rates. So all those things are super important. But I mean, the shortcut is what you said. Like, so you might just say, well, Warren Buffett is the guy that I want to follow or whatever. So you would just learn as much as you can, read all the Warren Buffett and Charlie Munger books you can, and then try and figure that out, or find someone else who you think is really good at fundamentals and sort of try and adopt their point of view as well. You could do that. Like I remember the first book I ever read about the markets really was the book by Peter Lynch. He was talking about he would just drive to the malls and see which stores had the most, or drive to stores and see which ones had the full parking lots. There's Bed Bath & Beyond has a bunch of cars there, so I'm going to buy shares in Bed Bath & Beyond. He did things. I don't think it was that simple, but he kind of broke it down that way. And so like that made a lot of sense to me. So if you can do things like that, if you can come up with ways to cut through what's important, if you listen to these interviews of these guys on and men and women on these channels where they talk about fundamentals, they're often it almost always boils down to like three things, like 1 to 3 things that they focus on. The Bitcoin, bull is going to go, well, it's the Fed's printing money and Bitcoin is scarce. There's only 21 million, so they'll say things, you know what I mean? Like they usually come down to like 1 to 3 things that they're really focusing on. And so it doesn't have to be that complex if you're going to be a fundamental trader. You often see that these people who base all of their fund, all of their trading, all of their efforts on just a handful of ideas. Yeah, I would try and shoot for that. Wherever you get those ideas, wherever they come from, whether it's books or from your back testing, something like that, so that you get to the point where you go, okay, this is what I'm going to do. This is what I think. This is what I believe. And so this is my approach. Yeah.
Yeah, totally. And I think you have to look at the market too. Like you said, it's very simple. It's just basically supply and demand, right? So where can you get supply and demand information? I think it's a little harder in currencies. Stocks is a little bit easier, I think. And, just looking through that. And then going back to your point on the data, plotting the data out. I think last week I saw a indicator on TradingView, and they had the CLT data, commitment of traders. And it doesn't quite work, but you can kind of look for that kind of stuff on the platforms and see if they have indicators already built in that could make your job a lot easier.
Yeah, definitely. Yeah. And the commitment of traders data, is that for the futures market in the pros? Is that from the CFTC? Yeah, I know. That's tough because it doesn't come out. Does it come out weekly or something?
So, yeah,
or is it?
Yeah.
I think it's weekly. Yeah. Yeah, so I don't think it's daily, but yeah, so yeah, that's the thing. You need to find your approach. This question from this trader, what should I pay attention to if I don't have a model of the world yet and I want to trade with fundamentals? It kind of suggests, I mean, reading between the lines, it's kind of saying that I need to have some overarching massive thesis about,
Like
you know what I mean? That's kind of, yeah. And well, I guess what we're saying is you don't necessarily need that, right? Like if you're going to be Peter Lynch or any talking head on Sky News or CNBC or Bloomberg or whatever, they've all kind of boiled it down. Like, and you can go on YouTube and find these people talking about, you can find plenty of them on there where they're talking about, like, the one I've been following lately, and we can link it up in the show notes, is Stansbury Research. Oh, yeah. So she does, Daniela Camboni. She does a really good job. Yeah, she brings in all these guys, all these people with totally different approaches. And it's amazing how different, like, you can sit there in an hour or hour and a half or whatever, you can watch 3 completely different approaches. It's just like sitting down and watching the stock market channels, the business channels. It's the same thing, isn't it? Like, but she does a really good job of kind of like knowing where everyone's coming from and pulling out the important questions. But if you watch those, you'll just see the same thing. It's just they're focusing on 1 to 3 things, and that's really driving their decisions, and they're completely convinced of it. The good ones will actually they'll have alternative. They'll be like, well, I think this is what's happening, but if this happens, you know what I mean? You kind of have to be looking for evidence that doesn't support what you say and have more than one path. So, there's people who have confirmation bias who just focus in on their thing, and everything, all the evidence supports that. Mm-hmm. Then there's people who have false duality, and false duality is where they like, well, it's either this or this. But usually in life, it's not usually this or this. It's like this. There's a lot of options. So that's where you really want to be as a fundamental trader, I would say, is you want to be in that mindset where you have the path you're on. You think this is where we're at, but you're looking, what would have to be true for me to be wrong? Mm-hmm. And you're looking for that, right? And it's not just 2 paths. It's not the false duality of this or this, but it's, okay, I think it's this path, and I'm going to look for things that could be true. And if they're true, then I'm wrong. And then I have to look at this path, and then I have to look at this path, and I have to, you just want to be more open to what could be happening, I guess, is, that open-mindedness is really important, I think, for people who are in this area, because they have to be able to switch quickly. Like when you're wrong, because a lot of these people, they don't use stop losses and stuff, right? They got major positions, they're position traders and stuff. And so they're like long haul traders holding on to these things. So you gotta at a certain point, you gotta go, okay, that's it. I'm done. Shifting, pulling my money out of Google now. I think Google has or whatever it is. So yeah, that's really important too, I think, is that flexibility.
Yeah, totally. And on Stansbury Research, I really found Rick Rule useful if people want to check that out. Kiyosaki's always good, obviously. Who else? Gerald Caliante. He's always entertaining.
Oh yeah, he's funny. Yeah.
Yeah. And there's a couple guys in there like, I'm like, ooh, you're 80% wrong. I'm happy that she puts them on there because, they're 20% right also. So they might hit something. But any favorites of yours?
She calls them out too, like Max Kaiser. I saw that one the other day as well. I don't really have favorites. I guess what I like about those is they're relatively short. They're usually like under 30 minutes or under, right? Yeah. And also what I like about it is just getting exposed to the ideas, because I'm not really a fundamental trader per se, but I really like to see what other people are saying. And I can't deal with like the news channels, and I don't watch those. So like, YouTube is a good place to go. Like, and those in particular are really good because you get such a wide array of opinions, and people just like gold. People will say, energies or cryptos or whatever. Like there's always these different approaches and the reasons why. And some people will say they'll have the same trades on or the same positions that they're looking at for completely different reasons. So, that's what makes up the market, isn't it? It's great. Yeah. So I like to watch them because I want to challenge, because inevitably I have my own ideas, even though I try to trade technically, but it's good, I think, to be exposed to the other side of that. Mm-hmm. So yeah, for me, I like that. I really like the other side.
The big one for me is like the Bitcoin maximalists, like Max Kaiser and who's that other guy, Saylor, and those guys.
because I don't think Bitcoin is like all that, but these guys seem to think that. So I like to listen to those guys in particular. They really challenge my opinions on that.
Yeah, totally. And like, who was the guy that died in Spain? He was the McAfee, right?
McAfee,
Was it John McAfee?
Yeah.
Yeah, he was kind of like Kaiser, where he was like, Bitcoin's going to go to $1 million this year, And that was like 2 years ago or whatever. I think it's just really good to see why people say the things they do. Like, what are they thinking? Why are they thinking this? Why do I agree or not agree, disagree? I just think it's really good for us to be exposed to those ideas, because I just think once you get locked into something, it's really difficult to get out. So if you're in that flexible mindset where you're in a path, you believe that's the right path, but you're open and you say, what would have to happen for me to be wrong? What would have to happen? Like, what do I do? Right. And then which path do I go down if I get these data coming in that confirm that I'm incorrect?
That's the big pitfall, right? Making those opinions part of your personality and your identity. And then once that becomes part of your identity, then you're going to defend that to the death.
Yeah. So the people that are able to disengage ideas, theses from person, you got to have that. And that's a rare skill, actually. It's a rare skill. We know from research as well in people being able to coordinate theory and evidence. They usually just, when they say, well, why do you believe this theory? You're supposed to say, support it with evidence, right? Like that's science. And then people will just restate the theory in another way. And so that means you're not, you know what I mean? You're just not, you're not at that point. And you'll see this with people when you discuss things, they'll make it personal, or they'll instead of attacking your thesis, they will go with, or a group's thesis, may not be you personally, but another group that you're talking about, they'll attack them, just ad hominem attacks, which they don't have anything to do with the ideas. It's just that, oh, well, those people are stupid, or those people are dumb. Then you're not really dealing with anyone who's thinking about the ideas. Now they're just devolved into name calling. So
yeah, they're great.
You can't really have a conversation with them. Yeah. So,
something to be aware of. All right, thanks, Walter.
Yeah, thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
If you want to be neutral, you need to get out of the trade. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk a little bit about decision points in trading and where things could go wrong, like, entering a trade, exiting a trade, stuff like that. So what do you think are like the biggest decision points, and what kind of emotions can come up at those points?
Well, I can speak to my experience and what I've seen and what I've heard from the traders. And for me, the big ones are obviously at entry, at management of the trade. Usually it's around the point of, should I move to break even, or should I pull the plug on the trade? So that's kind of like mid-trade management. And then there's the exit. And almost always we are influenced by our prior experiences. So, for example, if we've had 2 weeks of mostly losing trades, we're probably going to have a hard time in most cases as a discretionary trader following the strategy rules. And in a lot of cases, you'll lose your confidence. So you might not want to, you may decide not to take a trade, or you might change things up. Like, well, the last 3 trades I've had good profit, but then the market went against me and retraced so quickly, I ended up with very little profit using my trailing exit. So this time I'm just going to get out as soon as I get to X amount of dollars or X amount of points or pips or whatever. So usually it's along those lines. And the simplest way to look at it for me is that it's a cliche, but you just control what you can. Mm-hmm. And in trading, you can control your decision making, how well you follow the rules. Although that sounds very simplistic, but that's the reality. And so if you decide to change your exit rules because of what's happened recently, you're not following the strategy that got you to where you are. You're not following the strategy that you probably spent hundreds and thousands of trades on testing. So is it going to work? I don't know. My guess would be it wouldn't work as well as the one that you tested, but you never know. So you know what I mean? So that's the way I look at it. So we have those key critical junctures in the trade. And I like to automate my exits so that I release the psychological capital there, and I don't have to spend so much psychological capital there. That also kind of frees up the ability for you to take the opposite direction. What I've noticed in myself and some other traders is that typically if you're like, let's say you're buying the euro against the US dollar and you've been buying it for a few weeks, then all of a sudden you get a sell signal. It's hard to kind of flip and just take that sell signal straight away, especially because you've been going, you've had this filter, you've been looking at it as an uptrend. However, if you automate your exits, then you're not really making the decision, right? Like the trailing exit you've automated, you flip the switch on, that's doing it. So in some ways, your job is done once you enter the trade, And so I find that a little bit easier to kind of allow myself to see the market in a neutral point of view. You're never going to be neutral when you're in a trade. It's really difficult to be neutral when you're in a trade. If you want to be neutral, you need to get out of the trade. That's the best way to analyze any chart, is to get out of the trade. So that's how I see it. At entry, at mid-trade management, and then at exit, those are the key sort of decision points in trading. But all of those are impacted by your previous experiences.
Yeah, I totally agree. And I would also add before and after, right? So the decision to actually start trading, maybe you're not in the best emotional state right now. Maybe you got into a fight with somebody. Maybe you were in traffic. So that's a key decision point to figure out, do I really want to trade right now? Or should I just go relax for a little bit and then trade, or just not trade at all, right? And then after, when the trade is closed, another decision point is to journal the trade, right? Are you keeping up with the journal? Are you putting all the information necessary in there? And if not, then you should try and build that habit also.
And it's interesting, like have you ever played air hockey?
Yeah.
Yeah, where you play, you have one paddle and you're trying to score on your opponent. Like, it's interesting because in trading, if you think about it, in air hockey, I play defensive, right? So what I do, and it's the same thing in ice hockey actually too, and probably soccer, I don't know. I play in a way where my goal is to stop my opponent from scoring. So I'm basically playing goalie with my paddle, and I just wait for them to make a mistake, and then I will once in a while go on the offensive. And sometimes, and oftentimes, they'll score on themselves, right? When you got the puck whipping around and stuff, and they'll actually give me a point just by being really aggressive. So in trading, I kind of think of it the same way, where there are some traders who tend to be very defensive. So like if they get, like you were saying about journaling and stuff, if they get into a really bad space and their confidence is low, they might tend to shy away from trading, step aside, maybe be gun shy on the next signal. Whereas there are other traders who are more offensive, and what they will do is they will try and make it back. I want to get all that money back that I lost on the USD CAD, that sort of thing. I guess that's another thing to keep in mind, like thinking about what you were saying, like, do you want to trade, or like the mindset that you bring to the computer screen when you're thinking about taking a trade. It's almost like what you're saying is kind of the preamble to that. Like, okay, should I trade today, or am I going to trade? And I guess I would just be aware as a trader, which camp do you normally end up in? Obviously, we can end up in both camps at times, depending on where we are in our lives. But there are those traders who are super aggressive and they tend toward over trading. And then there are other traders who tend to be gun shy and worried about the negatives, right? So they're the ones playing defense. And so just be aware of where you are there, and then you can kind of modify your environment so that, you don't, you know what I mean? You don't end up too far in one camp. And you don't want that. Like, in other words, you don't want your one known weakness to be your downfall, right? That shouldn't be the thing that finishes you off as a trader. If you're going to the game and that this is my thing, don't let that thing beat you, right? Like, set it up so that that's not going to be the thing that takes you down. If something else, like if your broker goes bust, or there's a financial meltdown and the fiat currencies don't work anymore, or whatever, like there's a tsunami and it takes out your house and your computer and your livelihood, okay, fine, that's like something else. But if it's you and it's the thing that you have, that's on you, right? That's your fault. So yeah, I would just be aware of that. As a trader, I would want to be aware of where I am, like on the continuum. Am I defensive? Am I offensive? Where am I there? Where do I tend to make my errors? Because you can certainly modify your trading life so that it's unlikely that one weakness is the one that is responsible for your downfall. So
yeah, sports are a really good analogy, actually, because when I used to play soccer, I was more of like, I prided myself in being a better passer instead of a scorer, right? So I was more playing on defense. I was more giving the ball away. And then one day I realized, hey, wait a minute, I could score too, right? So I consciously started trying to be aggressive and score. And, in the little league I was playing in, I was probably like the top scorer last couple of seasons, right? After I made that little switch. But in trading also, like I noticed that I was missing trades because I wasn't getting back in, because like you said, I was playing too defensive and I wasn't, aggressive enough, or I didn't have the confidence, I guess. So yeah, that's my tendency for sure. So it's something that I try to be aware of and try to work on.
Yeah. I mean, self-awareness, it comes down to that, doesn't it? Like in trading, that's one of the keys really to making progress, is just that self-awareness. And as you say, journaling can help. Understanding where your pitfalls are, where your weaknesses are. If you have those in mind, that can really help for sure.
Yeah. All right, cool. Yeah. Thanks, Walter.
Thanks.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah. Maybe this person is like over trading. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, we have a question from a trader, and this trader says, I really need to work on my patience, and I need more patience in analyzing my trade entries and my charts. So what should I do? What would you suggest?
That's a loaded question, huh? I think reading between the lines, at least to me, it seems like this person is losing trades and they're thinking, oh, I need to analyze them more so that I don't lose. I don't know what you would think about that, but that's kind of where I'm reading that. If that's the case, then they would have to just do more testing and more practice on that setup or whatever they're using to get more confidence in it, so they can just pull the trigger instead of being unconfident or, and trying to go back and forth on the analysis instead of just taking a trade and seeing how it works out. So that's what I would say. What do you think?
Yeah, I think it's interesting. You said reading between the lines. I mean, it's so funny. Like, you can read so much between the lines. You can say maybe this person is like over trading. Right? Because like in a sense, I agree with you. Like it seems like they're suggesting if they had more data or more analysis, they would be more right.
Yeah.
That's kind of what it sounds like, the question. But it also could be, if knew how to analyze the charts correctly, I wouldn't be taking all these damn trades. You know what I mean?
Yeah.
Like all these crazy trades that aren't, you know what I mean? So I don't know what they're saying, but yeah, there's lots of reasons why you'd be impatient. It could be that you don't have a strategy that allows you to take trades that you believe in. It could be that you're like all over the shop. Like you see, oh, this guy's recommending that I buy the euro now, so I'm going to buy the euro. And then I have this system that I haven't tested and it's selling the Swissy. So I'm going to do that. Or, all this, like, it could be just information overload. It could be that as well. It's really hard to know, but I guess the key thing is here that in some way, this trader is saying that they're taking too many trades, or they're taking trades they shouldn't take at the very least, right?
Yeah.
There are trades taken, and those trades should not be taken. So how do we fix that? I would say it comes down to assessing your performance. And so that's in your journal. You assess your entry performance, you assess your trade management performance, and your exit performance. And also you can assess your intuition performance. So you would have a score for intuition, as in, I have a 9 out of 10 confidence that this trade is going to end up being a winner. Okay. I've entered my trade at this price based on this strategy, these system rules. And I entered an 8 out of 10. And, that was an 8 out of 10. It was a pretty good entry. It could have been a little bit better, but I did okay. Did pretty darn good. And then on my trade management, I moved to break even at the right time. So I get a 10 out of 10. I didn't do anything wrong there. And then on my exit, I got out at the right time according to my exit rules. So I got a 10 out of 10, that sort of thing. And then over time, you can see where's my weakness, right? Mm-hmm. Am I taking trades that are, that don't fit, or that is it the trade was a good trade, but I managed it the wrong way? Or is it that the trade was a bad trade because I took it when I shouldn't have, right? Because those are two different questions that, either I'm taking something outside of my rules, or I'm taking a system or taking a trade that fits my system, but I'm not really following the rules. I'm not really entering, exiting, and trade managing as I should. So, and then the intuition thing is just a bonus, because we always fool ourselves into thinking that we're better at picking winners than we are. And so that way you can have some hardcore data on whether or not your higher rated trades that you take are more likely to be winners than your lower rated trades. So yeah. So it's tricky though. I mean, there's a lot to untangle there. That's the problem with these one sentence questions, right?
Yeah.
Is that you don't know exactly what's going on. It's better off to get like a paragraph to know exactly, or at least get a better idea of what's going on.
Yeah, you'd have to ask them some questions on what they're thinking and all that. But yeah, I guess to break down what you're saying, like at least for me in the past, like I would see like a breakout and I'd be, breakout, right? And then I would trade it and I'm like, wait a minute, that wasn't in my system. So I think part of that has to do with a routine. When you sit down, like maybe you have a physical journal, you open it up and you write down something, or you do a little meditation before that to calm yourself down or something like that, right? Some sort of pre-game routine that will slow you down and not allow you to jump into those trades when you see them. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
A lot of people have a day job. You don't want to spend too much time on the charts. So starting on the daily chart would be a good idea.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I have a question. I actually was talking about this with a trader years ago, but I was just thinking about it this week. And this trader's he's worked for hedge funds, creating strategies for them and stuff like that. And he's a really good programmer and a good thinker. And he was mentioning to me, he said, it's always so easy. It always comes down to it's easiest to build a trading strategy that is a trend following strategy. And I thought that was a fascinating comment, because in my mind, I had always thought that the easiest type of strategy to build would be a breakout strategy. I'm not a programmer by any means, but it got me thinking about how sort of as traders, our worldview or our view of the markets can color what we think is possible or easy or difficult or whatever, because I've always held and I've always thought that the simplest and easiest EA robot to create would be a simple breakout strategy. It just seems so obvious to me. And yet he was, he's got a lot more experience. He's built these things. He worked for, a market wizard guy for his hedge fund and all that. And so I thought, okay, well, I'm going to defer to you here. But that was a very interesting thing, because, I'd read stories or there's reports, you can go and find them in trading magazines and stuff, where they've looked at, for example, like the old turtle rules that are all known now, the old turtle rules from the 80s and 90s, they stopped working at a certain stage, I think in the mid 90s or early 90s, they stopped working. And then after about 10, 12 years, they started working again, and, somewhat difficult to create trend following strategy. Not total. I mean, I can see why he would say that. I can see where it would be totally difficult to create a trend following strategy, but I always just thought the low hanging fruit is that breakout strategy. So what are your thoughts on how, because in my mind, I'm linking these together, the worldview of the markets and the belief that a certain type of trading system or strategy or approach is the quote easiest one to automate. What are your thoughts on that? Because I think it's a fascinating look into the psychology of different traders. That's how I see it.
Yeah, and that's a great question. Well, it depends what you're doing, first of all, right? Like if you're in a fund and you have an automated system, then yeah, maybe trend following systems would be easier to program, or maybe that's just the way he looks at the market. I don't look at it necessarily from the type of strategy, but I look at it more from individual trader standpoint, like trading the daily chart, number one. That would be the easiest place to start, right? Because a lot of people have a day job. You don't want to spend too much time on the charts. So starting on the daily chart would be a good idea. And then from there, just, I'm not set on one or the other, trend or counter trend or breakout or whatever, but that would be for me the easiest place to start. And then look at what other traders are doing on that time frame, and then kind of like test that and then make it my own, right? But as far as trend or counter trend, I don't see one as being easier than the other one.
Yeah, I always, like, in my mind, I always had the counter trend as the hardest, because you'd be fighting, in some ways, you'd be fighting the urge to add some sort of martingale element to it. And some counter trend strategies or reversion to the mean strategies do have that. Like, they'll have a system where they'll take a sell and they're going to assume that it's going to fall back to the sell, because they think it's going to fall back to the moving average or the middle of the Bollinger Band or whatever they use, the pivot point, whatever. And then if it goes against them, they take another sell. You know what I mean? Yeah. And I was always really uncomfortable with that, that idea of taking a trade, being wrong, and then taking another trade. You know what I mean? It always seemed like too close to martingale. I mean, I know it's not officially definition martingale, but it, it had that smell to it. And so I always thought, ooh, these are tough. But I have heard, people that do this, the reversion to the mean, but they tend to stick to certain markets, because they find that statistically there are certain markets that sort of kind of hover around price, whereas other ones are more likely to trend and stuff like that. So I found that interesting. I thought, okay, that makes sense to me that they would do that. Yeah, in my mind, I'd always thought that would be the most difficult one to do, because it seemed to me that inevitably you'd have an upside down reward to risk ratio. So you'd have to be really, really right to have an upside down reward risk ratio, because I haven't been able to get any that I've tested, strategies like that, like reversion to the mean type strategies, where it works if you don't have a really wide stop, right? So to me, that means you got to take quick profits and you got to have big losses, and so that means inevitably a high win rate. So I was always uneasy in that world, but I mean, I'm sure there are a lot of people that love that. In fact, I think in some ways, as a beginning trader, when I first started trading, I was of the reversion to the mean mindset. Like, I remember thinking, when we were trading the euro and it was at 70 or 87 cents or whatever, and then when it broke $1, I was like, no, it's never going to get, it's going to go back under $1. They're not going to, and here we are 20 years later, and the euro hasn't gone below $1. Like, it's just funny. It's funny to me that I was thinking that back then, I thought, oh, it's going to, they'll send it back down. No way. Because when I first started trading, the euro was new and it was always under $1. It was actually in a permanent downtrend from if you go back and look at the old euro chart, it was actually, and they made a composite chart too that wasn't really it was what the euro would have been had the euro existed the year before. They also had that. But the point is, we were laughing as traders, like, the only thing you need to know about the euro is you need to sell it. That's all we knew. Yeah. And then when it broke $1, it was kind of like a mind bender for me. I'm like, oh, it'll go back down again. It'll go back down. And of course it still hasn't. So yeah. So it's your mind. It's your view of the markets that color what you think is easy, isn't it? I mean, it's just so interesting, I guess.
Yeah. My friend actually does pretty well with the counter trend thing. Like, that's his bread and butter trade. And that's what he learned at the hedge fund. Yeah. So what he does is he looks for like a major support level or whatever. And then he looks for overextended price. And then he has 4 levels above that. And then his stop loss. And then he sets the levels by using ATR. So then price will come up and maybe he'll take 2 of his entries. And then he's looking for a big, downside. So he's willing to hold it and have that big gain. So that works for him. But I don't think most people could do that. Yeah.
Does he take more trades if it goes against him? Yeah. Or does he just have this certain?
He has up to 4 trades.
He has 4 trades. So it'll go up and he'll sell. It'll go higher. He'll sell again. Higher. He'll sell again. Higher. So up to 4. Yeah. That's, to me, those are the only ones I think that would work. You know what I mean? And that's, to me, that's so tricky. It's funny. Like, I've done the opposite of that. I've literally done the opposite of that, where I'll take a trade, and as it gets closer to my target, I'll add another one, and it gets closer, I'll add another one. And I'm stacking them closer, as really tight, right before the target, like huge positions that are risking everything that came before it. It's the exact opposite of that. So it just shows you where my mindset is versus, your friend. So I just find that it's so interesting.
Yeah, that's a natural tendency, right? Like, especially with hedgers, they tend to like pile it up and then they're like, oh crap, I'm stuck, right?
Yeah, exactly. Yeah.
All right.
All right. Thanks, fascinating stuff.
Yeah.
Thanks.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Like there's this temptation to like pull your money right out of your hand so that you don't lose money for our collective good. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So, question. I was thinking about this the other day, and I don't know if you had much experience. I think you have actually a little bit along these lines of trading with other people. So my question is, when you're trading with other people, what are some of the things you have to think about in terms of, this is a psychology podcast, right? So there are some issues I think that will creep up that we may not necessarily anticipate. So for example, I'll give you some things that I've noticed. So for example, when you are trading with somebody else, there are a lot of ways to do it. It could be where everyone's sort of trading the same strategy, right? Which means, or same strategies, several strategies. So what that means is, of course, does everyone agree that this is a good strategy to trade, right? So the match between trader, right? And then there also could be situations, there are lots of situations. So in that case, you might have a system where it's like one person lives in one time zone and they're trading it during a certain session, and then you trade it during another, or whatever, or maybe you take certain markets and they trade other markets, but you're basically doing the same thing. There could be a situation where one person's kind of like the money person and the other person's like the trader, right? But maybe the money person knows a little bit about trading, which is why they found you or they knew about you in the first place. So that, there's the whole dynamics there about like a person who knows about trading, who's now giving you the green light to trade their money. What's the relationship there? Are they able to tell you, hey, why aren't you trading the euro right now? It's on a run, or things like that. And then also there's a situation where it's like people are doing different things. Like, I'll give you an example. So I traded a strategy where we were basically gaming the system, and you were essentially trying to make swap. Okay, so the swap that you get paid, and that's it, right? And it was going really, really well. Like we were on the best months, you could get like 7% a month, which is pretty good for just essentially getting paid to wire money back and forth. Because what you're doing is you keep wiring money to try and keep the trade open, right? So that's the game. And you don't want to get too greedy, because if you get too greedy, you get popped out of the trade. But if you're not greedy enough, then you're not going to make, 5 to 7% a month. So in this situation, we were both meant to babysit these open positions, right, on the accounts and collect the interest. Well, I had a trading partner who decided that he was going to take directional trades in our swap trading account. So you can imagine, right, the disasters. Anyway, the point is there are these issues when you're working or trading with other people where some people might have certain goals or certain perspectives versus yours. And how do you match those up when you're working with other traders? I think this is something really important, because I think sometimes people forget that just because you like somebody, you know somebody, and you respect their trading, doesn't mean you should be trading with them. You know what I mean?
Yeah.
Because there's a lot to unpack, right? So, I just wanted to get your thoughts on that, because I've had a lot of experience in this sort of thing, and I've seen a lot of different things, but I'd be interested to get yours because it's a minefield. It really is. It's like having a business partner, in a way. It really is, because if trading is your business and you're doing that trading with somebody else, it's like having a business partner, whether it's formalized or not. So I just wanted to get your thoughts on that.
Yeah, that's a tough one, right? I think, like you said, there's a lot of different ways you can slice it. You can be trading with somebody, you can have a money guy, you could be trading in a mastermind group, you could have a trading accountability partner. And I think the bottom line is that you should look for a personality match. Is it someone who you get along with, number one, but also you can be respectful to each other. You'll be both supportive to each other, and you'll be able to set and manage some boundaries from the beginning. I think that's really important. So like setting up, okay, hey, this is the account. This is not our directional account. We're doing swap in this account. So you got to respect that. And if they're cool with that, then great. But whatever they do after that, obviously is out of your control. But I think that's the number one thing to look for, right? Is a personality match and a respect match. Is that person not only respect, but also accountability? Is that person going to do what they said they're going to do? And if they don't, and if they've proven that they don't do that 1, 2, 3 times, then you find somebody else, I think. But I think that's the bottom line in any relationship. And a lot of those training groups or whatever, they can be a lot more trouble than they're worth, in my opinion. Mastermind groups and stuff like that, because everybody either has an opinion against yours and they try to beat you down about it, or if they're respectful, they might not be supportive, or they might be flaky. So I think it's actually pretty hard to find a group that's worth joining and trading with, at least in my experience. I don't know. What do you think about that?
Yeah, no, I agree. I agree. I think that's why, like, when you look at like the prop firms, that's why they have all these hurdles to let people in. They don't just let anybody in, right?
Yeah.
They'll usually make you qualify or pay money and learn how to trade through their strategies or their, approach, and then qualify. Like any group worth joining is always difficult to get through. If you think of any like university or company that you wanted to work for, whatever, it's the same thing with trading, I think. So yeah, I think the key is to have those, like writing a system. When you write your system, you have your rules from trade management, for risk, for entries, for exits. And it's the same thing with that. So like in my experience, one of the things we had to do is we had to just break off money and give it to the trader to trade aggressively, instead of allowing the trader to use the swap account. And also, let's say that you and I are trading together and I'm trading a trend trading strategy. So I follow the trend. If the market's trending, I'm doing well. If the market's not trending, I'm losing money. Okay. Or best case, breaking even, but probably losing money. And then let's say you are trading a reversion to the mean strategy. So when the market's trending, you're losing money. And when the market's just chopping around, you're loving it. Okay. So what can happen is, let's say we have 6 weeks of really strong trends. So I'm killing it. And then I say, hey man, how are you going? And you're like, not so hot. Yeah. And so there's this temptation to pull your money right out of your hands so that you don't lose money for our collective good. Mm-hmm. Right. But of course, what's going to happen next week is that the trends are over and then you're going to kill it. You know what I mean? So there's this competitive sort of, it's almost like when people are looking to invest in mutual funds, they'll look and see which ones are at the top and they'll invest in those. Well, those are due for a retracement, right? They're going to fall back into the middle of the pack. What you should really be doing is looking for those funds at the bottom and then sinking your money in there and hoping that that the markets change, that they turn it around, right?
Yeah.
But that's not human nature. So yeah, it's in some ways you even have to have rules for how are we going to pull the rug out from somebody? You know what I mean? Because it's easy for people to get thinking, oh, well, I'm the good trader here. Hugh's not even pulling his weight. Look what I've done since the beginning of the year. I've been killing it and Hugh's been just losing money. We need to get more money to me, or I should get paid more because I'm making money and he's not, it'd be this whole thing. There's actually the best example of this that I've seen in terms of leveraging this experience that you have when you're working with other traders, is where they had teams and they taught. So they had a leader, and the leader would teach each team their strategy, and the teams would compete. And so each week, each day, each month, they would see how well they were doing, right? Mm-hmm. And so the fund would allocate funds to each of these teams. There's 7 teams, and they would each get funds based on how their performance was. And the traders in the teams as well, they would be responsible for bigger accounts as they did well and followed the strategies and all that. So that was kind of cool because it was almost like a sports thing, you know what I mean? Where you're competing against other. And so it wasn't really, and everything was everybody knew what the rules were, how you would get more money to trade, how your team would get more money to trade. It's totally lined up. And of course the coaches were incentivized. They would get a chunk of the team's revenue, of the team's profits as well. So it was a really cool strategy. And so, it was different to if it would be a 2-person or a 3-person trading team because it was more well defined, and they even had like their team name and stuff, like mascot and stuff. You know what I mean? Like
they have jerseys and stuff.
Yeah, I don't know, maybe, yeah. So anyway, I just think like that's a way to kind of leverage that competitive sort of you're winning, you're losing, I'm winning sort of, you know what I mean? Like that sort of thing. Like if people are looking to do that, that model needs a lot of structure and everything. But yeah, so I just thought that was a really cool way of dealing with it, because when it's a small group dynamic, it's a little bit different. When it's like, no, it's your fault. No, man, it's my fault. It's like that kind of finger pointing and stuff. Yeah. So, but one thing I wanted to mention though that I forgot. So there's a way I think to get that criticism, but without the pain of the money involved, which is basically having a trading accountability partner. We've talked about this before, right? Mm-hmm. So one of the really cool ways of trading with somebody is to not trade together in the same account or the same pooled money, but actually just talk about how your trading went each week. So like on the weekend, you meet up with your trading accountability partner and talk about what you did well, what you didn't, let them go through it. So that's like a really good way of getting the critique aspect of a trading team, but without the friction of the money. And you know what I mean? You just have to be open and honest each week and share what's going on. So I think that's a really good way for traders to, to leverage that dynamic in a positive way, is to have someone that sort of critiques you and you do the same. And you're not critiquing them as a person. You're just, how well are you following, right? Your rules. So it's your behaviors. It's not you, the personality of you. So yeah,
I think that's really the best solution to like a trading group or any kind of support, because ultimately, even if you start with the same system, you're going to branch off and trade your own version of it. Worst case scenario, like when I hear you talking, all that's going on in my mind is ego. That's what gets in the way, right? Everybody's ego. They want to be the top dog. They want to be the highest performer. So if you can work with somebody who can put their ego to the side and just help you out and just support you, and you can do vice versa, I think that's the best solution.
Yeah, that's a great point. Yeah, absolutely.
All right. Thanks, Walter. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. What are you getting out of not following the plan?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, a YouTube listener, or I guess watcher, has a question. He asks, why is it so difficult for a trader to follow his written plan? What do you think?
Well, if you don't incentivize it, then why would you do it? So why is it so difficult to get people to follow the law? Well, it's not, because you're incentivized to follow the law. If you don't, if you go faster than we say you should go, then we can take your money, right? If you hurt somebody really badly, we can take your freedom, right? So if you're having issues following your written trading plan, then that's because there's no consequences, right? In fact, I would even argue that if you're not following your trading plan, then your life is set up to reward you not following your trading plan. You know what I mean? So do you know what I mean? Like it's like we'll fall in. Have you ever seen that thing where like they drop the balls and it's like a big, and they bounce off the little pegs and they end up in different slots and stuff? Yeah. Is that what it's called? Yeah. So that's like, I think of people like that. Like I think of myself and people like that, where you just kind of bounce and you just kind of go like with the flow, and the easiest path is where we end up, Mm-hmm. Like if it's easy for you to wake up in the morning and make some eggs and then read a book, you're probably going to do that. If it's just killing you, that that you're gaining weight or whatever, and you just you just can't stand the look of yourself, and in the morning you're not going to eat some eggs and read a book, you're going to go for a run, right? Or you're going to go work out or whatever, right? It's because the pain has motivated you so much that it would be more difficult for you to sit and eat breakfast knowing that you should be working out than for you to go and work out, right? Mm-hmm. And it's the same thing with your trading plan. So if your trading plan is designed in a way so that when you do the right things, you get rewarded with those things you like, and if you don't do the right things, you don't, or you get things that you like removed, or you don't get to do the things you like, then guess what? You're gonna follow it. I mean, it's really, I mean, I hate to be like over simplistic, but you can read the Charles Duhigg book about habits, right? I think it's The Power of Habit or something like that. So yeah, that's what I would do. Is I would, and we can put that book up in the show notes. But that's what I would do. Is I would design your life so that you will follow that path. Because right now, what's probably happening is your life is set up so that the path that you're on, that's the easy one. Like that's the one that's going to reward you, right? And that's why, like, I know we talked about in the last episode about like training accountability partners, but that's one of the things that when you have a training accountability partner and you know that each week you're going to have to say, okay, this is what I did. This is why I did it. This is what I didn't do. I know I should have done that. Like if you have that in the back of your head, knowing that in a couple of days, you're going to have to explain your behaviors right that you're doing right now, that's a big motivator too. That's a huge motivator. The observer effect, it's called, where you like know that somebody's watching you and that changes what you do. You know, like if you have a workout partner and, you know, I had one when I was in graduate school, my friend would knock on my door every morning at 5:30 in the morning. I knew he was going to be there. You know what I mean? So what am I going to do? Am I going to wake up, go down there and open the door and say, I'm not going with you today? Like he's in his workout gear. He's going to go to the gym, you know? Like, what am I going to do? So it's the same thing. Like if you know somebody is counting on you and they're going to look at, you know, they're going to watch you and see what you get. Are you going to come with me to the gym right now? I'm ready to go. So that sort of thing with the training accountability partner can really help. Those are my thoughts on how, you know, you can modify your life so that it's the path that you're going to take. What are your thoughts on not following a plan?
Yeah, I think there's also the awareness around what are you getting out of not following the plan? Because you're getting something out of that. That is stronger than actually following the plan, or you're getting more reward out of not following the plan than you are from following the plan for some reason. So, you know, be aware of what that is. Maybe it's the lottery ticket mentality. Maybe you think you think a trade is like a lottery ticket. So you're buying that and hoping it'll win. And that's more exciting to you than actually following the plan and, you know, getting the 63% win rate or whatever it is. So something to consider there also.
Definitely. Yeah, definitely. Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Good job. You're following your rules.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, we have a question here from a trader. The trader says, I want to avoid the fear of missing out, FOMO, as this causes me to break my strategy rules and I have bad results. All right. So my thinking along these lines is that if you are having FOMO, fear of missing out, so you're breaking strategy rules. So it sounds like there was an entry or there may be an entry, right? You don't have your entry yet, but the market's moving. So you're like, I need to get in, right? So in a lot of cases, like people have pullback entries somehow or whatever, right? Like the one that I trade, Tokyo Train, is like that. System 2 trading systems like that, where you're kind of waiting for a pullback to get in. So then you're breaking your strategy rules and you're getting bad results. Okay, so we know that the bad results are coming from breaking your rules, right? If you have strategy that you believe in, you've probably tested it, you probably have the numbers, you probably have some confidence in it, right? If you're getting bad results, you're saying, well, that's because I'm not following my strategy. So really what's going on here is this person is not following the rules, right? They're a slave to the emotion, the fear of missing out. They're a slave to this, oh no, I'm going to miss out on an opportunity. And they're not a slave to their rules. So the reality is, if you want to change your results, assuming you have a strategy that makes money, we don't know that that's the case, but let's assume that what you need to do is set up your life so that you are following your rules is the only thing that makes sense, right? Because right now, what makes sense to you is following your emotions, right? Not following your rules. So what you need to do is get away from that and move to a situation where you know that if you follow your rules, you will be rewarded. If you follow your rules, you will have a trading accountability partner or someone who looks over your trades every week, whatever, that says, good job, you're following your rules, even if you lost money that week, right? Because that can happen. You can definitely have a week, especially if your win rate is anywhere around 50% or less. It's quite easy for you to have a losing week depending on how often you trade. So yeah, so I would just say this at the core is emotional trading. And then it's kind of like this weird blame game where we blame it on, we're having bad results because we're not following the strategy. If I had just followed my strategy, right? We don't know that, because you could follow your strategy and still lose. You could follow a bad strategy, right? That doesn't make money. But in this case, it's just kind of assumed that that's what we have. So that's kind of my thinking for this trader. What are your thoughts on this fear of missing out issue?
Yeah, the thing that comes to mind is something you mentioned before in a previous episode on thinking like on a long enough timeline. So if you said gamblers think on a long timeline, right? They're not so concerned with the current bet. They're concerned with how am I going to perform over like 10,000 bets or 1,000 bets, or whatever it is. And I think this is a similar situation where, you have to trade enough so that your advantage plays out. And if you don't do that, then you're always going to be at the whim of your emotions and what looks like a good trade at the moment, but isn't part of your system. So I think if you can think in a longer time frame, you think about, okay, on a long time frame, if I don't follow my rules, I'm going to lose money, right? And if you follow the rules, then you make money. So I think thinking that way helps a lot.
Yeah, that's a really good point. I've been testing a strategy over the last 3.5 months or so, where it had a really nasty drawdown, and I was like, it trades almost every day, right? And I was like, but I was thinking in terms of the long term. I said, I think it'll probably pull out of this, and it is interesting that study where they study the best gamblers, that they look at like they look on a really wide horizon and way out into the future. The thing about trading, though, or even gambling, I guess, is that once you look in that really long term, you realize it doesn't make any sense to take huge risks. You know what I mean? That almost becomes like a rookie mistake. You know what I mean? Like, because I remember the first time I got some traders together and I was gonna like give them a crash course in trading, right? I had to, because I just got out of break-even trading. So all of a sudden I'm an expert, right? But one of the things they said was, like, what are some risk management tools that you know of, or risk approaches to risk management? And you know what they said? They said, well, if the trade looks really, really good, like it's going to be a winner, then risk more. And that blew me away. Even then, I was like, you know what I mean? So that's like that kind of thinking just goes away when you have like you were saying, the long-term gambling thing, where it's like you're going to live for thousands of years, and then how would you operate then? Because then that if you have a really small edge, you're going to make a lot of money, like a casino, right? Mm-hmm. Casinos have these really razor thin edges, but they make a lot of money. And why do they make money? Because they just get people that go through the system and they're skimming off that little bit, like the slot machines that pay out 98.5% or 97.2% or whatever it pays out. So every dollar that goes through there, 97.5 cents gets spit back out one way or another in the form of jackpots, and they just take that little bit. Well, it's the same with your trading strategies, right? If you're thinking of the long term, you go, who cares if I keep, ending up with these little tiny wins and these little tiny losers, and once in a while I get a big winner or whatever. If I add it up over time, over years, you're going to see a big fat result, because you're compounding and all that sort of stuff. So yeah, it's a really, really good way to look at things. It changes everything. It really does. When you start thinking in terms of long term, there are a lot of really good habits that come to the forefront when you do that. Whereas, the crazy gambler doesn't think long term. They just think the next bet, right? Oh, this is a sure thing, right? Yeah. So they do that. Yeah.
Bet everything. I think it also helps to think about that in your real life too, right? Like if somebody yells at you on the street or something, or if somebody honks at you in a car, like in the long term, that doesn't really matter. So why are you going to get bent out of shape over that guy, right? He's just an ass or whatever. But I think it helps to look at it that way too.
Yeah, that's a good point. And they could, maybe their dog died that morning or something. Like you don't know. You never know what's going on in their life too.
Yeah. All right. Thanks, Walter. All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
You can be a really good trader. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader, and this trader writes in and says, my biggest trading challenge is that I want to become an expert trader and to know when to enter and when to exit trades. So that's where he's coming from. And my question to you is, what do you think about that? What do you think about this goal of becoming an expert trader so that you know when to enter and when to exit? What are your thoughts on that?
Yeah, I think that's everybody's goal, right? When they get into it. That's not uncommon, obviously, but I think some people put too much pressure on themselves when they say, well, I want to be an expert trader. The first step is to see if you like it or not. Do you really like trading? Do you enjoy it? Do you really want to be doing this for a while? And then the second step is just to learn the steps, learn the basics, go read some books, learn a few trading strategies, test them out, get some data on it, and then kind of go from there. And all you really need is one trading strategy, right? So I think that's a big thing to consider, and saying that you want to be an expert might be putting a lot of pressure on yourself. So just take the steps one by one and then see what happens. And then the second thought would be, you might not need to have like exact perfect exits and entries. There are different trading methods where you can kind of scale in, scale out, and most of your trades are so-called wrong, but they're in a general area where you can make money later on down the line. So don't put too much pressure on yourself to have an exact entry and exit, because there are methods that have a little bit more of a gray area. So that's my thoughts. What do you think?
Yeah. I think you're kind of right on the edge of where I wanted to go with your last comments. That's exactly what I was thinking, because thinking back to when I first started trading, I used to think that you had to sit down, and as a trader, you would sit down, you would look at the charts, and you would know it's going up or it's going down. You know what I mean? It was a prerequisite. If you're a trader, the prerequisite was that you must know at any given time, where is the market headed, right? Okay, and I think that's kind of built into this question. So I think you're kind of picking up on the sort of the same idea that I was thinking. And I could be wrong, but I think what this trader is saying is that I have no idea when I sit down and look at the charts where it's going. So I need to know, right? I need to become an expert, right?
Yeah.
I disagree. I totally disagree with that idea, because I had that idea where we would sit, I literally would call my trading buddy. We would get on, it wasn't Zoom back then. It was like Skype or something. It was Skype. Yeah. We would get on Skype, and we had the same, I don't think we screen shared. I think we basically had the same screens that we could log into, so we saw the same thing through the same template, the same, indicators and everything. And our question always was, okay, where do we go? Do we buy or sell? And we were trading the pound yen every day, at the London Open, basically. And we did that back with the euro too, when we first started trading in 2001, when I was trading with him. So, I think that's the wrong way to look at it. And I could be wrong, but almost every really good trader I know has this same sort of outlook which is, I just sit and wait until there's free money over there in the corner, and I go pick it up. Right. So you're almost like that lion that waits in the tall grass until there's like some weak little water buffalo, and then you pounce on it. Right. That's kind of what I view trading as, And so I don't think that you necessarily, as an expert trader, would need to know when to enter and when to exit, which gets into the other sort of subtle thing that you were touching on too, which is you can be a really good trader. And I know you said this, and I'll say that basically in a different way. You can be a brilliant trader. You can make piles of money. You can change your life. And you can also think, I really screwed that trade up. And that can happen all the time, because you might have a trailing exit that popped you out of the trade before it went another 500 points, or 500 pips or whatever, right? You might have a really good system that makes money, but you feel bad. I'll give you an example. Yesterday, I took a trade on my system. I put the orders in, and the orders are triggered or not. I was kind of high-fiving myself because I had several days in a row, that were going well. And I was like, yeah, and I saw that it was probably going to click in during Asia. So I'm like, yes, another day, and of course, what did it do? It just barely clicked in my 3 orders and then went, and then stopped all 3 orders out, right? Made nothing on the day. So the worst possible result, other than getting gapped on your stop or whatever. So it was like the worst thing. But I don't look at that and say I did anything wrong. Like all my numbers, everything pointed, the system is a straddle, so it'll take a buy or a sell, but it took a buy in this instance, and I anticipated it was probably going to be a buy, and everything was looking good because from the buy side I've been making money, and then it just collapsed. But that doesn't, I don't take that personally. You know what I mean? And when I take trades, a lot of my discretionary trading, I have 2 targets or 2 ways to get out of a trade. I split it up. One of them has a target and one of them has a trailing exit. So that way I kind of trying to be always right. So if it really goes in my favor, hopefully my trailing exit will make me a big pile of money. If it doesn't go, it just goes a little bit. Hopefully my target will be hit and I'll make a little bit of money, right? And it'll, you know what I mean? So I don't know. I literally, most of the time I look at the charts and I think, I have no idea where the market's going to go. I have a couple of hypotheses. It could go do this and go up. It could do this and go down. It could do this and go nowhere. I have lots of ideas about what could unfold, but I don't have to be married to anyone. So I think this idea that, because you look at the charts and you don't know what's going on, you need to learn more. You need to become an expert. I think that's incorrect. I think that in a lot of ways, and you've talked a lot about this on our podcast here, understanding yourself and humbling yourself and open to new information is really important as a trader. And so I don't think that expert traders necessarily know when to enter and when to exit. They might design rules where to enter and where to exit. That doesn't mean they're always going to feel like those were the perfect rules for every sort of trading environment and every trade that unfolds. Because I certainly don't feel that way. I'm always looking how would this be different? And that, that's a slippery slope that you can get into, and over, curve fitting and over designing your parameters so that they work really well on the last trade. And we've talked about that as well. But I think the main thing is what you hit on, which is you don't necessarily need to know where the market's going. And you actually don't need to necessarily have perfect entries and exits. You just need to have something that's good enough to extract profits, right? And then you work on the next system, right? You work on another one that's complementary. So one system works really good in trending environments, and the other one works really good in, tight range bound environments and that sort of thing. So I would just caution anyone who thinks that you must know where the market's going to become a profitable or expert trader, and that you must know where the perfect entry and the perfect exit are, because that's not true. It's just not true. You just need good enough. And in fact, getting to good enough is usually the type of strategy that will work in a lot of different markets, right? One of the signs that you're overfitting, you're curve fitting, is that it starts to break down in certain situations, right? Like maybe it works really good on, the Euro USD, but it doesn't work so good on the Aussie CAD. So it could be, now it doesn't necessarily have to be, but it could be that what's happening is you kind of, using the specific moving average or the specific Bollinger Band settings, or, whatever you're using indicator wise on that kind of fits that particular market, the Euro USD, and doesn't work when you're looking at other pairs or the market. So yeah, those are my main thoughts, is that, there's a lot to unpack. It's a very simple challenge that this trader has laid out there, but there's a lot in there, and a lot of sort of deep and dark roads that you can go down and get stuck in for years. I know, because I've done it. Yeah.
Same here.
Yeah.
And to extend your idea of you don't need to know where the market is going to go. If you look at hedging, now hedging isn't for everybody, obviously, but our friend Gonzalo, right? He was talking about hedging at the conference, and in that method, you don't need to know where it goes. You just you could close your eyes, enter a trade, and then you would just manage the trade on both sides, right? So I think that's something to consider also, look into that, not necessarily trade it, but look at the concepts behind that, and the fact that you really don't need to know exactly when to enter and exit.
Yeah. It really frees you up, doesn't it, when you start thinking that way?
Yeah.
That style of trading can really remove you from it kind of removes the ego from the trade, which is interesting. It's a very interesting way to trade, given that so many of us are stuck. Our ego is tied to each individual trade. So it's it's a referendum on how well do you trade every single time you take a trade, what are you going to do here, buddy? Are you going to pull this one out?
Yeah.
But it changes when you start trading like you say, like Gonzalo. Yeah. Yeah.
Okay, cool. Thanks,
All
Walter.
right. Yeah.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Your confidence and you get to that point where you're like, okay, I know what's going on here. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader, and the question is, what's your biggest challenge? And he says, I'm trading a small account and I need to see more profits, more consistent profits. So that's what I need because I'm trading a small account. And the question about if you wave a magic wand, what's the one thing you would change about your trading? He says, I need confirmations before entering a trade. Okay. Mm-hmm. So what are your thoughts about this? Unpacking this idea of trading a small account and needing more consistent profits, and also needing confirmations before deciding to step into a trade.
Yeah. So reading between the lines, it sounds like he's trying to make a living with a small account. That's what he wants. But just my opinion on that. But even if you have a big account, you still want consistent profits, right? So I think this is a case of somebody who wants to be very sure about the outcome of the trades, and they want like high win rates. So in that case, you'd probably look for like a high win rate trading strategy. And you can never have like 100% confirmation. So you have to, again, go back to your system and lean on those statistics, your win rate, your win versus losses, and all that. And just take it from there, because the more trades you take based on that system, the more profits you'll probably make. So I think that's the way I would slice it. Maybe I'm reading that wrong, but that's the way I see it. What do you think?
Yeah, I think those are really good points. I agree. I think, that thing about the thing that I wish I could change about my trading is that I need confirmations before entering a trade, and then couple that with I need more profits consistently. Yeah, I think this is a confidence thing. I think this trader is looking to add more indicators or more confirmations, more reasons that this trade is going to be, working out for me, because he's feeling under the gun trading a small account. Again, this is all, like you say, this is sort of reading between the lines, trying to figure out what's going on here. But if I had to guess, I would guess that this trader is feeling rather lower confidence because he's under the gun trading the small account, wants to really build it quickly. And so I would caution. First of all, I wouldn't be trading the account. I would be trading demo or even in a simulator like Forex Tester or something. And I would be trying to, as much as possible, trying to build up your confidence without risking money. And so if you're trading a small account, you might even want to trade with smaller accounts. So once you go through the simulator and build up your confidence, and let's say a small account's like $5,000, he might actually want to trade like a $500 account, 10% of that first, and just get good at executing first. As you know, and most traders probably know listening to this, when you're deciding about a strategy, you end up usually on one end of the scale or the other. On the one end of the scale is you have really high win rate, but lower reward to risk ratio, which means you got to execute really well or you screw it up. Your execution, the wiggle room for execution is really tight. And if you get slipped by your broker or anything like that, you're going to be screwed. And so and think about it in terms of like, if you had a strategy where you were buying and taking 5 pip profits, right? It's real easy to see the market go 5 pips in your favor, right? It's really easy to accumulate those. But as soon as you get slipped, or as soon as the market goes hard against you and stops you out at, a 25 pip loss, you've lost 5 winners then, right? So that's kind of the one end. And the other end is you have the lower win rate, but you have a higher reward risk ratio. There's a little bit more room to kind of screw up on your entries and exits. And the broker can't do so much to screw you over on these sorts of strategies typically. So it's a little bit, quote, easier to deal with in the execution of it. The problem is psychologically, it's damaging when you have a 20% win rate. And you know that, chances are 4 out of the next 5 trades you take are going to be losers. That's kind of where you are. Now, I know people will write in and say, well, I have this strategy that's, it's got an 85% win rate and a 10-1. I'm like, yeah, that's true. But those trade like once every 5 years, right? Yeah. There are those strategies out there. They totally exist. I've seen them. I've traded them, but they literally trade once in a blue moon. So, okay, fine. good luck with that. You know what I mean? I mean, good luck. I'll see you when you're 100. See how you've done with your 5 trades, Yeah. So, but anyway, the point is, I think that's exactly what's going on. I think you've clued into it too. I think it's this idea of, I'm really under the gun trying to make a living on this small account. And so I need more confirmations so that I can get my win rate up. And I think that's the wrong way to do it. I think you need to build your confidence organically by getting trades under your belt and understanding that any given trade is just a crapshoot. It's a coin flip. It's a loss or it's a win. It has nothing to do with you or the number of indicators that you slap on your chart before you decide to take the trade. It really doesn't matter. So yeah, that's what I would do. I would focus more on building up your confidence. And I know this is not what a lot of people want to hear, but it really is. It's work, just like any other job. You build up your confidence and you get to that point where you're like, okay, I know what's going on here. I have confidence that, my 48% win rate is good enough. That's going to work for me. So yeah.
Yeah. I mean, that's not the sexy answer, but like, that's what it is. It is what it is. And I think also if you don't trade your live account or your entire live account, that also gives you opportunity to add more to your account from other sources, like your job, or maybe you take on a side gig or you have a side business or something, and you can build up your account that way while you're testing, while you're doing all this demo trading. And that allows you to have a bigger account later on when you're ready to go.
Yes, exactly. That's right. That's exactly right. Yeah. You kind of want to it's kind of like with like running a race, right? You kind of want to run the half marathon where the second half of the half marathon, you're like gaining speed, You want that negative split, as they say, right? You want that. And it's kind of the same with trading. Like you want to get to that point where right about the time you're on the home stretch and you're going with your live account, you've done all the work. Your confidence is at peak high. You've taken so many hundreds and maybe thousands of trades. You're at that point where you're ready to go live, and you're ready. You are confident. You are ready. You understand it's a normal curve of trades. Yeah, we all wish we could have the ones on the long tail that are the big winners, but you know what? That's how it's going to be. Most of the trades are going to end up in the middle of the curve, and that's how it's going to go. And so you kind of want to. It's just like running a good race. You want to be on the home stretches where you really want to be hitting your stride, and that's where you want to be at the point where you're at peak confidence and you're ready to go live and just turn it on, man. Flip the switch. That's what you did all this work for, right? Mm-hmm. Is getting to that point. So yeah, so I would definitely agree with that. Yeah.
Cool. Awesome. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Just because they've traded it that way the whole time doesn't mean you have to trade it that way.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here from a trader, question that came through. The question is, if you could wave a magic wand and change one thing about your trading, what would it be? And this trader, he says, it's really about accepting my losses. Now, I think this is a really interesting concept, because the way I look at accepting losses is that what happens sometimes with trading is we believe that our ability as a trader is tied to our win rate, or our value as a trader comes from the last trade we took. And so there's a whole lot of energy that goes into explaining why the last trade didn't work, and maybe modifying, our system so that future trades don't end up in the same loser category as the last one, and things like that. I think our ego can kind of get mixed in with the strategy, and that can lead to some tricky decisions that probably in most cases shouldn't be made. But I'd be curious to get your thoughts on that. That's kind of my thinking about accepting losses, is that I try my hardest, and I explain this to my training students. You should be at the point where if you have a losing trade, there's only one reason why that happens, and that's because it was the luck of the draw. It was bad luck. Mm-hmm. So you flip a coin, it lands on tails, you lose. It lands on heads, you win. And I know that's oversimplifying, but that's basically trading. If you've done everything right, if you've executed exactly as you should, the only reason why you have a loss is bad luck. It shouldn't be anything you did, anything that was wrong about how the way you analyzed the market or the way you did this or that. Nothing to do with you and everything to do with luck. And if you can get to that point, what happens is you kind of remove your ego from it and you just focus on the thing you can control, which is the execution of your strategies. And so I find that to be most freeing. But I'd love to get your thoughts on this idea of how do I start to get to that point where I can accept my losses?
Yeah, I totally agree with you on the ego part. Like that's all it really is, right? Is our ego fighting back and saying, oh, you're wrong, you're dumb, you messed up or whatever. But yeah, like you said, in reality, it's just luck of the draw, playing the numbers, playing the odds. And I think a lot of it also has to do with just getting used to losing, maybe going through Forex Tester or demo trading or whatever, and just kind of like exposing yourself to that and being okay with that and just kind of doing it over and over and over again so that you get acclimated to it. And I think that's really all it is.
Yeah, it really is, isn't it? I mean, it just comes down to, we feel like in life, so often you feel like if like you're trying to win a race and you don't win the race, right? So what did I do wrong? How can I get faster? Or, you try to get that promotion at work or whatever, and you don't get it. And so you think, well, what could I have done differently? So you're always kind of, as humans, like think about it. Ants have been making ant hills for, I don't know, thousands of years, millions of years. They've been making these little ant hills, and they're probably pretty much the same. Like the ant hills that were made 2,000 years ago are probably about the same. But as humans, when did we invent the car? Like in the 1800s or late 1800s or something? And look at how far they've changed. Like we're always thinking of ways to improve things. That's just the way the human mind works. And the same thing happens with trading, isn't it? Where it's like, how can I make this system better? How can I make this car better? How can I make this fan better? I mean, we have fans now that don't even have blades on them, right?
Yeah.
It's so crazy how humans are. Like they're so insane the way that we improve things, and we're constantly looking at ways to make them better. Whereas, if we didn't have so much of that mindset, I think that would kind of help with the idea of, accepting losses and really trying to focus on those things that you can control, which is being the best executor of your trading strategies as possible. So it's one of those spots, and there are many of them in trading, where our instincts or the way that we're built, it kind of goes against what we really need to do in trading. A lot of the basic instincts we have as humans works against us when we're participating in the market. So it's a tricky
I think
thing.
at a certain point you have to say good enough, right? That's good enough. I did everything I could do, and that's the way it's going to be. So let's just move on and not think about it too much.
Yeah, and actually that brings up a good point. I've seen systematic traders who like make automated strategies. They talk about how, like, let's say you run optimization and you go, oh, the best moving average to use for the strategy is the 23 exponential moving average, right? They say you shouldn't use the 23. If that's the best one, you should actually use something close to like the 20 or the 25 or whatever, but don't use the 23, right? And it's kind of this idea of you want to get used to the idea of using good enough, because whatever was best for that strategy back the last 5 years is not going to be what's the best going forward, right? So you're always going to be chasing, history, so to speak. So yeah, I think it's interesting when you hear systematic traders talk about that, about kind of like what you're saying, like using what is good enough. Like it's good enough to work, but it's not like the ideal thing, because you're always going to miss on the ideal thing. We don't know how the markets are necessarily going to behave over the next 5 years. Yeah,
that's an interesting concept. So
yeah,
would they go back and test those, or would they just put it in like a live environment?
Yeah. So, well, from the books that I've read, right? So what they say is like you run the optimization, you go, okay, which one is the most profitable? Oh, it's the 23 moving average. Okay. And then what would the 24 give you? What would the 25? What would the 22 and the 21? And they would look at it like that. And as long as they're all pretty much profitable, I mean, not everyone says it, but some of these guys will say, don't use the optimized one, just use one that's good enough, because you don't know. Like, it's not going to be the 23 the next 5 years. There's just one thing guaranteed. If it worked 5 years on the 23, the best, and that made the highest profit, it won't be the 23 the next 5 years. It might be the 20 or the 26 or something, but it's not going to, you know what I mean? So I just found that an interesting idea, because it kind of forces your brain down that path, right? Of not over optimizing, and of good enough, which is what you said. Like, it kind of clicked that in my mind. Like, the good enough idea. And I think I try and do that a lot with simple trading strategies. Some people look at my strategy and say, you don't have enough. Like you're overlooking, you know what I mean? Like, what about, yeah, you don't have enough. Like I took the Ichimoku and I stripped like 3/4 of the stuff off the Ichimoku, right? Like Ichimoku traders have told me, oh, this can't work because, you're not looking at this line and then all that stuff like that. And I'm like, well, I don't know. It works for me. I mean, it's pretty simple. You just using price crossing over, one line, you know what I mean? So yeah, it's just, if you can get to that point where you're okay with good enough, you're okay with simple, it just, the fewer degrees of freedom you have, the less likely you are to overfit and curve fit and get to the point where you're not really going to have something that works in the future. So yeah.
Yeah, interesting. Yeah, my wife told me a story recently that kind of goes what you're saying right there. She said that I think California has asked if they want to remove the daylight savings time, right? Like about 6 or 7 times, and every time they've said, "Oh no, let's keep it." And the number one reason was because it's always been that way. So like you're gonna wake up 1 hour earlier, 1 hour later, you're gonna mess up your whole schedule just because it's always been that way. And I think that's something to consider, like with that Ichimoku example, right? Like just because they've traded it that way the whole time doesn't mean you have to trade it that way. And I think that's something that people should really look into and experiment. And you're just as smart as any of the other traders, so don't sell yourself short.
Yeah, that's so interesting. Yeah, I've seen similar things where they say, like in Quebec, they were voting to become like an independent country or whatever, like a independent from Canada. And they just missed, like 49% voted yes, right? But 51% are like, we've always been part of Canada. So, even though we speak, I mean, everyone's supposed to learn French in Canada, but it's kind of, and in Australia, it was the same. Like Australia was going to vote to be a republic and everyone thought it was going to pass, right? Like all the polls said, and this was years and years and years ago, but everyone thought it was going to pass, that they're becoming a republic. Like it was baked in the cake, right? And then when it came time to vote, everyone was like, we've always kind of had the queen and, we'll stay with the Commonwealth, So it was really it's really interesting, like that momentum for, tradition or whatever, where you kind of like, it's always kind of been that. That's the, there's a cognitive bias, status quo bias. Yeah, status quo bias. That's what it's called, where it's like, it's always kind of been this way, right? That's how we always do it. So yeah. So interesting how we get into that. We get into that mindset so easily.
Yeah. And I think it really is in a lot of those cases. It's really a case of that generation has to pass away, and the next generation has to make the change. Otherwise, there's just too many people who are in that camp, right? And I think in our own minds, we should be aware of that. How are we giving into that tradition bias or whatever it is?
Yeah, I think that's a good point. Like I think eventually, like how on your phone you can choose different rings on your phone. And that ring that's like the old phone that was like the old ring, like that'll eventually go away, right? Because there'll be no one alive that knows what that means. So all the phones are gonna have all these jazzy ching 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 ching, all these rings that sound like that, and there'll be no more option for the ring because nobody even knows what that like. What is that? Yeah, it's funny. All right, Hugh. Thanks.
All right, cool. Thanks, Walter. See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
What casinos do, right? Casinos don't kick you out of the casino because you won. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some good day trading psychology tips? The psychology with day trading is quite a bit different from other types of trading. So what do you think? What makes day traders successful?
Yeah, that's a great question. So I'm working with one right now, and she's pretty good. But there's a couple of things that come to mind. As I see it, taking a step back, and actually Adam Hartley talked a lot about this at our conference in London, where he was talking about trading the lower time frames. And this is the reality, or I believe this is my reality. What I believe about trading is that when you trade at higher time frames, when I say like higher time frames, like 8 hour, 12 hour daily, weekly, you have some advantages. one advantage is you don't have to be really, really spot on with your execution, because generally speaking, you're going to have really wide, like really far profit targets. You're going to be making hundreds of pips in many cases with those higher time frames. So if you get in a pip or two off of the ideal price, or where you quote should have gotten in, you're okay. So the higher time frames make it easier in that sense, that you can be a little bit sloppy and still be profitable. If you're trading the lower time frames, that's not the case. If you're trading the lower time frames and you're sloppy, you don't have to be that sloppy to go from profitable to not profitable, right? And same with your broker. Your broker can slip you, and which is typically what we see in the retail world, especially in Forex, where you will be slipped. And when you are slipped, it's just eating away from your profitability, unless you do something to anticipate that or counteract that. So I just want to get that out front. I think it's better for most traders to start with the higher time frames, and if they wish to trade the lower time frames, eventually work their way down there. That is usually the path of least resistance, right? However, the advantage, and Adam talked about this at the conference, is that when you're trading the lower time frames, you actually get instant or near instant feedback. If I'm trading the 5-minute chart, I'm going to know within a half hour whether or not that was a really good trade and how well I did in terms of that trade. That's not the case when you're trading the daily, right? It may be weeks before you know. So there's that. And then it's kind of like they say, money amplifies your personality. So if you're like a really greedy, domineering person, and then you have the money, which is basically the power, that enables you to be more domineering and more greedy, right? You know what I mean? Kind of amplifies. And that's sort of what goes on in the psychology aspect of trading, I believe, when you're trading the lower time frame. So if you have a problem with revenge trading, in other words, you have a trade and it's a loss, so then you double down on your next trade, take twice the risk to make back, those losses from the previous trade. Those sorts of things, if you're doing that on the lower time frames, because you're getting this instant feedback and you're finding out immediately how good that last decision was, that's really bad. And you don't need me to tell you that. That's a tough thing to do, to overcome. All of those psychological things are going to bubble up, and you're going to have to deal with them right away. The advantage of trading the daily charts or the 8-hour charts is you don't have to deal with those emotions right away. You can actually put it away and say, all right, I will deal with that later. I understand that I have these feelings of revenge trading and all that. So this is a long-winded way of saying the best traders for the lower time frame in terms of psychological makeup, temperament, all this sort of thing, I believe are those people who are extremely self-disciplined. In other words, people who are trained as athletes, make really good, people who are collegiate athletes or even professional athletes. It almost doesn't even matter the sport. It could be, what do you call it when they have the bows and arrows?
Archery.
Archery, yeah. Archery or, running or whatever. It doesn't really matter. If you have that mindset of like you're very, motivated and and regimented and you have a schedule and things like that. Because one of the problems with trading the 5-minute charts is with Forex, you can trade it all the time, or cryptos, you can trade it 24/7, right? So you're all like, it's always there. So you need to have that specific time where you set aside, okay, this is what I'm going to do. So this is my long-winded way of saying, if you're thinking about trading the lower time frames, you need to be concerned about all of those trading issues you have, because they're going to come up quickly and you're going to have to deal with them. If you are not disciplined and regimented in your approach to your trading, those will come back. Those will hurt you badly. So it's almost always, in my opinion, recommended to start higher and then go down to the lower time frames. It doesn't mean you can't do it. I'm not saying you can't do it. I'm just saying it's easier if you get the fundamentals down and then, on the daily chart, and then work your way down to the 1 hour and the 15-minute and so forth, right? And that's what we've seen over and over again. It takes a special type of person who's highly disciplined and self-motivated and regimented who will do that. And that includes taking breaks. Because it's so psychologically exhausting, it means that you need to have time off. Like I've talked many times about the couple I know in Spain, and they take the summers off, right? So they trade the 1-minute Euro chart every morning in their own little offices in their house, and they do it for 3 hours every London Open. And then at 11 o'clock London time, which is not the same. I think Spain actually is on a different time zone
more than whatever. It doesn't matter. The point is, and then they go and sail all in the Mediterranean. They go in the sailing all June, July, and August. They are not trading. So they're not trading most of the day. They're trading for 3 hours, and they've got a good 3 months vacation to look forward to every year. And that's the kind of thing I think that makes sense. If you're going to be really intense and trade those lower time frame charts, you need to have some sort of schedule like that where you have your runs or your walk with your dog or your workout at the gym. And you know what I mean? It kind of fits in your schedule. It can't be something that's just always lying around, kind of encouraging you to come over and have a look, sort of thing. That's bad news, right? So those are my thoughts. What are your thoughts on it?
Yeah, I agree. I would add one thing. Another thing I noticed is that people who are good at day trading are pretty good usually at not thinking about the past, not dwelling on the past too much, and just going forward and saying, okay, I didn't do so well that day, but today's a new day and I'm just going to do something. I'm going to do my best again. So I think that's another thing to either cultivate, or if you have that, then that might make you a good day trader. But I think a lot of times it can be easy to get really wrapped up in your trades, wrapped up in losses, wrapped up in trying to make a lot of money quickly. So I think that's another thing to look at. Just, if you're not the type of person who can really let go of things easily, then maybe day trading is not for you. Like you said, start on the higher time frames and then kind of work your way down until you get to a point that's really comfortable.
That's a great point. What you said reminded me of, there's a guy named Peyton Manning, which people may not know outside of the US, but he's like a famous American football player. And he said that what he learned from his dad, who was also a pretty famous American football player, was that he had to reset after every play. And I think it's exactly what you're talking about. Like he said, you have a bad play, where you throw an interception, which is when you throw the ball to the other team. He said it was always about going back to the sideline and resetting, right? And if you look at the really good Olympic athletes as well, like the divers, that do the spins and stuff in the air and the twists and all that, that's the same thing. Like if they have a bad dive, they completely reset. They let go of that and it's over because there's nothing they can do about it. The judges have scored it and they're on to their next dive. So in another 15, 20 minutes or whatever, they'll be their turn to do the next dive. And it's all about the reset. So I think that's a really good point. People forget, you can't do anything about what's happened, right? You can't, there's nothing to do. It's done. It's sealed. So all you can do is put all of your energy, focus, and attention on the next decision that you have to make, the next execution that you have to make. That's where you have your power. Your power is always on the next trade. It's never on the trade that's been completed. Now, an open trade's a different idea, right? Like an open trade, you still have a bit of like, you know what I mean? But when it's done and it's locked in and it's a loss or a win or a break even or whatever, that's it. There's nothing you can do about it. And that's, you're right. A lot of the big problems that come up for traders is the fact that we're always kind of tweaking based on what happened in the last couple trades or the last trade in particular. So yeah, so the reset, I think that mentality of the reset is key. That's a really good point. Yeah.
Yeah, I think basketball players are probably the best at that, right? You watch like Steph Curry or LeBron or whatever, they'll miss like 5 shots in a row and then they'll still keep coming back and then they'll hit like, 5 more in a row. So
yeah, that's how, that's how I was testing a system last year. I'm still testing it. And when I started testing it on a live account, small live account, it kind of went up a little bit and then it went down and had a nasty drawdown for like, I don't know, 4 weeks, 5 weeks. And it trades not every day, but 3 times a week. It could trade every day. There's an order every day, but it usually trades about 3 times a week. So, it trades fairly often. And well, for me, it trades fairly often. And what was so interesting was I wasn't even like, because I had done my back testing on it, I wasn't concerned about the drawdown. I mean, I was looking at it, I noticed it definitely, but I did, you know what I mean? I just kept putting the orders in every morning, put the orders in, and now here we are. Well, now it's up nearly 48% or something like that since November. So November to March, whatever that is, 4 months or something. It's something like that. Yeah, it's about 9% a month, or a little bit better than that. So yeah, I mean, it's pretty crazy that if I had let my emotions run, I would have shut that trade system down after about 5 weeks. I would have said, "Oh, it doesn't work. It's at a 21% drawdown. Blah blah blah. This is terrible. Blah blah blah." But because I just kept chopping wood, keep going, now I can see it's probably going to have a pretty good year. We'll see. I mean, we got ways to go, but I'd be really excited to see what it looks like a year, in next November. This year, when we get to November, which currently as we record this, it's like 8 months away or 7 months away or whatever. I'd be really curious to see where it is in a year, because I know there's going to be another drawdown. Just because we're at equity highs now doesn't mean we're not going to have another drawdown. We probably will over the next 3 weeks, most likely, But but that's like you say, it's just that mentality. Keep taking shots, and that's what casinos do, right? Casinos don't kick you out of the casino because you won, right? Like if you're not cheating, if you got lucky and you win, they want you to come back. Why do they want you to come back? Because they have the odds in their favor. They know that as long as you keep playing blackjack, you're going to lose, or you keep playing roulette or whatever you won on. They want as many of your plays as possible, because the more plays you give them, the more likely it is that they win your money. That's why you get free tickets to the casino, right? Free suites and stuff like that. So yeah, it's the exact same thing, and it's a great way to look at it. So I really think if we can just make that mindset as traders, a lot of good comes out of that. So
yeah, totally. All right, thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. Nobody's going to be perfect. Nobody's going to be exact, but I think it's good to take in these ideas and see how they fit in your paradigm. And
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, this is kind of a philosophical question, but I think it fits in with psychology. I think Jung and a lot of other psychologists, they thought that there were probably like 3 parts to the human mind, right? What do you think about that and how that applies to trading?
Okay, so I may say something that's going to be kind of weird, but I think that all sciences are fairly new, I would argue. And psychology in particular is extremely new, in a sense. Like, think about quantum computers. How long have quantum computers been around for? Not very long, right? So they're in their infancy. We don't really know much about them. Like they found things like, and this is crazy, right? The reason why they go to great lengths to put these quantum computers in these cases and put them in at such a cold temperature is because they've literally, now this is going to sound really woo-woo to people, but they found people walking by the quantum computer impacts the processing going on the quantum computers. So they're like, they don't look at it like it's the consciousness of the person, but it could be, right? So the reason I bring that up is there are so many things we don't know. For example, in quantum computers, because they're so new, we just started using them. Same thing I would argue in psychology. I would argue that what typically happens in a field like psychology, which is fairly complex, and even neuropsychology or neuroscience, what we typically will do is we will rely on the dominant technology of the time to make analogies. So Freud was relying on the steam engine when he talked about the mind and how, if you think of the id and the ego and the superego and all that, right? He was relying on like steam engines and things building up and then exploding and stuff. And then what you found, like, for example, in the 80s and 90s, is you had these cognitive psychologists and they're all using the computer analogy because that's the dominant thing, right? And so I believe all of that stuff in the theoretical area of science, and I would even argue physics as well, but I don't want to go down that rabbit hole because that's a totally different. But let's just stick to psychology because that's what we're on, right? I believe that we as humans will rely on whatever the dominant thing is at the time to kind of explain things and make them fit into little boxes and make analogies. And so we can think of them more easily that way. I'm not saying it's wrong. I'm just saying it changes, right? So all those things that like Jung and Freud came up with back then, they're kind of in the context of that day. It made sense. Just as if you talk to people who are studying memory or studied memory in the 90s and the 80s, they talked about, like RAM, RAM of a computer and RAM in your brain, sort of. They made the analogy of short-term memory and long-term memory, which is kind of what your computer has. It has a hard drive for long-term memory, has the RAM. Is it the RAM? Yeah, RAM for short-term memory. You know what I mean? So, like,
look, I'm not here to knock anybody. I am no theoretical psychologist or anything like that. I'm just saying I think that these things are dated, and you can figure out. It's kind of like when you read the Bible or whatever, or a translation of the Bible, you can see the influences of the culture of the time, during that translation. And I think it's the exact same thing in science. All these people who are coming up with theories, which we need these people. They're smart people. They're doing great service to science and all that. I'm not knocking them. I'm just saying I think that the utility of their approach is probably at its highest at the time and period when they came up with it. And then later on in time, it kind of degrades and isn't as useful for us. That's my opinion. So, I mean, I know some people they're going to disagree with that, and they're going to think you're crazy or whatever. But my opinion is that that's where we need to interpret their theories, is in the context of their day, of their time. Yeah. What are your thoughts on that?
I agree. I think that, well, the way I look at it is, as far as I can tell, there's two parts to the mind. There's the conscious and the subconscious. Like, there's the parts that we can change consciously and we can do something about on a daily basis. And there's some stuff down there that I don't know where that comes from. I don't know how to change it sometimes. And, it does affect my behavior in certain situations, right? So in practical terms, that's how I see the mind. Like you said, I also believe that a lot of these things are popular, memes, if you will, of the day. And they come from people who have some theories. I think, Freud was, in my opinion, not that I know a whole lot about psychology, but in my opinion, he was pretty off about most things, right? By the same token, I think that Jung was pretty on about most things. But like, nobody's going to be perfect. Nobody's going to be exact. But I think, it's good to take in these ideas and see how they fit in your paradigm. And my paradigm is like very simple. But, I think that that's just something to consider. And in a trading context, I think that being able to understand, okay, there are some stuff in my conscious mind that I can control pretty consciously, and there's some stuff that I can't control that I might need to work on by some other means, hypnosis or whatever, right? And I think that that's kind of where I stand on that, and that could change, obviously, but that's what I think.
No, I think you probably bring up the most important point, like in terms of Freud, like his contribution, this idea of the subconscious, right? I think that's really really cool. I think that, with modern technology, for example, so we have studies where, one of my favorite studies, we have studies where people are shown, okay, so you go into the lab, you sign your life away and say you're going to do the experiment. You sit there in front of the computer, right? I think they might have some that have goggles, but I think this one I'm talking about is just the screen, right? So what happens is they actually show you slideshows, right? Like images, photographs. And some of them are disturbing, like maybe like a dead bird or something, or someone who has a really damaged arm, right? Like a cut arm or something, right? So they're sharing, and then some of them are nice, like butterflies and bunny rabbits. Okay. So, and what they found was what they were doing is they're recording the reaction on the eye and probably the galvanic skin and all this stuff, right? So they got these physiological, and what they found is fascinating, is that before the really gruesome images that were shown, the people would actually react before they were shown the image. So they would have a guttural reaction to the disturbing view of the guy with the arm chopped off, or whatever it was, like, I don't, something nasty. And that would happen before they was actually shown. So, these sorts of things like this, when you get into the woo-woo world, it's kind of like, whoa, I mean, there are psychologists that will talk that away, just like people will talk away near-death experiences, and they'll come up with all these, in my opinion, Occam's razor doesn't apply when you start talking about these things, because they start coming up with these really convoluted ways of, explaining away when I mean, you know what I mean? Where it's not Occam's razor anymore. Occam's razor in this study would be, okay, we have some sort of pre-stimuli awareness. In other words, we know what's precognition. We know what's going to happen and be presented to us before it happens. And so it's just fascinating that when you get into that area. So I think, long-winded way of saying I agree with what you're saying about Freud. Like, Freud is, you can study psychology for decades and never really learn much about Freud, right? But there are people that spend their whole life in the neo-Freudian, area of psychology, and you know what I mean, like all of that. So I mean, it depends on where you're at, and it's like anything. You can study geology and never ever learn anything about gold or whatever. You know what I mean? Like,
Yeah.
But some people like the ones that get paid, they know a lot about oil, they know a lot about gold, right? Those are the geologists that are out consulting for the companies, right? I mean, so there's obviously advantages in that. So yeah, so I agree with what you're saying about, that was a giant, massive contribution that Freud made, and Jung kind of took it in his own way, twisted it a bit and stuff like that, which is awesome. And that's great. I encourage people to do that, to think beyond what your contemporaries are thinking. So that's great. But I just love this idea of the unknown. Like there's so much that we don't understand. Like there are people right now, there are neuroscientists right now that think if they can map out all, and I know some of these people, okay? They think if they can map out all of the neurons in the brain, that they can basically duplicate consciousness, that consciousness arises from the neural network, right, of the neuron. Like, you know what I mean? Like that's the thought, is that once we get this, we'll understand it. We got it. We just, it's like the DNA. When we map out the human genome and all that, we'll know exactly where all the diseases come from. We'll know what you're going to get and all that. And they're like, okay, no, wait, now it's epigenetics. Okay, so environment does have an impact. All right, darn, we missed on that one. Sort of that sort of thing. So I really think, there are so many things we don't understand, and this idea of the brain being like a receiver and receiving this precognitive information that you're about to see a really nasty picture of a dead bird, right? You know what I mean? Like that's amazing to me. I just think it's really cool that there are still lots of things to be discovered. And as traders, bringing it back to us as traders, that means that, we shouldn't necessarily throw away something if it's a little bit outside what, you seems to be obvious, right? Like obviously there's no such thing as, psychics or precognition, because if there were, they'd go and claim that $1 million reward that the amazing Randy has offered for anyone that can, prove that they're a psychic or whatever. You know what I mean? Like, so there's a lot to unpack there. And I think the deeper you get into it, the more you can find your little niche and find your edge, psychologically, in the area of psychology or research that you think will best apply for you. So that's what's great about science. There's these wide ranges of areas that we can go into.
Yeah, totally. And I think, it's all a matter of like what makes sense to you, what works for you, right, is the main thing. And on that topic of psychic abilities, what's his name? Ingo Swann. Yeah, he was one of the famous psychics for the government, right, in those CIA tests or whatever. And I read his book, and he said something really interesting. He said, if psychics can see the future, that must mean that it has already happened. If you think about that one, I was like, okay, that's possible. Like how can you see something if it's not there already? So just something to chew on, right? Something to think about.
Right. But then some people will say, well, there's parallel futures, like it could go this way or it could go that way or whatever, right?
Yeah.
So I always thought, like, if that's true, like the people that argue that, I always thought, if it's true that there's a multiverse and there's all these different branches of where we could go, then what are they seeing? Do you know what I mean? When they're seeing the future, which one are they seeing? A particular one, the most likely one? Are they just seeing the general outcomes that most of the branches, end up over in this area? Like I always kind of try to, are they seeing like the mass conscious, like what most people are going to experience? Like I always try to think what is it exactly they're seeing? Like Ingo Swann. I just I find that fascinating too. Like if what they're saying is true and that they're seeing the future, and if it's true, as he said, that that it's already happened, then does that mean there's no free will? Like we're always going to make the same, like, you know what I mean? Or is there free will, but we end up in the same place? Do you know what I mean? Like it's weird.
Yeah, I know. I think it's really, from what I've seen at least, like it appears to be, well, it depends on the skill of the reader first, right? Like what's their skill? Are they just making stuff up in their mind, or is it something that's actually coming through? Another thing I think is they generally seem to see the highest probability outcome. But then there also appears to be certain events that will happen. Like you have a lot of free will, but there are these like landmark events that
will happen for some reason or another. I don't know. That's the way I see it at the moment, but who knows, right?
Yeah. That to me makes sense. Yeah, that to me makes sense that you would have that they would see like the main big picture events, right? And then all the stuff that kind of supporting stuff that gets you there is kind of irrelevant, or they can't really, they can't pull that in or whatever. But yeah, it's the whole thing is fascinating.
Yeah. And I guess it comes down to also what you do with that, right? It's going to happen. What are you going to do after that? And same with trading. Like the trade's going to work out this way or the other way. What are you going to do? So
exactly. Yeah.
All right. Cool. Yeah. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
The longer your view, the better off you are, I think, as a trader. I really believe that. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question from a trader, and this trader is currently making money, wants to make money faster. He's trading real money for a couple years, and his big issue, his big challenge is, I have a difficult time accepting losses. So what would you suggest for our trader buddy here who has a difficult time accepting losses?
That's an interesting one, huh? Right off the top of my head, I would think that maybe that part about trying to make money faster is what's causing him to not accept the losses easily. Maybe he thinks that he should do better, or that would be another thing. Like maybe he thinks he should do better. Maybe like there's a perfectionist kind of syndrome also. So those two separate things. So maybe the first thing would be to consider how you could get a bigger account, maybe get an investor, get some family money or something like that, and just try to scale up that way instead of beating yourself up so much on the losses. And then if it is a perfectionist type thing, then there would have to be some exercises that you do around being okay with those losses, being okay with those losses actually contributing to your gains. That's what I would say off the top. What do you think?
Yeah. I mean, I like thinking in the long, like trying to bring it to the long view, like the casino, and so that you don't really put any specific importance on any given loss. Because, just as the casino doesn't really care that in the last 5 minutes, they lost 25 million, so let's say on the floors of the casino in the last 5 minutes, but they know, given that all the odds are in their favor, by the end of the hour, they'll be back up again or whatever, right? Like that's kind of, you can't control the outcome. So I can flip. Okay. So I can flip the coin. And I can say, hey, Hugh, do you think it's going to be heads or tails? And you can choose heads or tails. But that doesn't mean that you're going to win, that you're going to be right? You can even choose the coin. I can say, Hugh, I got this old Roman coin. I got the Australian 20-cent piece. I got I've got the Kennedy $50. Is it a $50? Yeah, $50. I have all these coins, right? Which one do you want to flip? It's totally up to you. Which one do you want, heads or tails? You can have either one. I don't care. I'll take the other side. So, it kind of feels like we have some control over that by you choosing the coin and you choosing whether you get heads or tails, and I don't get to choose that. But the reality is it's still a 50-50 proposition. Not all trading systems are. And with the casinos, they have such a slight edge. They just want to push as much money through their tables and their machines as possible, because they know they're going to skim that little bit off of it, right? Which is what pays for all the lights and all the staff and all the free drinks and the shows and the restaurants and the, you know what I mean? Like the convention center and the pillows and the maids and everything, like that little bit, right? And so it's the longer your view, the better off you are, I think, as a trader. I really believe that. You can just sit there and go, look, here's my edge. Here's how much money I want to push through this month, this year, this decade. And here's what I think is probably going to happen. You never know what's going to happen. There's no guarantees, but
that's what you want to get to, that point where you're just focused on the execution. You reward yourself for executing correctly. You do not reward yourself for getting lucky on the last trade. That's not under your control, right? It's just not. That's a function of the win rate and your execution. So as long as you're executing as you should, that win rate should settle down, and you should know within about 100 to 150 trades, you're probably going to know what your win rate is. Like, it ain't going to move much from that. And if it does, then you got to decide, what's going on here. Is it really broken, or am I just in an unlucky streak? But yeah, that's what I would say. I would say concentrate on what you can control. And if you've ever played the lotto, do you choose the numbers? If you play so you kind of feel like, I can choose the numbers. Like, I got the control, right? But you really don't. You don't have the control. You might as well just have the computer do it or whatever. So yeah, so it's tricky. It's a tricky thing, isn't it? Yeah.
Yeah, it is. Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Look into resilience, and I would look into positive psychology. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here from a trader about recognizing different types of markets. So this trader says, I'd like to know when the market is trading in a range and trade it like one instead of pretending it's going to break out into a trend, which when it does, it's a fake. Boom, I take a loss. Or to recognize a trend and then get in at the right time instead of at the end when, you guessed it, it's another trading range. And also to hold on to a winning trend without panicking and selling out and getting back in and repeat. so this trader is obviously frustrated. We've all been there, right?
All been there, yeah.
Yeah. So I have a lot of thoughts on this, but what's your impression, or what do you think is going on here?
Yeah, two things come to mind. Number one is like, maybe you got to work on a little bit of patience. I think a lot of people try to pick a range or a trend in the early stages, and it could go either way. So I think you have to learn how to identify that. And then number two would be identifying it. So either wait for the range to develop or use indicators or something like that will give you a good idea that you are in a trend if you have a hard time spotting it, just with a naked chart. So you could do like multiple, like 3, 4, 5 indicators to show you that, when they're stacked up correctly, that'll show you that, you're probably in a trend, and that's a good place that you can look for some trades. I don't know. What do you think?
Yeah, certainly there's like the mechanical side of it. I agree. Like, there's a lot that you could identify as, okay, this is how I'm going to trade. I'm going to wait until this happens if it's trending to identify that it's a pullback and define it as a pullback and all that, right? Mm-hmm. But the other side of it also is kind of like the mental side of dealing with these sorts of situations, right? I think you could kind of split this question into, what do I do mechanically, which is technically on the surface level what this trader is talking about, right? Like, what do I do? I don't know what to do here. It just, everything I try kind of, like, if you ever we actually, when I first started trading, my friend and I, we actually did this. We were like, it was so bad. Well, we tripled the money on the first night or the second night trading the Swissy, and by the Friday we basically were busted, lost all my money. But then we got some more money scraped together, and we started, like, after this sort of thing kept happening, we started thinking, why don't we just reverse our trades? And I think everyone's been there, right? Where you have this system and you think it's so great, you start trading it, and it's like everything goes against you, right? Which is kind of the frustration that's seeping out of this question from this trader. So there's that side of it, like the mechanical side of it, like, how do I identify a range? How do I identify a trend? How do I know when it's a pullback versus the end of the trend? There's all that part of it, right? But there's also the other side of it, which is like the mental, like, how do I build up resistance or immunity to this sort of thinking where I just feel like everything's going against me? You know what I mean? Mm-hmm. That's kind of how I see this, is like, yes, okay, fine. If you want to do the mechanical stuff, my favorite thing is to just look at what people think. So if you find on the
on the dark internet, these not really on the dark web, but in little corners of the internet, you'll find brokers that actually tell you what percentage of traders are long or short different markets, right? And I find that to be extremely useful information for identifying the strength of a trend. I use it as a proxy of trend strength. In other words, when all of these traders are going long, I want to be short, and vice versa, right? So I use that as a proxy. But that's, the mechanical. You can look at, patterns, and are the candles getting really small and wicky and closing near the middle? Okay, that's probably a pullback, right? Are the candles really big and giant? Then that's obviously the trend push. So you got to wait for another little pullback, right? And pullbacks come in all different types, shapes, and sizes, and all that. But to me, the more interesting aspect of this question is, what do I do? Like, I feel like everything's going wrong. What do I do? You know what I mean? And we've all been there. Like I said, my friend and I, we literally, when I first started trading currencies, we literally we're trying to map out a plan. Like, how can we take our system and then instead of taking the trade, just reverse it, because everything's
turn your chart upside down, right?
Yeah, exactly. Yeah. Actually, and I know a guy who did that. He invited traders to trade for his fund, and they traded on demo to qualify, and they weren't trading on demo. They were trading on live accounts, and he flipped their trades. So, I mean, and they made money for him. And he was like, man, the most difficult thing was just trying to get those traders to keep trying to qualify, because I was losing my best traders, because he was, it was just crazy. But anyway, the point is, I think you need to build up some resilience. So this sort of thing is going to be rooted in two areas. So there's the feeling, emotional part of it, and there's the logical. You can build up your logical confidence by doing testing, right? Lots of testing, get your data, get your numbers, and okay, typically, have a 48% win rate. So what does that mean? Well, any given trade is actually slightly more likely to be a loss than a win, right? So you can couch it in sort of statistics and logical mind. And then the other side of it is building up your feelings that you're going to be successful, and actually, going, hang on. So I feel like every time I take a trend trade, the trend is over. Is that actually the truth? Can I look at the numbers and see, is that true? Is it always the case that when I get into a trend, a pullback on a trend that it fizzles out? Well, actually, no, it's not really. If I look at my numbers, right? And how many of these winning trend trades do I really need? Maybe you have a strategy that has a lower win rate, but once or twice a year, the trends are so strong and so significant that makes up for all of your losses that you've had the last 6 months, and you end up in the black, right? There are a lot of trend traders that trade that way. There are a lot of professional traders. There are a lot of funds that trade that way, where they literally have months and months and months, even years, where they're down, down 20%, down 12%, down 8%. And then 1 year, boom, they're up 600%. They're up 300%. That's normal for trend trading, right? So I would look into resilience, and I would look into positive psychology. There's a whole wealth of information there for building up your resistance to these emotional, I think resilience is really important for traders, one of the overlooked things. And so if I were this trader, I would be working on my resilience, and certainly, building out a strategy, like we said, all that stuff can be done. And, getting your stats and your numbers and all that, that's great. But the part of it, I think, that's probably going to be most useful, here's an example. Actually, I was talking to a trader the other day, and she was explaining this. And it's a really good really good analogy, because we were talking about resilience, and she was saying, I've learned that I imagine that she's driving her car, and the windshield, it's raining, okay? And so all these raindrops are hitting her windscreen, and so these are issues that come up. So these could be problems in your trading, problem trades, difficulties in your life, right? There are these little drops that hit your windscreen, and then you are the wipers. You just wipe them away. just let them go, let them fall out. And while it might seem like it's overwhelming when it's raining, it's all just a bunch of little tiny individual drops that you can just wipe away and let them go. You can leave them there on your windscreen as long as you want, but you're also able to flip on the wipers and flick it away, right? So, I mean, it's kind of an interesting way to see these little issues that creep up that we all have. And particularly when you're in this sort of stage of your trading where you're thinking, geez, nothing's going right. It can be really difficult. I understand.
Yeah, I would also, one thing that came up when you're saying that is that I would also look into your previous programming, right? Like from anywhere from when you were born until right now, and kind of look at your thought patterns, because the way that you were talking, or the way this trader is talking, sounds like a friend I have, and the way I used to talk before. So I always had this mentality that things are going to go wrong, right? Things are not going to work out. So at a certain point, I would just give up and stop trying. It could be this trader psychology, I don't know, but I would invite you to look at that, and like you say, look at specific situations where you did succeed and things did work out, and kind of build on that, right? And not dwell on what went wrong, but look for a solution instead.
Yeah, it's true. And it's so easy to get into the catastrophizing mindset where like one little thing goes wrong, and then you build up this illogical chain about why everything's going to go wrong, right? Like that, and that's something you got to guard against. And there are antidotes for that. They're just simple ways of rephrasing things. Going, okay, yes, I've had 5 losing trades in a row. Have I ever had 5 losing trades in a row in my testing before? Yes. Okay, fine. What happened after that? Well, it tend to be a big winner after that. Okay, all right. So could this just be normal, everyday trading for my trend trading strategy? Yeah, it could be. So you just kind of talk yourself off the ledge sort of thing, and get back to a more logical reasoning, because it's so easy to get into that really negative state when things aren't going well. And I understand it. We've all been there. Like, we're not like making fun of this trader. And one of the reasons why we don't mention names is because we don't want people to think that we're not poking fun at them. We're just kind of digging into the question and saying, well, is this really the question? I guess you could at one level say that's the surface question, but really I think it comes down to exactly what you're saying. You know what I mean? You've got to be really strong psychologically